Some garbar there.
Garbar.
To Trump now somehow talking only about China's Russia oil purchases and skipping India altogether. So much to unpack this morning, Neeraj.
You're looking bright and sprightly.
Thank you. It's a bright and sprightly Monday morning, I think.
Yeah, it is. And it's a very important week, right, Tamana? Because we have the Fed decision, and as much as the Fed is the US central bank, was a central banker to the world, and why they cut 25 basis points, which seems to be a near certainty, what Jerome Powell and team have to say while they're caught in this flux of rising inflation but lower employment would be so important. I dare say, no matter what Donald Trump says, etc., to my mind, this week, it has to be the Fed, which just supersedes everything else.
Fed is at center stage, yes, I agree to some extent. I think GST and clarifications on GST will also be an important factor going ahead, and to see if that kind of consumption actually comes through as the government comes in and makes things easier and easier. But meanwhile, let's just start with the global update for you and a wrap-up of what's happened. And this is, of course, Friday markets in the US that we're talking about. It was mixed day of trade in the US markets. The Nasdaq is the one which has zoomed, closes at an all-time high, but the focus completely and entirely on the Fed meet. Now, Wall Street is essentially betting on a 25 basis point cut by the Fed in its September 17th meet. Treasury yields have dipped ahead of that possible decision, the 10-year at 4.06. Brent is above $67 mark. As nothing really moving on the Ukraine-Russia front. We'll pull up the Asian indices for you this morning and give you a sense of what's happening there. Mixed bag, Hang Seng up in the green, Shanghai Marley in the red. The implied open for India also showing a soft kind of a start, about 33 points in the red. But I think this story that really caught my eye is Trump posting on Truth Social saying, I'm ready to do major sanctions on Russia when all NATO nations have agreed and started to do the same thing. And when all NATO nations stop buying oil from Russia. As you know, NATO's commitment to win has been far less than 100%, and the purchase of Russian oil by some has been shocking. It greatly weakens your negotiating position and bargaining power over Russia. Anyway, I'm ready to go when you are, just say when. I believe that this, plus NATO as a group placing 50 to 100% tariffs on China to be fully withdrawn after the war with Russia and Ukraine is ended, will also be great help in ending this deadly but ridiculous war. China has strong control and even grip over Russia, and these powerful tariffs will break that grip. This is not Trump's war. It would have never started if I was president. It was Biden and Zelensky's war. I'm only here to help stop the loss of Ukrainian lives. If NATO does as I say, the war will end quickly and all those lives will be saved. If not, you're just wasting my time and the time, energy and money of the United States. Thank you for the attention to this matter. You know why I thought this was important, Neeraj, and I read up the whole thing. Just look at the shift. The very, very clear shift. This is what India has been saying, that you are targeting us for buying Russian oil. Can you please take a look at NATO nations who have the big problem with Russia, also buying Russia oil? Please look at China buying Russia oil. And Trump slowly shifting that focus, saying this is NATO's war. And you guys also make those sacrifices. I think it's a very, very significant statement.
It's a very significant statement, but it also follows, to my mind, a change of stance that has happened in the last 7-10 days, whatever. And there's a timeline that we've laid out for this, and involves what Donald Trump has said, what Sergio Gore has said as well, and just look at the 3 or 4 instances that have happened, right? We just look at that and call it a Trump tracker. September 9th, Donald Trump said that he plans to speak, or indicated he plans to speak to PM Modi in the coming weeks. That was the first thing to which PM Modi had responded. Then September 12th, Donald Trump called PM Modi a very good friend. I mean, this is just the small summation of the very large post that he does, right? Then, very same day or just a day after, Sergio Gore came in and said that India is a strategic partner. And this is, this is an important guy, right? And many important guys, but this is one of the very important guys and the latest appointee as a Trump official. And then Trump's message to EU that Tamana just spoke about, to seek 50 to 100% tariffs on Beijing, not involving India at all. So there's a change of stance that's happening. And I think that is what the market has factored in, because if you look at last week, 5 straight days of gains. These are happening because the market is believing that there is some thaw in the relationship and hopefully it will move ahead. There is no other answer for the markets doing what they are doing. Everything else is almost ceteris paribus. The GST benefits come in, but they have been there around now for the last 10 days. The last 5 days, it is this, the double power of domestic reforms plus the thaw in the India-US relationship, seeming thaw in the India-US relationship.
Yeah, but I mean, with the US, it's not inked till it's not inked, and maybe
100%.
even then things can change. So just maybe that's why it's not an all out there. And in fact, US President even took a swipe at the European Union for continuing to purchase oil from Russia, just adding on the point that Neeraj was making, arguing that EU sanctions on Moscow remain weak compared to US measures. Listen in.
NATO has to get together, Europe has to get together and do it. Look, Europe they're my friends, but they're buying oil from Russia. So we can't be expected to be the only ones that are, full bore. But Europe is buying oil from Russia. I don't want them to buy oil. And the sanctions that they're putting on are not tough enough. And I'm willing to do sanctions, but they're going to have to toughen up their sanctions commensurate with what I'm doing.
But just to clarify, you wouldn't move ahead until NATO moved ahead.
Well, I'm ready to move ahead, but they have to do it. I think they will. But right now they're talking and they're not doing. Look, they're buying oil from Russia. We're not buying oil from Russia. They're buying a lot of oil from Russia. That's not the deal.
Well, it's a belated understanding and belated affirmation of what NATO has been doing and what India has been saying all along. Jeff Dennis, independent emerging markets commentator, joining us on the show this morning. Jeff, very good morning to you. We'll talk about Fed, we'll talk about US markets, bond yields and all of that. But just a quick commentary on the observations that we've been making. Is Trump very subtly shifting the focus to NATO's purchase of Russian oil rather than the intense focus on India that we've been seeing?
I think you're probably right. And I think in truth, the story is he's focusing attention on any country, especially a large country, or a large block of countries such as NATO, such as the EU, that are importing oil from Russia. In other words, I think the focus that's been on India is now spreading wider, because the goal is, of course, to ensure that, to do the best to ensure anyway, that purchases of Russian oil come to a halt. And I think therefore, by definition, if India was the major target, so to speak, of this over the past few weeks, as that concern or that pressure broadens out to other countries, India, becomes perhaps less vulnerable at this point in time.
Okay. Jeff, in that sense, would the FII view then change on India? What has been keeping global investors from coming in? Is it largely the threat of tariffs?
I think tariffs have played a significant role, but of course, India has been underperforming all year. And the tariff, or the focus on specific tariffs and the 50% level, etc., is much more recent. I think it's got a number of things involved, and I've said this before. I think that a lot of foreign investors, they look at Taiwan, they think Taiwan's essentially TSMC, it's an AI, it's a technology play. You look at Korea, you've got real significant hopes of some corporate sector reforms. Korea's done well this year, all-time high this year, yeah. And India is really being compared to a certain extent to China. And I've got this wrong. China's done very, very well for a number of reasons, whereas India, I think, because of high valuations, because the currency has been somewhat weak, although it's really been weak within a fairly narrow range, added to now perhaps by the threat of 50% tariffs, etc. These are the reasons that the foreign investors have stayed away. But I think it's been a surprise. And I fully expect India to recover from this over time, because the fundamentals are good in terms of the potential for interest rate cuts, further interest rate cuts. As I say, the rupee is not really that weak. It's broadly within some sort of range. The growth is good. You've got some sort of fiscal, should we say, rejigging through the GST, etc. But I think those are the reasons why India's lagged behind in 2025.
Got it. Jeff, good evening. And from a market's perspective, how crucial would the Fed commentary be? And if the Fed does 25 and sounds hawkish, is that a negative for risk assets worldwide?
Yes, it will be a negative. I think most likely as the Fed does 25, I think they give very strong hints that they will do more over the rest of the year. My view for some time has been 2 times 25 over the second half of 2025. And I think it's going to be at least 2, it could be 3. So once the Fed gets going here, unless you see a further significant spike in inflation, inflation's, I think, troublingly firm, let's put it that way. But you probably need to see a much bigger spike at this point, perhaps tariff related, to persuade the Fed to cut once and then not cut any more. So I see at least 2 more cuts. And so I'd be surprised if Powell is that hawkish after the 25% cut, 25 basis point cuts. I think that the chances of 50 basis points cannot be ruled out. And the argument here, of course, is that Powell has said he wants to focus on, he is focusing more and more on the labor market, which looks increasingly weak, particularly on the payroll side, employment side, as well, of course, as a tick up in unemployment. So there are plenty of folks out there who worry that the economy is sliding slowly towards recession. Against that background, because they haven't given any warning of a 50, they'll go for 25 this time, but they'll give, I think, a pretty clear steer towards more cuts over the rest of the year.
Okay, thank you so much, Jeff, for coming in there. So clearly, tariffs has been the big pain point, and that looks like it's easing. Meanwhile, in case you're missing Alex at the anchor table, no need to miss him too much, because he's found himself in London covering, of all things, the anti-immigration protests, where thousands have been marching the streets with a slogan of Unite the Kingdom March. It's been led by far-right activist Tommy Robinson against immigration and drew over 100,000 people to central London. Some of those visuals truly astonishing. Alex joins in with more details. This is a report he sent us from London.
The emergence of the far right is in evidence in the United Kingdom as it is in various parts of the globe. I am speaking, of course, about the protests that took place in central London. You must have seen the images that came over. Thousands of people, and the administration says a lakh of people were at that location in Whitehall yesterday. And this is a protest that was organized by the activist Tommy Robinson. But the overarching theme was a little vague. It was supposedly anti-immigration, but that meant different things to different people. For some, it was a protest against illegal migration of people. For others, it was the overall policy of the UK government, the immigration policy that they were calling for an overhaul of. And for still other people, they were chanting things like "send them back." And there were a few religious undertones as well, because there were a few people that were carrying wooden crosses at that event. And Mr. Robinson, who organized the event, is known to be anti-Islamic. What was interesting is that aside from these protesters who were apparently talking about anti-immigration, there was a much smaller gathering of about 5,000 people that were not too far away from that. And they were in a protest that was calling for anti-racism. All of this is to understand that the emergence, as I said right at the beginning, of the far right seems to be reaching the shores of the United Kingdom as well. And there is a little bit of popular support, particularly because of the state of the government. There were a few high-profile visitors and speakers at yesterday's protest, not least of which was Elon Musk, who joined in on a video link. And he used some pretty incendiary words, if you can call it that, because he spoke about the coming violence in his words, and he spoke about the need to fight or die. He was speaking about the recent assassination of a political activist in the United States, but he also called for the dissolution of the parliament in the United Kingdom and the election of a new government, and he said something has to change. The interesting thing though, I arrived in London yesterday, and the person who drove me from the airport was a Pakistani. The person who brought me into the hotel was an Indian from Gujarat. And this morning, the concierge was from Ghana. All told, the services industry, that is transportation and hospitality, the medical services and several other fields, including IT, are dominated by migrants. And the question is, if there is an anti-immigration policy, does the economy here in the United Kingdom suffer as a consequence?
All right, Alex, there, please staying safe with all those anti-immigration. Just over the weekend, Neeraj, wanted to mark this very quickly. There are anti-immigration rallies right now in Australia, where the focus is on Indians for some reason. Even in London, a lot of focus on Indians, and there were pictures of them going to a onion bhajia shop after the protest to eat. That's a different story. And the horrific beheading of a 50-year-old Indian origin man in the United States. I'm just wondering, as the power of the diaspora grows, I hope that there's no targeting of Indians.
Yeah, hopefully it's a passing phase. And we pray for the deceased, of course, and the ones impacted, but hopefully it's a passing phase.
Yeah, really horrific. All right, just coming back to some factors today to take a look at. I think CPI data is something that we should quickly mark as well. CPI data came out, inflation data came out Friday evening after markets closed. And here's what Morgan Stanley says. They say it's a benign trend in CPI, disinflationary pressures to continue. The headline CPI ticked up to 2.1% year-on-year in August due to a softer decline in food prices, while core CPI remains range-bound. A lower CPI forecast to 2.5% for FY26, building in a benign CPI trend and deflationary impact from GST. They expect the RBI to ease in October policy with risk of further easing. So that's one thing to look out for. At least CPI is giving support right now to everything else happening in the economy.
Most certainly, Tamanna, and certainly something to watch out for as well. In India, the things seem to be so different relative to what's happening in the US for sure, which is, as we said, in a bit of a pickle. So what's the trade setup for the day? You could argue that the trend is on the mend, but needs maybe some more traction, because we've had 5 days of a rally last week, but it's not been like a runaway move. It's been this slow, steady grind upwards. I won't call it a grind. Grind is negative, but slow, steady move upwards, but a welcome move nevertheless. The good part is that over 55% of market-wide stocks are now trading above the 40-week equal moving average, which is a positive. From a breadth perspective, you want this to be seen, because you just don't want the Nifty led by a few large caps doing well, but the rest of the market's not doing well. No, you want this to happen, and we are starting to see this happen, which is actually a really, really, really good sign. Metals and auto are seeing very strong positive recommendations from analysts. And keep in mind that last week what led the rally was defense and IT. So, again, pointing towards that broad-based participation that we're talking about. And then you think of what is it that could do well. We spoke about defense the week before last. I'm so glad that defense has done well. I mean, not because we said it. It's just that it was evident that there's some buying in defense and the kind of order flow that was coming in. I do wonder if the cable and wire companies come into focus today because of all the price hikes that dealing rooms are talking about. I do wonder if the likes of Bombay Stock Exchange, Angel One, etc. come into focus today, because the SEBI board meet did not come out and talk too much negatively about the weekly expiries, which was much feared. So I think we'll see a lot of traction in bottom-up names, and we're seeing lastly a lot of traction on IPOs. And Tamanna, what a day, what a week it was for IPOs. We speak about primary markets. These are small names except for Urban Company, but Shringar House of Mangal Sutra subscribed 60 times. They've Accelerator 64 times, and then Urban Company. I've never used it. Maybe you have. But
I've
109
used
times.
it phenomenally in every way. How come you not used Urban Company?
I haven't.
Because the swath of services is so wide, you're going to encounter it one way or
So
the
there's
other.
a user who's saying that they are good, I'm presuming.
I mean, there is no one else who's doing everything where they will do beauty treatment at home and clean your sofa and curtain, and a plumber will come and fix your shower. All of that on one app. So it's just the swath of services, and now there's Insta Help. I've been using a rival of Insta Help for the last few days, and it's phenomenal.
Wow.
Where someone turns up in a uniform in 10 minutes to do basic domestic services.
It happens only in India, but just the beauty of the subscription, right? 60, 64, 109 times. I mean, strong response to IPOs. So that was the other interesting piece that stood out for me.
So just a quick nugget. This is an interview that we'll put out in some time, but I had the opportunity to sit down with Abhiraj for Disruptors. And I asked him when they came up with Urban Company, and he said, we actually had, and he has a piece of paper somewhere, 4 ideas before they came to the one with Urban Company. So I said, what were the other 3? 2 of the other 3 was food delivery, and one of the other was quick commerce for groceries. So I said, well, that's been there, done that, and it's all happening around the same time. So it's quite interesting.
Yeah.
Anyway, let's see how the IPO actually functions. And we have a very interesting story up ahead on whether these highly subscribed IPOs actually give you bang for the buck once they list. So stay tuned for that. Meanwhile, quickly going through some of the factors to watch, and I'm depending on and leaning a bit on Mahesh Nandurkar's note on the India strategy from Jefferies. He says the bottom-up market is what he's seeing. Weak FPI positioning and large India underperformance has been seen. This implies that any potential good news on India-US trade can cause a sharp market upswing. Those of you who will remember our commentary on the 18th of September, after the GST was first announced, 18th of August, sorry, after the GST was first announced, we were very clear in saying that be prepared for a double delight where the GST cuts come in and then the tariff pressure eases. So Mahesh Nandurkar saying beyond that, returns might be muted given the potentially large equity supply and high PE to weak earnings. Strong domestic buying should prevent downside though. A sideways market would be great for bottom-up ideas. He's changed his model portfolio, and I think this was important. I'll go through it very quickly. In terms of addition and weight increase, there's Bajaj Finance, Radico Khaitan and GMR Airports. Look very clear discretionary consumer pushes. In terms of deletions and weight decreases, there's Bandhan Bank, ITC and Infosys. They've moved IT to underweight by trimming the weight of Infosys as AI adoptions weakens and the growth outlook and recent up move captures gains. Overweight on lenders is maintained with Bajaj Finance replacing Bandhan. Bajaj Finance could capture any post-GST cut consumption upside. We added Radico Khaitan, which is fast-growing spirits franchise. GST uncertainty on ITC makes us remove the same, add some weight on GMR as it's evolving into a diversified consumer platform from being a utility airport operator. So that's the note. In terms of the setup, Indian markets perhaps poised for a continued upward trend this week. Nifty possibly testing 25,400 to 25,500 levels. Nifty has shown significant strength, closing at a 2-month high and completing its longest rally in a year. Analysts are advising a buy on declines approach as some profit taking is likely after such a strong rally. Immediate support at 25,050 to 25,000 with a stronger base around 24,900 levels. On the upside, a decisive move past 25,150, 25,250 could trigger a rally towards 25,400 to 25,500. Bank Nifty outlook is more stable compared to the Nifty. Index faces a key resistance at 55,100, 55,200, supports at 54,600, 54,500. It's a buy on dip strategy that you should look at as long as the index holds above 54,300. Decisive break above 56,000 would clear the path for a rally to 59,000 over the medium term. So that's some of the technical setup. But Puneet joining us for the derivatives piece this morning. Good morning, Puneet.
Well, good morning, Tamanna and Neeraj as well. Thanks so much for that. It's been a week, essentially, last where we saw pockets of outperformance, as you guys rightly mentioned. Defense We had IT, metal, as well as auto that were in focus. And that seems to be the trend of the market, because we've seen over 90 to 100 point gain since Tuesday. And that seemed to be maintained over Thursday and Friday's move. So that was a key positive. Because of that, we are now above 25,100. And while there aren't any key triggers that will tell us that we'll be consistently above this one, it seems to be that, different pockets of rally will give the markets a larger breadth, to say the least. And hopefully this sustains in the near term as well. We've seen the open interest being largely negative 2% for the Nifty 50 futures. The Nifty Bank as well has seen a decent rally going into the Fed meet on September 17th. It's a big week, to say the least, apart from IPOs as well, because if that happens, the 25% rate cut does seem a certainty. But if there's 50, and while there is hope rather than anything else, that'll be the other one to watch out for, what happens to the banking stocks, because we might see some pressure on NIMs because of that. We were expecting that Q2 will be the last impact where we'll see, or maybe the bottoming out of NIMs. But if there's another rate cut, it puts focus on stocks like Bajaj Finance because of on minimal impact of NIM compared to banks. But that'll be the other one to watch out for. In terms of foreign investor positions, buying has been seen in index as well as Nifty options. Last week, we ended the index long for the fund for foreign investors roughly at about 10.7%. It's now at 11.8%. So seen some consistent buying in the last 3 to 4 days, and that seems to be supporting the market. If it sustains, that'll be the other one to watch out for, but largely maintaining short positions as of now. In terms of open interest distribution, you see that huge candle of puts on 25,000, and that's the other one. But we've seen also at 25,500 seeing a lot of buying from core investors taking position at that level. Currently, we have seen that starting somewhere on Tuesday and Wednesday. We've seen 25,200 as the other level as well, but hopefully we can sustain that in the near term. In terms of stocks, open interest gainers, you don't see meaningful change in open interest change for a lot of stocks. So the trend is not visible currently, at least in a bunch of them, while that similar trajectory is in open interest losers as well. So another day where we're seeing the implied open slightly being under pressure today. We started about half an hour ago, we were down 65 points. We've seen recovery from those levels, but it'll be interesting if we can see buying post the initial gap down of about 25 to 30 points, and which pockets actually come up with that will be the other one to watch out for at the start of this week.
All right, thank you for that, Puneet. Let's quickly go through some of the stocks on our watch list. I'm starting off with Tata Tech. The acquisition is what's important. So they've made an acquisition from a company called MW Betelgeuse GmbH. I hope I'm saying it correctly. So Hail Mary there. But essentially, their arm will acquire 100% stake in a subsidiary of this company. It's an ER&D company, that's the important point, and it strengthens its global capabilities in next-gen mobility solutions and will significantly enhance their company's ER&D capabilities. They have a strong local talent pool. It's expected to be EPS accretive for the first year itself. The cost is 75 million euros, and the transaction will be completed by December 31st. We'll, of course, talk to the company today, but expect maybe a bit of an upside because of that. Now, the next one, and I found this quite amazing in terms of the details of the allegations. I'm talking about KRBL, and expect some impact on the stock today for sure. So this is what's happened. An independent director has resigned. His name is Anil Kumar Chaudhary, and he cited inconsistency in board dynamics. He says prevailing dynamics of board inconsistent with safeguarding stakeholder interests. He's saying a recording of minutes of board and committee meetings was inconsistent. He talks about instances of information being withheld, impacting informed decision making. Unjust write-off, this is the damaging part, unjust write-off of certain export receivables without adequate deliberation raises concerns regarding the use of CSR funds, also cites arbitrary distribution of variable pay and annual increments, significant changes to object clause undertaken without comprehensive discussion, undue interference by invitees in proceedings of board and committee meetings. I mean, I just found this astonishing. We've requested the company to come and speak with us, and we're putting that request on air as well to the management of KRBL. I think it's important you come and explain to shareholders what really is going on, if these allegations are true or they're not true. But first of all, they've had to tell the exchanges what has happened, but It's just out there. It's a can of worms that's blown up.
It is, Tamanna, and if I mean, no matter what else happens in the markets today, you know that this stock is gonna take a drubbing and of another magnitude. And yeah, I mean, it's a small stock, maybe not very highly institutionally old. I don't know if too many retail investors would have very large positions in this one as well, because you know the Augusta Westland, etc. There's a lot of history to this, right? But the point being, the nature of the reasons being given in the exchange filing lead you to think about what is happening out there in the company.
Yeah, what's going on?
Which is the big worry.
I think this stock has been in focus from the export point of view, and big rice exporter, etc., food products exporter, but okay, expect some turbulence there. Havells is the third one that I'm talking about. It's thumbs up actually. Goldman Sachs has maintained a buy. They've hiked the target price to 1,720 from 1,660. They say they're well positioned for growth revival in electrical durables. Q2 will be disrupted by GST implementation uncertainty. Would see any share price weakness as opportunity to build on positions in the stock. Shares have not corrected much. They believe earnings growth revival can drive up multiples and lead valuations higher. I think this is a space you spoke about as well, Neeraj. So Havells is the third one on my radar.
Yeah, I love the line wherein they say any correction should be used as an opportunity to add up on the stock. So pretty interesting. Okay, the three stocks from mine. And by the way, one thing that both me and Tamanna will talk about, I'm not giving graphics for it, but very interesting to see, Tamanna, what happens to the likes of BSE, Angel One, etc. Because the SEBI board meet outcome, or the SEBI meet outcome, was silent on the expiries, and which is probably a
which
good
we
thing.
Reported that they would not be saying it yet, but doesn't mean they're done
so much
investing.
of fear, right?
Yeah.
So therefore, maybe there's a bit of a leeway there. Let's wait and watch. Adani Power, first stock on my list with the standard disclaimers, of course, that the Adani Group owns NDTV, and you're watching NDTV Profit. To build 2,400 megawatt power plant in Pirpainti in Bihar. The total investment for the project is about $3 billion. So watch out for this one. The last few days, Adani Power has got a series of these power plant wins, and therefore very, very interesting to see this. Engineers India has secured an international contract of 618 crores from fertilizer company in Africa. So this is something you want to keep an eye out for. Maybe the stock reacts positively. And you know, Tamanna mentioned about Havells. Jefferies has come out with a note on cross-sector views, and they highlight a few things which I think is very interesting. So first, they say that channel checks indicate 2 to 3% price hikes by cable and wire companies in Q2 itself. So keep an eye out for some of those, the likes of Polycab, KEI, etc. They say that stable PVC prices quarter on quarter can help pipe companies restocking as well as margins. And they estimate Supreme and Astral's Q2 operating margins to rise by about 100 basis points quarter on quarter. So that could be interesting. And they also say that softer VAM prices, which can help sustain Pidilite's operating margins at 24-25%. There was some bit of a conversation around whether these prices or margins could dip a bit. I think that may not happen. So keep an eye out for these stocks as per the Jefferies view as well. So some of these could be very, very interesting Q2 result plays. So keep them at the back of your mind. But we spoke about the buzz in the primary markets right at the start of the show, right? Urban Company emerges as the most subscribed IPO in the last 1 month. But how have some of the most subscribed IPOs of 2025 fared since listing? Could Urban Company deliver the same results or different? Well, Sumit Johnson with some analysis. Sumit, good morning.
Good morning. Well, yes, Urban Company remains in focus given the fact that it is one of the most subscribed IPO in the last 1 month. If you look at the subscription data here, the QIB portion was subscribed nearly 147 times. The NI, that is the non-institutional investor portion, was subscribed 78 times, while the retail portion was subscribed close to 41 times, taking the overall subscription number to close to 109 times. And it has received bids worth around 1.13 lakh crore rupees as against the 100 crore which was in offer. And this bid amount of 1.13 lakh crore is the highest that that we have seen in 2025 at least. But this is not the only company that has received a stellar subscription. There are at least 12 companies in 2025 so far which have seen a subscription number of more than 100 times. Highway Infra, which raised close to 130 crore rupees, saw a subscription number of close to 317 times. Indofarm, Denta Water, Quadrant Future and Stallion India, which raised anywhere between 200 to 290 crore rupees, saw a subscription number of anywhere between 188 to 228 times. Apart from that, there was Standard Glass, Regal Resources, J&G Electronics and Borana Weaves, which raised close to 140 to 410 crore rupees, while the subscription number was anywhere between 150 to 185 times. And apart from that, there was Lakshmi Dental and Aditya Infotech, which raised close to 700 to 1300 crore rupees, and the subscription number was anywhere between 106 to 114 times. But do remember that strong subscription number would not necessarily result into strong gains post-listing. Now, obviously, all the companies that have seen a subscription number of more than 100 times have seen a stellar listing, but gains since then have been limited. In fact, out of the 11 companies, 5 of them have seen negative returns, 2 of them have seen returns of less than 10%, while the remaining 4 have seen some good source of return. Now, if you look at the first graphic here, which is Highway Infra, which was subscribed nearly 317 times, the subscription, the listing day gains was close to 73%, but since then the stock has decline around 28%. Aditya Infotech 60% listing gain, 32% since listing day. Quadrant Future 53% listing gains that we have seen, but since then the stock has been flat. For J&G Electronics, 41% was the listing gain, but since then the stock is up just 7%. In case of Stallion India, 40% was the listing gain, and since then also the stock has performed good, around 63% return that we have seen. Regal Resources 29% listing day gain, 19% downtick since then. For Indofarm Equipment and Lakshmi Dental, both of them saw a 29% gain on the listing day, but since then the stock is down around 8 to 44%. Then there is Borana Weaves, which saw a listing day gain of 18%, but since then the stock is down 14%. And for Standard Glass and Denta Water, the listing day gain was close to 16%, and since then the stock have just gained around 12 to 14 odd percent. And given the fact that Urban Company was subscribed nearly 109 times, the grey market premium at least indicates that the listing would be strong in case of Urban Company, northwards of 60% plus gains we could see on the listing day.
So keep an eye out on that, and also some of the smaller ones which are coming in. Thank you, Somit, for all of those details. We'll take a very short break, but we're coming back with top trading strategies this Monday morning. Stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use
All right, welcome back. Let's take a quick look at the implied open, 31 points in the red. But are we really going to see a very muted kind of day? Remember all of last week, and I don't know if you can pull up the 5-day Nifty chart for all of last week, you had a steady up move. So something's changing, and you had about 1.5% up over the week. But slow and steady, something's changing up there. Kush Bora, very good morning. Parag Thakkar, very good morning. Great to speak with you as always. Kush, let's take a look at how you're looking at the indices first.
No, but before that, Asia Cup, India, Pakistan, we have to talk about it. No matter how insignificant it turned out to be and how simple it turned out to be. So when you beat an opponent on their own field or a field of their choosing, I mean, you own the game, right? So, yeah. And India has been doing that. I don't think we expected anything else. Couple more matches, I think more excitement on the cards. But yes, I mean, that was an important update, at least from my perspective, to bring up. But, talking of field and, the battlefield, 8 sessions of consecutive gains. I think this is a battlefield where, we could say the Bulls can say they've won the game, at least for now. And this comes on the back of FIIs covering their short, something that we've been speaking for a while now. And mind you, this is only 5% short that they've covered, about 7.5%. From there, they've gone to a long, index long ratio of about 12%. 500 points gained on the Nifty, about 1,000 on the Bank Nifty. Imagine if this accelerates, I think the short covering rally itself will perhaps be enough to take the indices to new highs. But as of now, the other thing that's happened is the PCR, the only fly in the ointment, as we often refer it here, is the PCR that's gone to 1.29, which is slightly overheated. So any kind of a pullback should actually be taken as an opportunity to go long. 28 points down on the GIFT Nifty, even if that, slides to, let's say, another 30, 35 points, even a 75-point cut, I think that should be a safe entry point from a risk-reward perspective. The comfort also comes from the fact that the put base has been shifting higher practically every day. So from 24,800, 24,900 to 25,000. In fact, 25,100 put also has seen a fair degree of activity, suggesting that there is enough and more support on the downside. So yes, if we do get this minor, gap down, I can't even call it a gap down, but a muted start, and if it slides further down, I think I'll take that as an opportunity to go long on the Nifty.
Okay. So go long on the Nifty despite the PCR, simply because we've entered this phase of optimism. Parag bhai, just quickly, we know that you had mentioned that you might actually go ahead and take some profits off the table, then you turn constructive as well. At the current point of time, after a bit of a rally, are you constructed to put in more money to work? What are the cash levels?
So we are maintaining our 6-7% cash in the portfolio only.
6-7%. But you're deploying it now.
And booking profits where there is overheated markets. And buying some, for example, we have added significant exposure to financials now.
Yeah.
Because now we are constructive on economy because of this GST cuts and repo rate cuts and all. Plus, last 15 days, I have seen one data where personal loan NPAs are actually stabilizing. Credit card delinquencies are reducing, and MFI is also gradually coming up on in terms of recovery. So I would say it is gradual, but I would say that it is time to be constructive on financials as a second order impact of all this what government and RBI has done to drive growth.
But mota-moti markets, you are constructive.
Yeah, I am constructive, and as I said, after 8 days of winning streak, you can lose a little bit, but that should be used as a buying opportunity.
Okay. Now, Kush, in this construct, what are the stocks that you're recommending for this morning?
Awesome. So as the Monday mornings go, I've got the weekly pick, which is Axis Cades. Now, mind you, this has been on my radar for some time. It's just that I could not initiate a call because the run-up was too high, too fast. But with a very healthy pullback over the last couple of weeks, and the stock beautifully retracing from that 50% Fibonacci support level, and now also seeing more traction in terms of volumes. I think Axis Cades is a good buy even at the current levels. So 1650, 1720 are your targets on the upside. 1515 is where you place that stop loss. Parag bhai mentioned financials. I don't know if Shriram Finance is on his list. It's on mine. A very good move in the last week. In fact, the last 2 sessions, which is Thursday and Friday, the stock ran up on the back of very good volumes and ended at the high point of the day on Friday. So I think this momentum could well continue. It's in FNO as well. So if you want to consider a trade on Shriram Finance, 645, 666 are your target. 620 is where you place that stop loss. Just a couple of points I want to mention before I hand over back to you guys. GMDC is one stock that we had discussed as a weekly pick last month, has been doing phenomenally well. I don't see any reason for you to exit if you held it at much lower levels of about 450 thereabouts from where we spoke. partial profit booking makes sense, but don't let go of that stop. And similar views on Kaplan Point, which was also a weekly pick and has been holding steady and in fact gaining ground, now close to that second target of 2300. And one last point is on Wix, a very important one. It's been consolidating and now it's very close to that 10 level. Historically, this has been a very strong support level for Wix. Mind you, one thing, so just for an example, mid 2023, Wix stayed in the 12 to 10 band for good 6 months, 7 months before it spiked out, right? But if Wix were a stock, I think this would be an excellent point from a RRR risk reward ratio perspective to actually go long. I'm not saying that a spike is immediately around the corner, but it's something that you have to keep on your radar for the next couple of weeks at least.
Okay. I'm just wondering if any of you are looking at Infosys in a bit more detail and if you have a view there. I'm just saying that because the...
Parataka is smiling.
Is smiling. Okay, let me just lay out the premise of the debate first. The debate is thus: Infosys buyback, everyone's very excited. Who doesn't want dividend? And company wants to share cash. But the other side of the story is that the street has not reacted to it too well, saying that you should have used that cash to, actually grow and to invest in technologies where you're behind right now. Just wanted to know where you guys are on this debate or on this side of it. Parag, is it as simple as to say, I mean, the cash is coming, as an investor, I'm happy?
Yeah, so basically, I would leave on to company to decide. I would not be judgmental. That I know better utilization of cash than Infosys CEO. Okay,
when you're buying a stock, you can be judge, jury, and executioner. That's the beauty of being a stock market investor. It's like the guy who buys a movie ticket and goes to watch a movie. You know better than the director.
Wipro bought a company which is into electronics, right? By paying $375 million. So I think our Indian IT companies will do whatever is required. They have always done it in the past and they'll do it in the future. I don't know why it is so much. This time, the social media and all this is so the narrative builds up so quickly that the company paying out 18,000 crore is also seen as negative. I am not in that camp, but of course I have to accept it that this time the narrative is too strong and the headwinds are too difficult to navigate through.
So some pain may be. Very quick technical view.
Oh, I think this is a buy. Even from a positional standpoint, this is a buy. The 50-day moving average being taken out, on Friday, it was hovering around that time, around that level for some time. I think 1555, and once that is taken out, 1580 also very much on the cards. And on the downside, 1490, the 20-day moving average will act as a support. So yes, if you have a position, continue to hold. If not, you could still create a long position on Infosys.
Okay, well, there is constructive optimism there. And viewers, remember, yes, we can, there's a lot of chatter on social media, right, around what Vishal Sikka may have been trying to do with Infosys back then, and could they have built it out, etc.
Evoked every time there is a question on
No,
Infosys.
in a positive way, that he could have transformed Infosys from a services company which doesn't have to do a buyback to a company which is a world leader. You make do with what you have. Infosys is a great company. They're throwing up cash. They're doing this. You take your call with whatever Infosys is currently instead of trying to pontificate over what could have been. But I tell you what, we try and do this every time, right? Every day at 8:45, we try and think about what is it that dealing rooms must be thinking of? Where is it that they must be thinking of parking the money? What is it that their clients are telling them? Well, Sumit Sarkar does that for us, talks to everybody, and joins in with the dealing room chatter. So Sumit, good that you do this every day. Fill us in on what you're learning today.
Well, firstly, the first stock in the list is Ambuja, and dealers are indicating that the large part of selling in this counter is over, so we could see a bounce back in the short term when it comes to Ambuja. The second couple of stocks is DLF and PI Industries. Multiple dealing rooms are recommending buy call to their clients based on technical charts. Both the counters have been an underperformer of late, and there's a buy call that dealing rooms have given for both these counters. For Brainbees, dealing rooms are indicating that a prominent large HNI has been a buyer in trade, so keep an eye out for this counter as well. For Hindustan Zinc, there are buy flows on large HNI desk. Domestic delivery volumes are also picking up for this counter, and a domestic broking firm sees an upside of close to 20 to 25% on this counter. Also, Hindustan Zinc benefits on the back of higher silver prices. And lastly, it's Cipla. The stock has been buzzing in trade yet again, and the buzz on the street is that there could be some positive announcement coming in related to one of its key drugs, which was in the news, which was part of our segment earlier also. Keep an eye out for Cipla in trade.
Okay, so quite a few buzzers that we're seeing this morning. Thank you so much for that, Samit Sarkar, as always. I quickly want to talk about one more space, and there's a note out there, I think it's Jeffrey's note, and Neeraj referred to it earlier as well, which is cables and wires. So there are channel checks telling them that there has been an increase in prices, which has been already taken. They're seeing up to 150 basis point upside in revenues for some of those companies. Is this a space that is now waiting for a breakout, Parag bhai?
Maybe, yeah, because see, on one hand, cables and wire segment has not seen any GST cut. So I was always constructive on Havells. We have discussed it earlier also, and continue to hold it. And I would be a buyer on dips on that particular stock in cable and wire space, because I think that is a major beneficiary of the entire this GST cut thing, because if people are left with more disposable income, definitely they are going to spend on one or the other consumer durable item. And Havells is present in most of the consumer durable, like AC and fans and everything. So I think it's a good company. Stock has not done anything since long. I would keep that under close watch and would be a buyer on dips.
By the way, that same note that Tamanna was referring to, Parag bhai, also speaks about stable PVC prices quarter on quarter.
Absolutely.
Will help pipes restocking and margins, and therefore they estimate that Supreme and Astral's Q2 operating margins could rise 100 basis points. Now we know that you've spoken constructively about Astral in the past. Are you a buyer in these pipe companies, Astral, Supreme, Prince Pipes?
Yeah. So basically, I have bought into Astral. It is part of my core position, and which I would like to hold on, because I think that restocking cycle, because of PVC prices stabilizing and moving up, has started. And so I think volumes will also pick up, and so I think the earnings has bottomed out in my view.
The valuations don't deter you. Astral is very
so
expensive.
Basically, like cement in January, when earnings are at bottom, valuations always look expensive. So this is the bottom of the earning cycle stock.
Any of these companies on your radar? The cables, wires, and of course the pipes?
The cable ones look more interesting to me. The KEIs and the polycaps of the world, yes, polycap perhaps could see some consolidation because then there's some exhaustion, but KEI is still building on in terms of volumes and in terms of price action. I think 4200, 4275 very much on the cards for this one, and on the downside you've got supports near the 4050 mark. So I think KEI, and on declines polycap as well.
But you go long on KEI today?
Yeah,
you
go long on KEI. Yeah.
Okay,
yes.
fine. Okay. So that's, well, some indication, but viewers, we discussed that thing threadbare as well. Very active stocks currently benefit from all this consumption boost, etc. So keep an eye out. Now, what may benefit are Indian pharma companies. There is a policy change in the US. Now, don't smile at it, because we know there are too many policy changes. But the key thing is the much discussed Biosecure Act, and you remember 2024 and how much it was in focus before the Senate blocked it. Now it is coming back under discussion, which essentially blocks, well, at least back then blocked Chinese majors from the US markets. Now maybe there is a change there, but the question only is, what are the details of this new Biosecure Act? Varsha joins in with the same. Varsha, give us your detailed research.
Yeah, thank you for that. As you rightly said, past couple of months, if you see, pharma gained mainly, because of Biosecure Act, but then Senate blocked it, and now it's backed, of course, with a revised version. Now, just for the benefit of the viewers, what is Biosecure Act? This is a US law proposed to, ban certain Chinese companies. Well, this is because they consider this as a security risk. Now, onto the timelines, let's see what were the timelines. First, it was introduced in Jan 2024, then it was passed by House in September 2024, and on December 9th, it was blocked by Senate, and now in August 2025, now it is back with, of course, revision. Now, when I say this is back with revision, let's see what was the old version and what's the new version. In the old version, if you see, the bill was barring certain Chinese companies like BGI, Wuxi Aptech and Wuxi Bio, while in the new bill, they're going to refer to official list of companies which will be updated annually, and currently no Wuxi companies have been included, and this will be updated annually. On to the major beneficiaries when it comes to Indian pharma companies, all the CDMO companies will be actually benefited from this. You have Divi's Lab, you have Laurus Lab, Syngene International, Suven, and Jubilant Pharmova. All these CDMO companies will be actually key beneficiaries when it comes to Biosecure Act. How India will be, or rather Indian pharma companies will be benefited from this, because the US companies will actually diversify their supply chain from China to Indian companies, and a lot of Indian pharma companies, like you talk about Syngene, you talk about Laurus Lab, they actually said in their con call that they are seeing their increase in proposals when it comes to US pharma. Now, let's see what are the commentaries given by Indian CDMO companies when the bill was introduced. Like Laurus Lab has been positive in their con call when it comes to US Biosecure Act. Even Syngene International and Divi's Lab and Newland Lab were also positive in their con calls, citing the reasons that US pharma have been looking to Indian CDMO companies when it comes to CDMO projects, because they want to diversify from China, and they don't want to depend on China when it comes to contract manufacturing. Lastly, talking about how the share price have reacted when the bill was proposed, from Jan 25 to December 2024. You see, all the CDMO companies have reacted positively, giving returns from 36% to almost 200%. While on 9th December, when the Senate blocked this bill, all the CDMO companies have given a negative returns on a single day. You see, Divi's Lab was down 2%, Newland Labs was down almost 6 to 7%, while Piramal Pharma was down 7%. So we know that this US Biosecure Act will actually benefit Indian CDMO companies, and now because it is back with the revised version, we may see more benefit when it comes to Indian CDMO companies.
Okay, thank you, Varsha, and very well explained on what the impact is of the new Biosecure Act. I think this is crucial because before the US election, this was something we were speaking about as a factor for Indian companies. Do you see any clear winners here from the Indian pharma space, Parag Bhai?
Yeah, so basically it's a very long-term and very strategic kind of opportunity. So any buyer of this, and I would also love to buy, say, Divi's or Cohen's, for example, in this space. The only problem is that coming 1 or 2 quarters might not see any significant jump in profits, and the valuations are a little bit on the stretch side, little bit stretched, I would say. So I am waiting for any dip to be bought into Divi's and Cohen's kind of stocks, because Divi's has of course proved itself, and Cohen's is, I think, trying to prove itself, and they have set up the target for 2030, which are closer to today's Divi's. So if you go by that, the market cap can be 3x of what it is right now in 5 years. But let's see, it's all upon execution. But I would say that these companies are fairly expensive. That is the only problem, and coming 1 or 2 quarters might not see such a big jump in profit. The long-term opportunity is phenomenal.
Yeah, but viewers, just keep in mind, there's a data around that Senate blocked this on December 9th, 2024. Since then, if you look at the returns from some of these businesses, except for Laurus Labs, which has given 56% returns, from a Divi's to a Piramal to Syngene to Newland, whatever, the returns have been very, very very basic. So this is the response until then. I've given data for what happened post December 9th until now, and there you will see that Laurus is the only one which has given positive returns. Everything else has been lackluster. So there is a case for some price performance if indeed this sees the lights of day. So keep that in mind. Okay, let's slip into a break. As we do that, next generation reforms, that's on everybody's mind, right? And PM Modi says that the next generation GST reforms are lowering taxes on many products to make life easier for families. He said this while addressing a rally in Manipur. Listen in.
After September 22nd, cement and construction materials will also become cheaper. Many companies that manufacture scooters and cars have already reduced prices. I am sure that the festive season this time will be even more vibrant across the nation. Friends, as part of the reforms, GST on most hotels had been reduced to only 5%. Traveling to various places, staying in hotels, and eating out will become cheaper. This will help more people travel, explore, and enjoy different parts of our country. Tourist hubs like the Northeast will particularly benefit from it.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से
Welcome back. You're watching India Market Open and we're just about a minute out from the pre-open session. Nothing is moving. I'm sure this is like the traffic in Mumbai outside right now, but nothing is moving on the Nifty implied open either. If you're traveling this morning to work and watching us on any social media, stay safe. The roads are beginning to fill up. So Mumbai Rains is something that you should keep an eye out on as well. But here we're talking about opportunities that you have this morning and what you should look at. Parag bhai, if you want to have a decent play on the dual factors, one of GST cuts which will come into place say September 22nd onwards, maybe you will see the full force of the consumer push coming in. Where would that lie? And add that to tariff wars easing. What is the top 4 or 5 stocks in that model portfolio looking like?
Good question, very good question. So I would say that I will put financials in that because one, the GST cut will drive demand, right? It will spur consumption. And so all the financials who are lending to start with Bajaj Finance, for example, but Bajaj Finance is a discovered stock. It has rallied a lot after the GST cut announcement. So I would not buy that. But instead, I would look at HDFC Bank, which has not rallied, SBI, which has not rallied, and there are a lot of positives which are coming for SBI every day, I think. And it is getting ignored right now because of this tariff overhang in the market. And SBI, remember, lends to, it is 25% of the lending in the system. So definitely once tariff is reduced and there's a little bit lesser stress on MSME, SME, SBI tends to benefit.
Got it.
So HDFC Bank, SBI, ICICI, as I've discussed last time, City Union Bank, and one another stock, of course, with a disclaimer that one should invest from long-term perspective only and take help of financial advisors, Piramal Enterprise. That is a very interesting stock, trading at below book value, 0.9x, and likely to grow at 30%. The growth book, which is around 80,000 crore loan book, is going to grow at 30%. So it will double by FY28. And ROA very naturally is moving from 1.5% to 3%, just due to operating leverage and their fee income going up and little bit of help from cost of funds reducing. So I would say that this is a company where you'll see profits going up 3 times from FY25 to FY28. FY26, in fact, the PAT is expected to be 1,300 crores, which is 3x of last year. So this is a company where you can see your market cap can double or triple in next 3 years.
Wow.
If the economy holds on, which I think will hold on because of the steps taken by government and RBI.
You are saying, Parag bhai, just so that our viewers get it right, 3x profit
by
in
FY28.
In 3 years, right?
Yes.
So 3x FY25's profit in FY28.
26. In fact, 25 was only 485 crores. 26 is likely to be 1300 crores. First quarter already was 275 crores.
Sure. So 1300
and it is going to 3500 to 4000 by FY28.
Profits.
Yes, profits.
Wow.
And market cap is only 24,700 crores and net worth is 27,000 crores. So already it is below book value.
At the bottom of the cycle, as Parag bhai likes to buy it.
Yes.
Okay. Lovely. Okay. Just very quickly, Mark. So watch out for that, viewers. Today we've gotten some key nuggets from a trading perspective, from a positional trade perspective, from an investment perspective, from our experts. Very quickly, just because the pre-open session has started, just want to see if BSE, Angel One, KRBL, etc. are all reacting in a large fashion or no. Angel and BSE, not so much. Maybe it's still a delayed decision. KRBL not surprised, 5%. In fact, I reckon it will be more. Let's wait and watch if there could be some moves there. And then, of course, keep an eye out for a clutch of names. Adani Power, Engineers India, so on and so forth. All of which will be in focus. But, yep, KRBL certainly in focus. And Tamanna highlighted at the start of the show, right? The issue with KRBL, the independent director Anil Kumar Chaudhary resigned, citing governance issues. What were these issues? Mahima joins in with some details around that. Mahima, take it away.
Right, Neeraj. So as you rightly mentioned, Anil Kumar Chaudhary has resigned, and he said that there is inconsistency in board dynamics. He also said that in terms of the dynamics of board, they are inconsistent with safeguarding stakeholder interest as well. And he's cited out issues point by point. The first one, he said that inconsistencies in recording of minutes of board and committee meetings. Secondly, instances of information being withheld, impacting informed decision making. Third, he said unjust write-off of certain export receivables without adequate deliberation. Then he said concerns regarding the use of CSR funds are also there. Then he also said that arbitrary distribution of variable pay and annual increments to persons holding office or place of profit has been observed. And lastly, he's also said that significant changes in the object clause undertaken without comprehensive discussion and undue interference by invitees in the proceedings of board and committee meetings has also been observed. So he's given a comprehensive list of reasons as to why he is resigning, and this most certainly raises issue on the governance of the entire company, and most certainly a stock to watch out for in trade today, likely to be under pressure.
Thank you so much for that, Mahima. I also want to pull up and see what's happening with Info Edge. Not quite the same kind of a situation, but Info Edge also put out details of a whistleblower complaint that they've received for misgovernance and issues in 99acres.com. And there is a committee that they've put in place and a legal process that they've begun to address some of these issues. So that could be moving as well. Let's just take a look at some of the movers early morning, and not too much action, to be honest. It's quite tepid, for lack of a better word. Havells showing some movement. There's a Goldman Sachs report. United Spirits, Radico, all of them turn up in a take by top brokerages as a consumer discretionary story. Godfrey Phillips seeing some action, Tata Tech because of its acquisition, Apollo Hospital also because of brokerage notes, but not too much happening. Godfrey Phillips actually is the top gainer at this point, which is about 5 or 6 minutes into the pre-open session. So we'll wait for all of that to settle. Meanwhile, let me go across to Harsh for the big brokerage call this morning. Harsh, what are we talking about?
Yes, it's all about IT, right? We've had a fabulous week where IT is concerned, and UBS has initiated coverage on some of the mid and small cap names, or rather mid cap names. Let me be specific. Persistent, they see a 24% upside here. Outside of that, they also see upside on LTI Mindtree, 16%, and UBS on Emphasis, which is a 9% upside. On LTI Mindtree and Emphasis, let me take that out of the way. They believe with regard to LTI Mindtree, revenue and margin recovery is going to hold the key. IT, and that's where they see a 16% upside. Valuation, though, leaves little room for upside, is what they say. On an emphasis, they've initiated with a buy. They're saying that it's turning a corner after a few tough years. Again, here, a mid-teens kind of an upside is what they see. Let me talk about Persistent now, because that's the big one, near 25% upside. They're saying strong execution, and it's the fastest growing IT company, FY20 to 25. There's been market share gains, which is a positive. Plus, you've seen margins go up 600 basis points over the last 5 financial years. So you've seen consistent improvement with regard to its metrics. Now, when you're looking at all of this and you're putting it all together, of course, GenAI is a risk, but they believe that Persistent is best placed there. And they're saying higher exposure to tech and BFSI, fascinatingly, plus US exposure at 81% of top line is actually a positive. So, kind of rounding it off, trying to talk about valuations, 44 times 1 year forward is what this one trades at, and they believe that this is reasonable, just about a single digit premium to its 5-year average. But what they are saying is standing out is the fact that there could be possible upsides both in revenue as well as margins, which could surprise investors on the upside, which is why that near 25% upside in terms of target price is what they see.
Okay, so Persistent Systems, among them LTI, Mindtree, all of them mild today, not doing much in the pre-open session, nor are the markets actually in the pre-open session. But IT, you think another leg coming on, Parag Bhai?
So basically, frankly speaking, I'm waiting for, because I'm hearing a lot of contra opinions on here, because one is that TCS made that comments that AI application will increase the revenue opportunity for Indian IT services, while on the other hand there are various comments that it is deflationary because you don't have to hire people, so you will have to pass on the productivity gains to your customers. So a little bit confusion over there, but I would like to stick to large cap names over here because there is a confusion in the narrative. So I would like to stick to large cap names. Of course, Emphasis benefits from lower interest rates because a large portion of their business is with BFSI, especially to mortgage related BFSI. And if the rates are cut in US, which is expected on 17th, then definitely Emphasis will benefit amongst the mid cap names.
Any IT names that you would look at this point? You said Emphasis is a buy.
Yeah. So actually, first I agree with Parag Bhai that the tides shifted a little, where the small and the mid ones were actually doing well, but now the favor shifted towards the large names. So Infosys, perhaps even TCS, I think it also has to do with an element of margin of safety. So I would stick to the large names, but among the smaller ones, LTI, Mindtree, this one stands out. It's had a long phase of consolidation. Over the last couple of sessions, you've seen a golden crossover and the stock cross above and sustain above the 200-day moving average as well. The only reason we don't, or rather I don't prefer these right now is because the momentum's missing. But if I were to pick one among the smaller names, it would actually be LTI, Mindtree.
Yeah. Interesting. Technically, just keep in mind, LTI, Mindtree was an index stock until a few months ago, so it's not that small per se, but I get in what Kush is trying to say is the non-nifty names. If he's were to look at it, then maybe LTI, Mindtree features in that list of stocks to buy into. Well, certainly watch out for that. What else? If you just look at the pre-open rates and what is doing well, by the way, Piramal is doing well, so bear that in mind. The stocks are kind of quiet. I mean, just absolutely flat for almost everything under the sun. Vedanta has a bit of a solution reached, right? Resolution reached on a verdict and on a dispute, and maybe a lot of people fundamentally believing that might not be a bad idea per se, because ALM, zinc, silver prices are stable and higher versus the last 6 months. And therefore, that might give a bit of a support. Kush Bora, does it show on the charts?
Ever so marginally, because there is a zone 455 to about 460 where there is resistance. However, the recent swing high late August was close to the 452 mark. The stocks sustained above that. The opening also seems to be opening above that level. Volume on Friday, very interesting. So I would definitely keep it on my radar. I wouldn't issue a fresh buy because of the near-term resistances that the stock is staring at. But if I had a position, I would continue to hold. I would keep a stop loss near the 450, 452 zone and continue to hold. Fresh longs once 460 resistance is taken out.
Okay. Parag bhai, you've been constructive metals per se. What about a metal name today? Do you?
So I would not like to comment specifically on Vedanta.
No, leave Vedanta.
I have always liked Hindalco, which I have always said. And aluminium prices, mind you, on LME are right now closer to $2690, which is, I think, 2-3 month high. And so probably the results for this quarter should look good for any upstream aluminium company, which is Hindalco and Vedanta only. So I would say that, or in fact Nalco also. So I would say that yes, I am constructive in this space, and but as I said, I am more constructive on Hindalco, Tata Steel kind of, and also JSW Steel.
And also JSW Steel. Okay, Hindalco, Tata Steel, JSW Steel. That's a list of stocks which is interesting. By the way, there seems to be some fervor in telecom for sure. I mean, Vodafone seen some serious buying in the last few days, and I wonder if on the charts you would find some possibility of buying into a Vodafone or a Bharti Airtel. Kush Bora.
I would always prefer Bharti over Vodafone, but as far as levels go, Vodafone from a near-term perspective, yes, has done well in the sense that the jump up, from those 6.5 levels to 7.75 where it is supposed to be opening at currently, rather well backed with good volumes, 200 the moving average also being taken out. So yes, this momentum could continue to about 8 and 8.35, but as I said, I always prefer Bharti over, or maybe even Industars for that matter, over Vodafone.
I'm just wondering in terms of some of your big movers. Let's talk about GMR, Radico, Khaitan. Just wanted to see them as, because I thought it's interesting that in the consumption names that Jeffries talks about, they talk about some of these plays as well. Radico, Khaitan, United Spirits is something we should look at as well. All of them upticking in the green. As we get also towards the festive season, etc., towards the end of the year, is this the kind of premium discretionary spend that you would look at, Parag bhai?
So basically, as I told you, I have auto names, Havells kind of names, auto components, some of the auto component names to play this entire GST recovery. And now I think it is time to move on and think about second order impacts, and that is where I land up in financials. So I would play it that way. So for example, if you just see, HDFC Bank is the largest auto financer, right? If you are seeing 10% growth in Maruti small car sales and 20% growth, what Maruti has said, right? Mahindra is saying above 15% growth in sales. HDFC Bank will also definitely benefit, and now their CD ratio is down, so now they can lend. And they already have huge presence in tier 2, tier 3 towns in all auto dealerships. Same is the case with consumer durables. So market is seeing only one side of it, that Bajaj Finance will benefit, but HDFC Bank is there in all the auto dealer shops, and it is trading at 2 times book value only.
Parag bhai, sorry, but I'll have to cut you because the markets are starting. But we'll get back to that point once we just address the market open. So please stay on. But this is how the markets are starting. Flat, as flat can be. Banks maybe slightly higher, but it's a very flat start. And there is no way to camouflage this, frankly. There is no movement here. Mid caps and small cap indices, maybe they are showing some change, up 0.2% for the mid caps, slightly better. Small caps, 0.28%, not bad at all. Let's get the heat map up on the screen and show you what's moving and what is not. Okay, so Eternal, Zomato, 1.28%. There is strength in Bajaj Auto. Apollo Hospitals has news flow to it, so 0.7%. There is strength in Hero MotoCorp, so two-wheelers seem to be doing okay. JSW Steel, Jio Financial, Kotak Bank are amongst the others. A fair degree, I mean, it's actually a even Stevens, if you will, maybe a bit more green, but even Stevens, you can argue about it that way. What's not doing well? Infosys down 0.8%. Dr. Reddy, Shriram Finance, Sun Pharma, HDFC Life, that's the set of names. But you can almost argue that there is no key sector making a move aside of the fact that the two-wheeler names, the top two-wheeler names, are in the top 10 names, if that provides any solace. Hero Moto, Bajaj Auto standing out and Eternal standing out, but it's a very muted start this morning, Tamanna. Maybe you have better luck.
I doubt it, because from what we saw in the pre-open session, nothing much moving at all. India VIX mildly up in the green, but under any kind of level that you should look at, under the level of 12. Eternal, the only mover there, such a narrow range. Infosys still getting beaten down, and maybe it's a social media debate that is pulling it down more than anything else. Maybe it's a sign of a more mature Indian investor also that is asking for more than just a buyback and cash in hand. The taxation on it could be a pain as well. Let's pull up the broader markets for you this Monday morning and see if there's any action there. Well, just about mildly. The good news is that there isn't too much bad news when we're opening the markets. You should look at it that way perhaps today. 0.25% up on the Nifty mid-cap and small-cap indices this morning. Let's pull up the sectoral heat map for you and tell you what sectors are buzzing this morning. India Defence not doing too badly. So about 1% up there on defense stocks coming in. Some announcements over the weekend also pushing that up. Realty stocks showing some recovery. Nifty IT completely on the other end of the spectrum. Nifty Pharma also looking very, very flat. But the ranges, look at it, not even 1% up or down on either of the sectoral indices. So not too much action there. Let's get to specific stocks and see if there is any movement. Tata Tech on our watch list today because of an acquisition that they've announced. They're going to be acquiring a company which is fairly significant in the ER&D space. Are we seeing anything happening with Tata Tech? About 2.5% up. In a complete flat market for a stock that doesn't usually move, that's not half bad, is what I would say. Havells, the other one we've been tracking. Goldman Sachs has hiked the target price about 0.5% up. Watch out for more in the cables and wire space overall. KRBL, an independent director, has resigned with some very serious allegations. We told you it could be the accident of the morning, turning out to be about 11% down right now. He's saying minutes of the meeting not taken properly, no clarity in why there was various compensation made, some export orders not in the books properly. Lot of allegations there, 11.5% down. Watch out for KRBL. Radico Khaitan Jeffries has a positive view on it. It's a consumption play if you want to look at 1.5%, nearly 2% up. Adani Power new plant in Bihar is what they have announced. They will be setting that up. Nearly 3% up on the stock this morning. Info Edge, a whistleblower complaint on 99 acres. They have said very clearly that they will have an independent inquiry. That's why the stock not reacting too badly this morning. But not too many movers at all, Neeraj. It's quite a quiet start to Monday.
Yeah, very, very quiet actually. So just hardly any move. But I must say, the likes of Vodafone, Suzlon, etc. are all moving. So bear those stocks in mind for sure. On the large cap side, now Dr. Reddy's is certainly facing some sticks. So keep that stock in mind as well. Infosys is down over 1%. So there is some weakness into some of those individual names in the session today. Some gains are seen for stocks like Shakti Pumps. So that stock is up. Andhra Petro is up another 8% if I'm not wrong. So bear that stock in mind as well. Andhra Petro should come up on your screen. Yup, 8.2%, so really strong going. I don't know what the market cap of, no, leave Exaro. Themis Medicare, up another 7.5% by the way, was up I think last week sometime as well, so good going there. Ratel up another 6%, so that stock is doing okay. RPSG Ventures is up another 4%, that's the Sanjeev Goenka Group company, so that stock is doing okay. Astra Microwave has some gains, so about 4%, no big waves. And by the way, just keep in mind Anantraj and some of the others, because data centers, there are some big policy benefits that have come in for data centers, which could actually help this set of stocks do really well for themselves. So what's come in apparently is that the government has proposed a tax exemption of up to 20 years for data center developers, provided they meet some targets on capacity addition, power usage effectiveness, employment generation, etc. So bear all of these things in mind. You know, I mean, a lot of unlisted and listed companies feature in this list of beneficiaries. The one listed name that I can think of is Anantraj out there, 5% higher. Kush Bora, on the charts, Anantraj, and then of course your opening thoughts.
Anantraj, very interesting moves already within the first 5-6 minutes of opening. The volumes are clocking near the last 20 days average. The price action speaks for itself. This is a good breakout. I think this is here to stay. The momentum could take the stock to about 575, 590 levels. Then it hits the 200-day moving average, and then we see whether it crosses that or not. It hasn't done it for some time now. Stop loss on this one, close to the 545, 550 zone. But yeah, this is a good breakout. As far as the market goes, Nifty a little soft is not a concern. what is heartening to see is the bank nifty in green. Now, if the bank nifty remains in green, I can bet all of 10 rupees that the FI short covering will continue. That is what the data has shown. They've been heavily short on the bank nifty. If this stays positive and moves higher, the FI short covering will continue, and that will support the markets. So yes, that's a good sign. One pocket, and incidentally, I was ready for the opening stock of the day. We just kind of missed it from the defense pack. Data patterns could break out in the last couple of sessions. Today also opened well, sustaining well. I think now the risk reward ratio and the momentum, both factors going for the defense pack. If you want to pick anything, BEL, HAL and data patterns. These are the three stocks that are on my radar from a positional standpoint.
Just to talk about the defense piece, and here's what's happened. On Saturday, an announcement has been made that the Defense Ministry will examine a proposal to procure 114 made in India Rafale fighter jets. The 2 lakh crore rupees is the total size of the procurement that will take place. 60% of it will be indigenous content, so it will be in collaboration with Dassault and Indian aerospace firms. I mean, it's interesting because of all of the hullabaloo around the Rafale, etc. 114 made in India Rafale jets will be procured, and that order will be examined, which is why you're seeing defense on a big move right now this morning. Of course, we'll have to drill down and see which of these actually could be beneficiaries to this specific fighter jet piece. But data patterns definitely seems to be one of them. Is defense looking interesting to you, Parag Bhai?
So we have continuously held this view that HAL and BEL are the stocks which we will buy when defense flavor goes out of the fashion. So when people forget war and people...
But they were out of fashion for the last
so that's why we have bought HAL in that fall. Because defense is something which comes in and goes out, right? There's a flavor. When everything is, when there is a war around and people are scared, suddenly defense comes back into full swing. So when it is out, we tend to buy HAL or BEL. That makes sense in our view. HAL has a high moat, 6-year order book, huge amount of net cash in the balance sheet. I think irreplicable business available at below 30x. So we love HAL and we love it when people hates it. So simple.
You were finishing your point when the market started, Parag Bhai. Missing out on what it was, but if you want to finish your point.
On which?
Okay.
It was I think cables and wires and GST pack.
So GST pack, I told Tamanna that once this entire auto components, consumer durables, all these things are done with, I think market will take a look that now financials are looking
HDFC Bank or Bajaj Finance in that
context.
I
have
Piramal Enterprises.
HDFC Bank. I have bought HDFC Bank, SBI, ICICI, City Union and Piramal Enterprise.
Okay, so not Bajaj Finance. That's interesting because
Jefferies has added very fast.
Jefferies has added them specifically in the context of GST play. So Parag Bhai, I think I know.
No, basically it is just a valuation. See, Piramal is Bajaj is a discovered stock with above 4 times book.
No one will say
Piramal is an undiscovered stock with below book.
Okay.
So that is the only thing.
Okay, and on your list in this context, financials that will benefit from GST spend. In terms of charts wise, what would be on your pecking order?
So broadly in the financial space, I like LTF. It has done phenomenally well. Now some signs of exhaustion, but any kind of dip, I'll take that as an opportunity to buy. Shriram Finance, we discussed this morning, slightly soft right now, but yes, I mean, even this is on my radar. I would consider this as well. Bajaj Finance, I completely agree. In fact, this was one of the stocks that I had shortlisted, but it's had, I think, 14 or 15 sessions of gains, deeply overheated, I mean, far overheated now. So maybe on declines, but right now, Bajaj Finance, perhaps, as a portfolio stock, continue to hold. Momentum play done for now.
Momentum play done for now. But remember, it had a big swift move sometime last week, Thursday or Friday, when it moved up 3%, if I'm not wrong. Amongst, of course, other moves that it has had. So, yep, certainly keep those stocks in mind. By the way, Parag Bhai, maybe we spoke about it, maybe we didn't, but this whole KRBL thing, I don't know if you saw it.
I have not seen it actually.
Okay, the stock is down 10%.
Yeah, independent director resigning due to compliance reasons.
And many other
governance reasons.
Governance reasons. So 2.5 million shares traded, by the way, already, and the stock is down 10%, so bear that in mind. Some risks that come in with stuff like that, so just be careful. Okay, so one is what's happening to some of those names. I think there are individual pockets of strength, like we said, and Naturally, so individual pockets of weakness, but on the industrial side, which is not what we talk about quite often, after a long time, Kush Bora, I'm seeing Ercon show a visible spike. Now, can we pull up that stock first? It's 5.5% higher on very strong volumes. What gives here? Any thoughts?
Very interesting moves on this one, and this was consolidating around the 20-day moving average for some time. This spurt is a very healthy sign. I think the resistance levels of 175 taken out. I would still wait because this is the first day in the last 7 sessions where it's given this kind of a spurt. 200-day moving average at 183, so very close to that level. If it does spike a little further from here, closes above that 200-day moving average, then it automatically becomes a very strong buy on technical grounds. So maybe give it one more day, see if the rally that it's seeing today in the opening session sustains. In any case, 176, 177, that zone which was a strong resistance level for the last 7 days, now acts as a support and a stop loss. So yes, if you have a position, continue to hold. Just a quick word on Axis Cades. It's already opened about 2.5% higher. Holding ground came very close to that 1650 target. So yes, I mean, if you haven't entered yet, I think it's giving you a good opportunity to enter now.
Okay, so that's your pick for the week, I recall, Axis Cades. A quick word on RailTel. RailTel firing up this morning. They have received an LOA, letter of acceptance, for a 209 crore order from Bihar, from the Bihar Education Project Council for the implementation of quality enhancement in Bihar. Nevertheless, nearly 8% up on that stock. Is RailTel something that you look at, Parag Bhai?
RailTel I have not looked at. I have not looked at railway sector stocks particularly.
Yeah, but I've never heard you. Why is that? Just curious.
I had looked at them when the prices were too low. So now I'm not able to, but of course we'll go through that. But as such, I am turning little bit more constructive on capex cycle also, as followed by financials. So financials is a second order impact, and third order impact is of course capex also, private
because
sector
consumption
capex
will ensure
that.
that.
Consumption will ensure that. So anything, for example, we have recently added a stock called LG Equipment in our portfolio. It has fallen a lot. It's a great company, superb promoter. 40 times trailing for cap goods is okay. And compressors are, remember, used in every industry. Auto, FMCG, pharma, every industry this particular thing is used. So I would say that I'm, for the first time after a long time, actually I'm looking at cap goods space.
You are saying LG Equipment, the manufacturer of compressors.
Compressors, yeah.
Which is used in air conditioners where there is a dearth.
So yeah, they are, by the way, they are big suppliers to railways also.
Okay.
Okay.
Interesting.
Have either of you looked at the IPOs that are buzzing? Since we've none of them. Not Urban Company. There is the some of the other companies. Shri Mangal Sutra. I hope I've got the name correct.
I have not looked at it.
I hope I've got the name correct. No, it's a 60 times oversubscribed.
Sure.
You're staying away from all IPOs right now?
See, right now there's a lot of enthusiasm, there's a lot of liquidity. People are not making too much money in listed markets, so people are diverting towards unlisted and IPOs and all. But there's a lot of euphoria in my view. Let's see. I will not paint everything with the same brush. Of course, there might be good ones. But we'll look at them after they get listed.
Are there any platform companies that you've come into at all?
Just that. It's a difficult one to remember, of course, but it's actually Shringar House of Mangal Sutra.
Shringar
I wouldn't blame you.
Shringar
I'll forget it in 1 hour's time.
No, I stand corrected. It's company is raising money. Shringar House of Mangal Sutra, and there's a third one as well.
They've Accelerator.
They've Accelerators. So all of them in the primary market. The primary market is actually showing more action right now than cash markets.
So that is why cash market is to be a size is where you should be.
Is it where you should be?
Yeah, because here there is fear. Here there is fear of tariff getting reflected in stocks. Fear of earnings not coming back and valuations are being stretched, and those kind of narratives are there in listed markets. So that is keeping listed market muted, which gives us opportunity.
That is something that you have to keep in mind as well. Thank you so much, Parag Bhai and Kush, for joining in on Monday morning, as you always do.
Thank you.
I've got the energy to the anchor table, but there is no energy in the street right now. Let's see where it can pick up, because we're now looking at metal stocks. Now, we're going to be speaking with Rakesh Arora, founder of GoIndiaStocks.com, just to give you a sense of why you should keep metals in mind and what the trends are looking like. But Anushi joining in to set up that conversation.
Hi, morning Tamanna. So, we are looking at the second best sectoral index in terms of how it has performed on year-to-date basis. Now, if you look at the index, it has overall been up 14%, while index has seen about 8% of gains in these last 10 trading sessions itself. But what's leading to these kind of strong returns that we are looking at? A couple of factors in play that we are seeing. Now, aluminium prices, if we look at, have surged back to the $2,700 per ton level, while zinc prices also have steadied. While if you look at silver continues to be in headlines, and that is what we are looking at. Fresh highs in the global markets around $42 per ounce. But firstly, couple of factors that we are seeing: China announcing more measures for the steel industry, overall more production cuts on the table. So this is an overall positive for the Indian steel sector as well as India-China in terms of how the steel prices are going. And these cuts are expected to support steel prices in both of these regions that we are looking at. Safeguard duty also on the domestic side. Government of India has extended safeguard duty for the next 3 years that we are looking at. And domestic prices also, if you are looking at, are currently at 9% of discount to the import prices that we are seeing. So that is another positive on the street. Other than that, weakening US dollar is something that we should be watching out for. And there are this makes the dollar price metals cheaper for global players as well. And now with the expectation of Fed rate cuts on the table, it is something, that the investors are cheering about what this could mean for the steel industry as well. So this is the overall conversation that we'll be having on what's leading to these kind of gains that we are seeing in the metal pack.
Thanks, Anushi, for setting it up, and absolute pleasure to welcome in Rakesh Arora, founder of GoIndiaStocks.com, Johnson right now, with his sense on metals per se. Well, we could have even made it a cement conversation because that pocket is so active, and Rakesh has a great view, an eagle eye on both of these amongst many others. But Rakesh, for today, we'll focus on metals, right? So what's your sense, Rakesh? I mean, global growth may be anemic for now, but there's a lot of chatter around how, except US, if everybody else is easing, including China, that at some point of time, global growth might pick up, Chinese growth might pick up, and that might be that big push to metal prices and thereby fortunes of the metal companies. Is it as simple?
It's a little bit more complicated because actually growth globally second half can actually slow down, because what has really happened is that given all the chaos, China has been pushing its renewable agenda at a much faster pace than what we ever thought. So in the first few months of this year, they have put in 263 gigawatt of renewable power. That is equal to what US has overall, including solar, wind, etc. So they put what US has in just 7 months of the year. And so that is the pace they have been working on, and that is now starting to slow down a little bit. Similarly, on EV, meaning I saw your morning message that China is now outselling EVs as compared to the other cars in the world. So that again is reaching to a level where things might slow down. So I think China has been the big cushion, which has really cushioned the metal market in the earlier half of this year. Second half, probably they might slow down a little bit, and the impact of tariff will also start to kick in various countries. There was some support coming in from Europe, but that again is looking a little bit doubtful. So having said that, I think we are in a neutral territory. I won't say we are in a bullish territory for metals. However, having said that, India itself might see some bit of cyclical recovery. Q2 was a little bit weak for Indian steel companies. Prices actually dropped, 5 to 6%, and Indian steel prices were trading at a discount to import price, and so that's a gap of 7-8%, which they would try to recover during the busy season. So steel companies get into focus because of that. But for base metal, etc., I don't think we are going to go to the next level. Probably, we will trade around that $2,600 for aluminium and around, 9,500 for copper. So that is where I think it will remain in a stable zone.
So Rakesh, now given the kind of rally we've seen. Sorry, Harsh also joining in. Good morning, sir. So while we've already seen this very strong rally, want to try and understand how much of the upsides are already built in, and what pocket do you prefer, ferrous versus non-ferrous? Is there a preference you have, and rationale?
So, ferrous could do a little bit better because, they have scope to increase prices given the global prices. So I think from 3 to 4 month perspective, I think ferrous might do well. They would do a catch up over base metals, and that has already actually started happening in the last few weeks. So, but that rally had still some more legs to do. From long-term perspective, obviously, renewable theme is the mainstay, and aluminum stocks will do, overall, better over from a 1 to 2 year perspective. But short-term, I think, ferrous stocks could outperform. But having said that, we are looking at short rallies of 10-20% from here on. It's not a bull run.
Got it. Okay. Rakesh, the other question that comes to mind is that a lot of these businesses are doing individual corporate linked actions, which are, how do I say, wherein the cycle matters, but what they are doing individually matters a lot as well, right? And I mean, the case of Vedanta, which is always up to something, but some others too. So Hindalco in the whole Novelis angle in the aluminum demand, so on and so forth there, or in the case of Vedanta or some such, you do a lot of bottom-up thinking around businesses while you look at cycles too. Where, to your mind, is a classic confluence of the cycle being in favor over the course of the next 12 months sometime, and bottom-up factors also being conducive? Is there a mix there? Is there a confluence there on any business?
So obviously, you see, Vedanta definitely comes to mind because one, aluminum is doing very well, and that is their mainstay. If aluminum does well, Vedanta would do well. And then you add a little bit with the silver prices going up quite significantly. Vedanta has 700 tons of production of silver also. So Vedanta is better placed from a medium-term perspective. And then if you add all the dividends they've been giving out, which they will continue for some more period, so that's additional support kicking in for Vedanta shareholders. And finally, this demerger got a leg up today morning. And so if this demerger happens, maybe they might sell out some of the non-core assets. So that could be the thing to watch out for. So overall, things do tie up for Vedanta, but it's not a cheap stock anymore. It's a well-discovered story. So there would be upsides, but not like it's a non-multi-baggers here.
Sorry, just a quick follow-on on that count, Rakesh. Is there something you have in terms of a sense on the timing of the demerger? Because that's really the golden question where Vedanta is concerned.
Yeah, so I think one big bottleneck the reports say have been resolved. So now the next would be all eyes on the meeting for NCLT. If it happens, then it might happen in another month or so.
Rakesh, wonder how you look at the play with regard to rare earth. Would you at this point go for it? Would you wait? How do you find valuations? What are the opportunities like, and how should one play it?
So at the moment, it's a far-off story because there are a few bits of leases being given, but these assets normally take long time to develop. So I don't think anything is on the horizon in the next 2 to 3 years. So, and most of these companies who have taken these assets have very large businesses. So for them, the impact may not be that great financially. Not to say that rare earth is not important. It is extremely important. But financial impact may not be that great on most of the players who are trying to develop them.
Okay. This is great. Rakesh, can I just try and bring in how much of a bearing to your mind, just so that people understand this, how much of a bearing to your mind would China growth or lack of it have for steel players in particular? We know that the non-steel companies definitely get impacted meaningfully with China. On steel, wherein corporate after corporate is coming and saying that our prices will largely, yes, could depend on China, but we are also, the strong domestic demand is ensuring that things are okay. How much of a role would China play in the fortunes of the steel companies' financials over the course of the next 12 to 18 months?
So see, China's steel consumption is kind of peaked out, and it is on a decline phase, 1 to 2% every year. So what China exports is very important. At the moment, they're exporting full throttle, and this is the highest ever exports they've done in the last 5-6 years, reaching to the levels seen only in 2015 or 16. So it has a strong bearing. But in the last few months, Chinese steel prices have actually improved, and Indian steel prices, because of the domestic, slowness in demand, hasn't really caught up. So in the near term, I think we have catch up to do with the Chinese steel prices. But longer term, I think it will all depend on how much they export. There are all these noises about, cut in steel production, etc. But I think it will be very gradual. They can't. They need to support their economy for that 5% growth that they have slated for themselves. So I don't think they are going to cut dramatically. So it will have an overbearing on steel prices for India. Probably that is what is going to keep a lid on the profitability. But see, after at the current steel prices, profitability is quite decent. So I don't think there's too much for Indian steel players to complain. We're expecting, companies like JSW Steel, who did around 8,000 rupees per ton last year, to be doing around 12,000 rupees per ton this year. So that's a good improvement that we are already seeing for steel companies this year.
And Rakesh, you still, on the back of all of this, still like ferrous. So trying to understand what's the kind of upside you're building in on some of these names.
So tactically, ferrous does look better because we're expecting 7-8% jump in realization in Q3 and Q4. I think viewers also need to keep in mind that Q2 will be weak. So there would be hiccups when the results come out. But generally, Q3 and Q4 are looking strong for steel companies. Aluminum companies, the prices have not really changed that much. It's going to be stable. But alumina prices have dropped quite significantly in the last quarter or so. So companies like Nalco, etc., will be impacted a little bit because of that. So in the short term, tactical call, steel better than aluminum, but longer term, prefer to stay with aluminum.
Okay. Rakesh, before we wrap up, at least, are you done with the metal questions? Because then I have a cement question which I'm trying to squeeze in. Yeah?
Yes.
Okay, Rakesh, allow me to do that just before we wrap up. Are you constructive cement? There's a lot of talk around how prices have kind of stayed firm except for a few gyrations here and there. And if indeed the economy were to pick up because of consumption, etc., then cement pricing may look good, which may in turn help cement fortunes. And therefore, cement stocks are a consensus buy across brokerages and the sell side. Are you constructive?
Yeah, so cement sector looks quite decent. One, it's domestic, so I don't have to worry about tariffs, etc. Number two is that, the competition intensity in cement sector has reduced quite a bit after the large acquisitions that we saw in South India by both UltraTech and Ambuja. So competition intensity is down. Number three is that this GST cut, which has happened, is going to benefit, stronger brands more, because that is where, the retail customer was buying and was paying full GST. So there the demand uptake would be much better. So I would suggest, staying with the larger companies. They would be the one who would benefit from, pick up in demand from GST cut, as well as, there's a lower competition intensity. So they will be able to maintain their prices quite comfortably, and at the same time coal prices, petcoke prices have all been flattening out, so there are no cost pressures too.
Got it. Okay, Rakesh, last one question on sentiment, corporate sentiment, and the reason I ask this to you is because I'm borrowing this out of a note that I read this morning from MK. They said that companies expect about 8 to 10% delta in sales volumes because the affordability impact is much higher for lower income segments, and most corporates are seeing these GST cuts plus the interest rate reductions, etc., as a permanent expansion of the total addressable market. Now, you talk to a lot of companies, more so the smaller end of the spectrum companies as well, in a meaningful way, right? Dialogues with a lot of mid-sized, small-sized companies too. Is there optimism? Do you reckon that earnings are set to inch very, very smartly higher for select pockets once the festive season begins on September 22nd?
Yeah, the hopes are extremely very high from this festive season. And but the only caveat I want to throw in is that due to the weakness is getting extended from Q1. So, and those results will be out during the festive season. So there could be hiccups out there. But definitely all domestic focused, companies are very, very bullish. But, same can be said about the companies which have export. They are still grappling with, how to tackle this 50% tariff. So it's a mixed bag overall, I would say. But domestic sectors, definitely there's a little bit of optimism.
Okay, Rakesh, so good talking to you today. Thanks so much for giving us a lowdown on a lot of things, predominantly metals, but also that word on cement thrown in was pretty good. Thanks so much for joining in today.
Thank you, Rich.
That's the view from Rakesh Arora. He tracks metals, cement, amongst other things, very, very closely. So great to get his view. Okay, well, energy is the other space in focus, right? As the government is planning a comprehensive strategy to build a complete domestic solar value chain, from polysilicon to ingots, wafers and cells, with the target for indigenous cell manufacturing by 2028. To discuss this further, we'll be speaking to Vinay Rustagi of Premier Energies. But before that, let's get in my colleague Varsha to just tell us more about this Swadeshi solar cells. Varsha.
Thank you so much for that. As you rightly said, now Premier Energy is in focus because government has targeted Swadeshi solar value chain by 2028. Now this includes your cells, modules, ingots, wafers. Now why we are doing this? Because India is completely reliant on China, when it comes to these components. Like for example, the domestic capacity of wafers is just 2.2 gigawatt. So this target will actually help us to move beyond China. Now onto the Premier Energy, this will actually benefit this company because company is into cells and modules manufacturing. And onto the order book, or rather onto the capacity, if I were to talk about, has an aggressive capacity of cells, ingots and modules of beyond 10 gigawatt by 2028. They have a vision for 2028. Onto the order, if I were to talk about, as of June 2025, the order book stands at around 8,300 odd crore. And lastly, if I were to talk about the revenue by geography, the domestic revenue contributes almost 99% for the company. Rest is export, it's just 1%. And modules contribute almost 70% plus of overall contribution, followed by cells and others. So overall, this target of Swadeshi solar value chain will actually benefit when it comes to Premier Energies overall.
Okay, thank you so much, Varsha, and glad to get all those details in. Vinay Rustagi joining us this morning, Chief Business Officer of Premier Energies. Mr. Rustagi, thank you so much. Tell us a bit about these Swadeshi solar cells. Let's start there.
Hi, thank you for having me. Like your news person mentioned, solar value chain comprises 5 different stages of manufacturing. Starting with polysilicon, ingots, wafers, cells, and modules. Cells is actually the most complex and technology-intensive part of the entire value chain. Currently, because of the government policy, this part of the business is growing very rapidly. There is something like 50 to 60,000 crore rupees of investments which are going into cell manufacturing in India. We ourselves are one of the largest cell and module makers right now, and in fact are expanding our capacities to 10 gigawatts over the next 1 year. The idea is that with cells being made in India, India should be completely self-sufficient in this business by about in the next 12 to 15 months.
Is there any government subsidy for your move on Swadeshi solar cells? What is the kind of investment right now? Trying to understand what this actually, it's a great concept and of course something that the nation needs. But what is the impact it's having for you on your books right now?
See, the impact that it is having on our books is that what the government has done is the government has imposed some duties against imports. And then there is also a policy to use only India-made cells as far as possible in most of the sector. So what that has done is it has boosted the demand for domestically made cells, as a result of which companies such as ourselves are directly benefiting. Our order book is, in fact, even over the last 2 months, it has grown by more than 2,000 crore rupees to go to cumulatively to about 10,500 crore rupees. So these moves by the government have given confidence to companies, including us, to invest more in the business. We are currently undertaking a 12,500 crore rupee capex over the next 3 years, and to indigenize the entire value chain in India.
Mr. Rustagi, this is Harsh here. So what does this do, sir, incrementally to your top line? I'm just trying to understand and give maybe viewers, investors perspective. Do you expect to see a stronger top line growth, medium term, long term? And if so, how much? Could you quantify it for us?
Yes, I mean, sure. So, like I said, we are currently in the process of more than trebling our capacity. So, both cell and module, we are going to between 10 to 11 gigawatts by next year. So, definitely that will result in almost a pro rata impact in our top line. And then our further plan is to go into related areas like batteries, inverters, and also upstream solar manufacturing, ingots and wafers. So all these things together should boost our top line by something like 3 to 4 times over the next 2 years.
Vinay, hi, Neeraj here. Just trying to understand, the growth rate anyway seemed very, very strong. Now, does this add a layer of further growth in the next 2-3 years, or are capacities constrained for the time being and this will be a growth trigger for beyond FY28? Just trying to understand.
Well, actually, if you see, the growth trajectory for the solar sector in India is extremely strong. In fact, we are very confident that growth is going to surprise us on the upside. Because all the measures that the government has taken, whether it is the residential rooftop solar market, the agri solar market, or the corporate market, are now bearing fruit, and growth is on a very strong upward trajectory. So that is one part of the picture. Second is, we must remember that India is one of the, in fact, the most competitive solar module producing nation, bar China. So to the extent that India is able to negotiate favorable trade treaties, with EU, US, etc., we expect a healthy pickup in export activity, which should give us a lot of scale and cost advantage. So, those are two things because of which there is a great growth momentum. The third thing is that with the growth of the solar sector, there is a lot of growth coming up in allied areas. For example, storage. Storage, we are going from almost zero as of last year to something like 40 gigawatt hour on an average year on year within the next 2 years. So, and we ourselves are setting up a 12 gigawatt hour battery storage manufacturing capacity. So because of these, we expect a very strong pickup in the sector overall, as well as in our top line and bottom line over the next few years, even beyond FY28.
Got it. Okay. But that was my point, that would capacities allow you to take benefit, or capacity constraints restrict you from taking advantage in the very short term of this change, even if the opportunity were to present itself?
No, I mean, we are a very nimble and agile company. We have a very strong balance sheet. So we are constantly evaluating the market, both in terms of greenfield opportunities as well as acquisitions and other inorganic opportunities. So we are able to assess in a very quick space of time the overall demand supply situation. And in fact, are looking at various other proposals to ramp up the pace of our growth and capacity even faster than what we have announced in the market right now. So we are ready to move as and when the next phase of opportunity arises. You would also know that we also have a plan to set up a manufacturing plant in the US. Now, that plan has been on hold for the last few months, given all the uncertainty in the US policy. But as things begin to settle down over there, we will definitely take up that opportunity and also look to grow our US business. So I think on the whole, we see enough growth levers for us over the next few years.
Okay, thank you so much, Vinay, for speaking with us this morning. Premier Energies, and the whole concept of Swadeshi solar cells really is something that we need to do down the line. I mean, India right now at the cusp of so many overarching large plans which will take time to fructify. So you might not see the markets reacting to them immediately, but these are important times and important stories to note. Nifty completely flat, so is the Sensex. Market's not in the mood to move. For all of you out there in Mumbai who are watching this, please be safe. We're getting reports from our colleagues, the streets beginning to get flooded, jams coming in. So maybe schools could be let out early. So just hang in there. We'll take a very short break, but while we go into that break, just to tell you that 15-year-old adolescence star Owen Cooper has made history. He's become the youngest male actor ever to win an Emmy. He was just 14 when the series was filmed, and the show is his first professional credit. Despite his young age, Owen has delivered a powerful message during his acceptance speech that's sure to resonate with all audiences.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Welcome back. Thanks for staying with us here on India Market Open. Healthcare stocks in focus. And let's shift, or rather, let's focus in on some of those. You have Apollo Hospitals, Yatharth, as well as maybe not a pure healthcare name, but even Northern Arc on the radar. Varsha joins in to help us with the details on those.
Well, thank you so much for that. Let me start with Apollo Hospitals, wherein they're going to acquire 31% stake in one of their subsidiary, Apollo Health and Lifestyle. from IFC at 1,260 crore. Now this deal is just a strategic, just for the better capital allocation and for operational synergy that the company is doing. Also, Apollo Hospital have also, they're going to set 100-bed oncology center in Gurugram. Now also they're going to scale up this oncology business to over almost 5,000 crores in next 3 to 4 years. Next on the list is Yatharth Hospital, wherein they're set to acquire 100% stake in Shantived Hospital. This is an all-cash deal for rupees 260 crore, and this will actually strengthen their footprint when it comes to Uttar Pradesh. Now onto the Shantived Hospital operates almost 150 beds with an expandable capacity of 250 beds, and they have generated revenue of around 50 crores in FY25. Last on the list is Northern Arc, wherein DAM Capital has initiated a buy on Northern Arc with a target price of 335. They say that the ROAs could enhance further, but they expect asset quality to be a bait from H2, but expecting a normalcy when it comes to FY27. Overall, if you see, stock is also trading at an attractive valuation. So these are 3 stocks on my radar as of today.
Okay, and these are the buzzers actually, and we're hunting those buzzers down for you this morning in what is a fairly quiet market that we're seeing. Not so much for rail stocks actually. Look at RailTel, look at Ircon, Anant Raj, some of the ones that we spoke this morning. RVNL, rail stocks are really buzzing. So possibly our Alcobev stocks, at least you should keep them on your radar. Jefferies is very bullish on them. They've initiated a buy rating on United Spirits, Radico Khaitan and Allied Blenders. Why is that? Mahima joining in with more details.
Right, Tama. So as you rightly mentioned, Jefferies has initiated buy on 3 of these Alcobev counters. The first one is United Spirits. They've initiated a buy with a target price of 1570. Then Radico Khaitan with a target price of 3590, and Allied Blenders with a target price of 620. The three stocks they've chosen is on the back of the premiumization theme. What they're saying is that the spirits category offers premiumization-led strong growth potential for all of these 3 companies. They're seeing double-digit top-line CAGR across companies and meaningful room to expand margins also going forward. For Radico, they're saying it's one of their top picks and leads to a growth of more than 35% in terms of EPS CAGR. United Spirits, they're saying that it offers favorable risk reward after a 20%, more than 20% in fact, stock correction that we've seen in the counter. And lastly, Allied Blenders is a dark horse is what they're saying, with meaningful upside, but execution here holds the key for Allied Blenders. So this is the overall view as to what makes Jefferies bullish on these 3 counters.
Got it. Okay. Well, certainly watch out for these companies. And I think we're seeing that uptick there in these stocks as well. Also keep in mind the macro commentary that is coming in from the companies with regards to the kind of total addressable market in a sector which is, well, governed by government policies in a big way is interesting, because normally in FMCG you do not have as much government interference and pricing as you do in alcohol beverages. But alcohol beverages as a pocket on the consumption side has much lower penetration, if you will, and adoption as opposed to some of the other buckets. And I think that argument will always be there about how much can it do further, and what's the kind of valuation multiple compression comes in because of state governments' policies. But certainly something that people are warming up to, and it's showing in the stock prices as well. Okay. Let's figure out some other buckets now. From a stock idea conversation to buyback gains, and I think it's important to understand how will buyback gains be taxed under income tax rules. So I think it's a very critical part as well, simply because we know that from 1st October, I think there's a post that was put out by one key market person about 3 days back or 4 days back on X, which led to this debate actually gaining widespread momentum as well. So if you are wondering about what could the impact of this be, right, let's get in Harsh to break it down for us. Harsh, simplify this for us. What would the new tax rules mean for buyback gains?
Let me start with the conclusion, Neeraj. The taxability of this is going to hold critical fort if you are an Infosys shareholder and going to opt for buyback. So you really do want to listen to this one. Let's talk about what the law says. Buyback proceeds are taxed as dividend income, not as capital gains, and dividend income, so basically the full 1800 rupees will be taxed as dividend income in your hands. That's the first piece of the law. Company will deduct a 10% of the buyback value as tax deducted at source, and no other tax will be paid by the company. So company is completely exempt. They'll pay out the 1800, but out of that 180 will be deducted as TDS, and thereafter 1620 will be paid out to the shareholder. 180 as TDS will reflect in your account. The tax paid by shareholder at income tax slab rate. So your dividend income which is coming in at 1800 will be taxed at a slab rate. It could be 0, it could be 10, it could be 20, 30, whatever your slab rate is. That's the key component that you need to find out before you opt for this buyback offer. Capital loss, though, of course, because you've had a purchase price built into the shares that you've opted to give out for buyback, the capital loss can only be set off against other capital gains and not dividend. So you actually have to have gains to ensure that that loss gets offset. That's something you want to understand. Let's break it down into easier numbers. 1800 is your offer price for buyback. TDS deducted will be 180, which will reflect in your account, which is the shareholder's account. The net payout will be 1620 rupees in your account. Now let's talk a little bit about what the tax could be. If it's a 20%, it's 360 rupees on the 1820, and 30%, it's 540 on the 1820. That brings the gains to lesser, or rather the accrued number of profit will likely be lower for some persons. If at all you sell it even at market, that could be slightly more sensible as well for some. So you want to take note of that part. Cost of shares to be treated as capital loss, I did mention that, so that's all. And capital loss can be set off, can reduce tax only if you have other capital gains. I want to reiterate that. Last off, most relevant pieces. Shareholder falling in the higher slab rates are disincentivized from opting for this buyback. You still want to do the math with your chartered accountant, but and therefore will be subjected to higher taxation on the full 1800 rupees upfront. But again, if you have capital gains, that may vary, and cost is to be treated as capital loss and set off against capital gains. That will remain common even for shareholders in a lower income tax slab rate, but they are incentivized because you'll have a far lower rate which could be payable on your total cumulative amount coming in of 1800 rupees, but you will also get a deduction likely if you have capital gains. So there is of course an incentivization for some of the lower income tax slab rates shareholders, but a disincentivization for some of the higher slab rate shareholders.
Okay, so net, you're going to be taxed exactly how your tax slabs sit. So there is going to be no extra benefit coming in, and you need to do your calculation on whether it works out for you at all. All right, let's turn the conversation to the bigger picture. Manpreet Gill, Chief Investment Officer of Africa, Middle East and Europe, Standard Chartered, joining us this morning. Manpreet, absolutely fantastic speaking with you. Thank you so much. It's always a pleasure. Just want to get the global view as far as India is concerned. It seems, and ironically I say, because in Mumbai the clouds are definitely not parting, but in terms of the overview for the Indian markets, consumption boost coming in, inflation numbers fairly benign, Fed set for another cut, and maybe Trump taking his gaze off India when it comes to tariffs. All roads are leading here.
Well, good morning. You're right. I think if I look at the various range of factors out there, I think in absolute terms, the picture is turning a little bit more positive. The question, of course, is in relative terms, where do Indian markets sit relative to the rest of Asia and EMs? And I think at this point, I'd focus a little bit more on the global drivers, because we're quite focused on the Fed decision ahead, because I think that's quite key to whether the recent optimism in sort of risky assets and equity markets around regions, whether that persists. And we do see a bit of a short-term risk of over-optimism in the short term, but also the dollar. And I think, we've always been of the view that a weak dollar would be positive for flows into emerging markets, including Indian equities. And I think the good news here is that we've seen, despite, short-lived upward pressures on the dollar, the default path has still been towards a weak dollar, which we think is a positive. So once you think about that global backdrop with, of course, what's happening domestically, we do think that that does point to a slightly brighter picture ahead.
Okay. Manpreet, good morning. I mean, there is this whole interesting debate, and I'm just taking a leaf out of what you said, right? That people look at US exceptionalism for the last so many years, and particularly the last 2 years, and people thought, okay, 2025 will not turn out to be like that. It almost didn't until it has for now. And then people say that, okay, could a dollar demise and therefore a look out of America lead to the American markets underperforming? And voila, we already know that American markets are actually amongst the best performing markets for 2025 thus far, right? So does one take a bet preempting possible de-dollarization, or let it happen and then take a call? How does an investor behave? How does an advisor like you behave?
Well, I keep it simple and just try and take a cyclical view on the dollar, because to me, the big picture de-dollarization debate, that's a very long-term debate that will be with us for a long period of time. And this year, we've seen various periods where US equities have underperformed and then more recently outperformed global equities. To me, when you're trying to take a view on US versus, say, Indian or Asian or emerging market equities, I just say, look, are the cyclical factors for a weak dollar in place? Because regardless of what US equities do, as long as we get that weak dollar and potentially weaker dollar, if you start looking much longer out, which can happen due to a variety of reasons. It could be as simple as interest rates finally starting to come down the US and catch up with lower rates elsewhere. It could be just your relative earnings growth or valuations across asset classes. That to us is all that matters, and I think that's why we've taken relative overweights. I think in our global portfolios, the US is still obviously going to be a sizable asset class. We just want to take that extra tilt, we think, towards emerging markets, because looking through these periods of under and outperformance, we still think long term that trend will still be for US underperformance. Now, short term cyclicals matter. If I look at Asian emerging markets today, actually there's quite a lot of that optimism baked in, and to your point, the US has actually been outperforming recently. So we could see a bit of a challenge over the next month or two, and that's why we're so focused on the Fed and market positioning going into that. But to us, long-term investors, it's about looking through that and saying, will the dollar stay weak or get weaker? We think yes, and that's enough for us.
Right. Manpreet, this is Harsh also joining in. I'm curious to know, and bringing the subject back home, we've seen so many measures taken by the government to boost growth, and India is a growth market. This slowdown in growth likely also one of the factors that's weighing on markets in India, and a large contributor to that is FIIs. Does the FII picture change or the viewpoint change as a result of all of these measures that the government has taken, both on growth as well as on Indian markets?
Well, if you look at the cross-section of views out there, the answer would be yes. I mean, if you think about, a cross-section of FII views around the market going back 6-9 months, you could see quite a few, very vocal sort of pessimists. I think today we've seen less of that. But I think it'll always be a combination of the two factors. I think it's about the absolute story to say, look, are those sort of policy stimulus measures likely to pay off? I think the fact that we've got quite a few already, means that we've gone through a period of fairly subdued earnings, means the outlook starts to look a little bit better. Of course, we'd all be happier with slightly more inexpensive valuations. And then there's a relative picture, right? To more of those FI flows in relative terms flow to India or elsewhere in Asia. So there are two-step sort of process there. I think when you think about FI flows in absolute terms, I think I'd come back to the dollar, because that still is one of the biggest determinants. Because even in an underweight or a neutral scenario, you could argue that Indian equity should still benefit in a weak dollar from some FI flows, even if a larger share go elsewhere. But without that sort of weak dollar, it's quite hard to sort of make a case for strong FII flows, regardless of the view on the domestic economy. The only good point I'd say is that yes, I think we've been through some weakness. We've got a lot of policy measures. That's why we're also retaining our overweight on Indian equities domestically, because we do think there's enough there now, as long as we just get less bad news, to deliver outperformance versus bonds and cash.
Okay, that's interesting, Manpreet. When we say less bad news, I would say you've seen incrementally good news, perhaps. How are you looking at the impact of the GST rationalization, which will start showing up in consumer behavior September 22nd onwards?
Well, to your point, incrementally good news. I guess I'm always sort of looking at where we are relative to what markets are pricing. And I think the GST is a great example, again, of a steady trickle of policy stimulus. I mean, look at the estimates out there, anywhere in the region of half a GDP, growth improvement plus obviously, help sort of cap inflation. So there's no doubt that from a growth stimulative perspective, it is a positive measure. But I think where it starts to really add value is when you look at an aggregate with, RBI rate cuts in the past. We obviously started the year with more support for consumer consumption. I think when you aggregate it all up, and the fact that coming to the less bad news part, less bad news on the trade front with the US, at least some, we're in a slightly better place than where we were a few weeks ago. All of that adds up to a little bit more positivity. And I think that's why through, some of the volatility, we've been happy to retain our overweight on equities. And that we think it's about return expectation as well. We're not expecting a return to the heady days of high double-digit returns, but we still think it's a better place to be than, holding out in bonds or on the perceived safety of cash.
Okay, you're obviously constructive India, if I can call it that, in slightly more subtle terms. Just trying to understand what you believe will be the pockets of beneficiaries in India as a result of all that's happening domestically, as well as with an eye on the globe. You have Europe, which seems to be bouncing back a bit in terms of economic growth. India could be a beneficiary to that. Give us your sense on what the sectors are which you seem to be tilted towards.
Sure. And just to address your point, you're right. I think the issue is more that in absolute terms, we are positive. I think that relative discussion is where we face more of a challenge. So relative to Indian bonds and cash, we still think equities are a better place to be. But relative to Asia, I think that's where we're still more neutral in Indian equities. We still think there's room for China and Korea to continue outperforming for now. And I think that's where my comments are a bit more balanced. I think from a sector perspective, not a lot has changed in our views. I think one of our topics, of course, is consumer discretionary and financial. And I think the common thread that runs through both of those top down is the fact that they're much more tied to the domestic growth story with relatively less sensitivity to what's happening in the rest of the world. And that's not a theme we're taking just in Indian markets. It's a common theme in Chinese equities, common theme in US equities. In a world where there's much more uncertainty about trade, we still think getting more domestic economy sensitive sectors is a relatively better place to be, and that's why earlier in the year we sort of cut our technology sector overweight in India as well. So I think that's really the heart of our sector picks. And at the end of the day, if any of these growth stimulative measures do pan out as we expect, we should start to see the benefits first appear in consumer spending data on the margin. And hence sort of why we sort of pick that as the first sort of port of call from a sector perspective.
Preet, a very critical question is this. The Indian markets relative underperformance to MSCI Asia ex Japan is the widest in 30 years. So India has underperformed. One of the reasons would be slightly lower growth than anticipated, which the government has tried to correct, and Q1 GDP was very strong. Two, the current thawing of the India-US equation, maybe India-China equation as well. Does all of this lead to FIs taking a bit more sanguine view on India? Have you heard anything to that effect in the last 7-8 days as the combined impact of all the three, GST changes and growth, the exchange between PM Modi and Donald Trump, as well as PM Modi's visit to SCO summit? Is all of that starting to show in investor mindset?
It is. It absolutely is. And I think it comes to where we started the conversation that all of these are positive on the margin. So I think we've gone away from that relative negativity to a more balanced sort of range of views. The other point I'd add, though, to your point on some of the biggest underperformance in 30 years is that it's not anything to do with Indian markets, actually. It's due to the fact of just how big a rally we've seen in some North Asian equity markets. I mean, if I look at the surge in Korean equities, for example, which have quite a big weight in the MSCI Asia ex-Japan index, I mean, that by itself has been remarkable in its size. And just to give you perspective, that's one sort of overweight we had in place and one trade we've actually taken profit on because we think it's gone almost too fast, too quickly. So it doesn't have to be just factors specific to India, but also just the speed and scale of the rally we've seen elsewhere. Look at the scale of increase in margin financing in China, for example. All of these also point to, in relative terms, perhaps that outperformance in North Asia has gone quite far, and that's something we'll be relooking at over the coming weeks, whether we want to retain that or not. But Korea is one trade, for example, we have sort of trimmed a bit of profit on because we do think it has gone a little bit too far too fast. So all of that, this I think is an additional factor which can help cause a little bit of reassessment, saying, am I happier, reallocating to a market that may have underperformed recently?
Little bit of assessment. That's interesting. Where is that positivity flowing in terms of sectors, Manpreet? Are you, excited about what the financials will do? If you have an overall consumption boost, anything specific that you're looking at? Maybe a retracement of the companies that were hit by the tariffs?
Well, we take a more of a top-down view on sectors. And I think the two I'd focus on is that we discuss consumer discretionary, but you're right, financial is another place, which is more of a domestic exposure as opposed to sensitivity to what's happening elsewhere. But at the end of the day, you think about financials, right? At a macro level, the two big drivers are, holding up of credit quality and what we're seeing on yields and the yield curve. And I think as long as we see growth stay supported, or to our earlier comments, see incremental positivity or less bad news, and we see the steepness in the yield curve sort of persist, we think that, of course, will be enough for the sector to still be a top performer. But I think the big sort of theme we're trying to take is we'd rather have domestic exposure because that's what policy is aimed at supporting, and that sort of avoids having too much sensitivity to what's happening on the trade front. That's sort of where our focus would be as far as our India exposure is concerned, if we had to take sector picks.
Manpreet, short on time, but I'm going to squeeze one quick one. I want to try and get your sense also, rate cuts on the annual for the US. How much are you building in? What's your opinion and what's the Standard Chartered view? Also, is IT likely going to come back into favor as a result of that? Indian IT I'm talking about.
So rate cuts, yes. In our view, what we saw in the US job market, I think cemented the debate about rate cuts into a rate cut. I think the debate is really about whether we get a quarter point or half point rate cut. In our view, we do think we'll get half point by the time we get to year end. At September, we're leaning a bit more towards 25 basis points, but I can see the case for 50 as well. The real issue here, of course, is whether that will be enough to stabilize the job market. And if I look at market pricing, there's quite a bit of optimism priced in terms of 5 to 6 rate cuts going out over the next 1 year or so. So I think in the very short term, there's a risk of optimism building into the meeting and perhaps having a little bit of a disappointment thereafter if we don't get quite as much dovishness as markets are expecting. But in the bigger picture, I wouldn't worry too much about that. Any sort of pullback, I'd see an opportunity because we do think the Fed has switched, will switch to mode of supporting growth rather than worrying about inflation. So knock-on impact, yes, look, technology may be a sector that should benefit from that, but for the technology sector, arguably a bigger hurdle is some of the trade tensions between the US and India. So if we saw some of those start to calm, as we already are, or if we're surprised by some sort of resolution, I think that's really what we'd look for before reconsidering our views on the IT sector.
Thank you so much, Manpreet, for speaking with us today. Always a pleasure to get that view. So incremental good news as far as India is concerned. Let's not pull out the party hats yet, but I think some important inputs coming in from that conversation with Manpreet Gill, and among them that Korean markets may be losing their charm and maybe time to look at India, but watch that space. Well, one thing you definitely have to watch is that today is the last day to file your taxes. If you were hoping for an extension, no, there is no extension. If you're reading fake news saying that there is an extension, don't, because there has been a clarification which has come in from the Income Tax Department as well. So what do you do if you fail to miss the deadline? Which you shouldn't, because we're giving you enough notice. But our very own Mahima, who's also a CA Mahima, telling us what to do.
Yeah, right, Tamanna. So as you rightly mentioned, there is no extension for filing your ITRs from here on. 15th September is the deadline. So if you've not filed your ITRs till today, go ahead and file them today itself. Now, who does this deadline apply to? Basically to individuals and HUFs who are not subject to tax audit. So individuals, salaried individuals, professionals and business owners where the turnover is less than 1 crore. Now, in terms of just a brief about how quickly you can go ahead and file your income tax, you can just log into the website, use your PAN and your password, navigate to the ITR, select the right assessment year. Of course, this is important. Choose your filing status, choose the right ITR according to what all sources of income you have, review and of course confirm your information, pay your taxes, and then e-verify them within a month. This is important. If you don't e-verify your ITR will be declared as invalid. Now, if you don't file one till 15th September till 12 AM in the night, you will have to pay a penalty of 5,000 rupees if your income exceeds that 5 lakh rupees, and below 5 lakh rupees, the penalty is up to 1,000 rupees. Now, in case you fail to file your ITR by today's deadline, you can file a belated return by paying this penalty plus fees, which is 1% every month till the time you file your ITR. So that's an important one. Now, in case you have made some mistake in the ITR that you've already filed, you can also file a revised ITR, and that deadline should be till next 31st of March. So that is also an important one. Lastly, in terms, and that is updated ITR, so that will be ITRU. So, you know, keep these things in mind, but of course the most important one is, if you haven't filed your ITR yet, go ahead and file it today before 12 AM, because today is the deadline, and as per CBDT, there is no extension.
Okay. No extension, file your ITR on time, and especially if you're stuck at home today because of rain, it's a good time to sit and do that in case you missed it. Thank you for that, Mahima. But just on that update, after overnight showers in the city, IMD has upgraded its orange alert for Mumbai to a red alert. As per the warning, intense to very intense spells of rains and thunderstorm accompanied with lightning will be witnessed in Mumbai city and suburban Thane and Raigad. My colleague Anuj joins with this report.
Mumbai and the rest of Maharashtra are currently experiencing the last phase of rainfall. I'm here in Matunga's King Circle, and as you can clearly see on your screen, water logging, which has become a major issue here in Mumbai for almost, a lot of years now in recent past, has again become a cause of inconvenience for Mumbaikars, even in the last phase of the rainfall. The intensity of the rainfall was quite heavy from 12 midnight till 6 AM in the morning, and of course the rainfall is still pretty intense and quite torrential, but relatively the intensity has gone down in the last couple of hours. As far as the IMD update is concerned, just an hour back we got to know from them that the orange alert, which was there in place for Mumbai, Raigad, Thane and the Konkan belt, has now been upgraded to a red warning. So the red warning will persist in Mumbai at least till the noon period today afternoon, and one can see that because of that, the intensity of the rainfall, although as I said earlier has gone down from what was the case earlier, is not reducing any further. It is going to become extremely important for the authorities to keep a close watch on the movement of the traffic, because it's Monday, it's the first day of the week, and traffic is going to be a major concern for the people. We've been reporting since morning about how the monorail and the defunctioning of the same caused a bit of an inconvenience early in the morning, especially because it happened for the second time in last 1 month. But a similar situation shouldn't occur with the other modes of transport, and that is why BMC, MMRDA and the other local authorities, including the Mumbai police and the traffic police, are taking the necessary steps. According to the IMD, of course, the next 3 hours are going to be very crucial, but the next 24 hours is something that the Mumbaikars and the authorities have to look forward to.
Okay, so stay safe, all of you in Mumbai. And, as far as the markets are concerned, even as we wrap up, India markets open, there are no rain showers of investors' cash at all. It's all been put away, maybe for a rainy day, and definitely no action at all.
Yeah.
But having said that, we can always talk about your stocks in your portfolio.
Yeah, after 7 days of gains, maybe give a break to the Nifty, focus on specific pockets, ask your queries on Ask Profit coming up next. Thanks so much for tuning in to India Market Open.
My birthday gift to Papa. ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है।
ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Welcome. You are watching Ask Profit here at NDTV Profit. I am Mahima Vachhrajani. With me is Puneet Jhaveri. Let's take a quick look first at the markets before we answer all your stock related queries. Well, the Nifty 50 is as flat as it can be right now, down by about 0.06 odd %, hovering in that range of 25,100 odd points. So the range is also very tight when it comes to the Nifty 50. The Bank Nifty doing a tad bit better than where the Nifty 50 stands, up by about 0.2 odd %. Let's try to pull up the Nifty heat map as well and see what counters are buzzing in trade today, and counters that are kind of putting pressure on the Nifty includes your names like Asian Paints, which is down 1.4%, Infosys down 1.3%, DRL down 1.2%, TCS, Shriram Finance, Sun, Pharma, Tech, Mahindra. Some counters in the red and putting that sort of pressure on the Nifty, but some counters that are keeping the Nifty in check and doing well includes Bajaj Finance up 1.5%, Coal India, Adani Ports, L&T, Bharti Airtel, ICICI Bank as well as Hero MotoCorp. Let's also try to pull up the advanced decline ratio and then the sectoral heat map as well, because that will give us a picture as to how the broader markets are also doing. There you go. There's around 1,536 odd advances versus that of 800 odd declines. So the ratio is almost that 2:1 mark when it comes to the advanced decline ratio. Let's also quickly pull up the sectoral heat map before I toss to Puneet for the broader markets. There you go. That's the chart. So far the Nifty Realty leading the entire pack. Then also followed by something like Nifty Small Cap Index, but Nifty Energy basically. Also. Nifty Next 50 is seeing good gains. If you don't look at the Nifty 50, Nifty Next 50 is seeing gains of about 0.5 odd %, followed by Nifty PSU Bank, Nifty CPSE, Nifty Metal also in fact seeing gains of about 0.5 odd %. But sectors in the red includes your IT, which is seeing profit booking down by about 1 odd %, Nifty Pharma down by about 0.6 odd %, healthcare, FMCG in the red. But Puneet, broader markets doing a tad bit better than the benchmark indices for sure.
Well, definitely, and it seems to be a positive momentum because we've seen over the last week as well that while sectors like auto and IT were in focus, we saw sectors like Nifty India Defence actually being the top gainer over the last week, and that seems to be a trend of a broader base rally, which is good for the markets because we've gone roughly about 400 to 500 points on the Nifty, and that's largely broad-based. The mid-cap 150, currently we've seen some revival over the last half an hour or so. It's up almost 0.2%, while the Nifty small-cap 250 is up 0.56% as of now, almost a 100-point gain. Finally, let's look at the BSE 500 as well, because again, as I mentioned, across sectors, we've seen a broad-based recovery. We've seen stocks like Lakshmi Organics up almost 7% right now in trade today. Ircon is up today as well, while something like a JBM Auto is up for the second consecutive day. On Friday, the company did get funding from IFC, and we saw the huge move in the stock on Friday, continuing its positive momentum today. KRBL is down notably, and Mahima did put out this piece that there was the independent director that resigned, citing some key governance issues. You've seen that stock recovered from down almost 12% at one point in the day, now down 9% as well, but continuing to put pressure. While something like JK Cement, Heidelberg Cement is also down 1 to 2% in trade, but that largely seems to be the picture, Mahima, where we've seen some better performance by the broader markets, but continuing to be very minuscule to form a kind of a momentum which could propel both these indices to the top.
True, and very stock-specific market, right? Newsmakers are kind of leading, whether it's in the red or the green, right? All right, so that's with regards to where the markets stand as of now. But with that, let's also welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Brijesh Share, Head Technical and Derivatives Retail Research at IDBI Capital, joining us now. Good morning to both of you, and welcome to NDTV Profit once again. I'll take up the first question, which is from Archana, who's writing us from Bengaluru. She's got 350 shares of BCL Industries bought at 64 a piece and wants to know if she can book a loss as of now and then enter into something like a Sona BLW from a longer term perspective. Brijesh, hi, good morning to you. I'll take this up with you. Do you think this is the right thing to do considering the noise going around Sona BLW?
I think we are talking about the BCL industry, right?
Correct, yes.
Okay, I think the structure for this particular stock is looking good on chart. So I think that momentum is there. This can go back to 50-55 level in the near future. So I think it's a hold view from my side.
Thank you, Brijesh, and welcome to the show. The next query which is coming is on Ircon. Now it's a stock where our viewer has bought in Chandan Jain from Hubli, Karnataka, has actually gotten in at rupees 160. He can hold further or book profits is the question that he's asking right now. Stock's trading at 184, so the viewer is in the gains. Saurabh, let me come to you. Very good morning to you. What's your view on a stock like Ircon?
Hi, good morning, Puneet. Yes, the view is positive. I think the valuations got higher in line with the PSU. All the PSU stocks got re-rated, and now the valuations have corrected. Now it is trading close to 2.5 times to book value. The P multiple has also corrected. The stock the company has a good potential. So in my opinion, I think it is a good hold for long term.
Okay, all right, so that's with regards to where Ircon International stands. We've got our next question from Pakshal, who is writing us from Bellary and asking about Genus Power. He's saying that he's watched the KYC show on this particular counter a few days back and wants to know as to what should be the next course of action for this particular counter. Since the stock is down, has corrected quite significantly, is this the right counter to make an entry from a longer term perspective, and could this be a multi-bagger going forward? Saurabh, I'll stick with you for this one. Your view on Genus Power?
I think we are yet to see the capital good stocks performing in the second half of the year. Genus Power is a substantially older company and with a good performance track record. I think the stock has taken a good rally last year and now it's a bit consolidating. In my opinion, I think this company should do well on the operational side, so it should be a hold for the long term.
Got the view, Saurabh. The next question that's coming is from Piyusha Kanodia, and she's writing into us from Jaipur. Query is on Hindustan Zinc. Holding at roughly 442 rupees per share is the query, and currently holding roughly 300 shares, advising for a long-term perspective is what she's asking for. So, Saurabh, let me come to you. It's a stock that's done well. We're also seeing silver prices skyrocket in this particular market. Do you expect some positive momentum for Hindustan Zinc going forward?
Of course, we are positive on the metal side, and especially it is when it is a proxy for the silver metal and the fundamentals for the silver. I mean, the prices are expected to go up further higher in the current calendar year, and in fact in the next year, because it's a commodity which is in deficit for the last 4 years, and going forward also it is expected to be in deficit. The management of the Hindustan Zinc is also confident about the higher production going forward, and generally also they are quite positive on the pricing and all. So in my opinion, I think it should be a good hold.
Okay, all right. So that's in regards to where Hindustan Zinc stands. We've got our next question from Ramana Reddy, who is writing us from Hyderabad, asking about Ipca Laboratories. He's got 300 odd shares since the past 3 years and bought at the levels of 845 a piece, sitting on significant amount of profit considering where the stock is right now at 13.15. Wants to know, considering so his question basically is, keeping in view Trump tariff on pharma, what should be the next course of action, considering he's a long-term investor? Should he hold or exit?
Ipca Lab is a very good pharmaceutical company. If you look at the numbers are keep on improving. And if you see the stock price on the valuation side, it is trading close to 4 times to book value, trading at a price at which it used to trade in 2021 also. I think the stock prices are already reflecting the problems because of the US tariff, and as and when it gets resolved, I think the stock can see a jump going forward when the things will be resolved. So from the operational front, it is a strong company. So in my sense, it is a hold.
Got the view. Saurabh, I'm going to come back to you with the next query as well, because it's on Birlasoft, and that's largely because the viewer is mentioning a key point that over the last 3 years that they've bought, they are actually holding at roughly about 223 rupees per share, and the stock, while moved up from that price, it's still not giving those kind of returns that was expected, and post Q1 as well, the performance was very weak. Do you expect any kind of positive momentum, or should the viewer exit this and enter into another mid-cap company according to you?
Till now, the view on the IT was not that great. I mean, all the big IT companies, if you listen to the management commentary, they were guiding for a mid-single digit kind of a growth for the calendar year, for the financial year 2025-26. But after the Jackson Hole Symposium meeting, when the Fed indicated that they will be lowering interest rate and the US economy is experiencing some kind of a slowness, it is expected that the interest rate cut will boost the growth there, and may will lead to more discretionary spend by the US companies, which will benefit Indian IT companies. So a tactical buy has come in the recent days on the IT stocks. Considering the Birlasoft, it is a very small company. A lot of volatility is being witnessed in the earnings of the company, and in the last few quarters, the earnings were not that great. I mean, they have experienced degrowth in the margin and degrowth in the profitability and lower margins. So commenting upon specifically Birlasoft will be a little difficult, but I would suggest to convert your money maybe in a big IT companies like HCL.
Okay, all right. So that's with regards to where the IT pack is concerned. For viewers who are tuning in, you can also call us on the number that's flashing at the bottom of your screen, as you can see, and ask your queries. All right. We've got our next question from Sunena, who's writing us from Bengaluru. She's got 200 shares of NBCC bought at the levels of 119. Wants to know if she can hold or exit at the current levels. Brijesh, on the charts?
I think the formation is quite okay. Recently, the stock has fallen and it has taken support at 100 level, and now we are expecting some bounce back. So that bounce can go back to 125, 130 level. So view is hold, and with a small resistance of 120, I think it can go back to 130 levels.
Got the view, Brijesh. But the next query is coming in from Hyderabad, and Shanmukha is asking a query on PSU Bank. Valuation seems attractive. There are some news reports of mergers, what they are saying amongst these, and for the long term, what are the top recommendations to enter right now? Saurabh, let me come to you. While the merger news might be still, very specific to what's happening right now, any view that you have on PSU banks? Because we've seen some revival over the last 4 to 6 quarters in stock prices, but now they seem to be still cheaper compared to large cap peers. But that discount has of course reduced. Any view on the same?
Yeah, you're absolutely right, Puneet. On the one hand, we have seen the multiples contraction being witnessed in the case of private banks in the last 2-3 years, and on the other side, the valuations are lower on the. If you look at the PSU bank side, yes, we have a positive view on the PSU banking space, especially the kind of growth in contrast to the valuation at which they are trading in. Some of the good PSU banks, maybe he can bet upon maybe SBI, Indian Bank, Canara Bank, or the Bank of Baroda.
Okay, so that's the view with regards to where PSU banks are concerned. We've got our next question from Sushila, who's writing us from Bellary and asking about IOL chemical and pharmaceuticals. She wants to know if the charts are attractive enough right now to make an entry into this counter. Brijesh, your view?
This stock has already moved up, and the breakout came from the level of 106. So yeah, definitely it can be bought in a staggered manner. Maybe some declines will be there from the current level, but yes, the view is positive. 140, 145 can be the medium to long term outlook for the counter. But a small decline close to 110 is on cards. So be dividing a quantity and buying it low would be more advisable.
Brijesh, the next question is coming in from Bengaluru as well. Sandesh is writing into us for a stock query on Mahindra & Mahindra. Given the price, 3,519, he seems to be a recent entrant, asking for a short and long-term view. So, Brijesh, let me come to you first, and then I'll go to Saurabh as well. Short-term view on M&M, do you see that the rally can sustain further?
Yeah, I think the rally can easily sustain because the monthly and the quarterly charts are extremely positive. But having said this, recently there was a small gap in the M&M, and that gap was somewhere close to 3,400 level. So there can be small corrections. But then having said this, whenever it comes back to this 3,400 level, that's a very pretty re-entry zone. So it is a buy. And recently for the last 3-4 days already there has been a correction. So 3,500 and 3,400 is a demand zone.
Saurabh, GST rate cut beneficiary to say the least. Do you have M&M as a preferred pick in the auto pack?
I think yes, it is a preferred pick, and that is why we are seeing it got re-rated in the last 1 year. The valuations have gone up on the if you look at the book value, price to book value, the stock has been the company has been a consistent performer, and after the GST cut, I think the demands will be it will boost demand surely going forward. So yes, it is a kind of a portfolio stock. It should be a hold.
Okay, so that's with regards to where M&M stands. The next one is an interesting one, Saurabh, and I'll come to you again for this one. Aditya from Tamil Nadu is writing in. He's saying his dad gave him Titan shares, 1100 in number, and he's not sure of the buying price that his dad had bought it at, and probably 15 years ago at 100 rupees is what he's saying. Wants to know if he can continue to hold for the next 2 to 3 odd years. The stock is currently trading at 3,541, so he's sitting on significant amount of profits for sure. But do you think that in the jewelry space, you would prefer holding Titan from a longer term perspective, or maybe he can book partial profits and keep some shares in his portfolio and maybe invest into something else?
The only point of view from the valuation, I think we feel it is a something expensive story. Consider the fact that the growth has been also, some kind of a seeing some slowdown. While the management is quite confident in the first quarter, I think of the calendar year, they experienced some slowdown. But overall, the management has guided for a good growth going forward. But yes, if you are in the market for investment to grow your investment, then I think maybe the gems and jewelry sector has been done so far has done with because of the valuation at which they are trading in contrast to that the growth that these companies are experiencing, the way the gold prices are marching up, it is quite evident that in future these companies will come with the lower carat jewelry going forward, which may push up some kind of volumes. But to my mind, I think it is good to book some profits, and I'll suggest to move some money maybe in the PSU banks or in the capital goods space.
Okay, all right. So that's the view with regards to where Titan stands. We've got our next question. We don't have the name of this person, but the query is on HAL and BEL. Says the counters have seen some upward trend today. If you can try to pull up the charts, there you go. Yes, HAL up 1.5% and BEL, if you can try to pull that up as well. it's trading flat, up by about 0.1 odd %. But wants to know if the rally that we've seen in the past couple of days in these counters, will that continue, and what is the expected target that you can expect from these counters? Your view on this, Brijesh?
So we are having a positive view on the HL. This is more of a trading bet. So we believe that HL can go back to 5,100 levels. This was the level from where the selling came. So on a short-term basis, yes, the HL can go to 5,100. And speaking of BEL, so not too much of an upside, but 420 is the level where it has got resistance. So some pullback will be there. Close to 420, again, this may see some resistance.
Got that view, Brajesh. The next query is coming in from Andhra Pradesh. The viewer is asking a query. P. Meghna is the viewer who's asking a query on Sandur Manganese. Bought at roughly about 211 rupees per share. So sitting on decent gains from those levels. Asking for a long-term view. Saurabh, do you have any coverage on this one?
Not specifically on the company, but yes, it is related to metal, iron, steel only, and we have a positive view on the steel companies. So in that sense, I think it should be a good hold.
Okay, we've got our next question from Chike Gowda, who's writing us from Bengaluru. He's got 1,000 shares of Vishal Megamart at 102 rupees a piece and wants to know the 6 months view with regards to where charts are concerned. Brijesh, enough data on the charts to give us a perspective?
I think the short-term outlook is positive on the charts. So this Vishal Megamart can go back to 160, 165. Like that would be the maximum 6 months view as of now. Some profit booking close to 145 is the re-enter zone. It's slow. It is slow mover. I think 165, 160 can be the next upside.
The next query is coming in from Bengaluru again. Venkat is writing into us for a stock query, specifically which they have on Paradeep Phosphate. They bought it roughly at about 190 rupees, 193 rupees per share. Stock's seen some correction from that, and they are concerned they should hold or sell these shares. Saurabh, any view that you have on Paradeep?
A positive view on the fertilizer, especially this year we saw a good monsoon, and in some areas it was excess monsoon, because of which the expectation is that maybe some crop could have got damaged. But going forward, I think for the rabi season also we expect good demand. Pradeep Phosphate is a very good company. If you see on the operational front, it has posted good set of numbers. The stock has seen stupendous rise, and thereafter it is experienced some kind of a fall. In my opinion, I think it should be a good hold for the long term.
Okay, so that's with regards to where Paradeep Phosphates is concerned. We've got our next question from Seema, who's writing us from Jodhpur and asking about Blue Jet Healthcare, whether this is the right time to make an entry. She's pointing out that the chart is indicating double bottom reversal. Can she add at the current levels from a short-term perspective? Brijesh, is that reading correct?
It's too early to say, but this level of 700 can be seen as a kind of a bottom kind of a formation, and whenever it starts moving, it can go back to 800, 850 levels. So there is opportunity in this.
Got the view, Brijesh, and definitely the stock was under pressure post Q1 earnings. Despite profits doubling, it was still below the street estimate as well. So keep that one on your radar. We have a first international query on WhatsApp. Wahida from Dubai is writing. Wahida, thanks so much for writing into us. Query is largely on Sky Gold. Even the gold prices are going up, no rally seen in this particular stock, and that could be largely because of the up move that we've seen a little prior to that as well. They're holding 200 shares, 347 is what their price is, so it's below that price right now. Saurabh, let me come to you on this one. Any view that you have on Sky Gold?
Not specifically on the Sky Gold, but yes, we feel that these all the jewelry players will experience some kind of a slowdown in the sales. Sky Gold specifically do the job work for the many brands, and it is a very small company. And I think the direction is not there for the growth. So in my opinion, I think that is the reason some kind of a profit booking or selling is coming in the stock. I think it is better to get out if you get your price.
Okay, better to get out of Sky Gold is the view that Saurabh has. We've got a next question from Munish Tripathi, who's asking about Eternal and wants to know what kind of support and resistance that you're seeing on the charts. Brijesh, your view? It's up 0.2% as we speak.
So for the eternal, the level of 300 is a very strong support. So that is the level from where the previous breakout also came. And on the way up, it is we have a new levels to be seen. On a like the recent high was 334. So I believe that level will be taken out. Maybe the 340, 345 will the next upside. So maybe 340 and 300 would be the support and resistance zone.
Got the view, Brajesh. The next query is actually on Axis Bank, and it's an interesting one because Chandrasekhar from Bangalore is asking if he should sell out of Axis and buy into HDFC Bank. Saurabh, do you feel that this is a good idea given the current context?
In my opinion, both banks are good. I think one can give equal weightages to both of the bank, and because from the diversification point of view, also it is good to have two private sector banks in portfolio.
Okay. All right. So that's the view with regards to these banks are concerned. But viewers, it's time to slip into a very short break. Brijesh, thank you so much for joining us. Viewers, we'll be right back answering all your queries on the other side.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू
watching Ask Profit here at NDTV Profit. Viewers who are just tuning in, a gentle reminder, you can either call us or WhatsApp us on the numbers that will be flashing on your screen in some time. And we are also joined by Ajit Mishra, Senior VP at Research Religare Broking, joining us now. Ajit, hi, very good morning to you. I'll take up the first query with you. This question is from Syed Shid. He's asking about TCS and bought at the levels of 3170, 65 shares is what he's holding, and wants to know the advice for the next 1 year. Okay, his name is Syed Rashid, my bad, who is writing us from Bihar. Your view on the charts, Ajit?
Yeah, good morning, Mahima. So, Mahima, finally we are seeing a bit of rebound, or I would rather say a pinch of recovery. It's too early to say whether we have bottomed out at this level or not, but since we have bought it at decent levels, 3170, so we are very close to that mark, and the way we are seeing that most of these heavyweights are holding gains at least, if not building. So we expect in the next leg probably close to around 30 240, 3480, something that the stock might test. Since his view is long term, means at least 1 year and more, he should definitely stay put, because consolidation, with a positive bias is more likely that price-wise correction seems over. So probably 3400 should be the next positional target, and then probably 3600 plus something also that he can eye out for. So he should stay put with 3000 as a closing stop loss.
Got that view, Ajit, and a very good morning to you as well. The next question that we're getting is from Ishwar. He's asking if he can invest in Bikaji at the current price. Saurabh, this is a key beneficiary in the GST rate cut as well. Do you feel that it's a good time to enter this stock, or just stay with the Bhujia for now?
See, in my opinion, I think it is a very good company. Now the company is also expanding its, reach, and also the management is talking about some kind of a expansion in their margins. And because of the GST cut, they will be seeing additional growth in the volumes also. So festive season is approaching. I think this is the good time to invest in companies like Bikaji Food. So my sense, yes, you can invest in the company.
Okay, all right. So that's with regards to where Bikaji Foods is concerned. The next question is about Nava Limited. Kishan from Mangalore is writing in, holding 552 odd shares of Nava Limited at an average price of 294. So that's he's bought it at the right levels and sitting on profits of over 2 lakh rupees, 2.3 lakh to be specific, and wants to know if he can additionally go ahead and invest another 2 lakhs in the counter. Ajit, are the charts attractive enough?
Nava has been trading at the record highs, and the good part is that he is still willing to invest. So another important aspect that last time in the month of September, it made a record high, and of late we have seen a breakout from the same as well. So yes, he can consider adding to his profitable position. And for the entire position now, 650 on the closing, this should be the stop loss. Basis the consolidation range, I won't be surprised that if the stock surpasses 1100 levels in next 3 to 6 months.
Got the view, Ajit. The next question is coming in from on CRISIL as well as CAMS at the current price, and Raj Mahindra from Jaipur is asking if he should purchase these as well for a long-term perspective. Saurabh, let me come to you. Either of those names that interest you as of now?
I think these companies will be growing at a pace which will not justify the valuation at which these companies are trading at. In my opinion, I think it is best to buy these companies at a time when there is a kind of a bear market, and these are the times when we are seeing some of the sectors which are performing very good. I think you should pick sectors like capital goods, banking, industrials, something like that.
We've got our next question from Kishore, who is writing us from Hyderabad. He's holding 18 shares of Siemens, bought at 4458 a piece. Wants to know if he can continue to hold or sell, or maybe add more to average out. Saurabh, from a longer term perspective, is that the right thing to do?
I will not suggest to average it out, but at the same time, yes, you can hold on to the Siemens. And if you want to invest in the capital goods space, I would rather recommend to buy L&T, because it is cheaper compared to the valuations and the kind of order book they have.
Got that view, Saurabh. The next question which is coming in is on Tata Motors. It's a short-term view that the viewer is asking on. Purchase 460 shares at 701. And sitting at a decent profit as well. Ajit, let me come to you. Do you think that this has some more rally, or because the stocks actually recovered from the lows of 630 or around those levels? Any view that you have on the stock?
Puneet, yes, we have seen decent recovery in Tata Motors also, but we all know that's the kind of underperformance the stock has been experiencing for almost 1.5 years now. So if the view is short term, yes, you can continue to hold it till 730 levels. That's the area basically where we have the next major hurdle. And at the same time, do maintain a stop at 700. And next time when you plan, any trade in the auto basket, prefer the, top performers like M&M, TVS, Eicher, just to name a few.
Got that, Ajit. But viewers, we had a very interesting conversation with the management of Tata Technologies, and we spoke to Warren Harris, the CEO and the MD of the company, about a new acquisition that they've done of 75 million euros. He spoke about what this acquisition could mean for the company. Didn't mention that this will be EPS accretive from day one, so that's going to be a positive. But let's go across to him and listen what he had to say, because this will give the company access to a newer technology as well. Listen in. Let me first start off with this acquisition. It's coming at a key time as well, given the industry parameters as well. Talk us through the rationale of acquiring ES Tech in this particular time frame.
Well, we're really excited about the acquisition of S-Tech. S-Tech is a company that's based in Germany. It's about 300 people, about $40 million in revenue, margins of 28-29%. So for Tata Technologies, this acquisition is going to be accretive from day one, both in terms of margin and in terms of EPS. It's a company that is focused upon the SDV space. It has tremendous depth in terms of ADAS and comfort electronics, and it's a great complement to the software capabilities that we've been building in India. You may remember that last year we announced the joint venture with BMW. And so this acquisition not only provides us with a nexus in Germany, but it also provides us with a platform from which we can support companies like BMW, VW, and Mercedes. So we think both from a market access perspective and also in terms of capability, strategically, this is really going to accelerate the progress of Tata Technologies.
So, Mr. Harris, what is the completion timeline that you're looking for from this acquisition? And will this be EPS accretive from day one itself?
We received approval from our board on Saturday evening, early Saturday evening. We made the announcement to the stock exchange late on Saturday night, and we expect regulatory approval to be achieved within within a 2-month time frame. And certainly, yes, it will be margin accretive and EPS accretive from day one.
Currently, Mr. Harris, with this acquisition, you are mentioning that you will get access to Volkswagen as well as being able to use that for a joint venture with BMW as well. But with the technology that we'll get from this particular acquisitions, you can also expand the scope as well as deepen your penetration with these two clients. Could you talk to us what will be, if any, cross-selling opportunities that you can get as well as increasing business via this particular acquisition?
Yeah, the decision to purchase S-Tech was driven not just by what they do today, but also, again, the platform that they will represent into the German market, and in terms of cross-selling their capabilities into the Tata Technologies global client portfolio. As far as VW, Mercedes, and BMW are concerned, we are very keen to use the relationships of S-Tech to sell the broader portfolio of Tata Technologies, and particularly as far as ADAS is concerned, which is the real depth of capabilities that S-Tech will bring. We see that there's opportunities within our anchor accounts. We see that there's opportunities within the global customers that Tata Technologies are currently supporting today.
So, Mr. Harris, is it fair to say that earlier this was via ADAS, it was an opportunity that you couldn't address, and now with the technology that you will get via these acquisitions, you can spread that throughout your current clientele that you service as well as the future ones that might come in?
Yeah. I think if you look at the product development V curve that defines embedded electronics and software in automotive, we played very much at the software development level, but S-Tech provide capabilities in and around systems architecture, functional requirements, and test and validation, and not just test and validation of software, but also on-vehicle testing. And so we think that this is a great complement to the capabilities that we've been cultivating within Tata Technologies.
Mr. Harris, do you feel that with what's happening currently in terms of growth opportunities within Europe as well, companies like yourself, as you mentioned, you were largely in software-defined vehicles as well as integrating the software so that the functionality of the car works perfectly. Do you think that such acquisitions will be a norm for the future, essentially, with getting into specific product applications that can help you increase your current business as well? And will that be the approach for Tata Tech as well as the industry? Is that your current estimate?
Yeah, well, I think if you look at the global ER&D space, it's about $2 trillion. I think the addressable space for organizations like ourselves is about $200 billion. But no one organization has more than 2 or 3% of that market, and so the market itself is incredibly fragmented. And so clearly, I think that the market is likely to consolidate going forward. And I think organizations like ourselves that have strong financials and have a very strong balance sheet will have the opportunity to lead that consolidation. And so we are very committed to growing our organization organically, but we are also equally committed to identifying target assets that can accelerate our progress strategically. And as I said before, both in terms of capability and in terms of market access.
Mr. Harris, when we last actually spoke to you post Q1, you did mention that there was some challenge that we saw of growth essentially in Europe, and it's a commentary that's consistent with what we've seen with the other players as well. So it's not a company-specific factor. What have you seen currently over the last few weeks, to say the least, post Q1? Do you expect that there has been largely consistency with what we've seen in Q1 as well? And what would be some of the key triggers that we'll be watching out for in H2, which could lead to a positive momentum, at least if not in this year, in FY27?
I think when we talked last, I commented that we had expected things to improve at the beginning of the fiscal year, and then of course the tariff announcements further complicated the headwinds that we were grappling with last year. I think now that some form of clarity has been interjected, particularly into the trade deals between the UK and Europe, I think most of our customers are getting used now or getting ready for the new normal, and they're adjusting their product plans, and they're starting to prepare for the decisions that will drive the market going forward. So, we expect things to start to taper upwards in the next couple of months. We are expecting a relatively strong second half to the fiscal year, and we expect that momentum to continue in the next fiscal year. The automotive business specifically is a product-led business, and I think because of the distractions of the US election last year, because of the uncertainty in terms of the regulatory framework, and also because of the competition that's been coming in from China, many of our customers have been recalibrating their plans, and we've seen that impact demand. But we are now convinced, based upon the conversations that we're having with many of our strategic customers, that period of indecision is now starting to come to an end, and we're starting to see investment in new products. And that all goes very well, not just for Tata Technologies, but for the overall market.
Mr. Harris, just one final question from my side. Over the weekend, I did see a lot of key interesting aspects from the Munich Auto Show, actually, and saw that the advent of Chinese EVs and what they've done essentially in this particular time frame has been one of the key notables. But we also saw some from the German players as well. Any kind of aspects or commentary that you saw, what impressed you? Because we have seen that the advent of Chinese EVs in Europe has been one of the key aspects, and that was a growth opportunity for many players like yourselves. Is there anything that you can give us perspective, that if there's anything that you caught up on this over the weekend?
Yeah, I was at Munich last week before I came here for the board meeting on Saturday, and I spent time with VW and BMW and a number of other players. What was notable for me at this year's show, unlike a couple of years ago, was that the Chinese players were not as visible as they were 2 years ago. And the sentiment from the European OEMs was far more positive than than I expected. There were statements by Oliver Bloom, the chief executive of VW, and he made a number of product decisions or product announcements that signaled VW's intent. BMW rolled out the Neue Klasse platform and the first vehicle that they are going to launch on that new electric platform. And so, again, the sentiment was far more bullish than we anticipated, and I think it augurs well for those organizations like ourselves that are partnering with those companies.
Well, that was the management of Tata Technologies. Saurabh, any view that you have on Tata Tech as well as the ER&D space, because growth has largely been absent, but acquisitions and new product acquisitions seems to be the way that this company is playing through. Any view on the same?
I think it is a very small acquisition, and investors would like to see how much will it add. And more importantly, the management was always optimistic, but you have seen in the past that they have failed to deliver. Majority of the business comes from the group companies, and that is what is the negative. On the valuation side, yes, it is a kind of kind of a value stock trading at 8 times to book value and seeing some growth, but market investors are not happy with the performance. I think it will take 2 consecutive good quarters and strong commentaries from the management that will instill confidence among the investors, and then only we can see some kind of a sustained buying in the stock.
Okay, all right. So that's with regards to where Tata Tech stands. We've got our next question from Suman, who's writing us from Kolkata, asking about Hindalco, whether this is the right point to make an entry into this counter. Ajit, do you think charts are attractive enough to make an entry right now?
So Mahima, metal as a pack is doing exceptionally well, and Hindalco has also among the top performing name. In fact, the stock has reclaimed its record highs. Almost nearly year-long consolidation has also ended. So everything looks positive, but yes, since the stock has already moved up from 690 to 760 in a very short period of time, there could be a bit of a consolidation. So I would recommend him to accumulate gradually instead of going all in. So let's say in the range of 740 to 760, one can accumulate with closing stop at 720, and in the next target zone, it could be close to around 890 to 910.
So, Ajit, Saurabh, let me come to you because we have another query on Imami, and the viewer is asking we should enter the stock right now, given the current context, and there's Arjun writing into us as well. So, do you think this is a good time to enter the stock?
It's a very good and old company. They have a good portfolio, and especially their portfolio gained tractions during the winter time. And as the winter season is approaching, I think it could be a tactical buy for the next 8 to 9 months. Yes, my sense is yes, you can go for it.
The next question is from Chandrasekhar, who's writing us from Bangalore and asking about Reliance Power. He's got 400 odd shares, bought at 65.5 a piece. Wants to know from a 3 to 4 months perspective, what are the charts indicating? Ajit, your view?
So our power, Mahima, again, we are seeing the stock after volatile swings trading below the major averages. So not a very good sign, means especially in the market like this where we are gradually approaching higher. So I would recommend to avoid any fresh buying, existing position also in case if you can take losses and exit, because I doubt that we can see any meaningful move until the stock decisively crosses 52 levels again. On the downside, a break below 42 may result in further decline.
Ajit, let me come to you on another query because a viewer, Desikan Srinivasan, asking on a short-term view on EID parry for the next 3 months. Do you see any kind of positive momentum on this one?
So EID parry, like among the sugar stock, is comparatively better. We have seen the stock, outperforming the pack, and otherwise also we see a very consistent move. Of late, we have seen a marginal decline from the record highs. Stock is currently hovering around 100 EMA. So possibly we might see some consolidation around the current levels before the next leg of the up move. So yes, you can consider going long with stop at 1020. And the moment we cross, let's say 1110, 1120, we can see the fresh momentum in the stock, which could trigger a up move towards 1200 plus levels. So with stop at 1020, you can accumulate at current levels.
Got the view, Ajit. The next query is coming in on Crompton Greaves Electricals, and consumer electricals, and a viewer Biju from Chennai is asking a query that if he should enter the stock, he wants to and invest for roughly about 200 shares, hold for a year. Saurabh, does it make sense to do this particular transaction and enter into Crompton right now?
Last quarterly numbers, the company disappointed in terms of this revenues and on the margin side. And after seeing a good amount of jump in the stock prices, the stock has come off. It is very difficult to take a call on the company from the investment point of view because there is a lot of competition in this space. And this time around, I think there is some kind of a slowdown also. So. From the technical point of view, as the wedding season, the Diwali season is approaching, maybe the stock can see some kind of a buying, but it will be only a tactical buy. I would not recommend for to buy the stock for the long term.
Okay, all right. We've got a next question from Satyan, who's writing us and asking about Nitco okay, so he's bought at the levels of 126 and wants to know if there's a chance it will touch 150 in next 3 to 6 months. And asking of course if he can continue to hold for the next 6 months to see that levels. Ajit, do you think that's possible on the charts?
Yes, Mahima, it seems possible because almost like 3 months of corrective phase have finally ended. Today we are seeing a decisive move with a very tight range consolidation breakout. The stock has reclaimed the major averages also. Volumes are decent. So gradually it can inch toward the previous swing high, which is around 250 to 60 area. So with stop at 210, one can continue to stay put.
Next query is coming actually on a stock that's buzzing in trade today. That's Shakti Pumps. Now, the company did get an order of more than 12,000 solar pumps. The question is coming from Venkat Ramani from Bengaluru, asking if they can advise whether to enter the stock at the current time frame for a period of 12 to 15 months. Saurabh, do you have any view on this? Because these are beneficiaries of the PM Kusum scheme. Any view of the stock?
I think they are beneficiaries, and the performance of the company so far has been good, and it is expected that the company will do good in the future also. On the valuation side, I feel it is a bit expensive, so I would advise him to buy in a staggered manner, buy in tranches during corrections.
So that's with regards to where Shakti Pump stands. But Ajit and Saurabh and viewers, it's time for the rapid fire segment. You both know the drill. Try to keep your answers as short as possible and we'll try to throw as many questions as possible. The first question is on whether he should go for L&T Finance or AB Capital. This is from, in fact, this is a she. Leena from Kolkata is asking this question. Your view on this, Saurabh?
L&T Capital.
Next question is from Neelam Hedra. She's asking a question on Bank of India for the next 1 year. Saurabh, any view?
Bye.
Okay, Tega Industries is the next one. Ramesh Prabhu is holding 65 odd shares bought at 527 a piece. What will be the range of accumulation? Ajit, your view?
1900 to 2000.
The next question is coming in, largely on the consumption pack. Saurabh, any view that you have on a positive stock from the GST rate cuts?
Maybe Dabur can be a buy.
Okay, Park Hotels is the next one. And this is from a viewer who's writing us from Chennai. Wants to know if you can continue to buy at this level. Your view on the charts, Ajit?
Underperformers, switch to the quality names.
Next question is coming in from Bengaluru on LIC. Viewer has bought it at 874 rupees per share. Saurabh, does it make sense to hold the stock for the next 1 year?
Yes, hold.
Okay, NTPC Green is the next one. The average price bought is at 108. Wants to know if you can continue to. DK Kar wants to know if you can continue to hold for the next 3 to 5 years. Your view, Saurabh?
Hold.
The next one is coming in from Bengaluru again. Ram is asking on a view on Canara Bank for the next 6 to 12 months. Saurabh, any view?
Hold.
Okay, it is Infra Solution holding 1,000 shares bought at 168 levels. Munish wants to know your view on this, Saurabh?
Pardon? Which stock you talk?
This is on Eris Infra Solution.
Won't be able to comment.
Okay, no worries.
So recent listing definitely. The other one's coming in from Vineet from Baroda, and he's asking a query specifically on Blue Star. Bought 1,000 shares at 1,940. Ajit, they want a short-term view because of the GST rate cut. Any positive impact? Your view?
Looks range bound, maintains stop loss at 1,800 or around 2,100 book profits.
Okay, all right. So with that, Saurabh and Ajit, thank you so much for taking out the time and taking us through those queries and of course speaking with NDTV Profit. Viewers, an important thing to keep in mind today for sure, because your ITR deadline is today itself. Puneet, have you filed your ITR yet?
I have filed my ITR and I have gotten a refund as well. I'm sure you have got a refund as well, CA Mahima. So
Yes.
that is one.
Yeah, so today is the last day to file your ITR. In case you've not, you've time till 12 a.m. in the night today. So go ahead and file. Just to give viewers a perspective, there is not going to be any extension from the CBDT, and there's a clarification which has also come out. Who is supposed to file on till 15th of September? Basically, individuals and HUFs who are not subject to tax audit. That means salaried individuals like you and me, professionals, businessmen who do not have turnover more than 1 crore. In terms of how do you file your ITR, simple steps: log into the income tax portal, navigate the ITR filing section, then select the assessment year, choose the filing status, also select the correct ITR form. This is very important. Review and confirm information, pay your taxes, and e-verify your return. If you don't e-verify your return, it will be held as invalid return. And if your ITR is complicated, you can of course reach out to professionals. Lastly, if you don't file it, a penalty of 5,000 rupees if your income exceeds that 5 lakh rupees, and 1,000 rupees below that. And a belated return can be filed, but along with this penalty and interest of 1% every month till the time you file your ITR as well. And of course, if you have made any mistake in your ITR, you can file an updated return, that is ITRU, up to 31st March 2030. So this is with regards to where ITR filing is concerned, and you have to make sure that you file it today itself. But with that, we're completely out of time on this edition of Ask Profit, but do stay tuned, KYC on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome. You're watching KYC. I'm Harsh Saita. Now the travel space is obviously going to get some boost. One is GST, of course, and it's also global travel as well as domestic travel, which is doing fairly well for itself. One stock at the center of all of that is the TBO Tech, and what I want to know with regard to it is that it's made a recent acquisition. It's a North American acquisition and therefore gives it access to North American market. By the way, TBO Tech is more like a platform, B2B platform company, buys inventory from hotels and sells to other businesses. So you'll have other platforms or Make My Trip, etc., where TBO Tech enables sale. So that's the general nature. Now, what does this acquisition give them in terms of market, of course, but also in terms of existing business? And could they have done this organically? So these are the two pieces which I'd want to know first off, right off the bat. The third piece is I'd want to know what this does in terms of immediate top line impact. I spoke about that, gave you a hint of that, but that's broadly the way in which I see this. Also further acquisitions, some color around that is what I'd want to know. And now travel trends, both global as well as India. Mind you, 75+% of TBO Tech's top line comes from global facing businesses. So you want to know whether that part of the business also continues to do well or not. And of course India, because GST and all of the tailwind that we're seeing with regard to hospitality in India, that itself gives the India tilt. Can you double your top line in 3 years? Now this is the question which may or may not get us an answer, but I'm going to try and get us that answer, because they've hinted, they don't generally guide numbers, but they've hinted that they will do 20% plus. So I'd want to know this. The sixth piece is with regard to upsides to margins, because as you scale a tech business, there is an upside, but I want to understand how much is the upside, because at least the guidance doesn't seem to suggest a very, very strong upside, but some upside is starting to appear in that sense. And of course, number 7, competition. If you have the likes of a Skyscanner in the B2C space, and if you're in the B2B space in comparison to that, I'd want to know what are the other competitors doing in this space, and is there a larger opportunity for them, and what it does to therefore pricing as well, right? Because the business model is also unique, and let's straight away get to it. It was incorporated in 2006. This is an overview. It's evolved from a single product air ticketing company into a leading global travel distribution platform. Distributes purely B2B, mind you, not B2C, so it doesn't sell to you. It's a proprietary technology, seamlessly connects travel buyers and suppliers, including agents, by the way. So you have agents listed on this TBO Tech platform, and when they make bookings through the platform, TBO Tech makes money. Now let me try and again go back to the slides. Ensuring streamlined transactions across diverse landscape of global travel. They have around 189,000 registered buyers and 13.2 million plus transactions that they do annually. Let's talk about the products and a wide range in which they now operate in. They started off with only air travel, but look at the whole host of products and services they do now, and of course it is rapidly expanding. Outside of this, it could be cruises, it could be, there you go, so you already have that, cargo, cruises, sightseeing, transfers, all of that is what they currently cover. Now let's talk about the business model. It earns in two possible ways. One is when you make a sale, it makes a commission, so that's one model. The second model is it buys hotel inventory, marks it up, and thereafter sells it. So these are the two models in which they operate, and it's the net commission from what we understand is 3 to 4% from airlines and 6 to 8% from hotels. So your hotel composition is far more than the airline composition. It sells technical software related services, providing a shell website which the customer can use as a B2B hotel service provider by adding their own suppliers. So that's broadly the way in which they do it. Let's look at the platforms, and they'll come up on your screen one by one. That's TBO Academy. It's the learning platform for travel agents and travel trade partners. You can actually go in and learn and thereafter register. It has comprehensive Booker Rewards program exclusively for buyers. Let's talk about, and that's TBO Plus. There's Zamzam and Kizan, focuses on religious travel in Saudi Arabia. There is Paxis, a web and mobile-based platform for corporates. So that's the other angle. There's Travel Partner Solutions, enables the partners such as loyalty programs to sell travel products globally. And then there's Roma application, e-travel pockets, pocketbook for travel agents and travelers around the world. And mind you, they continue to make acquisitions, right? So they continue to do that, and that obviously adds to the product portfolio or the bouquet as well as the geography. Look at the overseas presence that they have. They have it across the board, Middle East, all over, Brazil, China, and USA, Egypt as well. So some presence in Africa as well, South American presence also there. So that's just the broader outlook of what TBO Tech does. Now let me talk about the metrics, and we'll start off with the first one, the income statement, the balance sheet, the cash flow, and we'll give you the 3-year numbers for these. Thereafter, we will switch over to the return ratios, the shareholding, street cred, valuations, and street coverage. We'll cover all of that with regard to where a TBO Tech is concerned. Mind you, listed in May of 2024, so it's not a very a seasoned listed company, if I can call it that. But it's a 17,000 market cap, 17,000 crore market cap company. So in no way a very, very small company either. So again, just some trivia. Now let's start off with the income statement, and you have it in front of you. 18% top line growth is what they've done. EBITDA has gone up by 120% nearly on a CAGR, 3-year CAGR basis, and profitability has gone up 90%, 3-year CAGR. So you're seeing very strong profit tailwind. Those margins have inched higher, and clearly that's a thumbs up, no complaints with regard to that income statement. I'd be surprised if there is any complaint to that. It's looking like a very, very solid income statement overall. Now let's talk about the balance sheet, and even the balance sheet in terms of the debt is not looking exactly too large. So while we continue to make acquisitions, the borrowing number is just at 136 crore. This is both short-term and long-term combined. You've got equity of around 1,200 crore. Mind you, it's a 17,000 crore market cap company as of today. So you want to also derive the price to book. That's what it is. But it's sitting on pretty much good cash and bank balances. Look at that cash and bank balance. It's looking very, very healthy, and therefore clearly a thumbs up. They need to put that into play, whether through acquisitions or otherwise, and that's likely one of the pieces that we will also get some color on. Let's talk about the cash flow now, and the cash flow numbers will flash on your screen. You've got the cash flow, which has been on an improving trend. If you look at the realization, CFO to EBITDA, quite decent in that sense, no concerns. Now, one piece that you'd want to know is that think about this from a business perspective. You make a booking, you make a payment, and therefore your cash flow will typically be healthy. And TBO Tech will make either the margin or either a fee on that booking, and therefore no reason why there should be a cash flow mismatch. Typically receivables are low, that's just the nature of the business. Also, inventory isn't too high, and therefore you've got a decent kind of run where CFO to EBITDA is concerned, and no concerns with regard to that as well. So we've given that a clear thumbs up. Now let's talk about the fourth metric. We'll talk about return ratios. In terms of the return ratios, again, extremely strong tailwind that we saw. It's come off because they've raised money, and therefore you've seen those return ratios shrink a bit. I'm not sure how much will that shrink as capital gets allocated. Also, you've got a solid pile of cash that they're sitting on. So I'd want to understand as to how this evolves as well. Is there a target number? But broadly looks quite solid on an overall return ratio basis. 53, 43, and even prior to that it was at 18. Of course, FY21 was a muted year for travel. But after that as well, you've seen a resurgence where the return ratio is concerned, and it's doing fairly well for itself. So we've given that a thumbs up as well. No complaints over the last 4 to 5 years. Let's talk now about the shareholding pattern. And promoters hold around 45% of stake in the company. There's been no major change, but because it's below 50, we've given this a neutral, as we always do. FI holding is decent, but they've seen some amount of selling. DIs have seen very, very strong interest over the last 5 odd quarters. And therefore, you've seen what you've seen in terms of the shareholding pattern. We've given this a neutral broadly because of those factors that are playing out on the shareholding side of things. Let's talk about the street cred. And since May of 24, the stock has not done exactly much, especially since listing. So since listing, if you're holding it, it's not given the best return. But at the same time, if you've bought it at maybe 6 months back, you've got a very solid return for it. So we've given this again a neutral because it's a fairly range-bound kind of return if you're looking at it from a 1.5 year perspective. But from a 6 to 8 month perspective, it's been quite strong in that sense. So that's broadly the take on the street cred. Let's talk about the valuations now. And when you stack it up against some of the B2C players in the same industry, in the same space, you'll see that it's obviously valued at a much, much richer multiple. But that's also because it's tech-based, one. Second, it's multi-country, so there's no focused geography there, and therefore that gives it a more broad-based risk profile. And third is because it's decently fast growing, which all the others also broadly are. It's not like some of the others are not. Of course, a couple of those three have some issues or concerns in themselves, but outside of that, it's a fairly good mix where travel is concerned to grow at a 20% odd kind of growth clip. So broadly, that's the take with regard to the price to earnings, but it's certainly expensive, and therefore we've given that a thumbs down. That's the only thumbs down that we have at this point. Let's talk about the street coverage and wrap it all up. In terms of the street coverage, there's 7 buy calls, 1 hold call, no sell calls. The average upside is 15%. So you've got a decent runway, it seems, at least that's what analysts seem to suggest. There's a decent runway overall in terms of the average 12-month upside as per analysts on Bloomberg. Let's talk about all of the ratings. Let's stack them up, and they'll come on your screen in just a minute. There you go. The income statement, can we rewind the slide, please? So the income statement, again, you've seen very strong growth here, so clear thumbs up. The balance sheet, good cash balances, we spoke about that. We also spoke about the fact that there's very low to no debt. Cash flow, well, it's a clear thumbs up. We spoke about the way in which they generate cash, and therefore typically should not be a concern. Return ratios were solid, 18% at FY22, currently sitting at 27%. Very good for an Indian company. Shareholding pattern is a neutral because of all the changes that have happened. Hopefully there's stability there. Street cred, you've again seen over the last year or so, the stock fluctuate, but at the same time not give very, very good returns, and therefore may be some bit of pressure piling on to holders of the stock. Valuations is a thumbs down because it's expensive, 80 times. I'd want to know whether very, very strong growth can follow the kind of valuation it commands. And then you have street coverage where there's a 15% upside, which doesn't look bad at all at a 78 times earnings. That gives it that gives TBO Tech a 6 out of 8 on our KYC ratings, and it's a very, very strong rating for a company in any case. Let's go across. We have joining us Ankush Nijawan, who's the co-founder, joint MD at TBO Tech. We also have Gaurav Bhatnagar, who's the co-founder, joint MD at TBO Tech, joining us. Gaurav, let me start with you. On the acquisition first, you've obviously acquired Classic Vacations. It gives you a footprint into North America. Give us a perspective. Could this not have been done organically at this price? And what does it do in terms of a lever for you for growth?
Thanks. Firstly, thanks for having us over. And also my compliments on the detailed analysis you've done on the business.
Thank you, Gaurav.
It's very impressive.
Thank you.
But look, it's a fair question to ask that could this be done organically or not? And a couple of things when we look at very mature markets like North America, and look at the example of the company that we did acquire, Classic Vacations. This company has been in existence for nearly 50 years. So when you go to developed countries, you realize that the incumbent ecosystem is very mature and it is very stable. So while we have been in the market ourselves and we've been building organically and we'll continue to do that, right? So the TPO brand will continue to exist along with the classic brand. But if you want to have a seat on the table, it's likely going to come by acquiring something reputed in the market. You could always argue that maybe another 3 to 5 years you could build something equally large. But when we have access to capital, when there is a target available, and when we see clear synergies, it does make sense to accelerate that journey. Keeping in mind that North America is the largest luxury travel market, and because TBO focuses on the premium outbound traveler, for us to not be in that market would cause significant struggles even with acquiring more supply or on the overall growth. So yes, this could potentially be done organically over a 3 to 5 year period. But if a good asset is available and we have the money for it, our sense was we should go ahead and do it.
Okay, Gaurav, an extension to that question. What does it do to your top line pretty much immediately? How much of the North American market do you acquire as a result of this 1,000-odd crore rupees that you've spent? And second piece is it margin accretive for you or not?
Okay. So in terms of GMV, this business adds on a full year basis, if you were to look at the prior 12 months, this business adds a little less than about $500 million of GMV. Which would, just from a perspective of what we do with rest of the country regions, it would make it probably the second largest region for us after Europe for hotel sales. So it's substantial for us from that perspective. The margin profile of this business is slightly different from the organic business, and I'll spend a couple of minutes explaining that. This business operates at a fairly high 22% take rate. The reason that take rate is so high is because the business operates on a pure commissionable model where half of the take rate actually goes back to the travel agents. So if you were to look at it from perspective of how we look at our margins, the margin is closer to half of it. So maybe about 11.5%, which is still significantly higher than our organic margins. So from a gross margin perspective, the business is accretive. From a perspective of EBITDA to revenue conversion, this business is slightly dilutive. If I was to look from a GP to EBITDA, and there are synergies possible over there, by the way. So there are cost synergies as well as there are top line synergies possible to bring it at par with what our overall numbers are. If I was to look at it as EBITDA to percentage of GTV, which a lot of travel businesses look at, so maturing travel businesses would look at the metric of how much of GTV is converting into EBITDA. And there it is clearly accretive because it is sitting at more than 2% EBITDA to GTV. For the overall TBO business, it is about 1% or probably a little bit lesser than 1%. So from that perspective, our view is that it adds significantly to our financials. The other bit I must add is the cash profile of the business. The business sits on roughly 17% of annual GTV as cash in any point of time because North America books much in advance. So it's extremely negative working capital. When we acquire the business, we get more than $80 million of cash in its balance sheet. So overall, our perspective is that even without realizing the synergies, when you combine the two businesses together, our view is that it improves the overall balance sheet as well as the P&L.
Okay. Ankush, I'll come to you in 1 more minute. Sorry, you'll have to bear with me because I want to ask one more question on this acquisition. Gaurav, what I haven't been able to cover as part of my presentation is what's the valuation multiple that you've bought this business at? Give us the cash component. Of course, you've given us that, but give us net of cash. How does it stack up just broadly? Because we've described how you trade in terms of a multiple. So just trying to understand whether it's accretive for you or not. And that will give investors also a perspective.
No, I think that's a very fair question. Look, we are paying $125 million, around about $125 million, subject to some adjustments, for a business that for the trailing 12 months is probably going to generate a little more than $11 million of EBITDA. So that's the multiple. It's a little more than 11 times EBITDA. Which we believe is a fair value to pay. I don't think we are underpaying or we are getting, we are overpaying. So I think it's about the right to play, multiple to pay.
Times EBITDA. Okay, point taken. Ankush, let me come to you. And let me expand the question a little bit. What does this do for you globally? And what are your aspirations from a global perspective? What are geographies, targets? Where is it that are pockets that you all are targeting, which are low-hanging fruit, if I can call it?
So, good afternoon, Harsh. So for us, I think our vision is obviously to be a leading global distribution platform. And I think as we are moving forward, the approach is absolutely for us, not any geographic centric or agnostic, but the fact is certain markets for us are today matured, such as Middle East and India. But I think we will be focusing a lot and doubling down in a lot of our sales activity, especially in Europe, and Latin America, followed by Asia Pacific. But obviously now, as Gaurav mentioned, US becomes a very, very important market, and being the number one travel market in the world, I think we are very well placed now with classifications. And for us, I think the overall theme of outbound travel is beautifully growing in both in all developed as well as developing economies. So I think as TBO, we are winning somewhere already, and we will win, as we continue to move forward across the world in meaningful travel economies.
Okay, point taken. Also, give us a lens into how many acquisitions are you targeting? Is there a geography? Is there a target market which you would like to venture in immediately, FY26? Because you still continue to sit on cash, Ankush.
Fair question, Harsh, but the fact is, this acquisition, what we did last week, is anyway a very large acquisition.
Sure.
Or at least for the time being, short and medium term, I think let's settle down and ensure that we integrate as we plan, setting up the integration with TBO and Classic in America. And then obviously start looking at other opportunities, and as I said, we are not geographic agnostic. We are open to all meaningful companies which might be adding a lot of value to the core theme of TBO Tech. But I think for the time being, we will settle down with Classic.
Got it. Ankush, what does Classic bring to the table for you? Maybe give us a 2 to 3 year lens into the overall business with Classic. Can revenue, including Classic, double from here in 3 years? Would you reckon that's a reasonable kind of number to aspire for?
As a company, we don't give any forward-looking statements.
I'm aware of that.
Absolutely, Classic will grow for us, and I think as we move, into the integration process, there'll be a lot of good learnings, on how beautifully this company had built historically in selling luxury across the world, right? So I'm sure there are certain best practices which we will also incorporate in our mainstream at TBO, because that's something which is our core theme, is obviously selling premium and luxury travel across the world.
What does this GST piece do to travel in India? Are you starting to see an uptick with regard to demand already? Is the interest going up already? And are you therefore seeing that the entire GST reform could well spur a travel wave in H2? Is that something we can pencil in?
I think I would say that definitely there should be some uptake, but as I say, it's just very early right now. Let's see how it plays up in the next few weeks. But yes, we do have Diwali around the corner, right? So there will be some short haul holidays, whether it's domestic or outbound. But definitely the GST cut will help, hopefully, the travel and tourism business, keeping in mind more disposable income and more discretionary spent by all of us in India.
Shift back to Gaurav. Gaurav, give us a sense of how this market is as a whole, and how you're placed globally given this acquisition. Does it place you at number 5, number 6? Where does it place you? And again, how large is the market, unaddressed as well as addressed, which you can continue to bite into?
Okay, so the hypothesis we work with is that global outbound travel is going to grow massively over the next 10, 15, 20 years. Why we believe it is going to grow is because of the large demographic and economic changes that have happened in the world, right? So you can see that the average age of the world is getting older. So the world is getting older at this point in time, right? Population has stop growing. So with be the developed world or the developing world, it's going to be an older world. At the same time, income levels have historically been never as high as they are today. And the third bit is, with the advent of AI technology, the internet, a lot of work is going to get automated. So now when we peek into the future, what we see is a world where people are, older than they are today. They are more prosperous and they have more time at their hands. Now that's a perfect recipe for a global boom in outbound travel, where people start traveling from their countries to some other countries. Now, within that space, where do we operate? Now, our belief is that while budget travel, short-haul travel will continue to happen online, either supplier direct, so directly on the websites of the hotels or the airlines, or through the online travel agencies. When it comes to complex travel and premium luxury travel, a lot of it happens through travel agencies. So that is the space that TBO has chosen to operate in. So we believe that we want to be the largest aggregator of offline travel demand, especially when it comes to premium and luxury travel. So now, how large is that space? It's very large. 1.5 billion outbound trips were happening pre-pandemic. Similar numbers now. So can you imagine? That's the population of India is less than 1.5 billion. That many trips happen where people travel from their country to some other country. This number has grown 5-6% every year historically, and we believe this will accelerate because of all the reasons I talked about. Now, so if I look at that as the TAM, it is extremely large. Now we can argue that out of those 1.5 billion trips, which maybe is going to be 2 billion in a few years, how much of that is going to get booked through travel agencies and how much will be self-booking? Now the specific number doesn't matter because you can say maybe it's half and half, and even then it's like a billion trips that are going to book through travel agencies. That is the space that we are operating in. Now, what does Classic do for us in this? Two things. One is Classic operates in the most prosperous outbound travel luxury market of the world, which is North America, specifically United States. Right? That is the market that drives the trend for luxury, and that drives the trend for how much travel spend happens.
Sure.
So we get a foot in the door in a very large market. And while we start with the $500 million we get from Classic, we believe that the runway is very large.
Right.
The second thing that it does for us is it gives us access to luxury hotel supply, which is really relevant for us. So that's the way we would look at it.
Got it. Gentlemen, thank you so much for coming in, Gaurav, Ankush, and giving us this perspective. And viewers, thanks so much for tuning in. I hope you found this extremely relevant because KYC only operates on NDTV Profit, and that is for your profit. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
in a range-bound manner, slipping in and out of that 25,100 levels mark. Meanwhile, Sensex inching towards 82,000, mid-cap and small-cap outperforming the frontliners. Railway PSU stocks like Railtel, RVNL, IRCON gaining in trade after Railway Minister Ashwini Vaishnav announces over 77,000 crore rail projects in Northeast. KRBL falls over 12% after independent director Anil Kumar Chaudhary resigned from the company's board, citing concerns over corporate governance. Heavy showers lash Mumbai for the second consecutive day, triggering waterlogging and traffic. Snarls IMD warns of intense to very intense spells of rains and thunderstorms accompanied by lightning. Next 3 hours remain crucial for the financial capital. Welcome to Markets at 12. I'm your host Mahima Vachajani. Let's take a quick look as to how the markets are doing before we bring in all the things we've planned for you on the show today. The Nifty 50 trading absolutely flat as a pancake. 25,115 levels is what we are observing, up by about 0.01 odd %. The Nifty Bank doing well as compared to where the benchmarks stand, up 0.4% and probably at its day's high point. In fact, at its day's high point, in that levels of 55,000 odd levels, 55,000 odd levels. In terms of the overall Nifty 50 heat map, let's try to pull that up and see what counters are kind of putting that kind of pressure on the Nifty 50 and what counters are actually doing well in trade today. There you go. Counters like Trend doing fairly well in trade today, up by about 0.6 odd %. Bajaj Finance up by about 1.3 odd %. Coal India up 1%. Eternal seeing gains of about 0.6 odd % as well. But something that's not doing well, Shriram Finance down by about 1.3%. Asian Paints down by about 1.2%. DRL, TCS, Infosys, Titan, some counters in the red. Let's try to pull up the mid cap 150 and the small cap 250 to see how the broader markets are performing. The broader markets are doing better than where benchmarks are at present. Mid cap 150 up 0.3 odd %, small cap 250 also up by about 0.7%. So small cap 250 doing best amongst the benchmarks in the broader markets. The advanced decline ratio, quickly if you see that, because that will give us a picture as to how broader markets are doing. And in fact, that ratio has not changed in the past 1 hour as well. 1500 odd advances versus 850 decline. So 2:1 is the ratio that you can see on your screen. Let's try to pull up the BSE 500 because that will tell us as to how stock specific the market is. KRBL down 10% on the back of the resignation of Mr. Anil Kumar Chaudhary, citing corporate governance problems in the company. There is Craftsman Auto down 2%. Devyani International seeing some profit booking. JK Siemens, Polymedicure, Metropolis, some counters in the red. But Aegis Logistics on the other side doing well, up by about 9 odd %. JBM Auto up 6%. Vodafone Idea up 5.6%. And some railway names like IRCON doing well in trade today as well. With regards to where the sectors stand, let's try to pull up as to how sectors are faring in the trade today. It's a Nifty Realty that's stealing the pack. If we can also try to pull up the constituents on the Nifty Realty, we'll see as to how the counters on Nifty Realty doing. There you go. All the counters in the red, largely led by Anant Raj, and this is on the back of media reports suggesting that government will waive off tax for data centers for the next 20 years. DLF, another counter doing well, 1.6%. Prestige up 1.5%. Godrej Properties up 1.3%. Oberoi Realty up 1.3% as well. But Nifty Energy is the other sector that's stealing the show today, up 0.7%. Nifty Finance, Nifty Metal, Nifty Bank, all in the green, seeing gains of about 0.4 odd %. But Nifty IT continues to be under pressure, though off from its day's high point, but still down by about 0.8 odd %, followed by Nifty Pharma, down by about 0.5 odd %. Nifty Auto down by about 0.2% as well. Now, since I was mentioning KRBL, the stock that's been under pressure today quite significantly, and this is on account of Anil Kumar Chaudhary, who's the independent director, who in fact was the independent director of KRBL, has resigned, and he has resigned saying that there is inconsistency in board dynamics. He said that prevailing dynamics of board are inconsistent with safeguarding shareholders' interest. He cited a list of concerns that he's been facing in the company as to why he's resigning. He said there are issues that have persisted in inconsistency in recording of minutes of board and committee meeting, instances of information being withheld impacting the overall decision making, unjust write-off of certain exports receivables without adequate deliberation, concerns of irregular usage of CSR funds as well. In terms of arbitrary distribution of variable pay and annual increments to person holding office or place of profit, that has also been observed. Lastly, significant changes to the object clause undertaken without a comprehensive discussion. Now, this is a big one. And undue interference by invitees in the proceedings of board and committee meetings is one of the reasons as to why Mr. Anil Kumar has kind of put a resignation on KRBL. So that's with regards to where KRBL stands. Let's try to pull up the stock. It's down by about 10% and with regards to where the stock has seen, if you can try to see as to how the chart has fared in the past 1 week, let's try to pull that up. Okay, all right, we'll try to pull that chart for you in terms of where KRBL stock. There you go, a week down by about 12%. But shifting focus, healthcare stocks in focus, Apollo Hospitals, Yatharth Hospitals and Northern Arc on our radar today. And Varsha joins us to help us with the details as to why these stocks are buzzing.
Let me start with Apollo Hospitals, wherein they're going to acquire 31% stake in one of their subsidiary, Apollo Health and Lifestyle, from IFC at 1,260 crore. Now, this deal is just strategic, just for the better capital allocation and for operational synergy that the company is doing. Also, Apollo Hospital have also, they're going to set 100-bed oncology center in Gurugram. Now, also they're going to scale up this oncology business to over almost 5,000 crores in next 3 to 4 years. Next on the list is Yatharth Hospital, wherein they're set to acquire 100% stake in Shantived Hospital. This is an all-cash deal for rupees 260 crore, and this will actually strengthen their footprint when it comes to Uttar Pradesh. Now, onto the Shantived Hospital operates almost 150 beds with an expandable capacity of 250 beds, and they have generated revenue of around 50 crores in FY25. Last on the list is Northern Arc, wherein DAM Capital has initiated a buy on Northern Arc with a target price of 335. They say that the ROAs could enhance further, but they expect asset quality to be a bait from H2, but expecting a normalcy when it comes to FY27. Overall, if you see, stock is also trading at an attractive valuation. So these are 3 stocks on my radar as of today.
All right, so those are the hospital counters that we're talking about, but the other pack of stocks that is buzzing today is the railway counter. In fact, railway stocks are in the spotlight, and there's a reason as to why they've been buzzing. Anushi joins us with more details as to why these stocks are buzzing specifically. Anushi?
Well, thank you for that. So, railway stocks, majority of stocks that we are seeing are moving in trade today, and these are with, high volumes as well. That is reflected on the screen as well, with Railtel Corp, Ircon International, RVNL clocking about 7 to 6 times of volumes, which compared to their 30-day averages, what we are seeing now. Focus has been on a couple of order wins here, but before we go on to the order wins part, let's understand what's leading to this buzz that we are looking at now. It is, according to media reports, it's been seen that India is building new India railway lines near the China border. That is what we are seeing. This involves building up to 500 kilometers of track lines. This includes bridges, tunnels, and other related works as well, which is required for these railway stations that we are looking at. Estimated project cost of this is around 30,000 crore, and this is with a completion period of over 4 years that we are looking at. So it's a significant update that we are seeing. But coming to a handful of counters, which have been in focus in this session as well as the previous session as well, includes the likes of Railtel Corp. Now they have received a 210 crore of an order. This is from the Bihar Education Project Council that we are looking at. Just note, last week ago or so, they had also received multiple orders from this particular Education Council as well, which roughly came to the size of 700 crore or so. Now coming to Titagarh Rail, now this has been in focus as they have launched their 3rd diving support craft for Indian Navy. This vessel is a part of 5 DSCs, that's the diving support craft that we are looking at, built under Make in India initiative for Defence Ministry. What is interesting here is that now Titagarh, they had specified that they want to venture in other verticals such as safety related works and shipbuilding, and we are seeing more of these projects coming under this particular new vertical for the business going forward. Coming to the last one, one in focus is Jupiter wagons. Now, this was also in focus on Friday's session if we looked at, particularly on the back of 113 crore of an order win. If we look at the order book of this particular counter, that stands roughly at 5,972 crore as of the quarter end. So these are a couple of stocks in focus in particular. The whole sector is buzzing, and this is after an overall lackluster year that we've seen 2025 or even the 2024, the latter part of it being for these railway counters. So some bit of recovery. Let's see how long this sustains going forward.
Breaking that down for us and giving us those information. Recovery being seen in the railway stocks, but how sustainable is that is the question. But good gains when it comes to the entire pack of railway in trade today. But shifting focus, after overnight showers in the Mumbai city, IMD has kind of upgraded its orange alert to a red alert in Mumbai. As per the warning, intense to very intense spells of rain and thunderstorms accompanied with lightning will be witnessed in Mumbai city and suburban Thane and Raigad as well. The downpour has also impacted public transport, causing the Mumbai monorail service to come to a complete halt, with issues noted in the Wadala area. The weather has resulted in severe traffic congestion in the suburbs, slow down vehicular movement, and that's been considerable enough. My colleague Anuj joins us from Matunga. Anuj, from the local train to heavy traffic jams in Mumbai, is there a halt?
Mumbai and the rest of Maharashtra are currently experiencing the last phase of rainfall. I'm here in Matunga's King Circle, and as you can clearly see on your screen, water logging, which has become a major issue here in Mumbai for almost a lot of years now in recent past, has again become a cause of inconvenience for Mumbaikars, even in the last phase of the rainfall. The intensity of the rainfall was quite heavy from 12 midnight till 6 a.m. in the morning, and of course the rainfall is still pretty intense and quite torrential, but relatively the intensity has gone down in the last couple of hours. As far as the IMD update is concerned, just an hour back we got to know from them that the orange alert, which was there in place for Mumbai, Raigad, Thane and the Konkan belt, has now been upgraded to a red warning. So the red warning will persist in Mumbai at least till the noon period today afternoon, and one can see that because of that, the intensity of the rainfall, although as I said earlier has gone down from what was the case earlier, is not reducing any further. It is going to become extremely important for the authorities to keep a close watch on the movement of the traffic, because it's Monday, it's the first day of the week, and traffic is going to be a major concern for the people. We've been reporting since morning about how the monorail and the defunctioning of the same caused a bit of an inconvenience early in the morning, especially because it happened for the second time in last 1 month. But a similar situation shouldn't occur with the other modes of transport, and that is why BMC, MMRDA and the other local authorities, including the Mumbai police and the traffic police, are taking the necessary steps. According to the IMD, of course, the next 3 hours are going to be very crucial, but the next 24 hours is something that the Mumbaikars and the authorities have to look forward to.
All right, so that's the latest coming in from how Mumbai roads are looking like, filled with water. Viewers, if you've not stepped out, the warning is to just remain at home so that you remain safe and secure and not get stuck in the traffic as well. But, to take this forward, we're joined by Mahesh Palawat, who's a VP at Meteorology and Climate Change at SkyMet Weather Services, joining us now. Mahesh, hi, good afternoon to you. Your view with regards to the Mumbai rains right now. What is the environment looking like right now? Anuj was mentioning that 3 hours will be crucial to watch out for. But beyond that, what are the predictions looking like?
Yes, good afternoon. Kolava has already recorded 134 millimeters, Santa Cruz 73 millimeters. We can say 3-digit rainfall has been recorded over many parts of Mumbai and suburbs, and next 2 to 3 hours are very crucial because intensity may increase in some areas because a low pressure area which was over Vidarbha and adjoining areas. It is still persisting, but it is weakening now. So rain activities will start reducing a bit by late afternoon or evening hours, and there may be 1 or 2 heavy spells during night hours also. From tomorrow, we think that intensity will go down, but moderate showers with isolated short spells of intense rain cannot be ruled out. So we can say for next 2 to 3 days, intermittent rain will be there, but intensity will go down gradually. And today, for next 3 to 4 hours, there may be intense to very intense showers, which may cause further waterlogging and traffic jam in Mumbai and suburbs. Yeah.
Got it. Mahesh, this time, we've got an elongated monsoon for sure. And the prediction was also the same, right? That above normal monsoons are expected. How long do you expect this to continue apart from the next 3 to 4 days that you mentioned?
Normal date of withdrawal of monsoon from Mumbai is around October 5th. But as already monsoon has started withdrawing over western parts of Rajasthan, and we think that intermittent rain may continue until end of September over Mumbai. So there may not be any heavy spell, because this may be the last heavy spell over Maharashtra, including Mumbai and South Gujarat. Thereafter, because monsoon will linger for another 15 days, so we think that isolated to scattered rain may occur over a period of time. But this is the last heavy spell which Mumbai has been witnessing. And after that, for next 2 to 3 days, intensity will go down. There will be moderate showers. But after that, occasional rain, monsoon will linger up to end of September. By first week of October, monsoon will start withdrawing. What we can say, the weather will be pleasant, and we can say that temperature will not go beyond 35 degrees, or at least by the end of September.
Okay, and Mahesh, what about other parts of India? What is the reading there? And any message that you would want to give our viewers considering the kind of scene we have in Mumbai today?
Yes, now the monsoon is at 107%. It is surplus by 7% pan-India. And we think that rain activities will continue over many parts of Chhattisgarh, Madhya Pradesh, Maharashtra. Maharashtra particularly for next 2 to 3 days, including Vidarbha, Marathwada, like Hingoli, Latur, Jalna, Parbhani, Nanded, Nagpur, Akola, Washim, Bhandara, all these areas, and Nasik, Malegaon, Jalgaon, these areas may also witness moderate to heavy showers for another 24 to 48 hours. Thereafter, intensity will go down. So we think that except Rajasthan and Gujarat, many parts of India will continue to get scattered showers, but intensity will be more over Telangana, Vidarbha, Madhya Maharashtra, and North Maharashtra, including Mumbai, and parts of Madhya Pradesh. And for next, say, 6 to 8 hours, I think that Mumbaikars should stay inside if they are out, because this is Monday. Most of the people must have gone to colleges for working working in offices. So try to remain where they are for at least next 4 to 5 hours, because thereafter the intensity will go down and water will start receding, and water logging will also gradually ease.
Got it. Okay, Mahesh, thank you so much for sharing those insights, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, going to our brokerage call for the day. UBS is bullish on select counters in the IT space, and Harsh is standing by with more details.
We've had a fabulous week where IT is concerned, and UBS has initiated coverage on some of the mid and small cap names, or rather mid cap names. Let me be specific. Persistent, they see a 24% upside here. Outside of that, they also see upside on LTI Mindtree 16%, and UBS on Emphasis, which is a 9% upside. On LTI Mindtree and Emphasis, let me take that out of the way. They believe with regard to LTI Mindtree, revenue and margin recovery is going to hold the key, and that's where they see a 16% upside. Valuation though leaves little room for upside is what they say. On an Emphasis, they've initiated with a buy. They're saying that it's turning a corner after a few tough years. Again, here a mid-teens kind of an upside is what they see. Let me talk about Persistent now, because that's the big one. Near 25% upside. They're saying strong execution, and it's the fastest growing IT company. FY 20 to 25, there's been market share gains, which is a positive. Plus, you've seen margins go up 600 basis points over the last 5 financial years. So you've seen consistent improvement with regard to its metrics. Now, when you're looking at all of this and you're putting it all together, of course, GenAI is a risk, but they believe that Persistent is best placed there. And they're saying higher exposure to tech and BFSI, fascinatingly, plus US exposure at 81% of top line is actually a positive. So, kind of rounding it off, trying to talk about valuations, 44 times 1 year forward is what this one trades at, and they believe that this is reasonable, just about a single digit premium to its 5-year average. But what they are saying is standing out is the fact that there could be possible upsides both in revenue as well as margins, which could surprise investors on the upside, which is why that near 25% upside in terms of target price is what they see.
Okay, Harsh, thank you so much for breaking that down for us. Interesting, target prices for these IT counters, though the Nifty IT under pressure today. With LTI Mindtree emphasis and persistence probably in the red. Emphasis the only counter in green, in fact, up by about 0.4%. But the other counter that is in focus today, in fact, the stocks that are in focus today is the Alcobev space. Jefferies is bullish on the entire space and has initiated buy rating on 3 counters, that is United Spirits, Radico Khaitan, as well as Allied Blenders. Now, what is the rationale behind this call? Jasmeet joins us with more details.
Well, yes, thank you for that. Yes, well, rightly said, they have initiated buy coverage on 3 spirit stocks. Now, what they see with United Spirits is the target price of 1570. That's an upside of 20%. That's what they're seeing. With regards to Radico Khaitan, they see an upside of 22.5%. The target price of 3590 per share. Now, when it comes to Allied Blenders, they see an upside of 10% with target of 620 odd rupees. Now, what they see is they see the space to be a premiumization stage where they see there can be potential upside when it comes to increased prices per beverage. Now, they also see a double-digit growth in top line, compounded growth, and they see a meaningful room for upside when it comes to the margins. While they see for Radico Khaitan be a top pick, where what they see is they see the leads on the growth with an upside over 35%, where they also see the United Spirits offers a favorable risk ratio after the 20% correction which the stock has seen. Well, they also say that Allied Blender is a dark house and they see an upside execution, but that's something to watch out for. The execution and the top line is a key to watch out. So this is what Jeffrey says on the overall spirit section.
So Allied Blender being the dark horse that they are betting on, and Radico Khaitan as well as United Spirits. So interesting moves coming in these counters as well. Radico Khaitan up 2.7%, and so is Allied Blenders and United Spirits doing. But the other pack of stocks, it's a very stock-specific market, and there are certain counters that are buzzing on the back of news flow. That includes counters like Shakti Pumps, Vedanta, and Anant Raj that make it to the list. Vansh is joining us to take us through that list. Vansh, what are you picking up?
Well, yes, so let me start off with Shakti Pumps. Now, the company has secured a 347 crore rupees order for solar pumps. Now, the company will be supplying and installing 12,451 solar water pumping systems, and the order is the second tranche for the PM Kusum scheme in Maharashtra as well. Second on my list is Vedanta. Now, this one is in focus. Now, the company's arm Talwandi Sabu has entered into a settlement agreement with SEPCO. Now, the settlement is to resolve all the disputes related to the EPC contracts for its three 660 megawatt thermal power projects. Now, this is clearly a positive for Vedanta as the SEPCO has withdrawn all the arbitration claims linked to the company's power business. And now this is the contractual and payment disputes with SEPCO that has blocked the demerger process for Vedanta. Now, all eyes are on the final NCLT hearing, which is scheduled for 17th of September for Vedanta as well. Third on the list is Anant Raj. Now, the company there has been a proposition of 20-year tax exemption for the data center developers, and there is a proposal which is contingent on companies meeting the targets on energy efficiency and capacity addition. Also, the incentives in the Ministry of Electronics and Information Technologies draft include GST input tax credits on assets, which can also be beneficial for this particular counter. If I talk about the data center capacity of Anant Raj, the operational capacity stands at 6 megawatts, and the 22 megawatt addition has witnessed delays due to the pollution control regulations that has been imposed in Delhi NCR as well. So these are some of the stocks that are buzzing on the account of the developments that I just mentioned.
Okay, and what moves coming in on Anant Raj? Vansh, thank you so much for giving us those details. Up 10% as we speak and has continued to gain throughout the day as we speak. But again, shifting focus, the WPI inflation sees an increase in August, reaching to 0.52% year on year, marking a shift from the negative 0.58% recorded in the previous August. Now, my colleague Pallavi joins us with more details as to what's happening here.
Right, so like you've mentioned, India's wholesale inflation has moved back to positive terrain. That's after 2 months of deflation that we've seen. So wholesale inflation came in at about 0.52%. This was for the month of August, and this was after it eased to an 2-year low of minus 0.58% that we had seen in July. We did see some shift in trend as well. Wholesale inflation in primary articles continued to deflate, but this was at a deaccelerating pace from what we have been seeing previously. Manufacturing, that is critical because it forms the largest component of the index, continued to see a little bit of an uptick. So let's take a very quick look at some of the key internals on the WPI inflation. Primary articles at minus 2.1% in August. That's compared to a print of minus almost about 5% we had seen in July. Fuel and power continued to contract, coming in at about 3.2%. This is compared to minus 2.4% we'd seen in July. And manufactured products rose to 2.55%. This was compared to a print of about 2% we had seen in the previous month. Now, we are seeing some of this, translate to an uptick in CPI as well. CPI figures which did come in on Friday were actually above the 2% mark. So very much well within the central bank's target of 4%, but seeing a reversal in trend nevertheless.
Pallavi, thank you so much for giving us those details. In fact, one more thing to keep in mind today is that today is the last day to file your ITR, that is 15th of September, and this is applicable to individuals and HUFs to whom tax audit is not applicable. So that means salaried individuals like you and me, or anybody doing business or in professional services where their turnover does not cross that 1 crore mark. You can go ahead and file your ITRs on the Income Tax Department portal. And if you think that your ITR is complicated, you can also take help from a professional. But if you don't file it today, before that 12 a.m. mark, you'll be charged a penalty, which is 5,000 rupees for an income above 5 lakh rupees, and below 5 lakh, it is at 1,000 rupees. You can also file, of course, a belated return along with paying the penalty and a fee of 1% every month till you file the ITR. Lastly, in terms of any kind of mistake that is being made in the ITR, you can go ahead and correct it for the next 5 years. ITR-U can be filed correcting any mistake that you've made in the return. But with that, we're completely out of time on this edition of Markets at 12. But do stay tuned to NDTV Profit. More news and updates on the other side.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
welcome to Profit Buzzers. You are watching NDTV Profit. I am Mahima Vachrajani and with me is Anushi Vakharia. Well, before we move on to everything that we've planned for you on the show today, let's take a quick look as to how the markets are doing. The Nifty 50, very flat as it can get, like a pancake. It's down by about 0.02%. The Bank Nifty doing well in trade today as compared to where the Nifty 50 stands, largely led by the PSU banking names, up by about 0.4%. Let's try to pull up the Nifty 50 heat map and see what are the counters that are kind of contributing to the Nifty's, kind of downfall, and that includes your Asian Paints, which is down by about 1.4%, Shriram Finance down by about 1.3%, DRL, M&M, Titan, Eicher Motors, and Infosys, some counters in the red, down by about 1%. But something that's keeping the Nifty in check includes counters like Bajaj Finance, up 1.4%, Eternal, seeing good gains. If you can try to pull up the chart also, the intraday chart seems to be interesting, up almost 0.9% as we speak. Coal India, L&T, ICICI Bank, Trent, all seeing gains of about 0.4 to 0.5%. Let's take a look at the advanced decline ratio, because that will give us a picture as to how the broader markets are doing, Anushi. And there you go. It's remained in this range, right? It's 1600 odd advances versus that of 880 odd declines. So the ratio is almost 2:1 in a very stock specific market.
Yeah, absolutely. We are seeing a lot of these, stocks try and focus on back of some developments that we are looking, or some news flow that we are seeing. In fact, if you just look at what's happening with the broader markets, relatively better as to how the benchmarks are doing. Now, Nifty Midcap 150, in fact, if you see, it's up around 0.3%, while if you look at Small Cap 250, it's seeing about a 0.7% of an uptick. But, before we talk about stock-specific action, as Mahima highlighted, let's see how the sectors are doing in trade today. So, in terms of sectoral action that we are seeing, it's a mixed picture that we are looking at, with Nifty Realty right at the top, that we are seeing 1.6% of an uptick. Now, defense also continuing on its rally that we are seeing, up over 0.6%. In fact, let's pull the index up. Now, in the previous session, we did discuss about how the shipbuilding stocks are in focus, but it's not, today we are looking at stocks like Astra Micro, Apollo, clocking in decent gains as well. Railway is another area that we are seeing strong gains as well. RVNL, RITES, IRCON, couple of order wins as well. Railtel Corporation in focus, because of which we are looking at this bust in terms of what's happening. Along with that, we'll discuss later on the show as well as to what's leading to this kind of rally that we are seeing in the railway counters. But apart from that, let's also see BSE 500 as to what's happening over there. In terms of BSE 500, what we are seeing is, strong gains coming in from Anand Raj, 10% of an uptick over there. And this is on the back of, 20 years of an exemption in terms of taxes that we're looking at. Aegis Logistics, JBM Auto, some of these other counters in focus. Well, what's not working out so well is something like a Garden Reach, Craftman, E-Clerks, and even Metropolis clocking in losses of about 1 to 3%. But, that's as far as where the small cap and the mid cap and even the benchmark indices are doing. But let's take stock of the derivative space. Once just joining us to tell what the FNOQs are indicating for the markets at this hour.
Well, yes, so the overall texture for the market remains largely positive. In fact, we have already witnessed an 8-day gaining streak on Nifty. Also, if you look at the Nifty futures, we can see a decline in the open interest, suggesting a short covering that is taking place for Nifty as well. Also, moving on to the Bank Nifty front, what we can see is a decline in the open interest as well, suggesting a short covering for Bank Nifty as well. So let's also look at the FII side of things. What we have clearly seen that the FIIs have been consequently adding long positions, and in fact this is the 5th day that FIIs continue to add long positions in trade. So let's also look at the long short ratio of FIIs. Now the short positions for the FIIs stand at about short positions for FIIs stand at about 88%. So there has been some cool off in terms of the short positions held by FIIs. However, they continue to remain bearish in terms of Indian markets. Also, if you look at the open interest distribution for Nifty, what we can clearly see the 25,200 mark acting as a very strong resistance, which is followed by strong call writing, and the 25,000 psychological mark acting as a strong resistance, acting as strong support, followed by strong put writing as well. So this is what the overall picture looking like for Nifty as well. Let's also look at the stock specific action. In terms of the open interest gainers, what we can clearly see the long positions that are being built up for Angel One, Concord, Piramal Pharma, Ember Enterprises, and short positions that are being built up for Mazgaon Dock as well. Let's also look at the open interest losers front. What we are seeing is the short positions that are being closed for NBCC, LIC, HFCL, Bharat Dynamics, NHPC as well. So this is what the overall picture is looking like for the markets right now.
Okay, thank you for that, Vansh. On that note, let's also just break down some of the interesting data that we are looking at in terms of what mutual funds have bought and sold. in the month of August. Now, what we are seeing and what we are going to talk about is the overall sectors which are going to be in focus, which are some of the key sectors which have been highlighted and which have seen the most amount of buying, while which sectors have been relatively under pressure. Along with that, in the mid cap and the small cap, we'll also be decoding about the stocks which have been investors' favorite in terms of where the mutual funds are concerned, even in the large cap category, which are some of the stocks which, despite being under pressure, have performed relatively well. So all of this, we'll be talking about. This includes interesting names as well. But to give us a breakdown on all of this, Mahima joins us with more details.
Right, Anushi. So we had the mutual fund data come in last Friday, and now we have the breakup as to what mutual funds have actually bought and sold in the month of August, and what sectors have seen inflows and outflows. Now, to start with sector-wise changes in stock holdings, these are the sectors that have actually seen inflows during the month of August. Of course, auto and auto Ank tops the chart on the back of the GST 2.0, up around 47 basis points, followed by discretionary because consumption was in focus. IT are 16 basis points, and we've seen that short rally in the IT as well, and telecom as well saw some uptick when it comes to sector weightages. Now, sectors that saw outflows in the month of August, if you can try to pull up that chart, there you go. Sector-wise, financials saw a negative 40 basis points shift. Mutual funds sold counters that they held in financials, followed by industrials, healthcare, as well as oil and gas. Now, stock-specific names as to which stocks saw inflows and outflows in the large cap space. Stocks that saw inflows includes Tata Steel, HDFC Bank, Infosys. Some counters like PGCIL and Adani Energy also saw inflows in the large cap space. Then in the mid cap space, we saw inflows in counters like IDFC First Bank, Federal Bank, SAIL, as well as some counters like L&T Finance and Ashok Leyland. In the small cap space, there were inflows seen in counters like IEX, Samman Capital, as well as Sagility India, and some other names like Ujjivan Small Finance Bank and Inox Wind. Now, this is where there was inflows. That means mutual funds went ahead and bought these stocks in the month of August. But stocks that were sold during the month of August includes counters like Eternal. This is the second month in a row where we've seen outflows. Tata Power, NTPC, these are the large names that have seen outflows, in ONGC and REC as well. In the mid-cap space, there were outflows seen in counters like VMart, Yes Bank, Exide, as well as Suzlon and Fortis Healthcare. VMart and VMart, in fact, again here has been second month where it's seen outflows, and so did Yes Bank as well. Lastly, in the small cap space, RB Infrastructure, ABFRL, RBL Bank, as well as Granules India and Ola Electric were some counters that mutual funds have sold and booked profits on. Lastly, as to where the cash position stands, well, the cash position overall has seen an increase when it comes to this month and continues to see rise that we've seen in the past few quarters as well because of the markets remaining range bound. So this is the overall view as to how mutual funds have bought and sold stocks in the month of August.
Okay, very interesting set of data that we are looking at, and interesting counters also that we are seeing. Just on that note, let me welcome in our guest for today, Prashant Tapse, Senior Vice President, Research Analyst of Mehta Equities, joining us. Prashant, hi, morning. First of all, just starting off this conversation with you, want to understand, in small caps, we are seeing a couple of these names emerging, which includes the likes of IEX, Samman Capital, Sagility India, even Ujjivan Small Finance Bank and Inox Wind that Mahima spoke about. Just want to get your perspective. If you have any top picks in these particular names that Mahima had a positive view on the same.
I think overall, with respect to these sectors, that is mid-cap and small cap, I think there is some kind of positive traction as we are completing almost the second quarter of this financial year. So I think the hopes of better earnings are bringing some kind of positivity in the stock and more activities in the stock. I think Sigachi can be one stock which I am very much tracking as a fundamental analyst. So I think last 6 months back there was some kind of incident which took a lot of negative impact on the earnings. So I think this quarter the facility which was under issue, so that is getting into a positive production capacity. So that would be one reason why the stock has recovered from 35.40 to 45. So overall, Sigachi can be one stock one should look at as a positive impact for next few quarters.
Prashant, just want to understand from you, in terms of sectors also, auto, we had seen strong gains just a week before that. This was on the account of macros also taking place in terms of, the GST cuts that we've seen along with that, even that while on the other side, we do have the tariff remaining as an overhang. But just want to understand from you, in terms of sectors also, while we have seen stronger inflows in this month for auto, discretionary, IT and telecom, while outflows we have seen in sectors like financial, industrials, healthcare, which are the sectors in which you are overweight and relatively you are underweight?
So overall, on the positive side, I think again discretionary spending with respect to the consumption story, which we are expecting on the festival season, which has already started from the Ganpati festival. So I think that would be one sector one should focus more, where I'm expecting good terms in terms of growth in volume growth as well as in the margin growth for consumption as a story. Second, again, auto. As a overall story would continue to be very positive, as India always goes for shopping in the festival season for good discounts, and also I think GST is one the bigger benefit. Again, festival will get additional benefits. So people who would like to take some kind of advantage, so there will be good volume growth, and markets are getting discounted for that.
Just on that note, let's talk about some more stocks which are in focus, and this includes the likes of KRBL, Anantraj, as well as Yatharth Hospitals. To get more details, Varsha joins us.
Thank you so much for that. Let me start with KRBL, which is under pressure because Anil Kumar Chaudhary, who is an independent director, has resigned, citing inconsistent board dynamics. Now he says the board dynamics are inconsistent, considering these, safeguarding the shareholder interest. Now the issues that he has raised was one of the issues that he has raised was inconsistencies in the recording of minutes of the board and committee meetings, and also unjust write-off of certain export receivables without adequate deliberation. So this is the reason why KRBL is under pressure. Next is Yatharth Hospital, wherein they're going to acquire 100% equity in Shantived Hospital. Now this is a pure cash deal of 260 crore rupees. This will mark entry or strengthen their footprint in Uttar Pradesh. Now about the Shantived Hospital operates about 150 beds with an expandable capacity of almost 250 beds, and also has an operating occupancy of around 36%. FY25 revenue for this company stands at around 50 crore. Last on the list is Anantraj. This stock is buzzing as India proposes a 20-year tax exemption on data centers. Of course, this is contingent to the companies meeting their energy efficiencies and of course the capacity additions. And for Anantraj, if you see the capacity addition, the overall capacity stands at around 6 megawatt, and MK expects this to 63 megawatt when it comes to FY27 and 107 megawatt by FY28. So these are three stocks which are buzzing on the back of news flows.
Okay, Varsha, thank you so much for giving us those details. Prashant, I'll come to you on KRBL specifically. We've seen how we've been talking about these consumption names that have started to pick up because of GST 2.0, and KRBL could be a beneficiary of this, considering it sells rices. The consumption for rice might go up, but from a stock market perspective, citing governance issue is a big thing and a big red flag when it comes to KRBL for now, and we're seeing that kind of reaction in the stock as well. Your view as to how this should be seen, and if somebody is evaluating or holding the stock in his portfolio, what should he do?
I think it's alarm for an investor who is holding KRBL at this point of time. We have seen many examples in the history whenever there is a resignation or a change in the auditor, and the reasons we already mentioned in the channel. So such kind of allegations, such kind of points will create a lot of noise in the company, and that stock will really react more. I think the stock can come down to at least 350, 340 levels on a very short-term basis. So investors who are holding it, try to exit the counter at this point of time, again, because the consumption story will remain, but we may get the stock on a better discount valuations.
Okay, Prashant, want to get your view on Anantraj as well. Now this is one counter which is clocking in about 10% of gains today. And one of the reasons that it's cited is, the exemption that, majority of these data center developers will get for a period of around 20 years. Just want to firstly understand this development, and even in terms of capacity additions, Anant Raj remains in forefront for this. About 300 megawatts is the target as compared to about 6 megawatts that they currently have. So it's a huge jump that we are seeing in the next 7-8 years or so. So just want to get your outlook on the stock.
Very positive on the data center business model in India. And Anant Raj has stepped in, I think, 6 to 8 months back by investing almost 600 crores in the data center development. The capacity addition is in line with what the industry is demanding, and government has really given a good booster support for such kind of sector development. I think overall, with respect to valuations, I think the valuations are very much decent when we see the high growth in the data center system, and even the development sector, that is the real estate sector, also is doing good. So I think overall a good mixture. I think with respect to the data center valuation, I think the stock can deliver very good for the next 12 months from the current levels.
A very optimistic view that we are seeing for Anant Raj here. But with that also, let's talk about railway pack in particular. Now what we are seeing is strong volumes for a majority of these counters that we are looking at. This includes the likes of Railtel Corp, Aircon International, RVNL as well, which are seeing around 7 to 6 times of volumes compared to its 30-day average. Even RVNL, Jupiter Wagons, Titagarh, these wagon makers are also seeing strong gains in trade today, along with the Texmaco Rail and RITES as well. But what's leading to this buzz that we are looking at? India, in terms of macro that we are seeing, India is set to build about new Indian railway lines near the China border that we are looking at, and this includes around 500 kilometers of railway lines being built. This will also include bridges, tunnels and other related works as well, which will support this kind of infrastructure for the railway sector that we are looking at. Again, estimated project cost of this being around 30,000 crore, and this is to come, this is expected to be completed over the period of 4 years is what we are seeing. But apart from that, the sector has remained in focus on the back of a couple of order wins as well. Just today we saw Railtel Corp clocking about a 210 crore of worth of an order. And this is from Bihar Education Project Council that they've received such order. Just last week also we spoke about a 700 crore of an order win that they've received from from Bihar Education Project Council as well. Along with that, even if you look at Titagarh, now they have launched their third diving support craft for Indian Navy. Now, what's interesting over here is that it is shifting its focus to other verticals as well. The company did say that by next 2 years, they want to focus more on the signaling as well as, the Navy side of the business, the shipbuilding side of the business that we are seeing. So, these are a couple of orders that we are seeing from Titagarh as well. And coming to Jupiter Wagons, so, on Friday, the company had received an order worth about 113 crore as well. The order book currently standing at roughly around 5,900 crore or so. But Prashant, coming to you on a handful of these railway counters, firstly, want to understand your overall perspective on the industry, how it is, and if you have any picks in this particular space.
I think it's very optimistic on the sector, as a long-term story still is intact. So the major supporter for this kind of sector would be government, and a lot of private also are getting into the business of railway supportive. So I think overall the sector remained underperformed for recent times, at least for last 2 months. So I think with respect to the China news, with respect to the new order book which the companies are getting, so I think the valuations are very much decent to have a fresh position at this point of time. Again, investors should understand this is not a trading opportunity, it's an investing opportunity for at least 1 or 2 year railway story. With respect to pick, again, RVNL can be one stock which I am very much optimistic on a technical base right now. I think it has crossed its 50-day DMI, so which is a very good strong signal. So I think the stock can go towards 410 and 420 from the short term period.
Okay, all right. So that's with regards to where these railway counters are concerned. Now, time for some brokerage calls that have kind of moved the stocks today. And the Alcobev pack has been buzzing on the back of a Jefferies note. They've initiated buy on 3 counters. That includes United Spirits, Radico Khaitan, as well as Allied Blenders. For United Spirits, they've given a target price of 1570. For Radico Khaitan, a target price of 3590. And Allied Blenders, a target price of 620. All 3 where Jefferies has initiated a buy coverage. Now, they're saying that these are the 3 players to play the premiumization theme in the best way possible when it comes to the Alcobev space. The spirits category offers premiumization-led growth potential. Going forward, they see double-digit top-line CAGR across companies and a meaningful room to expand margins as well. For Radico Khaitan, they've said that this is their top pick and leads to growth of more than 35% EPS CAGR. For United Spirits, it says that offers a favorable risk reward after seeing the more than 20% correction that we've seen in the market for this particular stock. And lastly, Allied Blender, they're calling it a dark horse because for them, meaningful upside, yes, of course, but execution remains crucial going forward, and they'll be observing that as well. So these are the three counters that are buzzing on the back of this Jefferies note. Prashant, I'll come to you on the entire space. Anything in particular that you're liking fundamentally?
Very much attracted at this point of time the way they are going to upgrade their models and premiumization in the sector. So I think that will create a lot of EBITDA lucrative business model going forward. So in this again, we are deeply studying, that is Allied Blender is a stock which we are studying right now. On the valuation side, I think United Spirit looks very good at this point of time. On a technical basis also, the stock has already performed. But again, on a trading basis, United Spirits looks very good at this point of time. Allied Blender is a stock which we are deeply studying right now at this point of time.
Okay, all right. So that's with regards to where these Alcobev companies stand. But viewers, keep in mind, today, 15th September, is the last day to file your income tax return. Well, just to give viewers a perspective, who is this deadline for? Basically, for every individual or HUF that is, not subject to any tax audit will have to file their returns today before 12 a.m. And this includes salaried individuals, professionals, businessmen whose turnover does not exceed that 1 crore mark. Just to give viewers a perspective as to how you can file ITR, it's easy. You can go to the income tax website, log in, navigate your ITR filing section, select the assessment tier, choose the correct ITR form. This is an important one. If your ITR is complicated, you can go ahead and use professional service there. Review and confirm the information, pay your taxes, and of course, do not forget to e-verify your return, because if you don't e-verify your return, the return that you filed will be considered invalid. You have a 1 month's time period to e-verify your return. With regards to what happens if you don't file ITR, well, a penalty of 5,000 will be charged if your income exceeds 5 lakh rupees and 1,000 rupees if it's below that 5 lakh mark. Now, just in case you forget to file, or if you don't file the return by today 12 a.m., a belated return can be filed, of course, after paying the penalty, and an interest under Section 243 will be charged on this at 1% for every month till you file your return. So keep that in mind. And lastly, if you've already filed your return but you think you've made some mistake in the ITR, you can go ahead and file an updated or revised return as well under ITRU. So keep that in mind, viewers. Today is the last day to file your income tax returns. So do not forget that, and do file your ITR today itself before 12 a.m. So Anushi, that's with regards to where ITR filing is concerned. I hope you file your return.
Yeah, of course. Since you've given the update, we should be the first ones to do that also. But, interesting set that we are looking at in terms of what's happening in this regard. But with that, it's time for a quick break. But we leave you with a very important word from NSE CEO Ashish Chauhan. Now, we spoke with him on what's happening on the special show, that's The Disruptors. Listen into a slice of that conversation and we'll be right back.
Tell me about that time when you came back and how you had to rebuild the reputation after the co-location scam. That must have been a tough phase.
No, it was. In fact, when I was working for BSE for 13 years, first 3 years as deputy CEO, then 10 years as a CEO, and I was retiring because there was a new regulation taken to ensure that nobody can work as CEO in any exchange for more than 10 years. And so I was retiring there, and then one more leg of the scandal broke, although the scandal broke in 2015. But I think 22, there was another sort of a situation which came about, Invisible Yogi and other things. And two of my predecessors, who were also founders with me in NSE, they went to jail. And so it was a tough time for the organization. It was also losing credibility in terms of the technology not working out, and also many other things. And even government was feeling that this can create an issue, because it's a fulcrum on which any modern nation works. The stock exchange is a very important organization. And to maintain that trust of people, it's very ephemeral,
So you got the call.
And so I got the opportunity, I would say, to come back. And then my wife was against it. My child was against it. Even he's now adult. He was becoming adult that time. And my sister called up from US saying, why are you going for working in that place where people are going to jail and you have enough money, why are you trying to even work? And in that I said, no, I've started this exchange, it has done India so good, and if India has to grow well over next 30, 50, 100 years, it'll grow on the back of NSEs.
Tell me about the aspiration to live a spiritual life, and then if you become a monk, then you are actually giving up on a lot of things in the world. Tell me about that thought and that phase in your life. Was it as a young child?
Yeah, I was very young, probably 7, 8 years old, and up to, I think, around 15, 16 year old. I mean, I was a bright student. Without studies, I could get good marks. But broadly, I was also into playing cricket, reading up things, but also into religion. And my family was broadly of the opinion that I'm going to become a monk. I was also of the opinion that I will become a monk. But then by quirk of fate, I got into IIT. And so that changed life. I came to IIT and then I was like lonely, did not know English. And so I was going to go back and I got admissions there as a medical student also. I did one day for medicine studies also, one day in the local engineering college in Ahmedabad, and then came back saying, okay, might as well. If I have to study in English everywhere, might as well go back to IIT. So that's how I went back to IIT and completed engineering. But it took me 4 years to learn English more than engineering. And I thought I was not a great engineer. But I started organizing youth festivals and sports festivals and all. And so I became I thought I was a good manager, which was probably, in retrospect, it's just you think something about yourself which may not be true.
Was that a stumbling block which you found was a challenge that you had to, because you studied in Gujarati, but then the world that you came into, the professional world, then gave English so much importance?
It does. Not even the study. You couldn't even understand what was being taught, or you couldn't answer in Viva. So, my friends would ask me in Hindi, get answer from me, and then they will answer and they will pass it, I will fail. So when you go through that, it's a different world there. Many people coming from Mofussil towns and vernacular medium, even today in India, face similar situation. Of course, the discrimination, because India wants to speak better English than even English people. And so we give more importance to people who speak English rather than having more knowledge or wisdom. But that is how life is. You can't expect life to change for you. You have to change for the life, right? So slowly with struggle, you do things. And if you have that, what I call detachment, you can live through a lot of pain, right? So in some ways, your pain threshold is quite important in going through life in a, what I call, without being pained. Everyone goes through the struggle. I think the richest and the most powerful have their own struggle. But it's how you sort of deal with the issues that come. And if you have a little attitude of being humble and sort of nimble, but more importantly, ability to take that pain on yourself, that takes you a long way.
Yeah. Part of that is in the book, Sthita Pragya,
yes,
that
yes.
you have released. What is the message that you want to give here?
No, in a way, the book is written by somebody else. He wrote a book on my life because he came to know me for a few days and he thought I live like a monk, because he came to my house for doing a video on my life, for a 1-minute video only. But I live still in the same way where I come from. So that's where he thought I live like a monk, and then he started asking and he wanted to write this book for a couple of years. I kept on saying, no, my life is similar to many other people who have migrated from smaller places into larger cities, and it's not worth talking about. But he insisted, and then he talked to my colleagues and my friends, and then I finally sort of agreed to talk to him for some time, and that's how this book was released. And it's more of his sort of way to explain my life rather than my saying anything.
Here I am making you say something. So this is, I can see that you find it difficult to talk about yourself.
Yeah, in a way, all of us have to go through similar things. I mean, the life takes you through ups and downs, and in some ways, how you deal with it. All of us have our own circumstances, our own understanding, and that's how broadly most Indians are reasonably spiritual, whether they know about it or not, and they take life in their own stride, and so that's what all of us do.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome back to Profit Buzzers right here on NDTV Profit. Before we move on to look at some key stock specific action, let's first look at how the markets are doing, because we have seen a sluggish market to say the least. It's currently down 0.08%. So we did inch up slightly in the green some time ago, but we've come back and resumed our downward momentum on the mid cap and the small cap as well. While when we did Ask Profit a couple of hours ago, the market was in the green for these two indices, and that's continued as well. It's actually built on for the mid cap 150 and the small cap 250 as well. Let's quickly pull that up. 0.67% now. So the broader markets largely guiding the market towards a positive momentum to say the least. We have seen some stock specific action as well on both on the losers as well as the gaining side. So let's look at the BSE 500 before we put some focus on some key stocks. And you have something like a KRBL continuously under pressure today, and that story Mahima did put out of the independent director quitting, resigning, and giving some key governance issues as the other factor. While we have seen on the positive side something like a JBM Auto continue to be in the positive trajectory. The company did announce a funding of $100 million from IFC, which is a financial arm of World Bank, and that is visible in the stocks as well. But a lot of individual movers to say the least. But let's put our focus on another stock which is on our radar, is Tata Technologies. The stock is up more than 1% today. Right now it's up 1.15%. Largely on the back of an acquisition that the company is doing, and it's actually done that acquisition and announced over the weekend. Let's get in my colleague Jaspreet to give us more on this.
Well, right, yes, thank you for that. Now, Tata Tech signs a definitive agreement to acquire 100% stakes of ES Tech. While the ES Tech is a German company which operates in ER&D space. Now, well, this will increase company's capabilities in the German segment and also help the company benefit from the local market and expertise from there. While they also would benefit from the ER&D space and expand their branch over that. Now, if you see, the acquisition is significantly enhancing the company's capabilities in the other geographies as well. Now, they see that they expect it to be an EPS assertive from the year one itself, which is positive for the company. While the amount paid for the acquisition is roughly 75 million euros, and this is roughly 2.1x from the last year revenue of the company. If you look at this transaction, it is supposed to get done in next 2 months by December year end, and from the last quarter of the financial FY26, we might see an add-on to the revenue. While after this, you also have a brokerage note on Tata Tech. Now, JP Morgan has come up with a note based on the acquisition. What they say is, they have maintained the under with a target price of 570 rupees. While they see the EPS assertive acquisition from the German acquired company, they also said that the acquisition to add 2% in FY26 top line. Well, further it will add 5% from FY27 onwards. Well, that's a positive. Well, they also see that this acquisition is a good one, given that the EBITDA paid for this is 2.1x, which is cheaper than the other players out there. While they also see that given Tata Tech has access to German market, this will help them to well account for the Volkswagen industry as well. Now, they expect the revenue to decline by 4.6% on CC terms given the global scenarios, and they also see a decline of 100 BPS points for FY26.
Thank you for that, Jasmeet. But we also spoke to the management of Tata Technologies, Warren Harris, the CEO and MD, and I got a chance to speak with him about the acquisition, as well as, among others, what he makes of the industry as well. Listen to what he had to say.
Well, we're really excited about the acquisition of S-Tech. S-Tech is a company that's based in Germany. It's about 300 people, about $40 million in revenue, margins of 28-29%. So for Tata Technologies, this acquisition is going to be accretive from day one, both in terms of margin and in terms of EPS. It's a company that is focused upon the SDV space. It has tremendous depth in terms of ADAS and comfort electronics, and it's a great complement to the software capabilities that we've been building in India. You may remember that last year we announced the joint venture with BMW. And so this acquisition not only provides us with a nexus in Germany, but it also provides us with a platform from which we can support companies like BMW, VW, and Mercedes. So we think both from a market access perspective and also in terms of capability, strategically, this is really going to accelerate the progress of Tata Technologies.
Well, that was Warren Harris of Tata Technologies. He went on to say that he also attended the Munich Auto Show, and this time, though, the German automakers were, outpacing, outgrowing, outshining the Chinese EV makers. But we still have Prashant Tapse with us. Let me also welcome in Amit Bhuptani, the technical and derivative analyst at Nirmal Bang Securities. Amit, very good afternoon to you. Any view that you have largely on Tata Tech, because we've seen kind of a revival from the 620 to 630 odd levels. Do you think that there's any more legs to run on this particular stock?
Yeah, hi, good afternoon. So overall, if you look at the setup seems to be on the positive front. On the daily chart, there is almost a flag pattern type formation which is being created. From last few days of trading session, we have witnessed some sort of pressure from the upside levels, but from last 4 weeks of trading session, the base has been created on the downside. So currently 695 will act as the immediate support for this counter. Once the stock goes above 715 levels, then again the momentum will be witnessed towards 740, 745 levels. So at this point of time, new long positions can be created with the support of 695.
Okay. All right. Thanks for that view. Let's move on. A lot of brokerage. There's brokerage firm which has released notes on IT firms. We've got a slew of notes which UBS has initiated coverage on. Jasmeet's still with us. Jasmeet, what are some of the views that are coming through on UBS, and what's the upside looking like?
Well, right, yes, thank you for that. Though we say the IT is under pressure today, but we have this brokerage of UBS which has initiated coverage on 3 IT firms, basically mid-cap IT firms. Now the first one is the LTI Mindtree. They have initiated a neutral rating with a target price of 5,830, which is roughly a 10% upside from the given current price. Now what they see is the revenue and margins are key thing to watch out for. They also see there's mixed bag of position for the company given both positive and concerns as well. That's for the neutral rating. They see execution has underperformed compared to the mid-cap peers, while they also say it's been well placed when it comes to Gen AI cycle, and given the Gen AI development should help the company going forward. Now, while they see the valuation leaves a little room for upside for the company. The next one is Emphasis. While they initiate a buy rating on Emphasis with an upside of roughly 14% from the given current levels, while the target price is 3,370. Now, what they see in this is they see the company is turning the corners. They see that the losses have bottomed out and this would recover going forward. They also see that there are multiple headwinds for the company in the recent times, but they are well positioned when it comes to Gen AI. In terms of they're lagging when it comes to the mid-cap peers, but when you look at the overall bigger picture and large-cap peers, the company is doing well compared to the large-cap peers out there. They also see that the growth, if the growth recovers, there's a strong chances of the upside. That's why a buy rating. While the last one is Persistence, is a big one actually. They have initiated a rating of a buy rating with a target price of 6,730, which is a 25% upside from the current odd levels. Now what they see is they see this company is best placed among the mid-cap peers. They see a strong growth in top line as well as in the margin going forward. I mean, look at the Gen AI angle. They say this company is best placed compared to the other players when it comes to Gen AI cycle as per the order book and the framework which they're currently operating in. So these are the brokerages, what they're saying on the mid-cap IT firms.
Okay, thank you so much for that, Jasmeet. Prashant, let me come to you. Thanks for joining us again. I'm Harsh. I want to quickly take your view on some of these IT names. We saw the IT index up 3.5% all through last week. Of course, we've seen a bit of a cool off since. Today we're down around 0.6 odd percent. Focusing more on the mid and the small cap, is there a preference or a tilt that you have, and what do you make on some of these names which Jasmeet just discussed, a Persistent, an Emphasis?
I think with respect to the mid cap as a space and the IT story, Emphasis looks good at this point of time. I would like to give a better valuation with respect to the mid cap stocks when we compare this stock with Persistence or any other mid cap stocks. So Emphasis can deliver a better earning growth when we compare with other all mid cap companies. But again, on a sector basis, large cap would be a preferred stock for us with respect to Wipro, with respect to Tech Mahindra. Those stock can deliver better return because again the exposure towards the Western clients would be high on the large cap sector. But overall, sector is waiting and watching for 17th of the September, where we will be seeing a lot of comments from the Fed chairman. 25 basis point almost discounted, but again markets are also expecting 50 basis point can also be a trigger for the IT sector.
Definitely, Prashant. The sector is waiting, the companies are waiting, we are waiting for the 17th of September. That's of course going to be one big day to watch out for. But let's also look at some other key stocks that you should have on your radar. Let's first pull up GMR Airports. The company released their August passenger traffic. It's down roughly about 3.5% to 93 lakh passengers. This was expected to be impacted due to Delhi airport, which the company operates, because 63% of the traffic for the company as a whole comes from the Delhi airport, and that had maintenance of runways issues at 10 and 28, and that's what the company has mentioned as well. Hyderabad is the other positive one. It was up 4% on a year-on-year basis, and that's the second highest in terms of traffic. But they did mention that someone like a Jeffries in the India strategy note today mentioned that they are adding some positions in GMR Airports because the company's focus on becoming a consumer lifestyle brand and adding a lot more at the airport. So watch out for this one. The other couple of them, Shakti Pumps got an order of 347 crores. This was under the PM Kusum scheme, and it's a key one for solar pumps, almost 12,000 of them that they'll be installing and selling as well. And it's key because its counterpart, which is Oswal Pumps, ever since it's listed, it's been on a tear, and we seem to be now catching up and realizing the value of Shakti Pumps as well. That's what investors seem to be picking up, up 4.2%. And finally, a recent listing, Shriji Shipping as well. Company came out with its Q1 numbers actually. Revenue was up 24%, EBITDA was up 58%, while the profits also continued to be strong as well. Amit, let me come to you on either of these names. Do you see any positive momentum on stocks like Shakti Pumps, GMI Airports to continue for the rest of the day?
Currently, if you look at the GMR Airport, stock is continuously trading in the range bound of 85 to 90 levels. So once if it gives closing above 90, then only buying confirmation will come in discount. For Shakti Pump in discount, we are seeing that the stock is facing the 200 DMA resistance at 925 level. The closing is very much important about that level. So we should wait for any of this counter because at this point of time, there is not much of confirmation on the buying front.
Okay, so wait up, be cautious, be patient. That's the word coming in from Amit. But buzz in primary markets, that doesn't seem to end. Urban Company emerged as the most subscribed IPO in the last month. But how has the most subscribed IPO of 2025 or all of them, how have they fared since listing? And will Urban Company really deliver? Somit joins in with the details. Somit.
Well, yes, Urban Company remains in focus given the fact that it is one of the most subscribed IPO in the last 1 month. If you look at the subscription data here, the QIB portion was subscribed nearly 147 times. The NI, that is the non-institutional investor portion, was subscribed 78 times, while the retail portion was subscribed close to 41 times, taking the overall subscription number to close to 109 times. And it has received bids worth around 1.13 lakh crore rupees as against the 100 crore which was in offer. And this bid amount of 1.13 lakh crore is the highest that we have seen in 2025 at least. But this is not the only company that has received a stellar subscription. There are at least 12 companies in 2025 so far which have seen a subscription number of more than 100 times. Highway Infra, which raised close to 130 crore rupees, saw a subscription number of close to 317 times. Indo-Farm, Denta Water, Quadrant Future and Stallion India, which raised anywhere between 200 to 290 crore rupees, saw a subscription number of anywhere between 188 to 228 times. Apart from that, there was Standard Glass, Regal Resources, JNG Electronics and Borana Weaves, which raised close to 140 to 410 crore rupees, while the subscription number was anywhere between 150 to 185 times. And apart from that, there was Lakshmi Dental and Aditya Infotech, which raised close to 700 to 1300 crore rupees, and the subscription number was anywhere between 106 to 114 times. But do remember that strong subscription number would not necessarily result into strong gains post listing. Now obviously all the companies that have seen a subscription number of more than 100 times have seen a stellar listing, but gains since then have been limited. In fact, out of the 11 companies, 5 of them have seen negative returns, 2 of them have seen returns of less than 10% while the remaining 4 have seen some good source of return. Now if you look at the first graphic here, which is Highway Infra, which was subscribed nearly 317 times, the subscription, the listing day gains was close to 73%, but since then the stock has declined around 28%. Aditya Infotech 60% listing gain, 32% since listing day. Quadrant Future 53% listing gains that we have seen, but since then the stock has been flat. For GNG Electronics, 41% was the listing gain, but since then the stock is up just 7%. In case of Stallion India, 40% was the listing gain, and since then also the stock has performed good, around 63% return that we have seen. Regal Resources 29% listing day gain, 19% downtick since then. For Indo-Farm Equipment and Lakshmi Dental, both of them saw a 29% gain on the listing day, but since then the stock is down around 8 to 44%. Then there is Borana Weaves, which saw a listing day gain of 18%, but since then the stock is down 14%. And for Standard Glass and Denta Water, the listing day gain was close to 16%, and since then the stock have just gained around 12 to 14%. And given the fact that Urban Company was subscribed nearly 109 times, the grey market premium at least indicates that the listing would be strong in case of Urban Company, northwards of 60% plus gains we could see on the listing day.
Thank you for that, Somit. 60%, if that were to be the listing price at a premium to the IPO price. Prashant, should an investor therefore maybe sell if that's the kind of premium he's getting tomorrow? And should fresh investors come in and buy?
For a fresh investor, I don't recommend after listing of 60% and above. But again, a risky investor who is continue to hold risk in his portfolio, he can continue to hold this company. But again, a conservative investor who has got this allotment, I think he should take such kind of opportunity of 50-60% return on the IPO day. Overall, again, the company is very strong in terms of the technology and the home services division. Again, one and only company in India right now which will be listed. So I think it will gain some kind of traction post listing also. So overall, risky investors continue to hold.
Well, Prashant as well as Amit, we'll thank you on that note. Thanks so much for joining in, giving us perspective across a bunch of stocks. But in fact, our managing editor Tamanna Inamdar had a chance to speak with the company's co-founder Abhiraj Bhal just a few days before the IPO opened. He speaks about the timing of the IPO and shares how how failed carpentry job prompted the idea for Urban Company. Listen into that conversation, and for the full chat, tune in at 6 p.m. to watch The Disruptors this Friday only on NDTV Profit.
This is an exciting time because you are now going to face the quarterly scrutiny of analysts, journalists, business channels, all of us looking at what your numbers are stacking up to be. Is this something that you wanted to push down the road, the IPO, or is this something that you're comfortable with?
I would say it's been 10 years since we started. So, it's a good time. One can always wait, but, a little bit like marriage, there's never a perfect time. So if you feel it's right, you go for it. And we felt we were ready. We felt we had the scale, the profitability, enough growth ahead, the right governance. We've had an independent board for a while. So, as good a time as ever.
I dare say exiting from investor scrutiny might be more difficult than exiting from a marriage, since that's the analogy you started with, because then that is something that you have to get used to. Yeah. Nevertheless, let's start at the beginning. 2014, Urban Clap comes to life after one attempt that didn't quite go as you wanted. The biggest transition actually for a lot of people that I speak to on this show is from that steady job to the entrepreneur. It's a mindset shift, isn't it?
It is. I think the paycheck stops hitting the bank account every month, and especially if your first idea or first startup doesn't work out, which in our case was true.
What was the idea?
Well, we were building a company that was trying to provide entertainment solutions in long-haul travel. So buses and over time, hopefully trains and planes. The thesis we had was that, these journeys are very boring and disconnected, and therefore any kind of entertainment solution will be, could be a very large market. We didn't get too far in that idea. Very quickly we realized that both the market is very small and there was very little traction. So we built a product, but when we put it out there in the market, it didn't really succeed, and it was a good lesson for us to actually, sometimes I feel like first ideas are sort of a rite of passage, to go on to eventually build what you are destined to build. You have to get past that first, rather naive idea.
So where did the kernel of this idea come from? Was it through personal experience where, sometimes you're just waiting for a technician or an electrician to turn up and you don't know where to go? Or was this something that was workshopped? Where did the kernel of the idea come from?
I think the kernel of the idea was certainly personal experiences. I think all three of us had a few experiences that had gone wrong. I can talk about one where I was trying to get a carpentry job done, and 3 carpenters, and 24 hours later the job was still unfinished. And when we started to compare notes with ourselves, with a lot of consumers back then, we were talking to a lot of consumers, we were spending time in the market. This was coming up as a recurrent theme, that getting reliable services at home is not a solved problem. It is a challenge. Our assumption was that this is because the industry lacks professionalism and the industry lacks standards, which is true. But when we delve deeper into the supply side, into our service professionals, and spoke to several of them, we realized that it is not lack of wanting, it is lack of opportunity that has held them back, and one of the reasons why the industry is unorganized. Service professionals we spoke to did not have direct access to end consumers. They did not have an opportunity to upskill themselves, move up in their career trajectory. They were sharing their margins with middlemen and local aggregators and local thekedars and local contractors, and most of them were living sort of very, very lower middle class, hand-to-mouth existence. So it became quite evident to us that here was a fairly large category where both sides were broken. The consumer was not getting the quality and reliability they wanted, and the service professionals were not getting a dignified, respectful middle class life. And I think that's like the kernel of the idea came from personal pain points, but I would have to confess that we didn't immediately jump at it. Because you have many personal pain points in life, right? But when this became clear to us, that both sides are suffering, that's when we said that, okay, this can be solved. And it was also clear to us that it is inevitable that somebody will solve it. Like, I could not imagine a future 10, 15, 20 years out where this continued to be such a broken industry and such an unsolved problem.
Well, speaking of new age platform companies, Flipkart as well has reported its earnings for FY25. The losses have widened, but the business of Myntra has been helping the company. Let's get in my colleague Agni Dev to get us more perspective on this. Agni.
Right, so Flipkart India's financials for the financial year of 2025 are in, and they paint a picture of aggressive growth and improved operations for the company. Now, to break it down, the company's consolidated losses widened to around 5,200 crore this fiscal over 4,250 odd crore in the previous year, but revenue jumped 17% to 82,787 crore from 70,500 crore in the previous year. Now, remember, an improved revenue does not translate to improved profitability, but losses did widen. This has happened primarily on the back of increased finance costs, which jumped to around 57% to about 454 crore this fiscal. Finance cost again are the numbers, is the borrowing cost that a company uses to fund its business and operations. Now, to break it down under Flipkart India, there's Flipkart Internet, which runs the e-commerce marketplace that we all know, and that narrowed its losses to around 1,500 crore from 2,400 crore in the previous fiscal. Revenue also rose 14% to around 20,500 crore from 17,900 crore in the previous year. Now, advertising and marketplace continue to make up a bulk of the company's revenue. To put some perspective, these two together contribute around 66% to the company's overall revenue from operations compared to 50% the previous financial year, and these high margin businesses are driving the company towards profitability. Marketplace services more than doubled to around 7,750 crore, while advertising services grew 27% year on year. Now, remember, this is not happening in its vacuum. Flipkart has been raising money from Walmart over the last year. There have been 4 funding rounds from the Singapore parent alone, and in the latest funding round in May, Flipkart raised around 2,225 crore. But that's not all. Myntra, which is also owned by Flipkart, saw its consolidated net profit jump around a lot to 548 crore in fiscal 2025 from just 31 crore in the previous fiscal. Revenue jumped 18% year on year to around 6,040 crore from 5,100 crore in the previous financial. Myntra, which generally generates its revenue from logistics, marketplace services and advertising, saw its profitability come on the back of higher revenues and tighter cost controls, particularly in the employees expenses section. Now, remember, just like Flipkart raised money in May, Myntra has also been getting a lot of funding from its parent, the Singapore-based FK Myntra Holdings, and the company in May, just like Flipkart, closed a round where it raised $125 million from the parent entity. So clearly there's a push from Walmart, from Flipkart to push their India e-commerce and e-retail business further.
Well, thanks so much for that, Agni. But viewers, with that, it's all the time we have on this edition of Profit Buzzers. Thank you so much for watching. Small Cap Buzzers comes up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं the best app to use is the NDTV app.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, if you look at the benchmark, it seems to be taking some breather after 8 straight days of rally, but the Nifty Bank Index, that continues its upward momentum. It's up around 140-150 points in trade today.
Yeah, as you mentioned, what we are looking at is Monday blues. With this, Nifty 50 actually remaining flat is what we are looking at. Let's pull out the point contribution table, in fact, to get a sense of what stocks are doing. In terms of, the specific sort of action we are seeing, while ICICI Bank, Bajaj Finance and HDFC Bank, they are in the green. M&M, Infosys and TCS, we are seeing IT names in red today in trade. While in terms of point contribution table, what we are seeing for the sectors, Nifty Realty remains on the forefront with about 2% of an uptick. That's what we are looking at over there. Well, if you are looking at something like a Nifty Energy, that's up over 0.6%. But what's clearly not doing so well is Nifty IT, down about 0.5%. Nifty Pharma also seeing about a 0.4% of a downtick as well. In terms of what's happening with broader markets and benchmark indices, broader markets relatively better. Advances tilted towards more advances tilted towards green that we are looking at, and in fact 0.47% is kind of uptick that we are seeing in mid cap 150, while for small cap 250 also we are seeing gains of over 0.7%. But let's shift focus to the key management that we are going to be talking today. NDTV Plastics is in the spotlight, but before we go to the management on board, let's hear from my colleague Mahima about what the company essentially does and what should we be looking forward for.
Right, Anushi, so basically the company is, in the business of manufacturing plastic components. If you take a look at how it's done in Q1 FY26, revenue saw a growth of around 23%, volume growth of 13%. The average selling price also saw an increase of around 9%. Overall, EBITDA per metric ton has also increased to that 15,300 versus that of 14,000 rupees. Exports increased by around 3% in Q1. The management has redirected volumes to strong domestic market as needed is what the commentary is suggesting. Now in terms of capex and capacity expansion also, the installed capacity is around 238,400 metric ton per annum. Around 5,000 metric ton was added in Q1 in the eastern part of India. They've also laid down a 3-year expansion plan, addition of around 130,000 metric ton capacity planned over the next 3 years, which will largely be done through internal accruals as to what the commentary is suggesting. For FY26, they're planning to invest around 110 crores in capex and total of 300 crores by FY27. And probably potential of another 100 crores if optional expansion is undertaken as well. Lastly, in terms of where the guidance and outlook stands, FY30 targets revenue at anywhere between 4,500 to 5,000 crores, volume CAGR of 13 to 14%, EBITDA margin between that 10 to 12% mark. FY26 volume growth is targeted minimum between 12 to 13%, high growth possible post capacity addition is what the management has indicated. EBITDA guidance targeting 15,000 to 16,000 metric ton per metric ton. Focus on per ton profitability rather than margin expansion is what the management has said. And lastly, capacity utilization to remain above that 75 to 80% mark post expansion is what the management has guided for. So this is the overall view of what company does and what is the future looking like for the company.
Well, thank you, Mahima, for that extensive check on the company. With that, let's also welcome in Narendra Surana, the Chairman and Managing Director of D-Dave Plastics. Sir, firstly, coming to you, over the next 3 years, you're looking to increase your top line to 4,500 to 5,000 crore from around 2,600, which you have done in FY25. So what are those factors that will aid such kind of a revenue growth over the next 3 years for the company?
See, first of all, good afternoon. As you all know that we are into polymer compounding business, and mainly we are making polymer compound for cable industry. The growth of cable industry is projected as 15% CAGR, which is almost 2 times of our country's GDP. And see, everybody is absolutely bullish about, this renewable energy, whether it is solar energy, whether it is, this wind power energy, whether it is hydrogen energy. In whichever energy you want to go, you want to have that kind of facility, at your beck and call. But one thing is common, that is, cable. You will be requiring different kind of, cables. And for that, to produce those kind of cables, you require very high-tech compounds. And fortunately, for our company, we have developed few compounds which otherwise were either being imported from overseas. And there are few compounds which we have developed in our, this in-house R&D actually, which only we are manufacturing across the globe. So it's not only that, what they're looking for, what they're importing from overseas, but rather we are suggesting also the cable industry that this is one compound which will fulfill, your desired specification and desired qualification and all. So looking at the growth of the cable industry where we are directly related, we absolutely are confident that we will be able to achieve 15% CAGR, which we have otherwise, projected in our datas.
Right, sir. And is this guidance conservative or this is the maximum that you can do?
See, basically and primarily, we are a conservative company. We believe in that we should, commit less and achieve more, It is that kind of philosophy. And as know that we are investing huge amount, capex. Already 110 crores we have invested this year. And by 2027, we'll be investing at least 300 crores. It could even add another 100 crores or so, And not only we are working on different technologies, different rather very innovative technology and different, I would say, geographical things also, where we can cater to our customers right from the word go.
Okay, just want to understand. Hi, sir. This is Anushi joining in as well. Just want to understand on the margin picture as well. You spoke about renewable energy is one area which you want to focus on, and we are seeing strong capacity plans here. This pertains to the HFR segment that you have, which currently contributes to about 2% of your revenue, which is there. But going forward, there's going to be higher capacity additions that we are looking at. And if you look at this particular segment, that has about 10 to 15% of margins. So on a 3-year perspective, just give us a picture in terms of, the current margins, where they currently stand at, and how do you see an uptick going forward? And even for FY26, if you can give us some guidance in terms of how the margins would shape up.
See, if you talk about HFR compound, this is one compound which is going to explode in our country, because historically, if you see all over the world, it is absolutely necessary as per the specification that you will have to use, whether it is domestic compound, domestic cables or any other cable, for any kind of, this critical use, you have to use this cable made of HFR compound. But unfortunately, in our country, it has picked up very late, So as you know that we are a technological-driven company. We already have a few HFR compound. Even in HFR category also, we have few cross-link compound already in place. In fact, we already started production. And this month only, we have received one machine from overseas, And we have got the plans to add at least 3-4 machines in a couple of years' time. So HFR is one area of, I would say, compounding business where we are definitely betting very, very big, and that is the future, because wherever any kind of fire, takes place, people never die of, fire. They always, save themselves, but people die of choking. So Ashwar compound is one area that if you use Ashwar compound while making cables, then that fire, that smoke will not, come out actually, and this will save a lot of hazard actually, So this is the need of the hour, and we are already perfectly placed so far as the development of the, few compounds are concerned. So for the certification of the Ashwar compounds are concerned, we're absolutely in the right place, and we are quite confident that in a couple of years' time, we will be producing lots and lots of Ashwar compound from our factory.
So since this compound that you're speaking about has a higher margin profile, just want to get your guidance as in terms of FY26 as well as the next 2 years as well.
See, as your fellow this lady, she has already told that we have got every this aim to achieve around 4,500 5,000 crore rupees of turnover by 2030 actually from compounding business only. At the same time, we are looking for some few diversification also in related areas only, And fortunately, our balance sheet is very strong. We are not sitting on any kind of debt, and by 2025 last quarter, we will be absolutely debt-free company. Whether it's long-term debt or long-term debt, we don't have at all, but even short-term debt also. So that way, we can plan really big things, and good things in times to come.
Lastly, just wanted to understand, given the fact that there have been some uptick on the PVC prices currently, any impact on the margins for you?
No. See, our is always a cost plus, structure. So whenever there is a, increase in the price of any of the raw material, whether it's a PVC or PE or polypropylene, we simply pass on to our customer. It is always that cost plus our conversion formula. So that way we are quietly secured.
Okay, just on that, we are seeing new entrants in terms of where the cable and wiring industry is concerned, and, maximum of your revenue comes from that particular segment. Now, with the new entrants in particular, what's the kind of outlook that we should have for, for you?
So this is why we are so bullish about this sector, as Mr. Birla also has announced this cable capacity, then Mr. Adani also have announced, Bangors are already there, and very, very few, the other big players, they're also looking at our country, and very soon you will hear some announcement you're likely to hear. So that way, and anybody who wants to come into this particular line, and more so in domestic cable line, actually we have got the compound, they have to come to us, and we are fortunate enough, humbly we can say that we see whatever, you can name any this brand in the market, they started their journey with our compounding only.
Okay, and in terms of exports also, just want to understand the picture here. You're awaiting approvals related to direct export to America. So, but there's concerns related to tariffs as well. So just wanted to get your understanding on how the export business is shaping up.
See, if you really want to export, America requires certain certification, which it takes at least 3 years time, These are all UL certification. And fortunately, we are not exporting any compounding directly to USA, but many, cable producers, they were exporting their cable from our country to USA. Definitely they will be impacted, but there are very few compounders in the world who have got UL certified, they who have got UL certification. So tomorrow if there is any problem for our country to this export of cable to US, there are many cable producer all across the globe, they are already this approaching us, because if any cable which is being produced anywhere in the world, if you really want to export to USA, you require to use UL certified compounding, and fortunately we have got UL certification in our kitty. So and moreover, see, it is our assessment of the situation that this is only this transition period so far as India or US it is concerned, but otherwise also our Indian cable producers, they were cheap by few percentage, so they will also find some ways to export to this USA. But otherwise, it is rather, if you ask me, it is a golden opportunity for us, because many people across the globe, they are approaching us, they're in the process of approaching us, because whenever you get UL certification, they publicize your name all over the globe. Actually, all countries, they will witness that yes, their plastic, they have this certification at their beck and call, and they will approach us, and they will start approaching us. So for us, it is a win-win situation, because because if they approach us, that will add to our kitty. At the same time, if the export of cable also, regularized is actually from our country to USA, that also will give us some impetus. So we are absolutely in a winning situation.
Thank you so much for joining and sharing that outlook on the company. And for 3-year perspective, 4,500 to 5,000 crore revenue target for DDF Plastics. That's what we are seeing. But another stock in focus is TCX System now. Now this is buzzing in trade today, especially if you look at the whole defense pack. Defense counters have been in focus in the last 2 trading sessions itself. But the company in particular has signed a MOU with Tamil Nadu government. This is to set up a manufacturing facility in line with the earlier JV that it had signed with Elta Systems. Now this JV agreement with Elta Systems included to conduct business in the areas of airborne maritime radar systems as well as fire control radar systems is what we are seeing. Just a bit about the company. If you are seeing now, the company is in the business of system integration and cable and wire harnessing. Along with that, it also has tie-ups with other defense companies as well in the international space that we are looking at. If you just look at the first quarter results of the company did see about a 61% of an uptick in terms of where the revenue is concerned, while EBITDA stood at about 0.3 crore as compared to a loss of 4.8 crore last year. This is with margins remaining at 0.1% or so, and net profit seeing about a 37.8% of an uptick. Just in terms of order book positioning, if we are seeing now, order book stood at about 2,697 crores. This is as of March 25 data that we have, which implies a book-to-bill ratio of 2.5 times. In terms of stock performance, while in 6 months, it has seen a return of 29% or so. 1 year compared to the other defense players wherein we have seen stronger gains, this has rather underperformed with about 15% of a downtick. So Samit, that's the view that we are seeing for DCX System, right?
Quite a positive view coming in for DCX System. Moving on, Northern Arc is another counter that remains in focus. The stock has been buzzing on the back of 2 initiating notes that have come in, one from DAMCAP and the other one from ICICI Securities. Let's get in Varsha with more details on what the brokerages are saying for Northern Arc.
Well, thank you so much for that. So yes, considering DAMCAP, they've initiated coverage with a target price of 335. Now, what are the reasons why they've initiated buy, wherein they say that increasing share to direct to customer lending coupled with interesting rate environment will actually help Northern Arc when it comes to their margin expansion, and fund management and placement business would enhance the fee income, and now this is as per DAM Capital. Now they see ROA will enhance further, and they are expecting asset quality to remain abated from H2, but they expect this normalcy when it comes to asset quality from FY27 onwards, and culmination of all these factors will ensure healthy improvement when it comes to the overall numbers and of course the return ratios. And they're also expecting earnings CAGR of 39% over FY26 to 27, and also if you see the stock is trading at an attractive valuation of almost 0.9x of FY27 ebook. So because of this initiation of a buy by DAM Capital is what is one of the reasons why the Northern Arc is buzzing as of today.
Well, there's a couple of notes that have come in. In fact, the DAMCAP note was the most interesting one there, where they're saying that NACL is operating at a multi-channel retail credit platform that combines direct lending to end customers and credit solutions to financial institutions. They also say that the book is available at very cheap valuation of just 0.9 times, and they're expecting the company's earnings to grow at a CAGR of nearly 39% over FY26 to FY27. And there are multiple reasons why they are so bullish on this counter. They're saying that the increasing share of direct-to-customer lending coupled with easing interest rate environment would also ensure margin expansion. So multiple positive points are coming in when it comes to Northern Arc here.
Well, that's with regards to Northern Arc that we are looking at. Let's focus on Bajal projects. Now, this is a counter which has been locked in the upper circuit for a second consecutive session. But to talk to us more about what investors are seeing in this particular counter, we're joined by Jasmeet. Jasmeet, over to you.
Well, right, yes, thank you for that. If you look at the performance of the stock over last month, it's nearly flat. While over last 6 months, it's up 36%, and over the span of last 1 year, it's down 60-odd%. While if you look at the recent updates in the company, what's exactly happening is SDFC Mutual Fund have been continued selling the shares in the company. While so far in the last couple of sessions, they have nearly sold 40 odd lakh shares, while they have sold 22 lakh shares on an average price of 195 rupees on 11th September. And further on 10th of September, they have also sold 18.9 lakh shares for again 195 odd rupees. Now, if you look at the shareholding which HDFC had in the beginning of the June 2025, it was nearly at 5.83%, and currently they have already sold 3.5% so far. Now, if you understand what does the company do, this company basically operates in the business of engineering, procurement and the construction part, while this particular company is a part of Bajaj Electronics. It's a left out part and which is formed an independent company. Now, while the company provides end-to-end solution in terms of the design, testing, commissioning of other projects as well. Now, if you understand the order book position as of the latest update, that's June 2025, the current order book stands at 3,600 crores, while the company also has a current capacity of 11,000 odd MT. While the company, if you look at the recent updates, has acquired the land to build on their current production, given that company current utilization stands 98% and they're investing roughly 140 crores to increase the particular production capacity up until 1.1 lakh going forward. Now, if you look at the recent wins, they plan on capacity addition as I said of 170 odd crores, and this particular addition is supposed to happen by Q4 FY26 and up until the end of Q4 FY27. Now, the financials have done pretty great when you look at the Q1. So, this is all about the company.
Okay, thanks for that, Jasmeet. You know, while you were speaking about how the order book position of the company is particularly interesting, for railway counters as well, that is what we are looking at. You know, a couple of these stocks are buzzing, and it's with higher volumes that we are looking at. This includes the likes of a Railtel Corp, Ircon International, as well as RBNL, seeing volumes of over 6 to 7 times compared to its 30-day average. Even if you look at the wagon makers, Jupiter Wagons, Titagarh Rail also clocking in strong gains in this session. Now, what's leading to this kind of buzz that we are looking at? Now, it's said that, according to media reports, India is to build its new railway lines, and this is near the China border that we are seeing. Now, this includes about 500 kilometers of construction lines being built for railway tracks being built, which includes bridges as well as tunnels as well, and the estimated project cost for this is around 30,000 crore. Even if you look at project completion period, that's over 4 years that we are looking at. But other than that, a couple of order wins also in focus in trade today. This includes Railtel Corp, wherein they have emerged as they've got a letter of award from Bihar Education Project Council for supply order worth about 210 crore. Similarly, they had received a 700 crore from Bihar Education Project Council last week as well. For Titagarh Rail also, we are seeing that they've launched their third diving support craft for Indian Navy. Again, do note that this is in line with the company's focus to increase their share in the shipbuilding as well as safety-related works, the two new emerging verticals for the business that we are seeing. For Jupiter Wagons, also on Friday, we had seen the company clocking an order of about 113 crore. Whereas if you just look at the order book of this particular counter, that stood at about 5,972 crore. This is as of the first quarter end that we are looking at. So, Samit, a lot of these railway names that we are seeing in focus today.
Well, yes, railway stocks have been buzzing in trade, but another counter that has been gaining is Gem Aromatic on the back of the Q1 numbers. Now, this is a recently listed company, hence they have reported the Q1 numbers a bit late. But let's get in Vansh with more details on what the company has reported in the first quarter.
The business of the company. Now, the company produces high quality essential oil, aroma chemicals and value added derivatives as well. They got recently listed in August 2025 on exchanges. And if I talk about the product portfolio, it includes mint and mint derivatives, cloves, phenol chain and other synthetic and natural ingredients as well. If we talk about the Q1 FY26 number that the company has just reported, there were a muted set of numbers. There has been a decline in the revenue, and there has been a decline in the cost of raw materials as well, which led to a slight improvement in the margins. However, the net profit was largely dragged by revenue. If I talk about the numbers, what really stood out was the net profit that is down at 8% at 8 crores versus 8.6 crores, which is signaling the muted set of numbers from the company. Also, if I talk about the price return since listing, the stock is down 15% post listing on the exchanges. So this is what the overall picture is panning out for Gem Aromatic as well.
Okay, well, that's, all the time that we are seeing on this particular counter. But in terms of, how markets are doing currently, let's in fact see BSE 500 to get a sense in terms of stock-specific action. We've already seen railway stocks in focus. Even defense continues to do well in trade today. Nifty Realty clocking gains of over 1%. But right at the top, we are seeing, Aegis Logistics clocking in about 7% of gains. In fact, even if you look at Ircon, about 5% of an uptick. Jindal as well seeing a 5% of gains. KR compare PL on the other side, seeing about a 10% of a downtick. Even something like a e-clerk services is down about 3% or so, right, Tamil?
Yes, even if you look at the benchmark, we have seen some kind of big volatility here. Right at 130, when we were around the 25,000, 120 levels, we saw a sharp drop in the markets, and then we have recovered some of these losses, but quite volatile trade that we are seeing in markets. And with that, let's welcome in our final management on the show today, Ashok Kumar Haridas Lal, Chairman and Managing Director of Shriji Global Shipping. So, sir, firstly, to start off with, in the first quarter, if you look at the top line growth, it was around, what I could see here was around 33% is what you have, 24% is the top line growth, and the net profit growth was 48% on a YY basis. Should we expect similar kind of growth for the remaining part of this financial year as well? Any guidance that you could share for FY26?
Yeah, thank you very much to India NDTV regarding inviting me and giving you opportunity to share some details regarding my company. See, if you, today, if you see the growth in first quarter, it was 130. Compared to that, the 23.93% it has been increased, and EBITDA has also been increased by 58.2%. Now, future, we have a lot of opportunities, because now recently we have got one contract from the Kolkata Port Trust for next 15 years. That is exclusively we will be handling the container lighterage by the floating crane, because they have a limitations of the draft. Now coming to second, our planning is already now, instead of stevedoring and lighterage from the port, now we have entered into the coastal moment. So already we are under negotiations with one big steel producer that we will be moving their cargo from one port to another port. Instead of by rail or by truck, this will be moved by the sea.
Right,
so,
sir. Sir, just wanted to understand, 24% growth is what we have seen in the top line in Q1. Any guidance you could share for FY26? Any number on the top line and the bottom line front?
Yeah, it will be more than this.
More than this. And margins have expanded to 37%. Is this number sustainable?
No, it will increase more.
Any number? How much you can increase?
Yeah, number will be nearly 40 plus.
40% plus.
Okay, right. So I just want to understand your outlook in terms of your business outside India as well. While India, we did see about 33% of a growth. Outside, there's a downtick that we are seeing in terms of revenue. So just want to understand the outlook for FY26 from this particular area.
Yeah, at present, there is a lot of changes in the import of the material, because there is a big difference has come in regarding the freight from the abroad to the India. Like that same way, today we are negotiating with the other countries, where instead of small vessels they are handling, we are planning to handle the bigger, larger vessels, where they will be beneficial of the freight. So for that, we have already added 2 more floating cranes in our group, and that will give us some opportunities, good opportunities in the abroad also.
Well, thank you so much, sir, for joining and sharing that perspective on how the quarter had shaped up. Along with that, the outlook for FY26 is what that we are seeing. But viewers, that's all the time that we had on this edition of Small Cap Buzzers. But do stay tuned. India Market Close coming up next.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And the Nifty, well, a tad bit sluggish if I can call it. Just about a 0.1% lower. We slipped a wee bit below the 25,100 mark. The Bank Nifty holding up though. So some bit of outperformance seen here as well as in broader markets. We'll zoom into that. But let's have a look at the heat map first. And in terms of the heat map, you're seeing some of the financials do okay in trade, 1% or so. But again, there's no material mover in terms of, at least in the green, where the Nifty is concerned. A predominant number of names sitting in the red, as you can see. And what you're seeing is also some buzz on Eternal, Ultratech. But again, no real big movers. On the downside, though, we're seeing some pressure on M&M. There's also a consumption name there, which is Asian Paints. And then there's Cipla and Dr. Reddy's, both of those down about 1% or so. Eicher Motors has just launched a new bike that's flashing on your screen. The stock continues to be down 1% or so in trade. So very muted kind of a screen that we're seeing. No major movers either side, but of course the reds dominate the greens, and that's one of the reasons why we are seeing the move that we're seeing on the Nifty. Now let's talk about some of the sectors, and let's pull those up. And again, not surprisingly, there aren't too many big movers either side. IT index is the top loser, 0.6, so is Pharma with some of those names that we spoke about. Auto also down about half. But what's really gaining traction is the realty index today. It's standing out 2.5% higher. Of course, among the large cap names, those names don't really feature there. But nonetheless, we'll probably see a hint of that in the broader market side of things. The Nifty small cap 250 is the other one which is gaining, and we'll see the advanced decline. It'll give us some color on that. The Nifty India Defense Index up around 1/3% thereabouts. That's the one which really stood out last week and continues to do okay on the back of that as well. So broadly, it's a very, very range-bound day of trade, even when I'm looking at the sectoral indices. No major movers except that realty index. Let's look at the advanced decline, and that will also give us a sense as to how broader markets are doing. I did mention that 0.5% high on the Nifty small cap, and you can see why that is so. It's just the breadth in the broader market and looking much better than on the Nifty 50, right, Neeraj? And that's probably why you're seeing the kind of traction you're seeing in broader markets, Neeraj.
Yeah, I mean, not too many IT stocks which can be pulled down at the broader end of the spectrum by the Nifty IT 0.5% downtick, right? So that kind of plays out. Remember, Remember, we've had 8 straight days of gains or 7 straight days of gains. After that, a pause is actually welcome. You do not want the markets to really go berserk and keep on going every single day. So that is to be kept in mind. Okay, specific pockets of strength and weakness. On the JM Financial note, Aegis Logistics is up about 7%, 7.5% in fact in the session today. So really smart mover and on very high volumes. Speaking of volumes, by the way, Anant Raj, good volume activity in the session today for that stock. That whole data center benefits leading to 11% uptick on, look at those volumes, 22 million shares traded. Embassy up 7%. Vodafone is doing very well, and the railway link pockets are doing very well. So, Orcon, Railtel, I believe Titagarh, a lot of these stocks have actually, RVNL have had a really good move in the session today. So that's a bucket that seems to be doing rather well for themselves. JBM Auto is the second last one on my list. I would argue Piramal Enterprises, as Parag Thakkar recommended in the morning with the rationale, is also doing well because of that particular reason. 4.5% again valuations. On the flip side, the one stock which matters is KRBL, down about 9.65% because of the resignation that was given by a key independent director, and the reasons being given for the resignation certainly raises an eyebrow. Hemin Kapadia of DR Shuk Finserv with us on the show. Hemin, great having you. Thanks so much for taking the time out and being with us. Are you this slight lull in the session today? Is it to be kind of digested well, simply because we've had such a decent move in the last 6-7 days that a consolidation is welcome, maybe, Hemin?
A very good afternoon to Neeraj. Thank you for having me on the show. It's always a pleasure. Yes, I think at the beginning of the show you mentioned that we've had 1 week of a run-up. We needed some consolidation, and yes, I think it's welcome. Markets are still not completely out of the woods. Stocks, specific sectors are popping up like popcorn. But yes, overall, if we've had a run-up like this, 600 points, a small cool-off would do well. I totally agree with you. And if you notice on Friday, even the week-on-week open interest, as far as the Nifty and Bank Nifty, both we've seen some reduction. So I would take that as some amount of profit taking. And I believe on the last trading session of the week itself, Bank Nifty lost some 4.5-5% OI. So some profit booking, I think, was indicated on Friday itself. And yes, the VIX is at 10. So with such a benign VIX, we don't expect a big fall. But like you said, makes it healthy. 25,002 was a resistance level. The next headache or resistance to overcome is 25,212. So we take support at 25,000. You have significant OI at 25,100, 25 and 24,900. So nothing much happening. But yes, I think it's a breather. It's a welcome breather, honestly, Neeraj.
Okay, and what about the Nifty Bank came in? Good afternoon. It's Harsh joining in.
Very good afternoon, Harsh. I think similar sentiments. We've seen reduction in open interest on Friday, 5% on the day itself. Overall, yes. 55,000 resistance. Yes, and if you go from 53,600 to 55,000, that's 1,400 points, Harsh. And we're running into a congestion area. So frankly speaking, maybe 500-700 points of a downside is not going to hurt someone. I think it's great. At least a short-term bottom is very clearly in place. Now, this needs to translate to positives on the weekly chart. I believe slowly we'll get there. But as of now, I think same logic. 54,467 is my support level. That shouldn't break. I don't think it will. And sorry, just one more thing. As far as the Nifty is concerned, there are two bullish gaps. Normally, indexes have a tendency to cover them up. So maybe the first gets covered up tomorrow. So everything seems to suggest a small pull-off.
Right. And Hemin, your top picks for this afternoon?
Okay. Firstly, buy call on 361. That looks good. We're on the verge of overcoming the 55-day exponential moving average. The oscillators have given a crossover buy after reflecting positive divergence. Possible double bottom information. Possible because we've not crossed the valley high yet. So long story short, one can buy 361 at 1076. Stop loss of 1051, target of 1126. Secondly, the slightly longer call, not a very trading sort of view, slightly positional. SAIL, Steel Authority, anything metal, anything PSU, and anything, I believe, realty. If you have a 1 year's time, they're all making new highs. So I think you do eeny, meeny, miny, mo on the metal index, stop your finger, buy whatever you get. But SAIL is looking interesting. At buy 132, stop loss 125, target 147. Beginning of a move, lot of headroom.
Himen, sorry. So couple of pieces there. Let me try and bring that more clearly to viewers. So is this purely PSU metals which is going to rally, or anything on the Nifty metal, eeny, meeny, miny, mo?
Anything on the PSU index, anything on the PSU bank index, anything on the PSU, anything on the metal index, anything on the realty index. All of these, I believe, in the next 15 months, maybe earlier, but 15 months, high probability all of these stocks are going to cross the last September highs or their all-time highs. Harsh.
And okay, Himen, you've given us so much today. So I'm going to push you to give a little bit more. Which among all of these are your favorite?
Okay, I won't talk about what I bought because that's not fair.
Sure.
But yeah, SAIL is good.
Okay.
I think Hindustan Zinc looks very interesting. Vedanta also. All of them have been consolidating, correcting. Not fair to compare, but sometime back, Maruti, the auto index was looking like breaking out. Maruti spent 17 months hatching eggs. Then it broke out. So many of these stocks have been consolidating, quality stocks. So I believe metal, these, and if you look at realty, I think you look at Lodha, you look at Prestige, everything looks great. Once again, not a very short-term point of view. There'll be a few ifs and buts, but longer-term point of view, they look phenomenal.
Okay. Himen, curious to ask you more, but I'll pause there because it's time for stock of the day. And we have Anant Raj as the stock of the day. Stock is perked up 12%. Neeraj did flag it. Anushi joins us with all of the details on this one. Anushi, give us the rationale.
Hi, thanks for that, Harsh. So strong gains that we are seeing for Anant Raj, and this is on the back of a big update that we are looking at. Now here, India has proposed a 20-year tax exemption for the data center developers that we are looking at. So this directly puts spotlight on Anant Raj, clearly clocking about the 12% of gains right now. So what has happened here is now this proposal includes, this India proposal includes 20-year exemption in terms of taxes on these data center developers are there, but this is contingent of a couple of criteria as well that we are looking at. This includes about incentives in terms of draft GST reforms in terms of input tax credit on assets as well, along with the cloud services as well. And this is in contingent with the companies meeting targets in terms of energy efficiency as well as capacity addition plans that they have. But in terms of Anant Raj data center capacity itself, we are seeing strong growth plans here for the next 10 years in particular. Currently, if you look at the operational capacity, that stood at 6 megawatt, which included about 0.5 megawatt coming from cloud capacity. This is one area that company wants to expand, and considering that it has about 23 to 25% of a margin profile here. But onto the additions forward, 22 megawatt is additional, which is going to be on stream. This includes capacities coming from Manesar as well as Panchkula, which currently witness delays. So how that pans out over FY26 is something that we should be watching out for. This delay was caused particularly by pollution control regulations in the NCR. So that was the result of which with this, the delays happened. But on to what's going to happen from FY27 or FY28 onwards, current 6 megawatt of capacity, 10x is the kind of growth that we are looking at, 63 megawatt targeted by H2 of FY27. This is according to the MK note that we are looking at, while 107 megawatt would be on stream by FY28. In fact, if we just talk about FY33 goals as well, 307 megawatt is the kind of capacity that we are seeing for data centers, which MK expects that the company would achieve by FY33 to 35 period. So strong growth projections on that front that we are seeing. But how the company has done overall in terms of stock performance in 1 month, we've seen about an uptick in terms of 9%. Correct the error here. This is a 9% of an uptick that we've seen, while on a year-to-date basis and 1 year, the stock has seen strong correction, seeing about a 31% of a downtick in just this particular particular area itself. But in terms of how the analyst, how the street is covering this particular area, we are seeing about 5 buy calls on this, while 0 hold and sell calls that we are seeing, which implies an upside potential of roughly around 29%. So, currently Anant Raj in focus on the back of, the tax exemption rule for next 20 years that we are seeing.
Okay, thank you so much for that, Anushi. Anant Raj in focus and stock up 12%, market cap surging. Himen Kapadia, how do you rationalize this on charts? And I know you're bullish realty. You said pick any real estate company on the Nifty Realty Index and it'll do well. Is this one of those, or the move today not giving you as much comfort on this one?
Well, yes and no, Harsh. 12% in one day, Rome wasn't built in a day, so I'd stay off. Having said that, the swing high was at 620. So what could happen is 600 and 622 levels. It could come here before it cools off. The setup is positive from a longer term point of view. Things are improving. We saw deep correction, Harsh, in the sense from a high of 948 to what 376. It's become almost 1/3. So yes, and now it's on the verge of posting a higher top, higher bottom on the weekly chart. Looks good, but this mad run in one day, I'd wait for a small cool off.
Got it. Okay, up 11% or 12% or higher. Really strong. So, Himen, just one last question before we thank you. And that's on the railway companies and some serious moves today, right? Across the bucket. Now, my question is, for the likes wherein people have bought in, which Titagarh, Texmaco, etc., stuff like that, is there some upside cap to any of these?
Titagarh is going to break out at 970 for Neeraj. So we're on the cusp of a decent, if not a good move. We spent what? 1, 2, 3, 4, 5, 6.5 months consolidating. Cool off from 1900 to 655 became 1/3. I mean, I don't think you can lose much from the stock at this point in time. But yes, if you're looking for a significant slice of the cake, 974 weekly is important. We've turned 4 times from there, 1, 2, 4 times, Neeraj. So we need this closing. I believe we are on the way there. And after that, all bets are off. It looks good. It'll be off the charts. Looks fine. Deep retracement. And things are now improving on technical parameters. Positive divergences, crossover buys, higher top, higher bottoms. It's ticking most of the boxes, Neeraj.
Got it. Himen, thanks a lot for that. Really appreciate your time this Monday afternoon. All the best for the week ahead of good trading, hopefully, for you. And yep, that's Himen Kapadia with his thoughts and his calls. Okay, it's been a busy week last week for the primary markets. Urban Company, Dev Accelerator, and the Mangalsutra Company, Shringar House of Mangalsutra. Very strong subscriptions. Now, we are going to see these companies list in about a week's time. So our research team has put together everything that you may need to know for these IPOs. Let's start off with Anushi and Jasmeet to talk about these, and we'll get in Vansh in a moment from now as well. But okay, in fact, Vansh is also with us. Okay, all three of you, thank you so much for joining in. Well, Anushi, let's start off with you and talk about your blockbuster subscription from your space.
Well, it's a strong subscription that we are looking at, and I'll talk about Dev Accelerator, which is in focus here. Now, overall subscription of around 64 times is what we are seeing. This is with QIB portion of around 20 times. With if you're looking at retail proportion, that's about 164 times of oversubscription that we are seeing. Now, if you are looking at the overall IPO size for this particular one, this is about 143 crore. It's a complete fresh issue that we are seeing. Now, just about what the company essentially does. Now, the company provides flexible office space. Now, in the recent months, we've seen a lot of these companies, coming out with their IPOs in this particular area that we are looking at. That's co-working solutions that we are seeing. The company expects to use this funds towards capex for fit outs as well as proposed centers. This is also, they are going to be also using 35 crore of funds for repayment of borrowings as well. In terms of how the financials have panned out, revenue from operations are looking at about 159 crore as compared to 108 crore last year. Well, consolidated PAT stood at about 1.8 crore as of FY25 end. Now, at the upper end of the price band, if you just take the valuation in consideration, that roughly stands at about 3.5 times the price to sale multiple that we are looking at. So, this is the overall picture that we are seeing, the multiple implying a market cap of around 550 crore as well for Dev Accelerator.
Okay, interesting, Anushi. Jasmeet, which one are you tracking?
Well, the one on my list is Urban Company. Let's quickly understand the overall subscription. What does the company do? Well, the overall subscription stands at 109 times. I mean, look at the QIB, they're at 147, and the retail are at 41 times, while the employees are at 43 odd times. Now, while the company operates in the digital market space, they provide home-to-home beauty services, and it's a tech-based IPO, we can say, where they want to expand. Now, if you look at the use of the fund, the total size of the IPO is 1900 odd crores, out of which OFS is 1400 odd crores, just going back to the older investors, and the actual fresh issue stands at 472 crores. Now, with this 472 crores, management plans on investing roughly 190 odd crores to develop the tech and the cloud infra. Well, that's something to watch out for. The rest 75 crore will go to lease payments, and the balance of 90 crores will be used towards the expenditure of marketing for the company going forward. While lastly, the financials, that's something interesting to watch out. If you look at the revenue, it has nearly doubled in last 3 years. FY23 revenue stands at 630 odd crores, but the previous year FY25 revenue stands at 1144 odd crores. While even the profit from net loss of rupees 312 crores to a net profit of 240 crores, that's what company has performed as per FY25. Now, if you look at the upper band, it starts at 103 rupees, and this IPO, the bid received for this IPO is 1.13 lakh times compared to the size of just 900 odd crores.
Got it. Okay. Well, but very strong subscription for sure. But well, if it may not be 108, but 160 times or thereabouts for Shringar House of Mangal Sutra is nothing to scoff at. Tell us a bit about it.
Well, yes, so let me start off with the subscription details. As you rightly mentioned, the subscription has been 60 times. Now, if we talk about the details, the QIB portion has been filled 101 times. We have seen retail portion of subscribing 27 times and employee subscribing 69 times. Now, if I talk about the IPO size, now the IPO size, the issue size is about 400 odd crores, and the entire issue is fresh issue. Which means there is no offer for sale. If I talk about the details of the company, now the company is manufactures and designs Mangal Sutra in India. And if I talk about the use of the funds, now the funds would be used for the working capital requirements for about 280 odd crores, and the rest of the funds would be used for towards the general corporate purposes for the company. Also, if we talk about the financials, what we have seen is the EBITDA that has grown from 38 crores in 31st March as per March 23 to 92 crores in March 25, and if you look at the PAT has grown from 23 crores in March 23 to 61 crores in March 2025. So spectacular jump in terms of financials as what we are seeing in for this particular counter as well. Also, if I talk about the valuations front, the company is seeking a price to earnings of about 26 times and a post-issue market cap of about 1,591 odd crores post the issue. So this is what the overall picture is panning out for this particular counter as well.
Okay. Well, thanks all three of you for joining us and giving us those perspectives. Those are three heavily subscribed IPOs. Remember, this week too, fair degree of IPOs. And coming up is an IPO-packed month too. Dilip Bhatt, founder of Pedigree Advisory Johnson, right now on the show to talk about the markets at large. But since you're in the topic of the IPOs, Dilip Bhai, want to start off with that. Good afternoon. Really good talking to you after a while. What do you make of the activity in the primary markets? In the US, in India, primary markets are seeing some heavy subscription again.
Good afternoon, Neeraj. Always a pleasure to talk to you. Just to talk about this IPO, my one take on IPOs always has been the way the stock market is valued today. I mean, it's quoting at more than 20.5 times. And you're talking about Nifty EPS growth of around 8 to 9%. Unless and until you have enough IPOs to whet the appetite of the market, I think the secondary market would have gone crazy. So in a way, I always look upon the primary markets as a necessary tool to overall maintain the stability and bring about a lot of stability to the markets. So that's what I would say. And I don't think that it's anything negative. I think we have seen that the FIs, though they are basic sellers in the secondary market, but they have been very enthusiastic buyers and subscribers in the IPO market. So that itself tells the tale that a lot of investors, especially the institutional investors, find good value in some of these IPO. And that's what overall my take would be on these IPOs.
Got it. Okay. Dilip Bhai, the buoyancy in the markets recently, are you a participant there? Do you believe this talk of thawing of the relationship, GST measures, etc., all of them lend to good sentiment and good earnings? Would you be a buyer here in the Indian markets?
So Neeraj, I think in the short run, I think possibly this the tariff and the trade deal with the US will get sorted out is what my broad take is. And that will give a good momentum and push to this market from these levels. And of course, everybody is waiting when the FIs are going to do the short covering. Possibly they will have a better hang on the proximity of the trade deal being concluded in a very satisfactory way. But what I would say is that having said that, markets in the short run possibly can show a good momentum. I would be a little more careful about the overall valuations. Of course, the GST is a phenomenal step taken by the government, especially the Prime Minister, Mr. Modi, who has been anchoring this. So I think it's a very good move, and I think it will definitely lead to a volume expansion, better utilization, and of course, a good multiplier to the economy. And that is where the investments will start happening once the utilization happens, because that has been pending for a very long time. So hopefully that will happen. But not to forget, Neeraj, that during the budget time, all of us were very enthusiastic about the tax cut that the FM had provided. And, you know, we were just going gaga about the fact that this is going to increase, there's going to put a lot of money in the hands of the investors and the retail investors, meaning the general public. And that will lead to better consumption, volume growth, and all those things. I think that is yet to play out, and that is still pending. But now combining that with GST, I think looks pretty good. So hopefully, I think with inflation also sobering down and interest cuts happening, so we remain optimistic that volume increase is bound to happen, and that will lead to a good multiplier impact on the economy and the GDP.
Right. So this is Harsh also joining in. Always great chatting with you. So, sir, talk to us about what are the themes, therefore, that one should look for. It's a rate cutting cycle, not only now in India, now US will start participating in it. We've seen markets largely range bound over the last year at the very least. So what are those, and plenty of changes on the policy front. So what are those pockets which look good?
So what I will say over here is that whatever, I mean, apart from the statements that I have made, I think the valuations definitely is not on your side at the moment. And there is a lot of hope and optimism, which was always there. And that is why markets refuse to come down. So I would say that from the current levels, whether one should be a very enthusiastic investor, no, I would say I would still wait for a while. I would not be in a hurry to buy. And coming to the pockets which are likely to do well, I think the level at which the indices are at the moment, I think a lot of sectors are really at the proper levels, I would say. And some of the sectors which have not gone up, and rightly so, for the reasons, because there's a lot of apprehension on those, whether it's IT, which for last 1 year has delivered a negative returns. Index itself is where it is exactly last 1 year back. So I would say that sector-wise, no, it would be more stock-wise, stock-specific, whether there are some opportunities out over there. I think that is where one would like to look at.
Okay. So, you know, if I were to play devil's advocate, you know, one way to look at this is lots of short build-up where FIs are concerned. That's point number one. And point number two, whenever India's growth typically slows down, you start to see pessimism start to build in, which seems to be the case, at least at this point. Those levels have generally been good levels to buy at, because markets thereafter bounce back, and then the India story starts to unfold again. People say best growth market in the world, and come back, and FIs too come back. Do you believe this could be that point? Because your commentary seems to suggest you're being a bit cautious. So talk to us about the possibility of that playing out.
So, you know, there is a lot of irony in whatever I have been trying to say and what the markets also have been trying to say. So we keep on hearing a lot that India is the best place to invest, and India is the best place which can give very good returns. And ironically, if you see, India has been one of the single biggest underperformer since the calendar year has started. And I think if you were to take the indices, we are where we are at the moment at the beginning of the year. So that is one point that I must say. So even when I'm telling cautious, one thing is certain, that the over optimism and enthusiasm and the conviction that India is still the best place to invest, and in spite and despite the FII selling, one thing is clear: market refuses to come down, and that is a point that one cannot ignore, whatever may be the valuations. So I think a correction, possibly, even when I'm telling cautious, I would be more happy markets spending sideways and time-wise correction. I would be more happy, and I would still wait for the growth to really come in, because in my opinion, the economic parameters are very mixed, and that is adequately reflected in the kind of the profit growth that we have seen in the first quarter and possibly even FY25. So what I would say is that yes, markets have to spend a good amount of time correcting, because as of now, when I'm talking to you, I still feel that 25-26 EPS growth can be 8 to 9%. Nifty EPS growth. Next year, possibly it can be around 12%. And then if you were to 12 to 13%, but if you were to factor in the volume increase because of the GST and because of the tax break that the budget provided, then possibly it can go up to around 15%. But these are too early times to say for next year, for 26-27. But 25-26, I don't think will inspire a great confidence. I think we'll have to wait for the second quarter and third quarter management commentary, which so far doesn't appear to be all that great.
Thank you so much, Dilip, for giving us that perspective. And, it's always great chatting with you. I'm sure Neeraj echoes the same view. Thanks so much, sir, for coming in and speaking with us. Okay, an important update from the whole tariff front. Sources are telling your channel, NDTV Profit, that India and the EU are eyeing a comprehensive trade deal. Rishabh is here with more on that.
Right, some key important updates coming in on the FTA between India as well as the European Union. What we're picking up from sources is the fact that both sides are eyeing a comprehensive deal, so no sort of first tranche or an early harvest. The environment is currently very conducive in terms of negotiations, and both sides are eyeing for a full proper trade deal. What we're also picking up is that there may or may not be another round of negotiations, given the fact that most technical issues have been resolved between the two sides. All sorts of thorny, sticky issues have been ironed out, and it's the nitty-gritties that are being discussed between the two sides now. So there may or may not be another fresh round that might be coming in of negotiations. Remember, just last week, the 13th round of negotiations was completed between India and the UA. The EU Trade Commissioner, Maros Shevkovich, was in town to discuss the same with the Commerce Minister Piyush Goyal. Remember, both of them also very clearly said that the automotive sector, or rather the automobile sector, will be at the center of this free trade agreement. That is something that this free trade agreement will also see a lot of partnerships being unlocked between Indian companies as well as large automobile companies based in Europe. So that is something that the Indian industry is very keenly looking out for in terms of the outcomes of this sort of a trade deal. This will be a very, very large trade deal after India's already bagged one with the UK. Another one with the US is currently in active negotiations, and this will perhaps be one of the three largest deals that India will sign in terms of a trade deal. So a very key important deal coming in, and updates on that will be coming in on that very, very soon as well.
Thank you so much for that, Rishabh. And on that note, what we'll do is we'll slip into a very short break. On the other side, we'll be joined by Jay Bala as well as Avinash Gorakshekar to talk about the top stocks for the day, of course, and put the spotlight on DAM Capital on our Bull versus Bear segment. Don't go away. We'll be right back.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप।
Back with India Market Close right here on NDTV Profit. Let's try and get in a conversation going with Jay Bala of Cash Chaos. He was bullish. I think he would be heartened by the last few days of a move. Also joining on the fundamentals of Avinash Gorakshekar of Profit Mart Securities. Again, selectively bullish on a lot of bottom-up names in the last 1 month, and I think he would be enthused by the rally as well. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Jay, am I right in deducing that the last 7-8 days would have made you happier than otherwise? And do you expect this uptick to continue?
Yeah, hi Neeraj. Thanks for having me on the show. Yeah, it's good. The markets are doing what it's doing, but I would be even more happy if markets had taken out the earlier swing high about 25,153. The fact that markets are taking a little bit of time more than I have anticipated, that's a tad disappointing, but it's not completely disappointing. I still maintain the bullish view. The only question is, does the bullish view that I have maintained, did it start at the August low of 24,337, or is it getting slightly delayed? That's the only debate that's up. But from a 6 to 12 months perspective, I'm still bullish on the markets, maintain the same bullishness, and I'm anticipating 29,000 to be scaled on the Nifty 50. Let's see what the market does. If 25,153 gets taken out on a closing basis, this will be a more convincing bullish move, and it will add a weight to the fact that the 24,337 low, the Nifty registered in August, that's a significant low.
Well noted. Okay. And so within that construct, Jay, what themes could do well? Because a lot of people bullish on different kind of themes, like everybody's bullish on auto and metals, and last week what did well was defense and IT amongst others. So where is it that you're most constructive on thematically, and what are the ideas for the afternoon?
Yeah, I'm bullish on autos. I've been bullish on autos since July, and I've been pointing to fresh record highs coming through for autos, and even pointed out that the gap the markets registered for the Nifty Auto Index post the GST announcement, that will most probably remain unfilled, and the markets are doing pretty much that. My objective for the Nifty Auto Index is about 28,500 to 30,500, and that's a conservative objective. And one more space I'm bullish on is on real estate space, and I'm also bullish on metals. And I pointed out metals last time that the 9,000 mark for the Nifty metals index is likely to provide support, and the markets could rally higher. But today, metals are doing reasonably well, and so is real estate. So I have two picks within the space, one from the metals and one from the real estate space. In the metal space, I have Sandur Manganese with a stop loss of 424. I'm anticipating this stock to scale fresh all-time highs past 685. This is a longer-term objective or medium to long-term objective for the stock. It's looking pretty interesting at current levels. And the second stock is Prestige Estates. If you look today, Anantraj Industries is doing reasonably well or pretty well, and I'm anticipating that to spill over to the rest of the space. DLF is doing pretty okay today. So Prestige Estates have got an interesting setup. The stop loss for the stock is 1,400. I'm anticipating this stock to also claim its 52-week highs past 2085. So stop loss at 1425 and objective of 2085.
Okay, Avinash, let me come to you. What's the sense like with some of these realty counters? So we're seeing a sharp surge today, but that's of course intraday, and you look at things more with a larger lens. So how should one look at realty at this point? A significant correction from the top, is this an opportunity, or do you believe the cyclicality or the prolonged positive nature of the cyclicality keeps you cautious?
Yeah, good afternoon, Harsh. See, my sense is pure real estate plays definitely would do well, because I sense the second half, of this financial year, we'll see a good uptick in inventory sales. And I think with interest rate cuts, on inputs like cement, GST coming down from 28 to 18%, I think the demand across, large metros continues to be good. And I think we have been positive on large players like Lodha, Oberoi Realty, Mahindra Lifespace. And of course, North Indian players like Anantraj, but Anantraj is a different bet. It not only has real estate, but it also has a data center division, which is now in the limelight. Yesterday, some news came that the government is going to encourage domestic data center providers and ancillary players. So, that's the reason you are seeing the stock about 10-12%. But they have already decided to, increase their capacity. They have an installed capacity of 300 megawatts for the data center business. 30 to 35 megawatts is now given directly to RailTel. So I think, here is a company which has got the best of both sectors. And I think the real estate business is a cash cow. They operate in the North Indian Gurgaon market, which is, rapidly growing. So my sense is that these 2-3 companies could be a good bet on the real estate sector. On the outlook for the sector, my sense is that October to December could see a good bump up. July to September may just be a tepid quarter, but October to December could be a quarter where you could see better numbers from Lodha or maybe something like an Oberoi Realty and Anantraj. So I think we are keeping a view positive on this sector, and I've been telling our clients that accumulate these stocks slowly. Over the next say 12 to 15 months, we are structurally positive. Yes.
Okay. All right. Thanks for that view coming through, Avinash. Avinash, also curious to know, some of the railway counters are the other pocket which has done extremely well today. So what's the sense on that pocket? You feel that, and of course, we've seen a bit of a correction on some of those counters. Now we're seeing a surge back, seeing order wins coming through. How do you view those? Any favorites within that pack?
See, I think, Harsh, if you see today, Ircon has gone up, significantly, and you've seen good moment in stocks like RVNL, RailTel. I think it's basically the order inflow which has excited the markets. And I think, there's a very big runway available for these companies. We are positive on companies like, typically Ircon, or for that reason, even companies, which operate in the wagon space, typically at Jupiter or maybe at Titagar. Considering the fact that the next year possibly there could be another 25 to 30,000 wagon tenders floated by the government, and almost all these companies are sitting on large order books, so the visibility is good. In fact, Texmaco also at the current odd levels with the order book of 6,000 crores looks pretty good. See, I think you need to clearly take a slightly medium to long term view here, because at these valuations maybe the stocks may not look very cheap, but if you're looking at the next 12 to 18 months, hopefully earnings for 26 and 27 is going to be much better, and I think that's what possibly possibly is bringing in demand, from lower levels back to the market. So I think keep a slightly medium-term, long-term time frame, and I think we have been structurally positive on companies like Ircon, or for that reason even a Texmaco, where I think the risk reward is definitely in favor of the investors.
Ircon, Texmaco are amongst the others, and we'll talk about railways in detail later on. But I think let's get in Jasmeet to talk about some of the stocks that are moving. Whether they're losing or gaining is another story, but they are moving around fairly briskly today. Would that be a good way to put it, Jasmeet?
Well, right, yes, thank you for that. Let's quickly go through the stocks and then put forward how they really fit in the overall picture for today. Now, if you look at the three stocks in my radar, the first one is KRBL. The stock is nearly down 10% in trade after Anil Kumar, the independent director, resigns. While he resigns on concerns with the board, what he says is, he says the board is putting forward the interest of other people than the stakeholder, which is at risk. He also resigns saying there's inconsistency in the board dynamics. He states multiple reasons. Let's quickly go through each one of it and let's understand what exactly is impacting the stock price today. What he states is, there's inconsistency in recording the minutes of meeting of every board and other meets, while he also says the instance of being the information withheld, which impacts the decision making for the board. He also mentions there's a write-off of the receivables from the foreign subsidiaries. That's something to watch out. While he also says the concern with the CSR fund, which are not being utilized in a particular manner. That's the concern. While he also mentions that the variable pay is not doing the just, where it's not been adjusted very well. And they also say there's been undue interferences by other members during the board meets. So this is what are the allegations stated by Mr. Anil Kumar. While the board comes back to this, and in response to it, what they say is they appoint independent third party to review all the allegations made by Mr. Anil. While they also say is the board meet was held on a shorter notice today, given all the observations stated by Mr. Anil. While something to watch out what the board comes up with and how would the stock react going forward. If you look at my next counter for today is Yatharth Hospital, where the stock is nearly up 4% in trade today. What it's buzzing on the back of is the acquisition of 100% stakes in Sunvid Hospital, which is based out of Agra. While this deal valuation is 260 crore and it's all cash in acquisition of the company. While a bit information about the company currently has 150 odd beds and it's planned to expand to 250, which is a positive sign. It also operates in occupancy of 35%. While if you look at the revenue of the company which is acquired of FY25 stands at 50 odd crores. While the last one is Shakti Pumps, even this stock is buzzing in trade today. It's nearly up 4 odd %. While what the reason for the buzz is, the company secures an order worth 347 crores. The order is for solar pumps. The company will supply nearly 12,000 odd pumps to the Maharashtra government, and the order is in regards to a PM scheme by the Maharashtra. So these are the stocks which are in my radar for today.
Okay, thank you for that, Jasmeet. We'll let you go. Avinash, if I can come to you and let me come to you on the specific KRBL issue. Does it spook you a little bit, 10% down?
No, I think, Harsh, normally whenever any compliance, corporate governance issue is signaled out, the first, reaction is definitely what is seen in the stock price. I think now the management should have come out more, elaborately and should have made a very clear clarification. Although they have denied these claims, I think giving the matter to a committee, rather than that, I think the market should have liked that they strongly deny it. And obviously they would prove it with facts and numbers. So I think in the very near term, we have seen very strong quarterly numbers, from KRBL. So the markets would obviously take a backseat. I think, nobody would be willing to put money now. They'll probably wait for the September quarter to come out, some more management commentary to come in. But I think this is very natural. Compliance issues are very important. And the moment corporate governance issues are signaled, I think the market starts looking at those numbers with a doubt. And that's, I think, the reason I don't think you're going to see any immediate follow-up buying. So I think it's better that, we take a fresh call post the September number, which are now going to be due very soon. So once that happens, I think then we'll get to know whether, this matter is serious or not. How big is it in terms of financials, in terms of the misappropriation? Because, markets are always going to be wondering about the numbers. In case it's a very small kind of issue, then the markets could ignore it. But we'll have to wait for that post-September.
Jay Bala, anything on charts?
Yeah, the short term is a bit not clear, but the stock could go down a little bit more, but it's very likely to hold above the 225 low it registered, or approximately 225 registered in April. But the long term of KRBL looks very good. So I anticipate the stock to oscillate between current levels and the April low. and then recover higher and probably proceed with this higher degree trend later on in a few weeks' time.
Okay, well, now let's get to a segment that a lot of people wait for very, very closely, which is the chatter from the dealing rooms. And it's important to get a hang of what is being heard on the street. And because a lot of people may find it difficult to do that, we get Somit Sarkar to do it for us and come and talk about it right here on the show. Somit, good afternoon. What are you picking up from your sources?
Good afternoon, sir. Firstly, it's Tata Communication. Recently, the company had held their NDR, that is a non-deal roadshow in London. Quite positive commentary that has come in, and dealers are indicating that there are buy flows on institutional desk on this counter. When it comes to Amber Enterprises, there are buy flows on PMS desk is what dealers are indicating. The company will soon launch its QIP. It has already taken an approval close to around 2,000 crore is what they are looking to raise, and dealers are indicating that the demand is expected to be quite strong for this QIP. When it comes to Voltam Transformers and Bajal projects, dealers are indicating that the selling pressure in both these counters are over, and that's one of the reasons why Bajal Projects has hit an upper circuit of 5% in trades today. When it comes to Suzlon, there are buy flows on large HNI desk, and there's a buzz of a potential order win here, and that is one of the reasons why the stock has been buzzing in trade. For Avenue Supermarts, there are buy flows on large HNI desk. Dealers are indicating that some potential tie-up could come in with an online player going forward. So that is one thing that has been, that is one of the reasons why Avenue Supermarts has been buzzing in trade. And lastly, when it comes to Phoenix Mill, multiple dealing rooms have given buy calls based on technical charts. In fact, we had also indicated about DLF on Friday in trade that there are multiple dealing rooms that are indicating a buy call on this counter on charts, and that counter was up around 2.6% in trade. On similar lines, Phoenix Mill is another counter which has been indicated by dealers in trade today.
Wow. Okay. And very interesting that some of these real estate counters are finding that buzz. Could be, I don't know if it's a factor of rate cuts plus the sentiment moving up which leads to this or no. So pretty interesting. Somit, over the next few days, if you can also get in some buzz around consumption names in the run-up to September 22nd, and it will be even more
on
helpful.
Consumption. In fact, one stock that was among the chatter was Marico. That is something that few HNIs have been accumulating at lower levels.
Any rationale given there, Somit? Anything that you're picking up about why so?
They're just buy flows. That's what.
Acha, buy flows per se
and
into
Marico,
this
yeah.
as well. Okay, and okay. So
Also,
you have a question?
Yeah. I'm curious to know, Amber Enterprises, any indication on the size?
2,000 crore is what they had indicated.
Okay.
So around that number is what is expected, and demand is expected to be quite strong.
Yeah,
for this.
that you did mention.
Okay, Somit, thank you for this. Thank you for this. And okay, you may have two questions, but I have one question of my own to Avinash Gorakhshekar on one of the things that was picked up, which is Avenue Supermarts. Avinash, for the longest time, the last 3-4 years, the stock has not given any returns, right? Now, there is some possibility, or at least some rumor, of a potential tie-up with an online player. I mean, is this what was missing in the arsenal of this company, and can that spur the stock, or does it need something else?
No, I think, Neeraj, as everyone is aware, DMart's online experience has not been good. And I think if they do tie up with an online player and they manage to scale up the business, I think there is a very big runway available. I think clearly, DMart has been facing a lot of competition from the online, competitors. And to a large extent, I think the markets were looking at this trigger, to materialize at some point of time. Now, when this thing becomes very clear, the entire game plan is understood properly, and the plan is finalized, I think the stock should get re-rated, because a lot of opportunity exists in the online space which DMart was not catering to. So I think it's a good beginning. I think we would obviously look at little more clarity from the management as to how this arrangement will work and what is the kind of revenue propensity, growth potential for DMart. But we are quite structurally positive on this opportunity. Once it gets finalized, I think you could definitely see a good bump up, because the market has been not seeing very strong numbers also from the offline retail model. In fact, margins have been under pressure, profits have not grown as per what the analyst expected. So I think we'll have to wait and watch, but hopefully if this clicks, I think the second half would be a little interesting, because that could be a good trigger point for the stock.
All right, so that's the view coming in on an Avenue Supermarts on the fundamental side of things. Let's, though, quickly move to our bull versus bear segment. And today we're going to be talking about DAM Capital. Let me start off with that first point. On the top line front, they have a market share of 13.5% in the IPO market. And this market has done extraordinarily well over the last maybe couple of months. The worry, though, is the lack of diversification on the top line. The main pillar, of course, is the investment banking income and merchant banking income. And if that were to dry up, you will see cyclicality where the business of DAM Capital is concerned. Let's talk about point number 2. And here I'm going to talk more about operating leverage. So the business enjoys that very strong operating leverage because it's the nature of the business. But operating leverage playout is subject to retention of key managerial persons, and that attrition has been a bit of a challenge when it comes to a DAM Capital. Let's talk about piece number 3, and that is the strong institutional client base that DAM Capital has. This has grown 24% CAGR over the last 3 years. Currently, that base stands at 277 from maybe 140 odd. So very, very strong growth we've seen there. But the top 10 clients still constitute 36% of the top line. So that risk remains, that client concentration is large. More distribution of dividend is what they have guided for as profitability gets better. But they're saying that the current payout is modest, looking for business growth. So they're reinvesting the money back into the business, trying to grow the business, at least at this point. We'll wait for that to play out. Last piece is on valuations, and it currently trades at 16 times trailing 12 months. Given the cyclicality, I've just taken trailing 12 months. That's the more conservative way to possibly look at it. But the stock is down 17% since the IPO price. And that could well be a negative. It could weigh down on investor sentiment. Of course, from the lows, it's rallied, but it's obviously down from the IPO price. Avinash, do you have a view with regard to a DAM Capital?
Well, I think longer term, Harsh, this is definitely a good bet because, it has a very strong management team led by Dharmesh Mehta. And I think looking at the kind of scalability of the business, I think 1 or 2 bad quarters does not mean that the company is bad. I think you need to take a slightly longer term view. My sense is that once looking at the kind of capital market floats, both in the, in the QIP space as well as the primary public space, I think probably over the medium to long term, a lot of value could get generated because I think they have one of the top, institutional brokers. They have a broking arm, they have an investment arm. So I think you'll have to wait for some time. But yes, I think the management bandwidth is very strong, and we are positively, positive on this on the longer term. In the short term, yes, the numbers have not been great. But I think clearly once the market improves and obviously more transactions are done, you could see a better bottom line and a better, profit number because this business is largely a fee-based business. Profit margins are quite lucrative, and it all depends on the number and volume of transactions you handle. So net longer term positive, short term it could remain volatile.
Okay, so interesting. Avinash, sorry, I want to throw in another question with regard to similar cohort of businesses. For example, maybe a JM Financial. Do you prefer some of those other names over a DAM Capital?
See, I think JM Capital, if you ask me, has got a much more broad-based business model. They have an ARC unit. They also have an institutional arm. They also do, the investment banking business. So they are a much more broad-based player. Now, here, frankly speaking, at the end of the day, it depends on what is the kind of mix. When investment banking takes a backseat, they have the other 2 divisions to actually help them. So JM Capital could be a better stable bet, considering that DAM Capital is largely focused on the investment banking side, and of course broking is there. So JM Capital could be a better bet if somebody wants a more stable kind of, steady kind of growth. In case of DAM Capital, the returns could be quite good, but there could be more volatility in the business.
Okay. Jay Bala, this capital market plays, and do you like anything here?
Yeah, JM Financial obviously is the strongest, but the trend there is coming to maturity. So from that sense, I will avoid for now. But what you might want to look at MCX. MCX recent low at 72.96 looked like a complete corrective decline from its recent 52-week high of about 9,200 and change. So this might be an interesting play from a short-term perspective with a stop loss of 7,200, possibly heading back to fresh 52-week highs around 97.50.
Okay, and with that, let's slip into a very short break. On the other side, we bring you an extensive piece on Avenue Supermarts. It's a new segment that we've taken up, Profit Intelligence, and it gets you, and we'll also get you top buy today, sell tomorrow picks. Stay with us.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Welcome back. Thanks for staying with us here on India Market Close. Now, one pocket which is doing very well in trade today is the railway PSU stocks. Railtel, RVNL, Ircon, all of them gaining in trade. And this is especially after the Railways Minister, Ashwini Vaishnav, announced over 77,000 crore of rail projects in the Northeast. My colleague Anushi joins us with more on that one.
Well, Harsh, a couple of picks that we are seeing today, in terms of the buzz and for some of these counters in the railway sector that we are looking at, just talking about higher volumes in particular stocks. Now, RailTel Corp, Aircon International, if you talk about 6 to 7 times the volumes that we are looking at in comparison with the 30-day average, while RVNL, Jupiter Wagons, Sitagarh also clocking those higher gains that we are seeing. But a couple of reasons, the first one you've highlighted, 77,000 crores, the kind of package that we are looking now this in terms of railway projects coming on stream. But other than that, India is also set to build new projects or new lines in terms of, the areas which are near the Chinese border that we are looking at. So estimated project cost of this would be around 30,000 crore, and these projects, these new railway lines, along with bridges and tunnels which would be developed, are expected to be completed over a period of 4 years is what we are seeing. In terms of new order wins also, there have been a couple of order wins in focus. Just today, RailTel Corp, we are also seeing strong gains over this 210 crore of an order size that they've received from Bihar Education Project Council. Now, do note, just last week as well, the company had received about a 700 crore plus of an order from this particular council as well. Apart from that, Titagarh Rail is another counter that you should be watching out for. Now, it has been buzzing in the last 2 sessions as well. Here, the company has launched their third diving support craft for Indian Navy. This vessel is a part of a series of the 5 DSCs, that's diving support craft, that we are seeing being built under Make in India initiative that we are looking at. Do note that the company has come out with 2 new verticals, that shipbuilding and safety related works, in which it wants to increase its focus in the shipbuilding side as well. Last one on the radar is Jupiter Wagons. Now here, the company, just on Friday's session, we've seen about 113 crore of a new order coming in for the company. And with this company, if you look at its total order book, that stood roughly at 5,900 crore. This is as of the first quarter end that we are seeing. So a couple of new order wins, as well as new projects from India, the Railway Ministry, is something that we should be watching out for this space.
Okay, thank you so much for that, Anuship. Jay Bala, let me come to you with regard to some of these counters. Some real buzz seen, zing on all of those counters. What's the sense like? Are there any favorites in your bag?
Yeah, amongst the 4 that you have shown on screen, I would say avoid RVNL. The other 3 looks good, and most of the other 3 have almost a similar setup. In the long term, it looks good, but I don't think this is start of a long term. Possibly further chop possible. So treat this as just a short term up move, something that gives 10 to 15% upside from current levels, and Ircon, RailTel, and Jupiter Wagons are okay. Avoid RVNL.
Okay, well, it is, that's a bucket which has done very well. We're seeing these things happening in buckets. If it was defense and IT last week, it is starting off today with railways. Let's see if some of the others go ahead or no. What is roaring ahead, of course, is Anandraj, but I can't take my eyes off Aegis Logistics. With that report that came in, and that stock really shining in trade, 7.83% higher. The targets by JM Financials, Priyankar, is much higher, by the way, than what the current numbers are, but that is doing very well. The other one, which you heard the guest speak about it on the channel today at 9:03, Parag Thakkar spoke about Piramal Enterprises and why that business is worth looking at. Now, I want to spend some time on Piramal because it's important. The first question is to Jay Bala, and then we'll get to the fundamental question. Jay, just so that if it is a good trade, people shouldn't miss out, would you trade Piramal Enterprises on the upside?
Yeah, 1045 is the stop for this. The short term looks good, and the medium term is a bit more choppy. So but there is a short term trading potential for it to, like a swing trader, can hold on with 1045 as stop, possibly heading to about 1350, 1360.
Avinash, their own presentation speaks about how FY26 profits would move from 450 odd to 1300. Then if you apply a CAGR, and which is what Parag Thakkar's comment was, that his estimate is that FY28, the profit numbers could be between 3,000 to 3,500 crores. It's a financial business, so fine, the ROEs lower, but eventually higher ROAs, etc. will drive the ROEs higher as well. And with that kind of growth, the market will see potential because the valuations are good. Do you buy that argument, or would you prefer other financial names in the, other names in the financial space?
No, I think, Neeraj, your point is right that it has been a beaten down stock, and I think valuations have come up from higher levels. I think clearly, one could take a contra bet and take a small exposure, but we like to see how the September quarter and the December quarter pans out. I think my sense is that some amount of improvement has already got into the system, and that would benefit Piramal. But whether 450 crores becomes 1300 crores, we'll have to wait for maybe 1 or 2 quarters. I think there's no harm in waiting and maybe making a small allocation in terms of a small kind of nibbling in the counter as of now. But yes, I think the management has been very proactive now. I think they've been taking a lot of corrective steps. They had a lot of NPAs in the past, but I think all that has got corrected. So I think I would also concur with the view that the structural story seems to be quite good because the valuations seem to be good. And I think, if you compare the other biggies like maybe a Bajaj Finance, here I think you're getting a business at a decent kind of valuation kind of metric. So, some amount of riskiness would be there, but we'll prefer to wait for the next 2 quarters before we make a aggressive call. But yes, as of now, one could safely buy a small quantity and wait for the next 2 quarters numbers.
Okay, so that's the take coming in on some of those names. Indian pharma companies are set to gain from a policy change in the US. The much discussed Biosecure Act is coming back under discussion, and how will this benefit Indian CDMO companies specifically? Varsha here with her detailed research. Varsha.
Well, thank you so much for that. If you see 2024, and 2024 was actually a year of pharma. Now majority is because of the US Biosecure Act, due to which all CDMO companies saw a good run up when it comes to this their returns. Well, now the Biosecure Act is actually back with revised version, but just for the benefit of viewers, what is Biosecure Act is nothing but a US law which is proposed by US, which will bar US companies to have an agreement or business with certain Chinese companies now, because they consider it as a threat to the nation's security. Talking about the timelines, let's see when this was introduced. So Biosecure Act was introduced in Jan 2024, after which it was passed by House in September 2024, post which during this period a lot of pharma companies saw a huge buzz into the stock prices. But in December 24, that is 9th December 24, Senate actually blocked the bill, and now in August 25 we are seeing this revised US Biosecure Act to be back under consideration. Talking about the revision, what changes now, if I were to talk about, in old bill, if you see bill is bearing BGI or certain Chinese companies, I would say, but in the newer version, they're going to refer to an official list of companies which will update annually, and there are no specific Chinese companies which has been involved in the revised version. Onto the who will be the beneficiaries in when it comes to Indian CDMO companies. You have Divi's Lab, Syngene International, Newland Labs, Laurus Lab. All these companies will actually be benefited from US Biosecure Act. Now, talking about how this is going to benefit Indian companies, because US drug makers will move away from Chinese manufacturers and will give agreements to Indian CDMO companies, and a lot of pharma companies have seen the proposal coming from the RFQs coming from US companies, because US companies want to diversify their supply chain from China to Indian companies. Now, let's see what companies have to say. So a lot of companies, including Laurus Labs, Syngene International, Divi's Lab, they're all very bullish when it comes to US Biosecure Act, and they're seeing a lot of demand from US companies when it comes to CDMO opportunities. Lastly, let's see how these companies have been performing since the introduction of Biosecure Act. If you see Divi's Lab from Jan 25 to December 24, Divi's Lab have seen almost 70% of growth in its stock price. Newland Labs have seen 193%. Jubilant have seen 112%. While on 9th December, when Senate actually blocked US Biosecure Act, all these companies have seen negative returns from, Newland Labs was down almost 7%, Piramal Pharma was down almost 7%. So this shows that how important is this Biosecure Act for Indian CDMO companies. And post December 9, if I were to talk about, all these companies except Laurus Lab, all these companies have seen almost 0 to negative returns. Now this shows the potential that Biosecure Act is for Indian CDMO companies.
Serious potential there. And Varsha, thanks for bringing that out. Keep in mind that bout of underperformance that we've had for most companies since the time the Senate blocked it, except for say Laurus Labs, also puts them in there. And which is why, by the way, we have trade data too, but since we're on the topic of CDMO, let's get that going first. Jay, this just consolidation that has happened in this pack, Divi's, Piramal Pharma, Cohance, Piramal Pharma, what have you, right? This whole bucket of stocks except for Laurus. Now, is this, were they consolidating before an up move? Can that up move come in now? Is it visible in the charts? And if not, maybe a stock like Laurus, which has actually done well within that CDMO space. What are your thoughts on any of these?
Yeah, obviously Laurus is also the strongest stock on the charts. Divi's at the moment is an avoid. It's still trending lower, and I've tried to be bullish on the pharma sector, and it's been a disappointment, and it's been moving more sideways rather than trending up. So the other stock, if you want to leave out Laurus Labs, is Newland Laboratories. That still got fresh 52-week highs pending for it, but you're bound to see short-term chop here. So I like both Laurus Labs and Newland Laboratories from the CMO space, but Laurus Labs is the strongest.
Okay, Avinash, do you have a view, and do you have a set of stocks or maybe a couple of stocks that you tilt towards to play this?
I think, apart from Laurus, I think Glenmark also could be a good contender for the CDMO space. Our sense is that, this is a very interesting opportunity and where there's a very significant runway available for these companies. So I think, we could see a significant amount of re-rating over the next, say, 2 to 4 quarters. Typically, I would say that this is a space where not only the cost advantage, but even the technical skill sets of the Indian companies are far better. And I think a lot of foreign companies are definitely getting the CDMO business done from India. So I think Glenmark looks to be quite interesting. Of course, within that, Laurus and Divi's definitely have dominant positions, but Glenmark could be a good performer provided we see better numbers over the next couple of quarters.
All right. Okay. So those are some views coming in on how do you play this theme, and what Avinash's views are on that. Let's quickly go across, talk about some volume buzzers and some big ones. We've spoken about Anant Raj, but that is on top of the list. Volumes at 35 times 30-day average that we're seeing on an Anant Raj. Very similar number on a Banco Products. Can you pull up the stock chart for a Banco Products? Let's quickly look at how it's... Okay, so it's 11% higher. Aegis Logistics. Let's pull that one up as well. Volumes at 14 times 30-day average. That stock perked up 8.6%, and then there's a Chemplus Sanmar. Volumes at 14 times 30-day average. Again, that stock too, up just about 3.5%, even though it saw a spike midway through the day of trade, and that's probably leading the stock higher. The last couple of ones are, one, there is a KRBL on that list. Volumes at 13 times 30-day average. And obvious reasons, we've spoken about KRBL. And Apcotex Industries is the other one. Volumes at 10 times 30-day average. That stock not doing as well, 3% lower. Sigachi Industries, volumes at 9 times 30-day average. So that's broadly that list of really strong volume buzzers. Jay Bala, any of those stocks attract your attention on either side, buy or sell?
Yeah, I already have Anant Raj on my radar, and the recent low it registered about 512. I think that's unlikely to get broken. There's a very important price move from the April low. We see market trends as when it moves in 5 steps as bullish, and it moves 3 steps as counter trend move. And Anantaraj from its April low has got a 5-step move and a corrective pullback post that, and now it's rising strongly. So watch out for this. This is likely to be a very strong mover, and this is just the beginning of a strong move. And I also like Banco products, but it's a very late stages of its up move that started from last year. So residual short-term bullishness somewhere about 725 to 750, but not a big mover, likely to be an exhaustive move when it reaches 725 to 750 levels.
Okay, so thanks for that. But onto our special segment of Profit Intelligence, we have Avenue Supermarts today on our list, and the stock has consistently underperformed in the past 1 year. What has not worked for the retailer is what we're going to try and get you. Is it time for the tide to turn? Mahima's here with that story.
Right, so Harsh, not just past 1 year, in fact, since 2021, the stock has remained in that range of 5,000 mark and not able to cross that 5,000 mark as well. Now, if you just take a look at the stock performance, 1 year it's down around 10%, 5 years has given a return of around 117% only. Now, in terms of what's not worked for the counter, well, couple of things, of course. First one being competition that has been coming in from the quick commerce space. We've seen how the overall grocery market share has been taken by counters like Blinkit, Instamart, Zepto, where the competition is rising. Recently, we also saw how all of these platforms are burning caches, and even DMart has to go ahead and burn caches in terms of giving discount, and one of the highest discounts being given right now is by DMart Ready at around 23%. So that is another aspect, and because of the cashman, the overall discounting going up, the overall amount that they are making per square feet is also not increasing. In terms of valuations, of course, this has always been the debate for something like an Avenue Supermarts. They remain punchy still, currently trading at around 112 times P as well. Now, with regards to where sales and profit growth stands, sales has seen a growth of around 19%. This is the 5-year CAGR versus that of other retailers which have managed to grow beyond that 25% mark, and same with profits as well. Profits CAGR, 5-year CAGR has been around 16% versus other retailers that have done a 20% plus. In terms of margins, if we take a look at the past 5 years in terms of operating margin, it has remained in that range of 7 to 8% only. They've not been able to manage to increase their overall margins, plus competition intensity is putting pressure on the same-store sales growth as well as the margins overall. Now, whether the tide is going to turn or not, recently they did a con call where they've given a strong outlook. Store expansion, they've said that overall their store growth that they are planning is around 10 to 15% every year. They'll double down on investment in store additions. So despite of the rise of quick commerce, they are doubling down and very confident when it comes to implementation of the brick and mortar model. In terms of DMart Ready, the growth that they're expecting here also is around 10 to 15% every year. In terms of the private label portfolio, they've said that we are here to grow the business and not build a private label portfolio. So their focus right now is to penetrate into tier 2 and tier 3 cities, expand more in terms of store presence going forward. Lastly, with regards to where ANR stands, there are 10 buy calls, 10 hold calls and 11 sell calls for this particular counter. So pretty much even Stevens here as well. But this is the entire view. Probably going forward, we'll have to see as to how much DMart Ready is actually catching up with this quick commerce race, and how well is the DMart team able to implement their overall store expansion as well.
Okay, thank you so much for that, Mahima. Avinash, I believe we've posed a question to you with regard to an Avenue Supermart, but just to kind of reinforce that, what's the sense like? Can the next 5 years be meaningfully different from the last 5, or will valuations continue to weigh on a stock like this?
I think, Harsh, the valuations have been expensive and will continue to be expensive. But I think what the market is looking is at volume growth and the profit growth opportunity. I think if they are able to crack the online business successfully, then I think you could see a fresh wave of re-rating. But I think, in the last 2 to 3 quarters, margins have been under pressure. The growth has not been happening. So that's the reason the stock has not been going anywhere. And I think, other smaller, retail players have been growing quite strong considering the fact that their base has been small compared to DMart. So I think one is the base level growth because it's now become a large player. So I think growth on the top line front has to accelerate and has to be at least 15-20%. And obviously, even if margins are thin, that could be more or less made up by the revenue growth. But clearly, I think the markets are looking at a stronger growth trajectory in terms of the earnings growth, which has been more or less flat. So I think we'll have to wait and watch. But unless this happens, I don't think you're going to see a fresh wave of re-rating. The stock could at best consolidate. And hopefully, this online initiative, if it takes off well, then I think that could possibly give in a kind of a better earnings growth kind of trajectory. But we'll have to wait and watch. The existing business is definitely facing a lot of challenge from the competition from several domestic players.
Yeah, that's true. But I remember that I think maybe I should have asked Mahima this, but just 3 days ago we did a piece, Mahima did a piece which spoke about the best and the most economical place to buy things this season. And if you were okay with a one-day delay, and I think Avenue Supermart scored the most points for the most economical purchase that you can get. I wonder what will happen once the GST cuts come in and people make a beeline for buying things. A lot of comments that came in that people will not buy 2 toothpastes because they'll brush more. But the idea is not that. The idea is that people may upgrade from whatever they might be buying to maybe a branded toothpaste, and therefore do the sales of some of these things go up or not. So I think I'm really looking forward to that, and therefore the branded FMCG players as well as some of the online players or the offline players, but mass retailers could all benefit.
Well, yes, and I remember that. I remember that
right here on the screen.
And yes, and that clearly reflects. That picture clearly reflects that DMart, as such, very competitive. It's just the 10-minute delivery that the other players give, or the hour or so delivery that some of the other players are giving as an optionality, which is causing the kind of traction that they are getting versus a DMart. But yeah, it would be interesting to see if things change. Jayabala, time for the BTST STBT strategy. We are at 324, so very close to close. What's the take? Any suggestions?
Yeah, I'll make a very quick comment on DMart. When I was here on the 18th of August, I had pointed to DMart being an important stock to watch out for. It was at 45.50, went up to 49.50. And there is a reasonable possibility that the 4th September high of 49.50, once that's crossed, DMart could break out. So watch out for it. And when it comes to BTST, I have a BTST on SBI cards with a stop loss of 889 with an objective of 925.
Okay, SBI cards, that one doing fairly well for itself, 5% higher. Avinash, anything within the lending pack? We've not spoken much about banks or NBFCs or insurance in today's show. Anything within the lenders that look interesting? There are a couple of initiation notes on a Northern Arc. I wonder if you've looked at that one, covered that one. Any sense?
No, I think, Northern Arc will definitely do well. I think sometime back there was an institutional placement of equity to large marquee investors, and I think they have a fairly good asset base. I think growth numbers hopefully in the second half of this financial year would be better. But we are sticking with some very well tracked names. Typically, I think if you talk about the public sector banks, I think which have been underplayed for some time. I think probably credit growth is going to pick up. The government is very conscious that with the GST cuts, they want the credit flow to improve significantly in the system. And I think all the public sector banks are gearing up for that. So I think second half could be a strong quarter for large banks like Bank of Baroda, SBI, Canara Bank. So I think, one could definitely look at these banks because, in terms of their valuation, they still trade at a significant discount to the private sector banks. So this is one space which is largely ignored and where the growth potential is pretty large. But yes, I think the participation has yet not picked up. So one could take a contra bet and look at these names. I would not be surprised that maybe the October to December and the Jan to March quarter could see a big, strong comeback for these banks, considering that asset quality, the balance sheet health is pretty robust now, Harsh.
Got it. Okay. Fair call. you know, the last piece of the puzzle for the session today is I'm borrowing the note that came in from Jefferies. And they wrote about how cable and wire companies have seen a price uptick, and therefore that's a pocket you want to look at. How stocks like Astral, Supreme, etc. could actually see expansion of margins by 100 basis points, again, because of the PVC prices control. So very constructive on both of those segments. And in the Goldman note on Havells, spoke about how people should build positions in that stock if it were to correct. So 4 or 5 names out there, but Havells clearly the strongest of the pack and ending at the highest point of the day. Jayabala, as we wrap up the show, is there a trade in Havells?
Yeah, I like Havells for the short term. I don't think the stock is going to drop below 1450. So I'm anticipating a short-term bump up to somewhere about 70 to 1810. So 1510 is an important support for the stock. So I don't think that's going to break.
Okay, a couple of minutes from close. Thank you, Jay. Thank you, Avinash, for joining us this afternoon, giving us all of those views. And viewers, let's quickly look at how the Nifty has shaped up for the day, intraday first. So first the summary, probably a 1/5 of a percent lower on the Nifty, a 1/10 of a percent higher on the Bank Nifty. So a slight bit of outperformance seen here, but the intraday chart shows it's been fairly range bound. It's not been too choppy per se, just a 90-point band in which the Nifty has traded in. And yes, we've given up 25,100 for sure today by around 40 odd points. So that's a decent giveaway. In terms of the heat map, and that'll also give us the texture, and within that, if you just see the gainers to losers, of course, that's what really stands out. Around 32 losers to just about 18 gainers. Nothing substantial on either side. A Jio Financial has shown some amount of steam today, 1.4% higher. And there are some names on that bottom rung, especially sitting from the IT basket and the Pharma basket. So those are the two baskets which were under pressure. You'll see those names, Cipla, Dr. Reddy's, you'll see Sun Pharma there as well, TCS, Infosys, M&M also making it to that list, and Asian Paints within consumption and a tightening within consumption. So those were the buckets which didn't do as well. Now, broadly, let's take the sectors, and likely that's what we will see as well. Pharma down 0.7, IT down half, Nifty Auto down 0.4. So that's how those shaped up. Nifty India Defence Index up 0.7. So that saw some amount of zinc. You saw the PSU Banking Index also do fairly well, 0.6% higher. But again, no material movers outside of the Nifty Realty. That one has shown some really good resilience today, 2.6% higher. Let's pull up the constituents of the Nifty Realty Index, and that will also give us a sense on how broad-based it was. Extremely broad-based, but Anant Raj was the star of the day, 10% higher. Outside of that as well, some of the other names also doing fairly well for themselves. You want to look out for this index because it's done well today, and you'd want to see how it does for the rest of the week. Now, I want to also look at the breadth of the market, the gainers to losers on the overall index, and that has, of course, tapered down just a wee bit, but continues to be resilient, is what I would call it. Let's pull up the Nifty Mid-Cap Index. Some outperformance seen there. The Small Cap Index as well, 0.5% higher on the Nifty Mid-Cap. That one's done decently well on a day like this. 0.7 for the Nifty Small Cap. So both of those reflecting the breadth, which was fairly positive. The BSE 500 top gainers, top losers. Not surprised to see a Vodafone Idea up 7 out there, but KRBL down 10. Not surprised at all to see that, given that independent director resignation. Then there were some others which saw some pressure, but again, nothing material or meaningful. Metro Brands down 3 was the only other one which kind of caught the eye. Railway stocks have done very well today. So an Ircon and Railtel, etc. have done very, very well. And Aegis Logistics, Piramal Enterprises also saw zing. Piramal Enterprises was the call today morning by Parag Thakkar, and the stock is up 6% at close. SBI Cards was the other one, 5% higher. But what to watch out for, and let's pull up that list. Yes, you'll have the Indian unemployment rate, but let's look at some of the dividend adjustments that need to be made. Those are some of the names that you need to keep in mind. Some really, really small, a Karnataka Bank 5 rupees per share. Godfrey Phillips 2:1. That's the bonus issue on Godfrey, which will reflect tomorrow. And you will also have a new IPO, 451 crore Euro Pratik sales IPO, entirely offer for sale. IPO opens 16th, closes 18th, price band 235 to 247. So you'll have all of that tomorrow, but we'll catch you up on some of these tomorrow before open, get you started for the day. For the moment, from Neeraj, myself, everyone who puts this show together, thanks so much for watching. Stay tuned to NDTV Profit. Market Express will take all the action forward, give you a complete download of what's gone on in markets today.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
You're tuned in to Market Express with me, Shreyanshi Singh. Let's get straight to the show then. In fact, first things first, a quick look at what the markets then did. In fact, Indian markets kickstart the week on a volatile note with the Nifty ending a range-bound day of trade above that 25,000 level, as you can see on your screens as well. 30-pack Sensex is the one that traded flat. with a negative bias, wrapping the day below those 82,000 levels as well. When you also take a look at broader markets, in fact, they outperformed the benchmarks, with the mid and small cap indices ending with gains of nearly 0.5% each. Jio Financial Services, Bajaj Finance as well as Eternal were among the top gainers within the Nifty 50 basket. But moving on then, let's also get your quick check going as far as the sectoral picture then is concerned. Concluded mixed for the day with Nifty Pharma, Healthcare and IT declining the most. Nifty Realty was in fact on the other hand the top gainer, buoyed by government's proposal of a 20-year tax holiday for data center builders, and we'll get you some more details throughout the course of the show on this one as well. The advanced decline ratio ended skewed in favor of the bulls with over 1,600 stocks settling in the green. So that largely is the kind of sectoral picture that you had coming in. But tell you what, let's also quickly start taking a look at some of those buzzers as well in trade. In fact, KRBL is the first one that makes it to our list. And you're talking about a leading player in the basmati rice market facing scrutiny after the resignation of one of its independent directors. And the company's independent director, Anil Kumar Chaudhary, is the one who's resigned, citing inconsistency, in fact, in the board dynamics. In fact, he's also highlighted that there are inconsistencies in recording of minutes of board and committee meetings. Also stated that prevailing dynamics of the board are inconsistent with the interest, in fact, of the shareholders. Stock, in fact, was down about 10% in trade. As you can see on your screens as well, 9.5% downtick is where the stock ended the trading session as well. But let's move on to another stock that is, in fact, buzzing in trade on the flip side. Nadanak is the one that we're talking about. It was up over 8% in trade, and that's after a bullish note coming in from DAM Capital. The brokerage, in fact, has initiated a buy rating on Nadanak, also citing a number of key growth drivers for the financial services company. Let's take a look at some of those growth drivers as well. The report, in fact, highlights several factors that it believes will propel Nadanak's performance in the coming years. So the brokerage, in fact, is particularly optimistic about the company's increasing focus on direct-to-consumer lending. That's one of the factors. Seen as a major positive for its business model. In fact, speaking of growth, DAM Capital also sees the company's asset quality improving and are also penciling in an earnings CAGR of 39%, and that's over financial year 26 to 27. So that's another stock for you to look at. But tell you what, let's keep it going with the healthcare sector. Yatharth Hospitals is one to look at. It's expanding its presence in North India with a strategic acquisition. The company, in fact, has announced that it will be acquiring a 100% stake in Shantived Hospitals in Agra, and this is going to be through an all-cash deal. Now, this acquisition itself is valued at 260 crore rupees. The move, in fact, is a key part of Yatharth Hospital's strategy to strengthen its footprint in Uttar Pradesh. Let's also quickly take a look at Shantived Hospital. Now, this is the one that is currently operating with a capacity of 150 beds. A key factor in this particular deal is its expandable capacity of up to 250 beds. So that's something that you're looking at for this particular hospital, which also provides the company with significant room for future growth in the region. And the deal, in fact, also reinforces the consolidation trend that we're seeing in the Indian healthcare industry as major players look to expand their regional reach as well. So that's one important note coming in, one important highlight coming in as far as Yatharth Hospitals is concerned. But speaking of notes, then let's move on. Let's also take a look at Goldman Sachs, because they've issued a fresh report when it comes to Havells. The Global Investment Bank, in fact, is maintaining its positive stance, reinforcing its buy rating on this particular counter. The firm has raised its price target for Havells to 1,720 rupees, which is a significant show of confidence driven by its belief that the company is well positioned to capitalize on a growth revival in the electrical and durable sector. However, the report does caution that the upcoming quarter, that is Q2, could be temporarily disrupted by uncertainties surrounding the implementation of GST. And despite the short-term hurdle though, there is still silver lining, because Goldman Sachs is viewing any potential weakness in the share price as a compelling opportunity for investors to buy. And the long-term outlook, in fact, remains strong for this one. Goldman Sachs also believes that a sustained revival in earnings growth can, in fact, lead to a re-rating of this particular counter, driving its valuations even higher. So that's an important update coming in as far as this brokerage note is concerned. But let's move on. Let's get your check going as far as Apollo Hospitals then is concerned. In fact, they've announced a major expansion of its oncology business. The company is setting up a new 100-bed oncology center in Gurugram, and this is a facility that is part of the second phase of a larger expansion which will see the establishment of a 500-bed hospital in the city. And this dedicated oncology center is a long-term project that you're looking at. You're looking at construction and completion that is expected over the next 4 years. That's an important update coming in for Apollo Hospitals. The strategic move is part of Apollo's ambitious plan to double its oncology business to over 5,000 crore rupees within the next 3 to 4 years. So those are some of the plans that they also have when it comes to this particular company. The expansion into Gurugram is going to be a key pillar in achieving this goal as the company looks to strengthen its presence in North India's growing healthcare market. So that's the overall outlook as well as far as Apollo Hospitals is concerned. But let's also shift our attention to the IT sector. That's the one to talk about on the back of a global brokerage firm, UBS, in fact, that has also initiated coverage on a bunch of counters. First things first, let's take a look at Persistent Systems taking a highly positive view on the company's prospects. You've got UBS talking about them and also initiating a buy rating on the stock, set a price target of 6,730 rupees. The brokerage, in fact, calls Persistent Systems the best placed among the mid-cap space, citing its robust financial performance as well as strategic position. The report, in fact, also highlights the company's strong execution on both top-line growth as well as margin expansion. So those are some of the key levers for growth that they're talking about, with the main bullish thesis from UBS centers on the company's readiness for the next big cycle. In fact, according to their Gen AI disruption framework, you've got Persistent Systems that is considered the best positioned to capitalize the opportunities presented in the generative AI wave. So that's quite the bullish note coming in. And speaking of bullish, let's also keep it going with the IT sector then. In fact, UBS has initiated coverage on Emphasis with a buy rating. And the move also comes as the brokerage sees a strong potential for a revenue growth recovery for the company following a period of multiple headwinds. So that's one important note, one important commentary coming in here. For several years, you do have Emphasis that in fact has contended with challenges stemming from its large client DXC technology, its subsidiary digital risk, as well as broader issues within specific verticals. However, UBS's report suggests that these headwinds in fact have largely subsided, paving the way for accelerated growth. So that's quite the bullish note coming in as far as this particular counter is concerned. But let's move on. Let's take a look at some of those railway counters as well, because they were in fact also abuzz in trade. The country is moving forward with a significant project to build new railway lines near its border with China and other neighboring countries in the northeast. In fact, this project, which has an estimated cost to the tune of about 30,000 crore rupees, involves the construction of 500 kilometers of new railway tracks. Now, this ambitious plan is not just about expanding connectivity. You're talking about a strategic move, in fact, to improve logistics, military readiness in these remote yet vital regions. And the government, in fact, aims to complete this project over the course of the next 4 years. This new railway network will also complement the extensive road infrastructure already developed in the region over the past decade, ensuring better civilian access and faster response times in case of emergencies or military operations. So that's an important one coming in, RailTel. And a bunch of those counters were in focus, and that's one important trigger for the railway pack. But from one trigger to another for this particular pack, then let's talk about order wins, because it's in fact order wins galore for a bunch of these railway counters. I'm talking about RailTel Corp and Jupiter Wagons in particular. RailTel Corporation has secured a new letter of award from the Bihar Education Project Council. The order is valued at 210 crore rupees, and it's for a project to supply digital infrastructure. Meanwhile, you're also looking at Jupiter Wagons, that's also in the news. A key arm of the company has also gotten a letter of award worth approximately 100 crore rupees thereabout. This new order adds to its already robust order book, which stood at over 5,900 crores as of June 2025. So that's the entire railway pack, in fact, that was in focus. And speaking of order wins, then let's move on. Let's take a look at another counter that was in focus. And I'm talking about Shakti Pumps. The company, in fact, has bagged a 347 crore rupees order, and this is for the supply and installation of over 12,000 solar pumps. This is the second tranche of a larger order under the Pradhan Mantri Kisan Urja Suraksha Evam Utthan Mahabhiyan. I'm talking about this B scheme in Maharashtra. And the program, in fact, aims to empower farmers by providing them with solar-powered irrigation solutions. The stock was buzzing away in trade with gains to the tune of about 3%, as you can see. Closed the day with gains of about 4% as well. But let's move on. Let's also get your check going as far as Vedanta is concerned. In fact, Vedanta's power arm has signed a pact with SEPCO Electric Power Construction Corporation to resolve a long-running dispute. Now, the disagreement was related to the engineering, procurement and construction contracts for a thermal power project. And this is a major win coming in for the company because SEPCO, in fact, has agreed to withdraw its arbitration claims against the power business. These contractual and payment disputes had been a major bottleneck when it comes to this particular company as well, specifically blocking the demerger process in the past. With this key legal and financial hurdle now cleared, all attention is going to be on the final NCLT hearing scheduled for September 17th as well. So that's a date that you should be marking on your calendars as well. But let's move on. Let's also take a look at the Ministry of Electronics and Information Technology, or MeitY, that is circulating a draft of a new national data center policy. The draft proposes a substantial 20-year tax exemption for data center developers. This is a potential game changer for companies like Anantaraj, which are making significant investments in the sector. And the tax holiday is contingent on companies meeting specific targets on energy efficiency and capacity addition. The draft also includes a proposal, in fact, to allow GST input tax credit on capital assets used for data centers. This policy comes at a crucial time for Anantaraj, which has been facing delays in its data center projects in the National Capital Region due to pollution control regulations, as you can see on your screens as well. This is one stock that ended the day with gains of about 10%. So that's Anantaraj that I'm talking about. But let's move on. Let's get you the word going as far as brokerages are concerned, and let's get your verdict on a new cross-sector report that you had coming in from Jefferies on India's spirits industry. That was also an entire pack that was buzzing away in trade, painting a very bullish picture is what Jefferies was doing for the sector. In fact, the brokerage also believes that spirits category offers strong growth potential driven by premiumization. It projects also a double-digit top-line growth and a meaningful room as far as margin expansion is concerned. Across the board, let's also take a look at some of the counters that they've in fact talked about. Radico Khaitan is the one that is a top pick, with Jefferies in fact projecting a robust 35% EPS CAGR as well. The company is seen as a growth leader for United Spirits as well. Jefferies sees a favorable risk-reward scenario, and the stock's recent correction of over 20% has, according to the brokerage, already priced in near-term headwinds. The dark horse, though, in this particular space, according to them, is Allied Blenders. The brokerage, in fact, sees significant upside coming in for this one. So that's something that you should be marking in terms of what is being penciled in for this entire space. That's one space that was buzzing in trade. But speaking of buzzing, let's talk about Tata Technologies as well. The stock was a buzz in trade after announcing an acquisition that significantly boosts its global presence and capabilities. The company is acquiring a 100% stake in Germany-based company for an all-cash deal valued at about 75 million euros. And the acquisition is expected to be EPS accretive from the very first year itself, signaling a strong financial rationale for the deal. So that's the latest coming in as far as this particular counter is concerned. But since we're talking about this counter, let's also get to the brokerage verdict when it comes to Tata Tech. JP Morgan, in fact, has a bearish stance coming in on this counter. Maintaining an underweight rating is what they're doing, with a price target of 570 rupees. This view, in fact, comes despite the recent acquisition of the German automotive ER&D company, like I mentioned, which the brokerage, in fact, acknowledges as a positive move. So that's the entire brokerage verdict coming in as well when it comes to this story. But let's move on. Let's get you some more inputs and some more news and updates. In fact, Vodafone Idea has moved the Supreme Court challenging additional AGR demands, seeking a waiver of 45,000 crore rupees from its total dues of over 83,000 crore rupees. The court will be hearing the plea on September 19th. So that is a date that you should be marking on your calendars. But Vodafone Idea, in fact, has asked the Department of Telecom to reconcile dues up to financial year 17 under the 2020 norms. And the case follows the 2019 ruling expanding AGR definitions and the 2020 order allowing telecom firms 10 years to clear over 93,000 crore rupees in dues. So that's an important update coming in. The government, in fact, now holds a major stake in the company after converting over 52,000 crore rupees of dues into equity. So that's Vodafone Idea that you should be looking at. But let's move on then. And onto some macroeconomic data then. In fact, India's wholesale price inflation rises to 0.52% in the month of August, marking a shift from a deflation of 0.58% in July and reaching a 4-month high is the milestone, in fact, that you're looking at. Primary articles inflation improves to a 2.1% decline from 4.95%, with food articles dropping 3.1% as well. So compared to 6.3% in the last month, vegetables deflation eases to 14.2% from nearly 29%, while fuel and power worsens to a 3.2% fall as well. Manufactured products, let's take a look at that as well, because there you have the inflation climbing to 2.55% from 2.05%, and food items in fact contribute 73 basis points to the uptick. As core WPI also rises, ICRA forecasts WPI reaching about 0.9% in the month of September due to higher global crude and commodity prices. So those are some of the triggers that they're looking at. Plus a weaker rupee is also something that you should add to that list according to ICRA, though food may return to deflation, and that is the verdict coming in from them. But let's move on then. As per the Society of Indian Automobile Manufacturers, or SIAM, India's auto sector saw a significant boost in August, with passenger vehicles sales also reaching 322 lakh units. This marks a substantial increase from last year. In fact, two-wheeler sales also rose by 71%, with several manufacturers also reporting strong growth. In fact, the industry is optimistic when it comes to the festive season, expecting further sales momentum. So that is something that you should be penciling in when it comes to this particular sector. But tell you what, let's keep it going with the auto sector then. Maruti Suzuki's popular hatchback, the Swift, is getting cheaper by up to 1 lakh rupees. Let's take a look at the latest updates as far as this particular story is concerned, because thanks to the government's GST norm reform, you do have the new prices that will be effective from September 22nd, 2025, just in time for the festive season. The Swift's price drop, in fact, ranges from 55,000 to 1.06 lakh rupees, depending on the variant as well. Other Maruti Suzuki models like the Alto, K10, Espresso, Wagoner, Celerio, as well as Desire, Baleno, and Ignis are also seeing price drops ranging from 20,000 rupees to 85,000 rupees. So that's the latest coming in as far as the auto sector then is concerned. But from one sector to another then, let's move on to Indigo. Indigo, in fact, opens a new aviation corridor between India and Greece, launching 6 weekly direct flights to Athens starting early January 2026. And the airline introduces India's first aircraft, inducting it by the end of 2025 for this particular route. In fact, this move marks Indigo's expansion into Europe, connecting Indian travelers to Greece with enhanced long-range capabilities. And this particular aircraft that I'm talking about boosts efficiency and passenger comfort, strengthening Indigo's global footprint as well, while fostering tourism and trade ties with Greece. So that's some news, good news as far as travel then is concerned. So if you're planning a trip to Greece, this is also something that you should be looking at. And in terms of plans then, let's move on. Let's get you one more plan that you should be adding on your list. Today is the last date to file ITRs if you haven't already done so, for those not subject to audit, including salaried individuals and presumptive taxpayers. Taxpayers. In fact, the deadline set for September 15th was extended from July 31st after those changes in ITR forms. Missed filings are going to be drawing penalties, interest, and loss of some tax benefits as well. So that's an important update coming in. 5,000 rupees thereabout is the sort of tax that you can be hoping to pay if you do miss this particular deadline. So do keep in mind that this is a deadline that you should be marking on your calendars. But let's move on to some national news. Then the Supreme Court, in fact, has stayed key sections of the Waqf Amendment Act, saying that some of its provisions could lead to arbitrary power. In fact, it paused the role of district collectors in deciding ownership disputes and struck down rules that limited the board to only people practicing Islam for 5 years. Other parts of the law remain in force, while petitions against it are heard. So that's the latest update coming in there as well. But let's move on. In fact, the Gujarat High Court has received another bomb threat, this time over email from an unidentified sender. Police quickly reached the spot and began their investigation. This is the fourth bomb scare at the High Court in just the past 3 months. So that's an important update coming in there. And speaking of important, let's take a look at an appointment. In fact, Acharya Devrat took oath as the governor of Maharashtra. He already serves as Gujarat governor and has been assigned this new role after C.P. Radhakrishnan stepped down to become India's vice president. The oath was administered in Sanskrit by the Bombay High Court Chief Justice as well at the Raj Bhavan. So that's an important update coming in, but let's also move on then. The Indian Navy, in fact, receives INS Androth, the second indigenously built anti-submarine warfare shallow water craft. This boosts our capabilities, in fact, against China's growing presence in the Indian Ocean. So that's an important update coming in. Garden Reach shipbuilders and engineers in Kolkata delivered the 77-meter vessel on September 13th, marking progress towards self-reliance in this particular space. The ship, named after Androth Island in Lakshadweep, strengthens anti-submarine and coastal surveillance with lightweight torpedoes as well, indigenous rockets and advanced sonar propelled by diesel engines and water jets. In fact, it also features over 80% indigenous content. So that's an important update coming in there. But tell you what, that's a wrap on Market Express. Thank you so much for tuning in.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Benchmarks end lower after a choppy day of trade, with Nifty snapping its 8-day gaining streak and Sensex closing below 81,900. Nifty Realty finishes as the top sectoral gainer. Mid and small cap indices outperform Nifty and the Sensex. US is India's top export destination between April and August 2025 amid tariff-related uncertainty, with exports of over $40 billion as India's trade deficit modestly falls to $26.5 billion in August. Supreme Court will hear Vodafone Idea's petition challenging additional AGR demands on the 19th of September. These are for the period until 2016 to 2017. And it's the last day to file your income tax returns for FY25. We tell you what happens if you don't file them today. Meanwhile, the Delhi police arrest the driver from the BMW crash that claimed the life of a senior finance ministry official, registers a case of culpable homicide, destruction of evidence and rash driving. Adolescence wins big at the Emmys, with 15-year-old Owen Cooper bagging an award for Outstanding Supporting Actor, while Stephen Graham takes home 2 trophies. The studio scoops up 4 Emmys, including the Best Comedy Series. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So first up, let's take a look at how the markets fared today. Benchmark indices ended the day on a slightly weaker note. At the close, we saw the Sensex slipping 118 points to settle at 81,780. The Nifty was also down 0.18% at 25,060. Now, on the sectoral front, we saw auto, IT and pharma stocks declining about 0.6% each. But in contrast, realty, power and metal indices bucked the trend, closing in the green with gains of 0.5 to 2.5%. My colleague Harsh now joining in with the detailed roundup of the day's market action. Harsh, over to you.
Well, the Nifty 50 index was muted in trade. We traded in, again, a very, very tight band, 90-odd points, down around 1/5% thereabouts. Some bit of outperformance seen in the Nifty Bank, but not enough to support the Nifty 50. The IT index was down around 0.5%, and therefore some of the IT names languished at the bottom, along with a couple of auto names, an M&M and Eicher, including some consumption names as well, like a Titan, like an Asian Paints. Some of those names, dominated the bottom of that pile. So that's how some of those names played out. Now let's talk about some of the gainers. A Geofinance, some unlikely gainers today, but a Geofinance was the one that really stood out, nearly 1.5% higher in trade today. But again, no material gainers or losers, and M&M was the top loser, but no material ones to really talk about. Now let's talk about sectors. So auto, of course, but IT, along with some bits of consumption, saw a little bit of pressure where sectoral indices were concerned. Let's talk about the top gainer, because that one really stood out, and that was the Nifty Realty Index, up 2.5%. So that was the one big mover. Outside of that, it was fairly, again, range bound. You're talking about the advanced decline, well, largely 900 to 1300. That's how the split was. And when you're looking overall at even some of the mid cap and the broader end of the spectrum, the mid cap and small cap indices reflected that. So the heavyweights pulling down the Nifty 50, along with just the fact that the advanced decline ratio on the Nifty 50 was weak. But overall, on the NSE, not as bad, and therefore what you saw was a bit of an outperformance both from the Nifty small cap as well as mid cap indices, and those were up over 0.5% in trade today. So saw some zing there where markets are concerned. Now let's talk about some of the top gainers and losers. KRBL was one stock which was down 10%. Independent director resigning and all of the concerns highlighted by him as reasons for him resigning, not doing the stock any favors. But on the other end, railway stocks were in focus, and Ircon, Railtel, RVNL, some of them really rallying in trade today. So all of those were well in focus as well. But outside of that, not too many meaningful losers on the BSE 500.
Right, Harsh, thanks so much for that. Meanwhile, like you were rightly saying, we saw KRBL falling nearly 10% in trade today after independent director Anil Kumar Chaudhary resigned from the company's board, citing concerns over corporate governance. Meanwhile, the company has now responded by saying that a board meeting has been convened in the matter and that a third-party firm will be appointed to review allegations made by Chaudhary. Meanwhile, India's domestic passenger vehicle sales de-grew by 8.8% to 3.22 lakh units in August 2025, according to data by the Society of Indian Automobile Manufacturers, or SIAM. This is attributed primarily to recalibration of dispatches by passenger vehicle manufacturers. However, the two-wheeler segment grew by 7.1 compared to the previous year, with sales of 18.34 lakh units. To get us an overview of the August data, Puneet now joining in with all the details. Puneet, over to you.
Well, SIAM has released the data for the month of August for all automakers, and there are some key interesting trends that are getting formed. Now, for the uninitiated, SIAM data gives out the wholesale data for the month of August as well as for the year to date, and this largely means the stock that companies like Bajaj Auto, amongst others, send to their dealers during the month. They also gives us some perspective of the export sales that have happened in the month, as well as the production for all these automakers that have done. And in this month, we largely saw the four-wheeler car makers essentially pull back the inventory, and that's largely led by what was the news because of the GST rate cut reduction. Now, Prime Minister Narendra Modi on 15th August from the Red Fort mentioned that GST rates will be rationalized, and post that, there was news flow that GST rate on cars will be reduced from 28 to 18%, which did officially happen on September 3rd. But buyers were wary and they pulled back essentially from purchasing their cars in the second half of the month of August, and that's reflected in the sales for the passenger vehicles, which is down 9% in this particular time frame. Despite GST rate cut reduction across the board on two-wheelers as well as on the three-wheeler space, we have seen that sales was strong in this month as well. Two-wheelers were up in this particular time frame at almost 7% on a YOY basis, almost at 18.33 lakh units that were sold in this particular month. Whereas for the three-wheeler space, we have seen that sales are up 8% to almost 75,000 units. When you look at the the segmental performance as well in the two-wheeler space, Bajaj Auto has been a disappointing factor in terms of domestic sales. In the month of August, sales were down roughly about 11% versus a 7% growth in sales that is seen in the two-wheeler space, and it's a consistent problem from November 2024 onwards that Bajaj has been facing. On the other hand, someone like TVS had a 27% growth in this particular month, and that's both led by motorcycles and scooter segment of the company, where the company operates brands like Jupiter, amongst others, which got that benefit as well. Four-wheelers across the board continue to be under pressure. We have seen that because of the GST rate cut, but the production was also impacted in this particular month, and that's largely led by the cut at the sales network as well. Going forward, we will be looking at a lot more launches that will start happening from the month of September and October around the Diwali season, and a lot of the buyers which were sitting on the sidelines should come back on September 22nd, and that will be a hope as well as a key aspect of recovery in the auto space going forward.
Puneet, thanks so much for that. Let's shift focus to some big breaking news coming in right now. My colleague Rishabh Bhatnagar, who has been tracking this very closely, joining in. Rishabh, India-US trade talks set to resume tomorrow. As we understand, Special Secretary and Chief Negotiator Rajesh Agrawal has confirmed the arrival of the US team and lead negotiator in New Delhi as early as tonight. Give us all the details.
Right. The most important negotiations that are underway with respect to a free trade agreement are between India and the US, and we have the latest update coming in on that. A US team of negotiators led by the chief negotiator, Brendan Lynch, is set to land in India tonight. Talks, and these will be one-day talks that will be starting tomorrow, and thereafter there will be some sort of a build-up on what the direction that these talks are headed in. We'll have more clarity as and when we go on that. But what we're seeing is that all sorts of trade issues will be brought on the table tomorrow. That is the big development coming in with respect to India and the US. Remember, the 5 in-person rounds of negotiations were done. now we're finally having the sixth one, though this is not a formal round of negotiation. This is another one of these sort of virtual meetups that have been continuing between the two sides. So this is not being registered as the sixth in-person round of negotiations, but rather a continuation of talks, given that both the sides have continued to be in touch virtually, if not meeting in person. So you'll have these talks starting in tomorrow. At least one day is what we expect these talks to last for, and you'll have more on that coming in as well.
You said something very interesting. You said that the talks were never something that had stopped happening, or neither had the correspondence or the communication between the two countries, neither had that actually stopped happening. But at the same time, there was a pretty bitter stalemate that was going on at the same time, where there were certain amount of tension. We heard some comments coming in from Donald Trump. India, of course, chose to remain quiet, chose to stand her ground, and that has been the stance right from the beginning. But you know, on the back channel were all of these talks happening. Can you shed a little bit of light on that? Because wondering, and I'm sure all of our viewers are wondering that as well, how does that really change or direct the trajectory of the discussions that are going to resume tomorrow?
Right. What's important to note with respect to any sort of bilateral talks that happen is that they happen on various levels, right? So right from a secretarial level to a chief negotiator level to a minister level, and apart from all of these, which are trade domain and non-trade domain, they happen on a political level, on a diplomatic level as well. So given that the India-US relationship is so consequential, and there are very, very deep ties on all levels of government as well as trade, those talks were continuing, and we confirmed that today with the Special Secretary Rajesh Agarwal, who is also the chief negotiator on the India-US bilateral trade agreement. He confirmed to us that various discussions were ongoing on the diplomatic level, on the trade level. So even if ties sour on one of these levels, be it a political level or be it a secretarial level, there are always various other back channels and various other tracks that continue to debate and continue to hold that relationship. So that's what we're seeing on this front. We saw about 3 to 4 days back, you had the political sort of will coming in with respect to a reconciliation between President Trump and Prime Minister Modi coming in on Truth Social and X. Both of them agreed to the fact that there will be a conclusion of negotiations at the earliest. And to that, we have an update now that negotiations are continuing. In-person negotiations will start tomorrow. One day is what we're hearing, but definitely there will be more building up on that.
Right, Rishabh, thanks so much. Stay with us. We also have Anil Trigunyat, a former IFS and distinguished fellow at the Vivekananda International Foundation, now joining us on the phone line. Good evening, sir. Thank you so much for joining us this evening. This is the big news that's coming in right now. We understand that these talks are set to resume tomorrow. We're looking at India holding firm on protecting its agricultural and dairy sectors, and that has been the stand, right from the very start. How can then negotiators balance national interests and still be able to unlock or really, access greater market access from the US?
Well, that is essentially the art of negotiation. We have conveyed our red lines where we cannot really concede. But then there are other areas in which they could have a greater market access, either in terms of negotiating a better, rate of duty or tariffs that could be perhaps which are of more interest to them. In addition, we should also not forget that for the United States, a bigger pie is also in the various defense deals they are looking at. So I'm happy that these negotiations are going to continue. Of course, we'll only know the result, what happens. We have had negotiations for too long, almost nearing the finalization, and then we went back on it. More importantly, there are a lot of confusing statements have been coming from various people in the administration, including Howard Lutnick and Navarro. Don't consider it done till it is done. And that's how I look at it.
Right. So with evolving, geopolitical dynamics in West Asia and beyond, how can India really leverage its diplomatic relations to support its trade and economic interests at this point of time?
Well, I think that precisely what we are doing at the moment. The only problem we have at the moment is with the United States, which has imposed arbitrarily 50% of tariffs for a very unfounded reason and logic. And therefore, we had to diversify. So if you have seen in the last 1 or 2 months that India has started diversifying its new markets, trying to send trade teams, and so many delegations are going all over. So it all happens in a while, but the efforts are being made now to focus more on alternate markets. You can't keep on putting all your eggs in one major basket. I mean, that is something we have to look at. And that's precisely what is being done. At the same time, United States is a very important and major partner, and we'll have to continue to negotiate with them because, see, while we are talking, then there is every chance of coming to some kind of an understanding and some kind of a rational eventually prevailing. And so it is important. Then we are also pushing for our free trade agreement with the European Union, with the West Asia, of course. More, if you come to see the figures of trade and other things that have increased significantly. Likewise, many other countries, Russia, China, they are also interested in getting more products from India. We'll have to go to ASEAN, Africa. So there are many of the markets which are there. So it's not that you are out of options. Only thing is one becomes a little bit complacent, thinking that it is your biggest market, so it will continue to remain like that. And if the writing was, the wall was clear, I would say that we should have read it in Trump's first term itself, when he took us out of the GSP benefits and imposed 25% tariffs. So it's not nothing new. I'm quite sure our negotiators and their strategists have taken these factors into account. And that's why India showed its strategic patience.
Absolutely. Thank you so much for that fantastic insight. We'll, of course, continue tracking this development. But this is the big news that's coming in right now. US-India trade talks will continue tomorrow. We understand that the team will land this evening in New Delhi. And this particularly important and significant, with India achieving a significant trade surplus with the US. Remains to be seen how the strategic advantages will actually be used by the negotiating team. Let's move on now. We saw intense activity taking place in the primary markets that put Urban Company in the spotlight as the most subscribed IPO of the past month. But after attracting record demand, all eyes are now turning to how Urban Company has performed since its listing. The big question, can the most subscribed IPO of 2025 deliver on investor hopes? Somit now joining us with a closer look at the numbers and market reaction.
Well, yes, Urban Company remains in focus given the fact that it is one of the most subscribed IPO in the last 1 month. If you look at the subscription data here, the QIB portion was subscribed nearly 147 times. The NI, that is the non-institutional investor portion, was subscribed 78 times, while the retail portion was subscribed close to 41 times, taking the overall subscription number to close to 109 times. And it has received bids worth around 1.13 lakh crore rupees as against the 1,900 crore which was in offer. And this bid amount of 1.13 lakh crore is the highest that we have seen in 2025 at least. But this is not the only company that has received a stellar subscription. There are at least 12 companies in 2025 so far which have seen a subscription number of more than 100 times. Highway Infra, which raised close to 130 crore rupees, saw a subscription number of close to 317 times. Indofarm, Denta Water, Quadrant Future and Stallion India, which raised anywhere between 200 to 290 crore rupees, saw a subscription number of anywhere between 188 to 228 times. Apart from that, there was Standard Glass, Regal Resources, J&G Electronics and Borana Weaves, which raised close to 140 to 410 crore rupees, while the subscription number was anywhere between 150 to 185 times. And apart from that, there was Lakshmi Dental and Aditya Infotech, which raised close to 700 to 1300 crore rupees, and the subscription number was anywhere between 106 to 114 times. But do remember that strong subscription number would not necessarily result into strong gains post-listing. Now, obviously, all the companies that have seen a subscription number of more than 100 times have seen a stellar listing, but gains since then have been limited. In fact, out of the 11 companies, 5 of them have seen negative returns, 2 of them have seen returns of less than 10%, while the remaining 4 have seen some good source of return. Now, if you look at the first graphic here, which is Highway Infra, which was subscribed nearly 317 times, the subscription, the listing day gains was close to 73%, but since then the stock has declined around 28%. Aditya Infotech, 60% listing gain, 32% since listing day. Quadrant Future, 53% listing gain gains that we have seen, but since then the stock has been flat. For GNG Electronics, 41% was the listing gain, but since then the stock is up just 7%. In case of Stalin India, 40% was the listing gain, and since then also the stock has performed good, around 63% return that we have seen. Regal Resources, 29% listing day gain, 19% downtick since then. For Indofarm Equipment and Lakshmi Rental, both of them saw a 29% gain on the listing day, but since then the stock is down around 8 to 44%. Then there is Borana Weaves, which saw a listing day gain of 18%, but since then the stock is down 14%. And for Standard Glass and Denta Water, the listing day gain was close to 16%, and since then the stock have just gained around 12 to 14 odd percent. And given the fact that Urban Company was subscribed nearly 109 times, the grey market premium at least indicates that the listing would be strong in case of Urban Company, northwards of 60% plus gains we could see on the listing day.
Now moving on, the Supreme Court is set to hear Vodafone Idea's plea on September the 19th, challenging the Department of Telecommunications' fresh demand of 9,450 crore rupees in AGR dues. Vodafone Idea has sought a complete recalculation of dues from the pre-FY17 period, arguing that the new demand exceeds the scope of the court's earlier ruling and points out possible duplication in the calculation. Now, the DOT is expected to file its explanation highlighting gaps in accounting. My colleague Aishwarya joining us with the latest updates on this developing story. Aishwarya, how critical is the Supreme Court hearing for Vodafone Idea's financial future, especially given its claims of duplicated dues and the company's ongoing funding challenges?
Well, the fresh AGR dues that have been pressed against Vodafone Idea by the DOT, like you mentioned, over 9,450 crores of additional dues. This is going to be challenged in court, Vodafone Idea against the DOT on September 19, as you rightly mentioned. We has asked for recalculation of dues pre-FY17 period. So this calculation does account to as of this date. Now the 9,450 crore, what does that demand really include? It does have and includes about 2,774 crores as far as the post-merger entity is concerned, which is linked to that. This particular amount is linked to Vodafone as well as the Idea Group post the merger entity was made. Which is around 2018 or so, while the 5,675 crore rupees out of that 9,450 amount pertains to liabilities from the pre-merger Vodafone Group. So this is the breakup of this particular amount that the DOT has slapped as far as Vodafone Idea is concerned. Now, Friday we will see as to what are the developments, what arguments both the side place. We does claim there has been duplication as well as reassessing what dues exactly this whole calculation entails. As far as its past dues are concerned, overall over 83,000 crore in dues, and even earlier the Supreme Court did strike down and dismiss its plea of 45,000 crore of waiver as far as Vodafone Idea's total AGR dues are concerned. So more trouble for Vodafone Idea for sure as far as this new additional AGR dues that has been slapped by DOT. Back to you.
Right, Aishwarya, thanks so much for that. And like you rightly said, we'll continue tracking this case that comes up for hearing on Friday. But let's move on. Today also marks September 15th, the last day to file your income tax return for the financial year 24-25. Now, missing this deadline can lead to penalties, including a late fee and interest charges on unpaid taxes. For more details on the filing process, penalties and how to avoid mistakes, our very own CA Mahima Vajrajani joins us with insights.
There is no extension for filing your ITRs from here on. 15th September is the deadline. So if you've not filed your ITRs till today, go ahead and file them today itself. Now, who does this deadline apply to? Basically to individuals and HUFs who are not subject to tax audit. So individuals, salaried individuals, professionals and business owners where the turnover is less than 1 crore. Now, in terms of just a brief about how quickly you can go ahead and file your income tax, you can just log into the website, use your PAN and your password, navigate to the ITR, select the right assessment year. Of course, this is important. Choose your filing status, choose the right ITR according to what all sources of income you have, review and of course confirm your information, pay your taxes, and then e-verify them within a month. This is important. If you don't e-verify your ITR will be declared as invalid. Now, if you don't file one till 15th September, till 12 a.m. in the night, you will have to pay a penalty of 5,000 rupees if your income exceeds that 5 lakh rupees, and below 5 lakh rupees, the penalty is up to 1,000 rupees. Now, in case you fail to file your ITR by today's deadline, you can file a belated return by paying this penalty plus fees, which is 1% every month till the time you file your ITR. So that's an important one. Now, in case you have made some mistake in the ITR that you've already filed, you can also file a revised ITR, and that deadline should be till next 31st of March. So that is also an important one. Lastly, in terms, and that is updated ITR, so that will be ITRU. So, you know, keep these things in mind, but of course, the most important one is if you haven't filed your ITR yet, go ahead and file it today before 12 a.m. because today is the deadline, and as per CBDT, there is no extension.
You heard Mahima, no extension, and that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Hello and welcome. You're watching KYC. I'm Harsh Saita. Now the travel space is obviously going to get some boost. One is GST, of course, and it's also global travel as well as domestic travel, which is doing fairly well for itself. One stock at the center of all of that is the TBO Tech, and what I want to know with regard to it is that it's made a recent acquisition. It's a North American acquisition and therefore gives it access to North American market. By the way, TBO Tech is more like a platform, B2B platform company, buys inventory from hotels and sells to other businesses. So you'll have other platforms or Make My Trip, etc., where TBO Tech enables sale. So that's the general nature. Now, what does this acquisition give them in terms of market, of course, but also in terms of existing business? And could they have done this organically? So these are the two pieces which I'd want to know first off, right off the bat. The third piece is I'd want to know what this does in terms of immediate top line impact. I spoke about that, gave you a hint of that, but that's broadly the way in which I see this. Also further acquisitions, some color around that is what I'd want to know. And now travel trends, both global as well as India. Mind you, 75+% of TBO Tech's top line comes from global facing businesses. So you want to know whether that part of the business also continues to do well or not. And of course India, because GST and all of the tailwind that we're seeing with regard to hospitality in India, that itself gives the India tilt. Can you double your top line in 3 years? Now this is the question which may or may not get us an answer, but I'm going to try and get us that answer, because they've hinted, they don't generally guide numbers, but they've hinted that they will do 20% plus. So I'd want to know this. The sixth piece is with regard to upsides to margins, because as you scale a tech business, there is an upside, but I want to understand how much is the upside, because at least the guidance doesn't seem to suggest a very, very strong upside, but some upside is starting to appear in that sense. And of course, number 7, competition. If you have the likes of a Skyscanner in the B2C space, and if you're in the B2B space in comparison to that, I'd want to know what are the other competitors doing in this space, and is there a larger opportunity for them, and what it does to therefore pricing as well, right? Because the business model is also unique, and let's straight away get to it. It was incorporated in 2006. This is an overview. It's evolved from a single product air ticketing company into a leading global travel distribution platform. Distributes purely B2B, mind you, not B2C, so it doesn't sell to you. It's a proprietary technology, seamlessly connects travel buyers and suppliers, including agents, by the way. So you have agents listed on this TBO Tech platform, and when they make bookings through the platform, TBO Tech makes money. Now let me try and again go back to the slides. Ensuring streamlined transactions across diverse landscape of global travel. They have around 189,000 registered buyers and 13.2 million plus transactions that they do annually. Let's talk about the products and a wide range in which they now operate in. They started off with only air travel, but look at the whole host of products and services they do now, and of course it is rapidly expanding. Outside of this, it could be cruises, it could be, there you go, so you already have that, cargo, cruises, sightseeing, transfers, all of that is what they currently cover. Now let's talk about the business model. It earns in two possible ways. One is when you make a sale, it makes a commission, so that's one model. The second model is it buys hotel inventory, marks it up, and thereafter sells it. So these are the two models in which they operate, and it's the net commission from what we understand is 3 to 4% from airlines and 6 to 8% from hotels. So your hotel composition is far more than the airline composition. It sells technical software related services, providing a shell website which the customer can use as a B2B hotel service provider by adding their own suppliers. So that's broadly the way in which they do it. Let's look at the platforms, and they'll come up on your screen one by one. That's TBO Academy. It's the learning platform for travel agents and travel trade partners. You can actually go in and learn and thereafter register. It has comprehensive Booker Rewards program exclusively for buyers. Let's talk about, and that's TBO Plus. There's Zamzam and Kizan, focuses on religious travel in Saudi Arabia. There is Paxis, a web and mobile-based platform for corporates. So that's the other angle. There's Travel Partner Solutions, enables the partners such as loyalty programs to sell travel products globally. And then there's Roma Application, e-travel pockets, pocketbook for travel agents and travelers around the world. And mind you, they continue to make acquisitions, right? So they continue to do that, and that obviously adds to the product portfolio or the bouquet as well as the geography. Look at the overseas presence that they have. They have it across the board, Middle East, all over, Brazil, China, and USA, Egypt as well. So some presence in Africa as well, South American presence also there. So that's just the broader outlook of what TBO Tech does. Now let me talk about the metrics, and we'll start off with the first one, the income statement, the balance sheet, the cash flow, and we'll give you the 3-year numbers for these. Thereafter, we will switch over to the return ratios, the shareholding, street cred, valuations, and street coverage. We'll cover all of that with regard to where a TBO Tech is concerned. Mind you, listed in May of 2024, so it's not a very a seasoned listed company, if I can call it that. But it's a 17,000 market cap, 17,000 crore market cap company. So in no way a very, very small company either. So again, just some trivia. Now let's start off with the income statement, and you have it in front of you. 18% top line growth is what they've done. EBITDA has gone up by 120% nearly on a CAGR, 3-year CAGR basis, and profitability has gone up 90%, 3-year CAGR. So you're seeing very strong profit tailwind. Those margins have inched higher, and clearly that's a thumbs up, no complaints with regard to that income statement. I'd be surprised if there is any complaint to that. It's looking like a very, very solid income statement overall. Now let's talk about the balance sheet, and even the balance sheet in terms of the debt is not looking exactly too large. So while we continue to make acquisitions, the borrowing number is just at 136 crore. This is both short-term and long-term combined. You've got equity of around 1,200 crore. Mind you, it's a 17,000 crore market cap company as of today. So you want to also derive the price to book. That's what it is. But it's sitting on pretty much good cash and bank balances. Look at that cash and bank balance. It's looking very, very healthy, and therefore clearly a thumbs up. They need to put that into play, whether through acquisitions or otherwise, and that's likely one of the pieces that we will also get some color on. Let's talk about the cash flow now, and the cash flow numbers will flash on your screen. You've got the cash flow, which has been on an improving trend. If you look at the realization, CFO to EBITDA, quite decent in that sense, no concerns. Now, one piece that you'd want to know is that think about this from a business perspective. You make a booking, you make a payment, and therefore your cash flow will typically be healthy. And TBO Tech will make either the margin or either a fee on that booking, and therefore no reason why there should be a cash flow mismatch. Typically receivables are low, that's just the nature of the business. Also, inventory isn't too high, and therefore you've got a decent kind of run where CFO to EBITDA is concerned, and no concerns with regard to that as well. So we've given that a clear thumbs up. Now let's talk about the fourth metric. We'll talk about return ratios. In terms of the return ratios, again, extremely strong tailwind that we saw. It's come off because they've raised money, and therefore you've seen those return ratios shrink a bit. I'm not sure how much will that shrink as capital gets allocated. Also, you've got a solid pile of cash that they're sitting on. So I'd want to understand as to how this evolves as well. Is there a target number? But broadly looks quite solid on an overall return ratio basis. 53, 43, and even prior to that it was at 18. Of course, FY21 was a muted year for travel. But after that as well, you've seen a resurgence where the return ratio is concerned, and it's doing fairly well for itself. So we've given that a thumbs up as well. No complaints over the last 4 to 5 years. Let's talk now about about the shareholding pattern. And promoters hold around 45% of stake in the company. There's been no major change, but because it's below 50, we've given this a neutral, as we always do. FI holding is decent, but they've seen some amount of selling. DIs have seen very, very strong interest over the last 5 odd quarters. And therefore, you've seen what you've seen in terms of the shareholding pattern. We've given this a neutral broadly because of those factors that are playing out on the shareholding side of things. Let's talk about the street cred. And since May of 24, the stock has not done exactly much, especially since listing. So since listing, if you're holding it, it's not given the best return. But at the same time, if you've bought it at maybe 6 months back, you've got a very solid return for it. So we've given this again a neutral because it's a fairly range-bound kind of return if you're looking at it from a 1.5 year perspective. But from a 6 to 8 month perspective, it's been quite strong in that sense. So that's broadly the take on the street cred. Let's talk about the valuations now. And when you stack it up against some of the B2C players in the same industry, in the same space, you'll see that it's obviously valued at a much, much richer multiple. But that's also because it's tech-based, one. Second, it's multi-country, so there's no focused geography there, and therefore that gives it a more broad-based risk profile. And third is because it's decently fast growing, which all the others also broadly are. It's not like some of the others are not. Of course, a couple of those three have some issues or concerns in themselves, but outside of that, it's a fairly good mix where travel is concerned to grow at a 20% odd kind of growth clip. So broadly, that's the take with regard to the price to earnings, but it's certainly expensive, and therefore we've given that a thumbs down. That's the only thumbs down that we have at this point. Let's talk about the street coverage and wrap it all up. In terms of the street coverage, there's 7 buy calls, 1 hold call, no sell calls. The average upside is 15%. So you've got a decent runway, it seems, at least that's what analysts seem to suggest. There's a decent runway overall in terms of the average 12-month upside as per analysts on Bloomberg. Let's talk about all of the ratings. Let's stack them up and they'll come on your screen in just a minute. There you go. The income statement, can we rewind the slide, please? So the income statement, again, you've seen very strong growth here, so clear thumbs up. The balance sheet, good cash balances, we spoke about that. We also spoke about the fact that there's very low to no debt. Cash flow, well, it's a clear thumbs up. We spoke about the way in which they generate cash and therefore typically should not be a concern. Return ratios were solid, 18% at FY22, currently sitting at 27%. Very good for an Indian company. Shareholding pattern is a neutral because of all the changes that have happened. Hopefully there's stability there. Street cred, you've again seen over the last year or so, the stock fluctuate, but at the same time not give very, very good returns, and therefore may be some bit of pressure piling on to holders of the stock. Valuations is a thumbs down because it's expensive, 80 times. I'd want to know whether very, very strong growth can follow the kind of valuation it commands. And then you have street coverage where there's a 15% upside, which doesn't look bad at all at a 78 times earnings. That gives TBO Tech a 6 out of 8 on our KYC ratings. And it's a very, very strong rating for a company in any case. Let's go across. We have joining us Ankush Nijawan, who's the co-founder, joint MD at TBO Tech. We also have Gaurav Bhatnagar, who's the co-founder, joint MD at TBO Tech, joining us. Gaurav, let me start with you. On the acquisition first, you've obviously acquired Classic Vacations. It gives you a footprint into North America. Give us a perspective. Could this not have been done organically at this price? And what does it do in terms of a lever for you for growth?
Thanks. Firstly, thanks for having us over. And also my compliments on the detailed analysis you've done on the business.
Thank you, Gaurav.
It's very impressive.
Thank you.
But look, it's a fair question to ask that could this be done organically or not? And a couple of things when we look at very mature markets like North America, and look at the example of the company that we did acquire, Classic Vacations. This company has been in existence for nearly 50 years. So when you go to developed countries, you realize that the incumbent ecosystem is very mature and it is very stable. So while we have been in the market ourselves and we've been building organically and will continue to do that, right? So the TPO brand will continue to exist along with the classic brand. But if you want to have a seat on the table, it's likely going to come by acquiring something reputed in the market. You could always argue that maybe another 3 to 5 years, you could build something equally large. But when we have access to capital, when there is a target available, and when we see clear synergies, it does make sense to accelerate that journey. Keeping in mind that North America is the largest luxury travel market, and because TBO focuses on the premium outbound traveler, for us to not be in that market would cause significant struggles even with acquiring more supply or on the overall growth. So yes, this could potentially be done organically over a 3 to 5 year period. But if a good asset is available and we have the money for it, our sense was we should go ahead and do it.
Okay, Gaurav, an extension to that question. What does it do to your top line pretty much immediately? How much of the North American market do you acquire as a result of this 1,000-odd crore rupees that you've spent? And second piece is it margin accretive for you or not?
Okay. So in terms of GMV, this business adds on a full year basis, if you are to look at the prior 12 months, this business adds a little less than about $500 million of GMV. Which would, just from a perspective of what we do with rest of the country regions, it would make it probably the second largest region for us after Europe for hotel sales. So it's substantial for us from that perspective. The margin profile of this business is slightly different from the organic business, and I'll spend a couple of minutes explaining that. This business operates at a fairly high 22% take rate. The reason that take rate is so high is because the business operates on a pure commissionable model where half of the take rate actually goes back to the travel agents. So if you were to look at it from a perspective of how we look at our margins, the margin is closer to half of it. So maybe about 11.5%, which is still significantly higher than our organic margins. So from a gross margin perspective, the business is accretive. From a perspective of EBITDA to revenue conversion, this business is slightly dilutive. If I have to look from a GP to EBITDA, and there are synergies possible over there, by the way. So there are cost synergies as well as there are top line synergies possible to bring it at par with what our overall numbers are. If I was to look at it as EBITDA to percentage of GTV, which a lot of travel businesses look at, so maturing travel businesses would look at the metric of how much of GTV is converting into EBITDA. And there it is clearly accretive because it is sitting at more than 2% EBITDA to GTV. For the overall TBO business, it is about 1% or probably a little bit lesser than 1%. So from that perspective, our view is that it adds significantly to our financials. The other bit I must add is the cash profile of the business. The business sits on roughly 17% of annual GTV as cash in any point of time because North America books much in advance. So it's extremely negative working capital. When we acquire the business, we get more than $80 million of cash in its balance sheet. So overall, our perspective is that even without realizing the synergies, when you combine the two businesses together, our view is that it improves the overall balance sheet as well as the P&L.
Okay. Ankush, I'll come to you in one more minute. Sorry, you'll have to bear with me because I want to ask one more question on this acquisition. Gaurav, what I haven't been able to cover as part of my presentation is what's the valuation multiple that you've bought this business at? Give us the cash component. Of course, you've given us that, but give us net of cash. How does it stack up just broadly? Because we've described how you trade in terms of a multiple. So just trying to understand whether it's accretive for you or not. And that'll give investors also a perspective.
No, I think that's a very fair question. Look, we are paying $125 million, around about $125 million, subject to some adjustments, for a business that for the trailing 12 months is probably going to generate a little more than $11 million of EBITDA. So that's the multiple. It's a little more than 11 times EBITDA. Which we believe is a fair value to pay. I don't think we are underpaying or we are getting, we are overpaying. So I think it's about the right to play, right multiple to pay.
Times EBITDA. Okay, point taken. Ankush, let me come to you. And let me expand the question a little bit. What does this do for you globally, and what are your aspirations from a global perspective? What are geographies, targets? Where is it that are pockets that you all are targeting, which are low-hanging fruit, if I can call it?
So, good afternoon, Harsh.
Good afternoon.
So for us, I think our vision is obviously to be a leading global distribution platform. And I think as we are moving forward, the approach is absolutely for us, not any geographic centric or agnostic. But the fact is certain markets for us are today matured, such as Middle East and India. But I think we will be focusing a lot and doubling down in a lot of our sales activity, especially in Europe, and Latin America, followed by Asia Pacific. But obviously now, as Gaurav mentioned, US becomes a very, very important market, and being the number one travel market in the world, I think we are very well placed now with classifications. And for us, I think the overall theme of outbound travel is beautifully growing in both in all developed as well as developing economies. So I think as TBO, we are winning somewhere already, and we will win, as we continue to move forward across the world in meaningful travel economies.
Okay, point taken. Also, give us a lens into how many acquisitions are you targeting? Is there a geography? Is there a target market which you would like to venture in immediately, FY26? Because you still continue to sit on cash, Ankush.
Fair question, Harsh, but the fact is, this acquisition, what we did last week, is anyway a very large acquisition.
Sure.
Or at least for the time being, short and medium term, I think let's settle down and ensure that we integrate as we plan, setting up the integration with TBO and Classic in America. And then obviously start looking at other opportunities, and as I said, we are not geographic agnostic. We are open to all meaningful companies which might be adding a lot of value to the core theme of TBO Tech. But I think for the time being,
बहुत फायदा होगा. सरकार ने भागलपुर, दुमका, रामपुर हाट रेल लाइन के दोहरीकरण को भी मंजूरी दे दी है. साथियों, देश के विकास के लिए बिहार का विकास जरूरी है, और बिहार के विकास के लिए पूर्णिया और सीमांचल का विकास जरूरी है. आरजेडी और कांग्रेस की सरकारों के कुशासन का बहुत बड़ा नुकसान इसी क्षेत्र को उठाना पड़ा है. लेकिन अब एनडीए सरकार स्थिति बदल रही है. अब ये क्षेत्र विकास के फोकस में है. साथियों, बिजली के क्षेत्र में भी बिहार को आत्मनिर्भर बनाने का काम चल रहा है. यहां भागलपुर की पीरपैंती में 2400 मेगावाट के थर्मल पावर प्रोजेक्ट का शिलान्यास किया गया है. साथियों, बिहार की डबल इंजन की सरकार यहां के किसानों और पशुपालकों की आय बढ़ाने के लिए प्रतिबद्ध है. आज कोसी मेची इंट्रा स्टेट रिवर लिंक प्रोजेक्ट के पहले फेज का शिलान्यास भी हुआ है. इसे ईस्टर्न कोसी मैन कैनाल का विस्तार होगा. इसे लाखों हेक्टेयर भूमि की सिंचाई में सुविधा होगी और बाढ़ की चुनौती से निपटने में भी आसानी होगी. साथियों, बिहार के किसानों के पास आय का एक साधन मखाने की खेती भी रहा है. लेकिन पिछली सरकारों ने मखाने की भी उपेक्षा की और मखाना किसानों की भी उपेक्षा की. और मैं दावे से कहता हूं, ये जो आजकल यहां आकर के चक्कर काटते हैं ना, उन्होंने मेरे आने से पहले मखाना का नाम भी नहीं सुना होगा. ये हमारी सरकार है जिसने मखाना को प्राथमिकता दी है. साथियों, मैंने बिहार के आप लोगों से राष्ट्रीय मखाना बोर्ड के गठन का वायदा किया था. केंद्र सरकार ने कल ही राष्ट्रीय मखाना बोर्ड की स्थापना के लिए नोटिफिकेशन जारी कर दिया है. मखाना किसानों को मखाने की अच्छी कीमत मिले, टेक्नोलॉजी का इस्तेमाल बढ़ाया जाएगा. राष्ट्रीय मखाना बोर्ड इसके लिए निरंतर काम करेगा. मखाना सेक्टर के विकास के लिए हमारी सरकार ने करीब 550 करोड़ रुपए की योजना को मंजूर किया. साथियों, बिहार के विकास की ये गति, बिहार की प्रगति कुछ लोगों को रास नहीं आ रही है. जिन लोगों ने दशकों तक बिहार का शोषण किया, इस मिट्टी को धोखा दिया, आज वो ये मानने को तैयारी नहीं कि बिहार भी नए कीर्तिमान बना सकता है. आप देखिए, बिहार के हर क्षेत्र में हजारों करोड़ रुपए के डेवलपमेंट प्रोजेक्ट पर काम चल रहा है। बिहार के राजगीर में हॉकी का एशिया कप जैसा बड़ा आयोजन हुआ। ओटा सिमरिया पुल जैसे ऐतिहासिक निर्माण कार्य बिहार में हुए। मेड इन बिहार रेल इंजन अफ्रीका तक एक्सपोर्ट होकर जा रहा है, लेकिन ये सब कांग्रेस और आरजेडी वालों को पच नहीं रहा है। बिहार जब भी आगे बढ़ता है, ये लोग बिहार का अपमान करने में जुट जाते हैं। अभी आपने देखा होगा, आरजेडी की सहयोगी कांग्रेस पार्टी सोशल मीडिया पर बिहार की तुलना बीड़ी से कर रही है। इन लोगों को बिहार से इतनी नफरत है, इन लोगों ने घोटाले और भ्रष्टाचार करके बिहार की साख को बहुत नुकसान पहुंचाया। अब बिहार को विकास करते देखकर कांग्रेस आरजेडी ने फिर बिहार को बदनाम करने की ठान ली है। भाइयों बहनों, ऐसी मानसिकता वाले लोग कभी बिहार का भला नहीं कर सकते। जिन लोगों को अपनी तिजोरी भरने की चिंता रही हो, वो गरीब के घर की चिंता क्यों करें? कांग्रेस के एक प्रधानमंत्री ने माना था कि कांग्रेस सरकार 100 पैसा भेजती है, 100 रुपये, तो 85 पैसा बीच में ही लूट जाता है। आप मुझे बताइए, कांग्रेस आरजेडी की सरकार में सीधे गरीब के खाते में पैसे आ पाते थे। लालटेन जला करके वो पंजा उस पैसों को हाथ मारता था और 85 पैसे मार लेते थे। कोरोना के बाद से ही हर गरीब को मुफ्त राशन मिल रहा है। क्या कांग्रेस आरजेडी की सरकार में आपको मुफ्त अनाज मिल पाता क्या? आज आयुष्मान योजना की वजह से हर गरीब को 5 लाख रुपए तक मुफ्त इलाज की सुविधा है। जिन लोगों ने आपके लिए अस्पताल तक नहीं बनवाए, वो आपको मुफ्त इलाज की सुविधा, मैं आपसे पूछना चाहता हूं, क्या ये मुफ्त इलाज की सुविधा दे पाते क्या? आपकी चिंता कर सकते क्या? साथियों, कांग्रेस और आरजेडी ने न केवल बिहार के सम्मान को खतरा है, बल्कि बिहार की पहचान को भी खतरा है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
watching Your Money Matters. I'm Mahima Vachrajani here at NDTV Profit. Now, today the very important thing to keep in mind is about your income tax returns. Today is the deadline to file your income tax returns, and this is applicable to individuals and HUFs who are not subject to tax audit. So keep that in mind. So if you are an individual or an HUF who is not subject to tax audit, today 12 a.m. will be the last deadline to file your income tax returns. Now, with regards to how easy it is to file your ITR, of course, you have to go to the income tax portal using your PAN and password. You log in, you navigate through the ITR filing section, select the assessment year, choose the filing status, pick the right ITR form. This is very important. Keep that in mind. If you're confused, always go to a professional. Review and confirm your information. If there's a tax due, pay that, or if there is a refund, then the next course of action for you should be e-verify your return. This is very important. If you don't e-verify your return will be considered as invalid. So do keep in mind that after filing your return, you've e-verified it. Now, what happens if you miss the deadline? Of course, a belated return can be filed with a penalty and a fee as well going forward. And if you've made any mistakes in ITR that you've already filed, you can also file an updated one. Now, with regards to this entire conversation, to discuss as to what should one keep in mind before filing their ITR, we're joined by Amarpal Chadha, who's a tax partner at EVA India, joining us now. Mr. Chadha, hi. Pleasure speaking with you. My first question to you is that, the expectation now for sure is that CBDT is not going to extend the deadline for filing your taxes. I'll start with a very basic question. What are the key things to keep in mind as an individual, a salaried individual, before filing your taxes?
Sure. And Mahima, just before I start, I think you perfectly captured the whole system of normal time filing, belated filing, and updated return. I think that's bare minimum that everybody should know, that what are the clauses. In terms of what you should be careful, see, typically people say just look at the Form 26AS or look at the AIS. If you are a employee who's earning salary, look at the Form 16. Those are basic documents. If you have rental income, look at your lease deed, look at what kind of income or TDS has been deducted. If you have capital gains, look at the documentation underlying. I think I'll add one more layer to that, which would really help the taxpayers, is to look at your bank statement. Look at all the credits, and I'm not worried about debits. I'm sure you have enough control on your debits, but all income credits into your bank account, every credit should have an explanation. It's very difficult to sit at the end of the year, and now we are 6 months down the year of the closure also. So going back 15, 18 months and remembering, but I think that's the basic thing. If you can explain every credit in your return, whether that's an exempt income, whether it's a gift from somebody, whether it's just a transfer or a refund of your Amazon purchase, you should know every credit in your bank statement. And a simple tip to do that is have an Excel sheet and just keep a record of at least credits above a certain amount into your bank statement. I've seen people struggling with that one once the notice comes. I'm a longer answer, but I just wanted to bring that perspective.
No, and that is very important, Mr. Chadha, because, when I was also filing my ITR, when I got to the AIS portal, I realized that as to very small amounts of TDS were deducted on, maybe income received from REITs or something like that. But it is very important to have that check as well, right? So that's a very important piece of information that Mr. Chadha just gave. Apart from that, I think there are very common mistakes that a person generally makes while filing his or her ITR if they're filing by themselves. What are these mistakes that you generally see, and how can one keep in mind so that they don't get any notices?
Yeah, I think 2-3 very simple ones. One, if you have stock options and if you are working in an MNC, those stock options or shares of a foreign company are foreign assets, which require a separate disclosure. There is a requirement to disclose transactions which are done overseas. So all of that, there is also now, if you know, there is a deduction on tax collection at source when you spend overseas. So look at not only income. I think that's generally what I see. People forget about other things that are required to be reported in the return. The second aspect could be if you are married and you have joint income, joint accounts, who's disclosing what? I've seen friends who have properties in both names. Both have paid some money, but one is offering the income to tax because one is in the lower tax slab. All this is like recipe to get into trouble. So my suggestion is to look at each of your income streams, see whose hand it should be taxed in. And the third could be also around clubbing of income. So if you have children, they are earning income, you've opened their bank accounts, and you're not paying tax on that, all of that can get you in trouble. You need to track the bank accounts. Obviously, there is a threshold limit below which all income is not taxable. But the fact that there are clubbing provisions for transfer of income to children, to wife, to other relatives, you have to be careful of all of that. So hence, don't simply say I have income that's coming in my Form 26AS, in my AIS, and I'll stick to it. I know, Mahima, we all love it when we log into the income tax website, see the income there, just click file the return. That's the easiest thing to do, isn't it?
Absolutely, absolutely. And, keeping that in mind, the other aspect that, I was reading a headline recently that around 1,300 crore worth of fake donation deductions were detected by the IT department. So I think your message to the viewers will be very important, because there are a lot of salaried individuals out there who are going ahead and filing deductions under that 80GG section when they've actually not made the donation, or probably not in the right channel as well. Your view with regards to this?
Yeah, so any exemption, whether it's donation, whether it's an HRA, which is actually not being paid, but just being transferred to a parent, there is no lease deed behind it. All of those, I would say, first, principally, you should not be doing it. If you have been doing it in the past, I think time is over. There is enough systems, technology, databases available now to track end utilization of the funds, and whether the income is being offered to tax by the other recipient of those amounts or not, through tax returns, through the interlock with the banks, reporting transactions. So for your own safety, I would say just stop any of this that you see. I feel if you've done that in the past years, make a fresh beginning. Just, it's not possible, one, principally, and second, by system now to do any of these things. I would encourage you not to go this path, because it will lead you to a lot of anxiety and trouble for future.
And correct me if I'm wrong here. Now the Income Tax Department also has softwares which detect these kind of, fake deductions claimed or mistakes made. Is that correct?
You are correct. And also, Mahima, you and me may know of some softwares which are available. I'm sure if somebody's checking, they would have some tricks up the sleeve too. So
absolutely, that's correct. The other aspect, Mr. Chadda, is because the Gen Z today, or the new generation, is going ahead and investing or trading in the digital assets, cryptocurrencies per se. Anything that you would want to tell them with regards to what should be kept in mind while filing your ITRs on gains which have been made on cryptocurrency or trading of digital assets?
I think there are specific columns for disclosure of virtual digital assets. Please use those. Please report the right income. Also, sometimes it's very difficult to even know whether you have income or not. So please look at your statement at the year end and see, like your stock statement, see if you've made any switches, if you've sold any of them, converted to others, and see the net gains. It all needs to be reported, no exceptions. Anyway, virtual digital assets is an evolving field with our tax laws also. So reporting considerations, and anyway, at the first stage, investing in a crypto is a personal call to be made with knowledge. And I think there are enough measures being taken to educate investors on the whole virtual digital assets. So keep all of that in mind. And if you are dealing with crypto or any virtual such assets, there are more in the pipeline, be careful that there is a reporting requirement. You may not make enough gains, but if you miss reporting them, you will end up paying interest, taxes, also have some level of penalties coming your way, and the hassle of reporting, replying back. So please weigh in all of these decisions when you make any investment.
Okay. Mr. Chadda, one last question to you with regards to where penalties stand. If one fails to file their ITR today, what is the penalty that we're looking at? And of course, timelines for a belated return.
Yeah, so the timeline now, if you don't do it today, you can do it till 31st December 2025. Okay. So you have additional months to do it. If your income is above 5 lakhs, the fee that is you need to pay is 5,000 rupees. So it's only 5,000 rupees if that amount seems okay to you. If your income is below 5 lakhs, then it is 1,000 rupees. So you still have time. It's not that this is the death knell and after this you can't revise your return or you can't file a belated. You can always file a belated. You will also get an opportunity to update a return, but there the plenties are much higher because those are computed based on tax payable.
Okay.
So if you forget to file and you use the updated window, which is available for next 2 years from the end of the assessment year, but those come with a huge penalty. So my suggestion would be it's either now, today, or take a call of 5,000 or 1,000 rupees and file before 31st December.
And there are certain caveats as well, right? If you file a belated returns, you will not be able to do certain things that you were allowed to do in the timeline specifically. What are those items?
Typically, it's about losses because the losses cannot be carried forward. Only there are certain exceptions like a house property loss which you can carry forward, but other losses lapse. So if you are planning to file a loss return, you have a huge capital gains loss or you sold a property, you're sitting on a big loss, all of those you should do before 15 September. See, anyway, Mahima, all this discussion about last date, we knew from April 1 we have to file this. Isn't it? Yes, there are technology problems. There are other, some people have also told that due to the current situation on rains and floods in certain areas, there should be exceptions created. But again, I think the onus lies on the individual. We cannot for sure say that nobody is in a situation that they can't file a return. There will always be exceptions.
Absolutely, Mr. Chadha. And that sums it up well. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us those insights with regards to where ITR is concerned.
You're most welcome, Mahima. Thank you.
Okay, viewers, the other topic that we're going to discuss today on Your Money Matters is going to be about Mirae Asset NYSE FANG Plus ETF. Now, this is an interesting one because if you go ahead and invest in this ETF, it is going to give you exposure to global markets. And to discuss about this particular ETF and as to how you should strategize your investment and maybe use this ETF to probably enter into global markets or maybe diversify your portfolio, we are joined by Rishabh Desai, who's the founder of Rupee with Rishabh Investment Services, joining us now. Rishabh, hi, always a pleasure speaking with you. My first question to you is, let's give viewer a perspective as to what this ETF is exactly. What are the kind of companies that will fall under this, and how much of a global exposure will an investor sitting in India get through this?
Hi, Mahima. First of all, thanks so much for having me on the show. As you correctly pointed out that this particular product, invests in the overseas market, predominantly the US market. Now, this is a passive product which gives investors international exposure in the US market. This is number one. Number two, this product mostly invests in the technology and internet companies. Number three, this product is a very concentrated product in which consists of only 10 companies with equal allocation. So this product is not going to be a well diversified like a flexi cap fund or a multi-cap fund which consists of probably say 30, 40, 50 stocks or so. This product is going to be very concentrated and only limited to 10 companies itself. Now, the beauty of this product is since it's a passive product, it has a back-tested, fantastic track record and has managed to deliver superior returns over the longer period of time. Now, coming to the constituents of the underlying portfolio, now this particular product invests in giant technology and internet companies like Netflix, Alphabet, Amazon, Meta, Microsoft, Nvidia, Apple, so on and so forth. So this particular product is going to invest in not only like international companies which is based in US, but these companies have massive global presence in different continents and different countries throughout the world.
Okay. Rishabh, you were talking about the percentage of exposure in different companies. That is as of what date?
This is as of 29th of August,
okay.
2025.
29th of August, 2025. Okay. Okay. Rishabh, in terms of, this particular fund, it mainly focuses on IT companies, right? So the concentration is very high when it comes to your exposure in IT companies that are situated in the US. Considering that and keeping that in mind, do you think that more than, let's say, 5% of your portfolio should be allocated to something like this fund?
Mahima, first of all, let's understand that which kind of investors would be suitable for this product.
Right.
Now, in my humble opinion, see, aggressive investors, long-term investors who are looking to take some kind of global exposure, who understands the global market, I think that is the kind of investors one should be looking at to invest in this kind of product. Now, someone who does not have that much of patience or that much of understanding of the international markets, because see, one needs to also understand, say, if you buy this product at the wrong time at the wrong price, then of course it's not going to be fruitful for you in terms of returns. So I feel if one is investing in this product needs to be really timed well, so that investor can get the returns what they are wanting. Investors can get the double digit superior risk adjusted returns. Okay, so I think investors looking to take global exposure, one can look at this product, because this product is investing in only 10 technology and internet companies, and which has proven to be fantastic in terms of delivering returns over the period of 3, 5 and 10 years.
Okay, all right. With regards to, just want to understand that if somebody is going ahead and buying this ETF, first of all, let's help them understand as to how they can go ahead and buy this. It should be, of course, as easy as just going on a brokerage platform and buying it. But considering that, should this be a one-time investment that you make in this ETF, or would you suggest an SIP? What should be the course of action?
Mahima, first of all, see, unfortunately, this particular product is not taking fresh investments. See, when you go and buy an ETF, you can always buy the ETF on the secondary market, which is traded on the National Stock Exchange. Okay, but in terms of going and buying it from the mutual fund house directly, it's not allowing fresh investments, because RBI has capped or restricted investments going abroad, and unfortunately the limit is completely exhausted in most of the funds, most of the overseas and international funds in the mutual fund space. Now, if someone wants to buy this product, then the only way to buy the ETF is to go to the stock exchange online and buy it. Now, the reason why I'm not recommending investors to buy this product right now, there are two specific reasons why. See, one is that this ETF is trading at a very high premium to its INAV. Okay, it's trading actually 20% premium to its current value, what it actually should be. Okay, and number two, the valuations of all of these companies, all of these 10 companies are trading very high. So if you actually go to see from a returns point of view, as on 29th of August 2025, see, 1 year returns of this particular product has been around 67%. 2-year returns has been 58% CAGR. 1 year is absolute. 2 year is CAGR, which is 58%, and 3-year returns, again, CAGR returns is 53%. So 53% CAGR is mind-boggling, Mahima. So number one is that the ETF is trading at 20% premium, and number two, the valuations of the underlying companies are also trading at very high premium. So these are the two specific reasons why I feel that investors should not go out and venture in this product, at least at this point of time.
Yeah, and okay, so apart from this then, if one wants to have an exposure to the global markets, what should be the course of action for that particular investor?
See, at least at this point of time, just stay patient, just stay put, right? When the valuations turn reasonable and when the premiums come down, I think that is the right time to get into it. See, if one is doing an SIP, that's different. There are very few AMCs who would still be taking SIPs. But in terms of lump sum investment, I am definitely not encouraging investors to invest lump sum money in the US market. So just stay put. When you see a good dip, in this product, when you see valuations correcting, premiums coming down, that is the right time to venture in this product in the US market. And again, coming to your the point that how much should investors take exposure in the global markets or in the US markets, I think anywhere between 10 to 25% of allocation in one's core portfolio should be very healthy.
Okay, and overall, considering that this is a global fund, any difference in terms of tax implication, if you're aware?
No, the taxation would be as similar as what it is in India. long-term and short-term capital gain tax remains the same. There is no special taxation for international funds.
And in terms of we talked about this as to how this is concentrated in one particular sector only. Given a chance, would you go ahead and invest in something like a Miraset right now, or maybe play the IT theme and go for something that has more concentration in Indian IT firms, considering the Fed rate also coming in? Fed rate cut is expected this week.
Okay, so I usually don't recommend investors to venture into sectorial funds, especially in India. I think if someone wants to take IT bets in India, then going via flexi cap funds, multi-cap funds, focus funds, or any other mutual funds via mid-cap, small caps, I think that is the wise thing to do, and let the fund manager do its job of how much exposure he or she wants to take into IT at this point of time. But, because these are giant companies, especially the FANG Plus portfolio is a very mouth-watering portfolio, and the earnings have also been phenomenal. The returns, there is no doubt, has been phenomenal, but the earnings have also been phenomenal of these companies. So I feel I'm very comfortable taking this kind of thematic bet, because it goes out of the geography, out of the Indian geography, and is venturing in the US markets. See, I tell this to all of my clients that some global exposure is very important. See, when we talk about diversification, it has to be from a holistic point of view. So it has to be from a fund level, it has to be at a category level, diversification has to be at an asset allocation level, diversification has to be from an AMC level, style level, and at the same time, diversification also needs to be from a geographical level as well. So I think US has been very consistent in delivering returns, and the returns what I just spoke about, I mean, like 1 year returns has been 67, and the 3 year CAGR returns has been 53% CAGR. So I mean, the track record is definitely proven. These are giant companies having global presence in different continents and different countries. So I'm definitely comfortable venturing in this product, but at the right price and at the right time.
Hey, Rishabh, thank you so much for giving us those insights. And of course, always, thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much, Mahima.
All right, the other piece, that you as a retail investor should keep in mind is how buybacks are being taxed, especially because Infosys came out with a buyback of 18,000 crores at a 19% premium. It is very important to understand that if you are holding Infosys in your portfolio and if you are participating in the buyback, what will be the tax implications on you? Harsh joins us with more details on that. Harsh?
The taxability of this is going to hold critical fort if you are an Infosys shareholder and going to opt for buyback. So you really do want to listen to this one. Let's talk about what the law says. Buyback proceeds are taxed as dividend income, not as capital gains. And dividend income, so basically the full 1,800 rupees will be taxed as dividend income in your hands. That's the first piece of the law. Company will deduct a 10% of the buyback value as tax deducted at source, and no other tax will be paid by the company. So company is completely exempt. They'll pay out the 1,800, but out of that 180 will be deducted as TDS, and thereafter 1620 will be paid out to the shareholder. 180 as TDS will reflect in your account. The tax paid by shareholder at income tax slab rate. So your dividend income, which is coming in at 1,800, will be taxed at a slab rate. It could be 0, it could be 10, it could be 20, 30, whatever your slab rate is. That's the key component that you need to find out before you opt for this buyback offer. Capital loss, though, of course, because you've had a purchase price built into the shares that you've opted to give out for buyback, the capital loss can only be set off against other capital gains and not dividend. So you actually have to have gains to ensure that that loss gets offset. That's something you want to understand. Let's break it down into easier numbers. 1,800 is your offer price for buyback. TDS deducted will be 180, which will reflect in your account, which is the shareholder's account. The net payout will be 1,620 rupees in your account. Now let's talk a little bit about what the tax could be. If it's a 20%, it's 360 rupees on the 1820, and 30%, it's 540 on the 1820. That brings the gains to lesser, or rather the accrued number of profit will likely be lower for some persons if at all you sell it even at market, that could be slightly more sensible as well for some. So you want to take note of that part. Cost of shares to be treated as capital loss, I did mention that, so that's all. And capital loss can be set off, can reduce tax only if you have other capital gains. I want to reiterate that. Last off, most relevant pieces. Shareholder falling in the higher slab rates are disincentivized from opting for this buyback. You still want to do the math with your chartered accountant, but and therefore will be subjected to higher taxation on the full 1800 rupees upfront. But again, if you have capital gains, that may vary, and cost is to be treated as capital loss and set off against capital gains. That will remain common even for shareholders in a lower income tax slab rate, but they are incentivized because you will have a far lower rate which could be payable on your total cumulative amount coming in of 1800 rupees. But you will also get a deduction likely if you have capital gains. So there is of course an incentivization for some of the lower income tax slab rates shareholders, but a disincentivization for some of the higher slab rate shareholders.
All right, Harsh, thank you so much for sharing with us this interesting piece as to how buybacks are in fact taxed. Very helpful to a retail investor for sure. But with that, we're completely out of time on this edition of Your Money Matters. But do stay tuned for more news and updates on the other side.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
My guest today is called the Valuation Guru, and for a reason. I'm speaking to someone who dominates timelines for anyone who's interested in understanding the philosophy of investment. Ashwath Damodaran, thank you so much for speaking to us here at NDTV.
Thank you for having me.
Absolute pleasure to speak with you at a time when everyone in the world, in some way or the other, is trying to figure out what exactly is going on. You wake up to news cycles where everything is all over the place.
I mean, it is a seismic shift. It's a shift from a world that has existed for almost 80 years, right? The post-Second World War world is shifting, and it's been shifting for a while. I think we attribute too much of this to Donald Trump. It's a shift that's been happening since 2008. What held the world together was this global economic order has been under stress. And I think this year you're starting to see that stress play out as actual breaks in the model. I'm not sure what replaces it, but it's a time of uncertainty because you don't know what's coming because everything we do is structured in what we already know. For that, we look back at the last century.
Yeah, since you've jumped straight to the big T, let's dive into it. Over the last couple of days and recently, actually, Trump has posted about India and Russia going into the dark embrace of China. May they all prosper, etc. From an Indian perspective, in the last few months, we've gone from a situation where we thought that a tariff deal would be a shoo-in. Yeah. Definitely will be the first to get there, to a situation where it's become rather bleak. How have you seen that whole wave?
Well, I've watched Donald Trump now through his first presidential for the 4 years and now. And I think the word I would use to describe him is absolutely unpredictable. Right? Normally you can look at a person's history and look at their mindset and say, this is what they're probably going to do. And I think, Donald Trump, it's almost impossible to figure out what that next step is. I mean, he will tell you that is his art of the deal because he's negotiating with people who are so uncertain about what he's going to do next. He gets better deals for himself. He does keep people off balance. I would not want to be negotiating with Donald Trump because I have no idea where he's coming from the next minute. So I think what you're seeing, though, is what he used to do in real estate play out on the global face, right? And the real estate was another real estate person who probably felt the brunt of this uncertainty. Now you have, leaders of nations feeling the effects of somebody who's completely unpredictable.
You excel at analyzing companies, valuations, stocks. If Trump were a stock, where do you think this is going?
I would say he would, it's a high risk stock. It's an extremely volatile stock. It's a stock where it's a Tesla on a global stage because Elon Musk has many of the same things, right? 2 days ago, I was listening to Elon say that Tesla is really a robotics company. And I said, really? I thought it was an electric car company. But in a sense, he's been able to carry investors with him because he has enough people who seem to say, okay, you're a robotics company. Trump, in a sense, does that on a national stage. He has a group of people who essentially say, okay, that's where you're going. I'll go with you. So if he were a stock, he's a stock with a very strong following. It's like a very loyal customer base, but I have no idea where he's going. He's going to take them wherever he wants to take them, and that's going to be incredibly unpredictable.
So a high-risk stock like Tesla. I love this.
High-risk stock where I don't know what business you're in. You keep changing your mind. Today you're a retail company. Tomorrow you're a manufacturing company because you're effectively whatever you woke up that morning and said you were going to be.
Yeah. So I love this. So I'm going to press on this a little more. If Xi Jinping were a stock, because we're going to talk about Trump and then the Rick of BRICS. Right, yeah. So if Xi Jinping were a stock,
he'd be a very predictable stock in many ways, except if you did things that really get in his way as a company. I mean, I have a sense that he's pretty ruthless about the end game and he will play that end game. And I think that if he were a stock, would be more predictable than Trump. But if you got on his wrong side, God help you, right? He has his own shadows that come with it. I mean, I remember in 2019, we thought the big Chinese tech companies were going to coast, right? Because of the government as their ally. And then one day Beijing called in, Tencent and Alibaba and said, you guys are too big. And he managed to cut the knees out from the big tech companies because they went from being allies to adversaries essentially overnight. So if he were a stock, if I were on his right side, I'm worrying about, will I end up on the other side? Will I be like Tencent in 2019? So I wouldn't be sleeping on my job because I'd worry about that shift coming. So he's predictable for the most part, unless you're doing something that's not in his larger mission. And if you're doing something that doesn't fit in, you're probably in danger.
So any sort of parallel you can draw with a company?
Kind of company. When I value Amazon, the analogy I draw is the story I tell is it's the Thanos company. I'm an Avengers fan, and Amazon is like Thanos. It's going to get you, the click of the fingers. For me, that's what comes to mind when I think of China collectively and the leadership there. This is a very, 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 they have a mission and they're going to get there, and nothing is going to get in their way.
Wow. What about Mr. Putin?
That's an interesting one. Russia doesn't have the power it used to have once, except for its military. But Putin is a survivor, right? He's clearly in Russia. The way you get to the top and stay to the top requires that you cut down your enemies early on. So if he were a stock, who would he be? Maybe some kind of a Chinese martial arts. I'd say he's very good at kind of keeping his enemies close and knocking them down. So, in many ways, he's easier to read because he doesn't hide behind, behind things that make you look polite. Like China, I think, puts out this, we care about the rest of the world. And I think Russia is very clear. We care about Russia. We're going to do whatever we can, even if the rest of the world disagrees. So, a tough one call.
And of course, what about Modi?
It's interesting. He's the lead seller of the India story, and he's done a pretty good job of selling the India story.
So, any stock in mind?
The stock in mind, it would have to be a growth story. So it'd have to be Palantir, maybe. So you're selling a growth story. The story has heft, but lots of things have to. So it's still early in the game. So unlike the Amazons of the world where the story's been told, if it were a company, it'd be a growth company. Potential is out there. But lots of other things have to happen for that potential to be delivered in terms of numbers.
Super segue actually to how you've looked at Indian markets, and overvalued has been the very, very short pointer of it. I think you said that earlier in this year. After that, things have been range bound. There's some things India has done. Do you still...
I hope you're not blaming me for it being range bound.
No, I think that goes to Trump and this. I think you'll have to come back in line. You're very well revered, Ashwath, but I don't
think so. I don't think I can move markets.
I don't think you can move markets.
That statement about overvalued was just a statement of fact. It was because I computed the PE ratios for everyone I do it as part of, at the start of every year. I just I call it, playing Moneyball with the data. I take the data and say, let's see what the data is telling us. And I compute the PE ratio for every country collectively. And India had the highest PE ratio of any country of any magnitude. There are some small countries, but this was a country in large enough market with. So I said, look, it is the most overvalued market. And of course, it got in the news. And then I got a little bit of backlash saying, what.
No, there's no backlash.
I don't know.
My question is that do you think we're still there? The Indian markets are still as overvalued? Or even more so?
I think they are still overvalued because now you've added a layer of uncertainty you didn't have when I made that statement of a 50% tariff and working your way to what the end game is going to be. So I think they're overvalued, but there's, I think, a reason for that. I think part of the reason the Indian market is overvalued is FOMO. A lot of institutional investors need to be in the next big market, right? Whatever the price is. And their fear is if you're not in the Indian market, you're going to get left behind. So like AI, you need to be in NVIDIA if you're a portfolio manager, or your clients are going to ask, why aren't you in NVIDIA? So a lot of US institutional investors, their clients are saying, hey, what's your India position? They've had a China position because they played that game already. And for many of them, their India position is either non-existent or really small. So that is a big driver. The other is Indians themselves have enough wealth to invest, and really you push them into investing mostly in the Indian market because it's tough to invest outside India. Not impossible. When I was growing up in India, you could not invest outside India. Now you can, but with guardrails and restrictions on what you can do. So the country is getting wealthier. The wealth has no place to go but into Indian stocks. It's almost given that Indian equities are going to get pushed up too much relative to other equities, because that wealth is driving it up. So a combination of FOMO on the part of foreign institutional investors and domestic investors having more money to invest has pushed this market up, not just over the last year, but if you take it over the last 15 or 20 years and you look at the upward motion, it is the driving up with those two forces pushing it up. Now, but that also means that if it's overvalued, there is no catalyst that can cause an immediate correction. It's not like people are going to wake up. Especially domestic investors. Let's say they said Indian stocks are overvalued. What exactly is the choice? What are you going to do? You're going to buy Indian real estate, which is even more overvalued in many. So there is no easy place for them to put their money where they can say, I can do better.
Having said that, for foreign investors, there seems to be a lot of concern because you have FI investment at a 13-month low. Some of it because of tariffs, etc. Do you see that shifting or reversing because of this FOMO factor?
Foreign institutional investors are the biggest sheep on the face of the earth. You have 2 good weeks in the Indian market. They'll be here really quickly. So I'd love to tell you that they're deep thinkers, that they're going through this process. They're chasing returns. So the only reason they're reluctant now is the returns haven't been good in the last few weeks. You have 6 weeks of good returns. Everything will change. And that's the nature of foreign institutional investing. It moves in, the entire group moves together. That's mood and momentum driving it. And right now the mood and momentum might be a little down, but it's not out. And if that shifts, they'll shift with it.
We have limited time in this interview, so I want to spend a bulk of it talking about what would be useful for the young Indian investor. A lot of investors right now, retail investors in India, have started their journey in COVID or post-COVID. And they really haven't seen a rocky time, so to speak. A bulk of them, really. There's been an explosion. What would you advise them when they're looking right now and they're hearing, okay, India growth story 10, 15 years, but they're seeing their portfolios shaky?
I'm going to make a statement about investing that people might not like. Investing is about growing and preserving and growing wealth. It's not about getting rich. And unfortunately, I think somewhere along the way, especially with younger investors, and this is not just in India, but across the world, there is this sense of investing is about a way of getting rich quickly. So when you do that, it changes the way you think about investing. Basically, you're looking for long odds. You want to get that, 10 bagger or 100 bagger because that's how you get rich. It's a terrible way to invest because you're searching for the next big one, and there are lots of good investments under you ignore because they're never going to be 10 baggers. So my first advice to young investors is make up your mind. Do you want to invest or do you want to trade? Trading, if you want to get rich, you buy at a low price, you sell at a high price, you chase momentum. That's entirely fine. If you're truly wanting to build an investing long-term record, you got to start by saying, okay, what do I have to invest? How much risk can I take? And then think about doing things incrementally. Build up your investment portfolio so you can preserve and grow that wealth, which means if you have a job, do really well at that job because that's where you get the income to save. So if you're a doctor, don't spend all day checking out the stock pages. Be a doctor, be an engineer, because without that income coming in, you're not building wealth.
Are you saying that investing is not a profession that people should pursue?
It shouldn't be a profession if you have another job, right? If you work for a portfolio manager, it's your profession. But most people who are investing in the market have other jobs on the side, and they tend to invest as part of what they do in the evening or the lunch break. And if you're doing that, that's fine, but take care of what's creating the income that you're then investing to preserve and grow.
So then how do you pick? Right now, there is a primary market boom in India. Everyone has lined up for an IPO, and some very small companies, some very large companies. It's a complete deluge.
Yeah.
How do you pick?
Do you know that 80% of mutual funds in India underperform the index in India?
Yeah.
Which actually is it's a good place to start, because if you're investing and you want to invest and grow, for most people, the most sensible way to invest and grow is to pick an index fund that has almost no loads, no transactions costs, fees of 0.1% or whatever you're investing, and then go back to living the rest of your life. Think of how much time you save not looking up the next stock, the next IPO. And when you're 85, you can look at your neighbor who's been doing all of those things. And my guess is you'll have more money in your portfolio than your neighbor does.
Having said that, there are people who genuinely enjoy looking at companies, looking at valuation.
That's different. If you enjoy investing, be very clear about why you're investing. You enjoy the process. In fact, today in class, I said, look, I am an active investor. I pick stocks, but I don't expect to be rewarded for doing the right thing. I said, look, if I get to the age of 85 on my deathbed, and my best friend or my worst enemy came to my deathbed and said, look, I've looked at your record over the last 60 years, doing your intrinsic valuation and picking stocks, and you made 9%. But if you'd taken that money and put in an index fund, you'd have made 10% a year. The question I asked my class was, would you be okay if you learned that in your deathbed, that all of the work you were putting, doing your research and picking stocks, you could have avoided and made more by just putting your money in an index fund? And I told him my answer is, I'd be okay with that. I'd be okay with it because I truly enjoy the process of picking stocks. And I follow a very simple rule in investing. And this is a rule that I would also pass on to young investors. The rule in investing is do no harm. Don't do things in investing that can cause catastrophic losses. How will that happen? You take all your money and buy that one stock that everybody says, I don't care how great the hype is. You are putting yourself at risk of losing 30% of your portfolio, 40% of your portfolio. Those are the kinds of mistakes you cannot come back from. So, make up your mind on what you're going to do. Do no harm, and less is more. Less activity over more activity. The more you trade, the worse your odds are of making good returns.
For a lot of companies right now in India, which are great stories, the word is still out on whether it's hype or the next big story, right? Famously,
it doesn't have to be either or, right? It can be both. You can have hype and it can be a real story. The reason hype is so difficult to separate from the story is often hype is based on something real. Let's take AI, right? Is there a lot of hype about AI? Yes. But that hype is built on some very real changes that AI is bringing to businesses and markets. Most hype that sells is often because you take something which at its core is true and then you overdo it, right? So to me, it's not a question of is it hype or is it real? It's real, but the problem is the real part has been exaggerated because you focused in on an aspect of the reality and ignored some of the stuff you should be factoring in, right? So I think that it's, a lot of hype at its core. There is a core story that is a good story, which is one reason. Hype companies are not bad companies. They can be great companies. They're just priced too high given what they can deliver.
Let me complete my question, which was specifically about, I think you spoke about Zomato when it listed. Look at what's happened with it now. And there are other companies listed. There are others making a beeline in the same space.
What do they call it? Quick commerce?
Quick commerce is what you could call it, or food delivery. They've increased platform fees incessantly with the knowledge and in the comfort of the knowledge that now the demand is inelastic. People are too used to ordering online. Would you revisit that idea? Do you think that there's a lot of hype built in internet-based companies or platform companies?
I think that when I first valued Zomato, I valued it as a restaurant delivery company, right? Which constrains the market. And it's true, right? If I were telling the Zomato story now, it's a bigger story. It's a story of, especially after the Blinkit acquisition, it's really a company that will deliver just about anything to you at home. It's your restaurant meal, your grocery, your maybe even a retail item that you bought. And it's taking advantage of something that is a very real problem in India. Yesterday, I had to go from here to the Regis Hotel to give a talk at 7 o'clock. It took me an hour and 17 minutes to get from here to the Regis Hotel. I mean, we're The infrastructure constraints in the big cities especially mean that, you really cannot get from point A to point B so if you get home after a long day and you forgot to pick up your laundry, you can get in your car and drive to the laundry to pick it up, but it's that 10-minute errand will become an hour and a half. India is perfect as a perfect target for a company that says, we will do it for you, because they're arbitraging the fact that your time is worth more to you than some other person who can do that for you at a lower cost. So they have that advantage for them, which is, I think, driving the demand in the market. I think the thing that people might not be factoring in is Zomato, when it was delivering restaurant meals, kept 22% of what you were paying. If they deliver groceries, there is zero chance of being able to keep 22% because the grocers' operating margins are like 6, 8, 10%. It's a low margin, high growth business. And what I wonder whether investors are factoring in, they're excited about the growth you get from going into delivering all this neat stuff. But are they factoring in the coming down of margins that's almost inevitable when you leave these spaces where you can claim 20% of what's paid to places where you might be paid 2 or 3 or 4%?
Do you think that there are more stories like that? Is there anything right now where you see a great story which is not yet tapped in the Indian equity context?
I think the places to look are in healthcare, because I think Indian healthcare is essentially a market we're going to see huge growth, because as people get discretionary, I grew up in India where there were people who never went to a doctor in their lifetime because they couldn't afford to go to a doctor. Hospitals, you had to drive around the city to find the hospitals. I was in Chennai, 5 days ago, and you drive down Punamalai High Road, there are 16 hospitals and MRI centers. Clearly, people, as they have discretionary income, are able to spend more money on health. And we know how that plays out. In the US, 20% of the GDP is in healthcare, because as you get more prosperous and you get older, both of those will play out. So I think healthcare spending in India is going to go up. The question is who's going to benefit from it, right? And the companies that are out there are trying, the hospitals, you have the health insurance companies that are starting to show up. That ecosystem is going to start to see more players. And I'd be very interested in India specific, but right now what we're seeing is players that replicate what you see in the Western markets, right? The insurance companies, the MRI, the diagnostics. But there's probably a version of a healthcare company that is tailored to India, which is going to be very different than the healthcare company you would create for a market like the US. 1 billion, 3 people spread out across a country where income is widely variable. There might be a healthcare model that actually is able to tap into that very different market. I haven't seen one, at least one that is public yet, but I've talked to people who have private healthcare businesses who are tapping into, hey, we're trying to build a healthcare company that's more attuned to Indian healthcare rather than try to replicate what you see in US healthcare. So I'm keeping my eyes open for one of those companies, because I think if you can find that space, that's potentially a 10-bagger, a company that could really do well.
Do you think the GST cuts that have taken place are going to be the game changer for Indian market economy?
Step, right? Because I looked at, when you look at those numbers, you need some rationalization in this policy. There's too much, there are too many variants across different kinds of transactions. So it's not just the lowering, it's more of a standardization where somebody doing business faces more certainty on that dimension than they've done for the last few years, because it was too much, too much uncertainty. But what exactly will that look like by the time I make my end product?
In terms of AI, and this, I think I want to ask this question in 2 aspects. One is, of course, that big Indian AI story. Do you think it's going to come? Is that something you're looking out for? Or do you think we're too far behind where the NVIDIAs of the world have taken a leap?
The AI architecture business is, I think, it's too far gone, right? It's too late to become a chip company to make AI chips. You could try to be the manufacturing hub for a company like NVIDIA, but to try to make the chips yourself and catch up with it, the money is already being spent. You don't have enough of a lead time. But that's the architecture. The AI architecture, though, is being spent because you expect AI products and services to come out of the space that people pay money for. Right now, I can't think of a single company making money on AI products and services.
Globally,
right? Because, they talk about it. Almost everything I have has some AI play on it, right? When I'm Zoom, there's this little AI button. I'm not even sure what it does. When I have email on Apple, they have an app. But my reaction to all of this AI stuff that I'm seeing is it's neat, but I'm not paying $10 a month or $5 a month for it. And for many of the consumer-directed AI products, I'm not sure there's enough of a market. There'll be lots of people using AI, but there's not a lot of revenue there because I'm not sure how much I think there is play in the B2B AI market. And I think it'll take work. It'll take work to bring together the combination of computing power and data. The company that I think is closest to monetizing it is a company like Palantir, right? It's got the computing power, it's got the data, it's got the clients who need that combination. So I think right now people are investing in the AI architecture, expecting the AI product and service market to be huge. 4 trillion. That's the only way you can justify investing $500 billion in the architecture. And I think that product and service market is still wide open. We don't know who the winners and losers are. So if I were India looking at the AI space, I'm looking at that end of the AI space, not the architecture. Building more data centers is not how you make money. It's the products and services that come from AI.
Thank you so much, Ashpit, for speaking with us. It's been an absolute pleasure.
Thank you.
Thank you.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Good evening. You're watching The Big Question on NDTV Profit. I'm Vikram Oza. Now, IPOs, they've always been India's favorite stock market carnival. You see flashy valuations, you see sky-high hype, and there are millions of investors queuing up for their slice of the next big stock. But now, SEBI is proposing to change the rules of the game. The rules change now could mean big relief for India's biggest listed companies. SEBI is proposing easier rules on minimum public shareholding. And that means they're extending the compliance window from 3 years to 5 years for firms with a market cap of anywhere between 50,000 crore rupees and 1 lakh crore rupees. So in this new roadmap, you get 15% public float within 5 years and 25% within 10 years of listing. The aim seems to be simple. It is to simplify fundraising, to reduce that pressure of large-scale equity dilution when it happens in a rush, which often puts a drag on the share prices. What it could also do is encourage more mega listings in the future. But now the question is, how investor-friendly are these norms? When you scratch the surface, there are chances that you'll see founders smiling a lot wider than small investors. Remember, a mega Reliance Jio listing is in the works, so is an NSE. So for such mega companies, the minimum public float has been cut now to just 2.5%. That's half of what it used to be. The timeline to bring promoters down to 25%, now like I mentioned, that has been stretched as well. It is 5 years for most large firms and up to 10 years for the really big ones. So what does this really mean for investors? Fewer shares on offer could mean inflated valuations. It could also mean tighter supply. And the odds seem to be rising of getting allotment as well. So for promoters, it means more control for a longer period of time. And now as the hype around the urban company IPO shows us, the question seems to be rather timely. And the question is this: do these changes protect the small investor, or do they power the big founders even more? And that is really a big question tonight on NDTV Profit. And to debate it, I have a terrific panel with us on the show. Market expert Ajay Bagga is with us, along with former Executive Director of SEBI, J.N. Gupta. Also with us on this debate is Narendra Solanki, the Head of Fundamental Research in Investment Services at Anand Rathi Shares and Stock Brokers. Great to have you with us, gentlemen. A very good evening. Narendra Solanki, first to you.
Good evening.
SEBI is saying that the new norms make Indian IPOs more attractive to global capital. But from where you are sitting, does lowering this dilution, the kind of requirements for dilution, do they make IPOs riskier, more expensive for small investors?
Yeah, good evening to you, Vikram, and good evening to all the panelists. I think it's a welcome move, and I don't see it as a risk, but if you see largely on a yearly basis, we have a pipeline of around 50,000 to maybe 1 lakh, 1,25,000 crore of IPOs. So in any good year, we cross that 1 lakh mark, and in not so good year, we are hovering at about 50 to 60,000 crore. And now if you see the pending pipeline of the IPOs, which the SEBI has already approved, it hovers at around 1,60,000 somewhere crore. So that's a huge pipeline, and I think this actually gives market a kind of a breather in terms of absorbing this huge pipeline. So this dilution, this relaxation in the dilution addresses one of these situations. Plus, if you look at another point, especially post-COVID, we have seen a lot of new age and new tech businesses coming up around, and they have not been able to find representations in the listed market space, and a lot of unlisted trading activity has also been happening, which is much riskier and much and also not transparent for the retail investors. So I think it addresses that problem as well, and we can see a lot of unlisted businesses also trying to go for a listing in the early stages.
Right.
So I think it addresses 2-3 critical issues for the market. And one more important thing would be coming out with this is that with the increase in the anchor share also, the long-term investors would be having a much wider hold on the subscription of the IPO, so which reduces the volatility as well post-listing, which generally we see during the early trading days of the listings, wherein we see volatility of more than 10% for some of the IPOs. So that also addresses the liquidity issues. Now, coming to another factor regarding the participation and riskiness of the retail investors, because the free float would be very low, so I don't think these companies would be able to find any participation in broader market indices so soon. So from that ETF index-based ETF flow perspective, I think it would be they won't be finding any broader participation from that point of view. So only a direct retail participation or a mutual fund bet would be the choice for whoever wants to invest in these kind of stocks.
Right.
So I think this also insulates from that perspective.
So at least 3-4 counts, as you are pointing out, Mr. Solanki, there are those benefits that accrue to the markets at large, whether it's the absorption of really big IPOs or whether you're talking about liquidity. Mr. Gupta, you tell me if you agree with this or not, because there has to be a regulatory intent in the kind of proposals that are coming out of SEBI. Is this about boosting India's competitiveness against global markets, or do you think there is pressure from large corporates who are looking at slightly easier entry with the kind of IPOs that they've got?
Good evening, panelists. I would say the lawmaking is just like Rubik's Cube. You can't solve it in first attempt.
Right.
So every time you make law, the other side will change the color, and so you will not be having a full solution. So every attempt of SEBI will have pros and cons.
Right.
And everybody will say SEBI has succumbed to this pressure or that pressure. So let me assure you, SEBI would not succumb to pressure. SEBI will always go in a balanced way. Now, the issue is when you say the promoters are or founders or something will becoming stronger. Now, I would say any investor would not want a weak promoter, because when you have a weak promoter or weak controller, the risk is much higher.
Okay.
The other issue is this: I don't buy the idea that since many IPOs are in pipeline, so you have to do it, because none of us has got the estimate that how much is the investor sitting on the money, how much they will bring to the market. So we don't know. So we say that capacity is 1 lakh crore or 2 lakh crore. We could be absolutely wrong. It could be 10 lakhs crore, it could be 50,000 crore. We don't know.
Sure.
The third issue is that the problem arises when IPOs are bunched. So if a big IPO is bunched with a 5 or 6 small IPO,
yes,
then it could be a pressure that the bigger IPO, because of the bigger name, will overshadow the smaller IPO.
Exactly.
The third point is this: ultimately, whom we are protecting.
Mm-hmm.
The idea of regulator is to protect the market.
Right.
And who are the participants in the market? It's my investors, brokers, promoters, everybody.
Okay.
Now, what happens if you bring lot of supply in the market? Say, for example, today tomatoes are selling for 50 rupees a kg. Suppose tomorrow in the market 10 tons of tomatoes are dumped. It will not sell for 40, 50 rupees a kg.
Right.
So the issue is very simply, if you do more supply, the price, and the promoters, why they should, if they value the thing at X amount, why? Because of the supply issue, they should do it. So ultimately, idea is that the liquidity should be there. And liquidity does not come by the percentage. Liquidity comes
But
by the
doesn't it
number
make
of...
price discovery that much more difficult, Mr. Gupta?
Yeah. So then I'm saying it will be fair price discovery. The only issue that remains is that what are the consequential effect of that thing? One of the big consequential impact is that you have a section 100 or 106 in the Companies Act, which is minority protection, which says the minimum 10% of the shareholders are required to approach any court of law or any regulator.
Right.
Now, when you have only 5% stock in the listed space, then where the hell you find the 10%? So similarly, we will have to look into all other related laws which are impacted by this and take care of that.
Right.
It can't happen that you settle the 1 lakh, but you don't settle the other leg. You have to make the both leg equal.
So you need
otherwise
to
you will not.
create that balance. When you're creating new norms, you need to create that balance as well. It's an important piece. All the points that you're putting out there, Mr. Gupta, are well taken. Mr. Bagga, I want to ask you if you agree with what is being spelled out. For retail investors who are watching tonight, I'm wondering whether the new norms mean fewer allotments, whether it could mean higher pricing where valuations, there are question marks, and maybe a rougher deal at IPO time for investors in general when you have these supply kind of constraints, if you can call them that.
Yeah, it's a difficult one. As Gupta ji mentioned, there are pros and cons, and Mr. Solanki laid out very clearly the pros. I would say what worries me in this scenario, one, I mean, it's going towards the US market where irrespective of the market cap, the regulator only lays down that minimum this much should be the public float in terms of dollar billions. And they are quite okay with, after that, whatever the companies are doing. If you look at Asian countries, mostly they have transitioned, moved towards 25%. The EU prefers 25%. Germans give 10% in some scenarios. I have handled issues like that. But mostly they would prefer 25% free float. Your market does not get ranked very highly if you don't have too much free float. That is another issue which we have faced in India. Your MSCI rankings, ratings won't come.
Right.
Second, what will happen with something like this? For 10 years, there will always be the sword of dilution sitting on customers' heads. So whenever the promoter sells, it's only in India that an OFS comes in and the stocks go up. Otherwise, it's a red light for anybody, a red light marker for markets if the promoter is selling. Here, promoters will keep selling for 10 years and substantial amounts because fully they will also be growing at 15% per annum. So imagine over 10 years to sell out another 22.5%. At compounding at 15%, how much of supply that will bring. So I'm not sure this is the best idea. I don't know about the governance, what Gupta ji mentioned already in terms of minority shareholder protection, Vikram. I think those are some of the markers that stand out in this proposed legislation.
And also, I wanted to bring up that point that Mr. Solanki did from a startup ecosystem as well, Mr. Bagga. Do you see this as a genuine enabler of entrepreneurship, or do you think these rules are more about pleasing the unicorns rather than supporting the broader startup ecosystem? Because we are at that pivotal point, aren't we?
Yeah, the startups should not be waiting for 5 lakh crore kind of valuations, $50 billion valuations and then coming public. Exactly. What I would think. Mostly we should have a good SME exchange which is doing fair price and they come under the $50,000 or 50,000 crores or 1 lakh crore kind of at most, at a stretch. These are the mega corps which will be hived off from companies or government companies which are legacy companies coming in. You won't have many new companies which have trundled along and stayed private. And then at 5 lakh crore, they decide that I want to enter the market. So that's why the media is talking that is it appeasement of certain segments or certain corporates that is happening through this.
In fact,
that definitely comes up.
Indeed. So, Mr. Solanki, on that very point, I mean, we've seen massive IPO oversubscriptions in recent times. Urban Company comes to mind and Ola Electric in the past. I'm just wondering if these lower floats risk creating some kind of artificial scarcity effect that could possibly distort valuations. Do you see that happening?
See, as far as oversubscription is concerned, definitely that we can continue to see. And oversubscription generally hinges on the leverage effect, which we generally see in the markets during the IPOs, wherein a lot of people actually take a certain amount of leverage and try to get their chances of allotment higher because by using that. So that is on that is one of the risks that we may face in the current situation where the supply is lower. But I think we have to see when a large company which is coming out with a IPO of say around 15 to 20,000 crore. So I think I don't think that there we can see that amount of lower allotments coming in that kind of an issue.
Fair enough. But Mr. Gupta, on that point of governance safeguards that Mr. Bagga was alluding to, these new rules, whether they are the lock-in rules, whether they are the disclosures, the governance safeguards, you think they balance out the risks that may be there for small investors, or do you think that SEBI has tilted the scales a little bit?
See, let us understand what are the sources of risk in a listed stock. In a listed stock, the biggest risk is market manipulation. The manipulation is possible only when the floating stock is low. Here it is a question, we are saying the floating stock is so big that it is not possible for a company to make the issue. So number of shares that are there are very high. What we have to guard is this: the number of shares should not be distributed into 10 or 20 people that they have whatever is in the public domain, they command 90% of that share and they keep on manipulating. But even if they are doing it, SEBI has got sufficient system to catch that. The risk comes from that. The other risk comes is because if you have got 95% holding, then the special resolution that is passed in the company with a 75% majority loses its relevance. So SEBI will have to work out in such a manner that if you are doing the public float, so whatever is public float should become equal to more than 25%. And the voting power of promoters or founders, whatever it may be, should be balanced in such a way that 3:1 ratio is maintained.
Right.
So that special resolution can be defeated.
So you're saying only if that happens, then this is likely to work in a balanced kind of way. Mr. Bagga, what do you make of that? Often we hear founders arguing that they should not be forced to give up too much equity too soon. But you think retail investors are paying for that kind of comfort that founders are likely to enjoy now?
Look at global companies, there are no promoters. Or within India also, some of the largest institutions, there are no promoters. And they are very well run. They are board-run companies with management appointed by boards. So, this is something that Indian promoters always do, that they hang on to as much as they can for as long as they can. They want the listing. They want to get the currency from the listing. But then they don't want to dilute down, and they will take the regulator to court. They will cite COVID and this and that happening. That makes the retail investor ultimately lose out, because unless your free float is there, that stock will not get into global indices, will not get that ranking. And as market also, we suffer then, because we are very low on free float with respect to our size. We are a top 5 market, but we don't have the free float to really justify. And that's why we don't get our rankings in the global rankings. That's what promoters have to understand, that it's not that either you then stay private, but if you want to come public, you have to have enough free float. And as Mr. Solanki was mentioning, the institutions will not be able to come in because there's a very clear impact cost criteria.
Correct.
And if you have so little of free float, and then you actually see the actual free float, as Mr. Gupta was mentioning, the stock gets cornered by known hands and informed hands, and then there is hardly any free float available for mutual funds. The impact cost is too high. The fund manager will not get compliance approvals.
Mr. Gupta wants to come in on that. Mr. Gupta, you were saying?
See, again, I am saying the free float we define in terms of percentage or number of shares.
Which is already happening.
I always say percentage of shares have no meaning for me. Because if you have got a company which has a 10 crore market cap and is 25% or 30% free float, it's 1,000 into 30, 300 crore. If you have a company which has a 1 lakh market cap and it has a 5% free float, it has a 5,000 crore.
Correct.
So the issue is the balance has to be what are the number of shares which are in the market, what is their value, and how they are concentrated.
Right.
Now, say, for example, if 5% is there, look at the question of LIC.
Right.
LIC is only 5% or less than 5%.
Yes.
And it is concentrated with institutions.
Right. Mr. Bagga wants to counter on that. Mr. Bagga?
No, I agree with that, sir. But why have regulators globally put a 25% free float? There is science behind it. There is thinking behind it. Irrespective of the size, they prefer a 25%. That is the norm. If you look at the top 30, 40 exchanges around the world. So it is a norm that has come in. It's not meant, because see, I'll tell you very clearly, if I'm a big fund manager and I want a sizable position and I want to put in $200 million, I can't put in. That it becomes as simple as that. While if it's a 10 lakh crore share and it has a 40% free float, my impact cost goes down. I will not get compliance clearance only. That 2.5 will become an issue. It's not that simple, sir. And that's why everybody is going to 25%.
So 25% as a global standard, you're saying that what works globally perhaps may not be working over here. Mr. Gupta, what are you saying to that?
I'm again saying, Mr. Bagga has said that in America, there is no concept of promoter. So everything is free float. In India, the issue is, again, I'm saying, when a mutual fund or LIC or insurance company invest, they invest on the amount. Nobody says that I want to have a 5% pie in this company or 2% pie in this company. Now, my amount is so big. Say, for example, if a company which is a 10 lakh crore market cap,
yes,
I don't think LIC would want to own 10% of that because it will be 1 lakh crore.
Right.
So LIC will still want to have 10,000 crore, 5,000 crore. So again, I'm saying it is the number of shares which are available and the market cap. It has nothing to do with percentage. The only thing to do with percentage is ensuring that special resolution passage is possible only with the support of public. Similarly, related party issue, similarly, protection of minority. We got to take care of all those issues from where the governance can be diluted. And if you handle that, there is no problem.
Mr. Solanki, in all of this, what do you say? Retail investors, should they be more cautious with IPOs after these rule changes come in, whenever they do, or is this still a growth story that they must participate in? What's your take overall?
See, instead of being cautious, I think we should take it positively. And as far as IPOs are concerned, it is more of a valuation-driven investing exercise. So it doesn't matter what kind of a dilution which is happening, as far as it is happening at a decent valuation and there is ample growth opportunity. So with that happening, I think most of the companies IPOs would sail through. I do concur with one point Mr. Gupta made was regarding the protection of minority rights and how the MCA's circulars, etc., regarding a special resolution that would happen. So that is one of the area wherein I think a regulator must look at it. And I think apart from that, it's a exercise in progress. And I think as and when we develop experience and learning post this norms, so then only I think regulator would be in a position to tweak it further if it sees so.
Right, fair enough.
Deciding on, yeah.
But Mr. Bagga, do you see these norms, since you're citing global standards as well, do you see the norms that are being proposed over here making India that much more attractive as an investment destination for global institutional investors who actually prefer larger, more liquid companies?
Yeah, but see, I never second guess the regulator. So they must have done a lot of data crunching and arrived at right now an optimum solution.
Okay.
I think it's a process, so regulation also evolves with time. This is solving for maybe some large IPOs, or it is solving for the present situation. Again, I'm saying if we have to reach the top 3 stock exchanges in the world to get our massive allocations on MSCI, FTSE kind of indices, we need free float.
Okay.
So that way, this is going to have a sword hanging on your stocks. Those promoters will need to keep on, and they will petition the regulator on various things. We have seen that on banks.
Yes.
So many bankers never gave up their stake. They would file cases even against RBI.
Very true.
So will continue to happen. Promoters, if it's doing very well, they will not let go that easily. That is the concern. So if you get them off running to start with, because there are not that many cases of 5 lakh crore companies coming. LIC is one case.
Hyundai, I mean, there will be quite a few, perhaps in times to come. But yes, as far as numbers go, you are going to have fewer over there. But Mr. Gupta had another point to make, and perhaps the last point, Mr. Gupta, because these IPO rule changes, do you see them widening the gap between those elite IPOs, the big unicorns, and the smaller companies? Or do you think that both can benefit from this kind of new framework, although you say that it has to be work in motion?
First of all, I would say, I do not believe or I do not want to follow what happens anywhere else. We are capable